It bounced down by 10% at one point yesterday. They lost that court case. They're appealing. Lots of questions about what the settlement might look like. Mediabank downgrading the stock, and Unilever delaying the demerger of their ice cream business, Guy.
Okay, here we go. Tuesday session. Futures a little soft and soggy. Let's talk about the kind of session we're going to see in front of us. What is going to be the catalyst? Well, there's not an early one, I have to say. Indications out of yesterday for a fairly flat open seem to be being fulfilled by the FTSE 100. It is climbing up 0.2% as anticipated by the futures picture. We're expecting maybe things to be a little softer in Germany, but you're going to have to wait. But yesterday was epic for the German market, 1.8% to the upside. That was a very solid move. So we get the IBEX up by 0.2%. We get the FTSE slightly outperforming expectations, up by 0.3%. US futures, though, are basically signalling a fairly flat start stateside as well. So that's interesting to price in. There's no news, clearly, in Germany this morning. Nothing to see here. The DAX is up by 0.1%. No big move there. The CAC 40 has actually got a bit more action in it this morning. We'll see how BNP Paribas trades this morning. That's going to be a really interesting one to watch out for. You're also getting maybe a little bit more positive news around the OAT market this morning as well when it comes to what is happening in terms of the mandates around some of the big bond funds. Maybe that helps out at the margin as well. But the CAC 40 has yet to open. The DAX is up by 0.2%. What are we seeing in stocks and single stocks and sectors, Critty? What's going on there?
Well, right off the bat, I'm looking at a lot of your core six kind of companies here because they're the ones that seem to be driving to the downside, despite seeing green on the screen on the broader indices. ASML, for example, is your biggest downside mover. You're seeing plenty of pain in the healthcare space as well. AstraZeneca, Novo Nordisk, Sanofi, all taking a little bit of a hit. And then you got a series of French tickers. So when we do see the CAC 40 actually open, I wonder if it's going to be a downside story, Anna.
Yes, we don't have that open just yet, do we? But we do have the BNP share price open, and it's down, but not by much. It's actually pretty flat, but down 0.2%. But that sort of moves against the overall trend that we're seeing in these markets for the banking sector. So the banking sector as a whole is trading up by 0.6%. So if there was an element of other things weighing on banks yesterday, and there was a little bit of that in some of the French banks that were weaker because of that downgrade we saw to the credit rating for the country, and some of that is bouncing back. We see SocGen up by 1%, for example, today. But it isn't a French story. I mean, we've got HSBC up by 1.7%.
But BNP hasn't bounced this morning.
No.
Which is what you would have expected after an 8% move to the downside yesterday. You're not getting that bounce coming through, which tells you that the market is still doesn't feel like it knows enough about this narrative.
Huge lack of clarity as to whether there'll be any kind of settlement and what the scale of any settlement might look like. Because as Bloomberg Intelligence were pointing out yesterday, if you run the numbers based on the money paid out to just 3 of the people in this case, if you run those numbers, it looks really scary. But obviously BNP pushing back and suggesting that that's not the right approach, and they say they are appealing. So there's lots more we still have to learn on this story. But maybe nothing sufficiently new this morning, although now the stock down by 0.8%.
We'll get more context on that later in the show, perhaps what the path forward looks like for that bank and the broader banking sector. In the meantime, let's get a quick check, maybe a little bit more analysis, I should say, on these broader markets. Louise Dudley, Global Equities Portfolio Manager at Federated Hermes, joins us around the table this morning. Louise, a pleasure to see you, as always. I think we're kind of trying to work out what the next catalyst is. Guys mentioned earnings this morning kind of being that next key driver. Is it earnings? Is it the trade conversation? Is it the geopolitics? For you, what's top of mind?
So I think at the moment for earnings, we haven't seen as much exuberance as perhaps we might have expected from the European names. So we hadn't maybe seen as many downward revisions during the quarter as we typically see. And so perhaps we expected the beats to be a bit stronger, and that hasn't come through. Obviously, we have had a lot of that kind of trade war tensions ongoing for a lot of those names that have held them back. We've also had a bit of the shock that's come through in terms of the banking sector as well. So there's been a lot to digest, but in general, I think the earnings story for European names hasn't come through. Yet to see whether that will, and obviously we've got a number of names. We're still early in that earnings reporting cycle.
What does a positive earnings story look like? Is it more buybacks? Is it more dividends? Is it margin compression and not passing those costs on to consumers? What does that success look like?
So I think, looking into next year, we'd hope that companies are starting to benefit from lower interest rates, lower inflation, that they're starting to get more of a handle in terms of their overall supply chain, input costs, and also maybe a little bit more positive momentum around labour as well. So that's something that continues to be a bit of a hindrance to a lot of European names. If we see that subside a little bit, then that will also be another catalyst. Plus, the AI productivity type trade, we expect to see more and more noise for that to be cited as something where they are seeing actually the return on that investment coming through, and whether that means that maybe they're not actually needing to hire, whether they're seeing increased monetization from some of their products through additional kind of pull through. So I think those are areas that we're really watching at the moment.
Yes, we'll see whether that widens the AI trade if we start to see more reference to that. Louise, let me ask you about China, because of course some European business is still very dependent on what happens in China, even if that dynamic is not what it was. You talk about some gradual recovery in consumer confidence. I mean, yesterday we saw these retail sales numbers didn't look great, and again the narrative has been weakness domestically, making up for it by exporting to the rest of the world. So what are you seeing in the sort of intra-China dynamic that gives you reason to be more positive?
Yeah, I think just the overall kind of dynamics within the market in terms of how it's split in terms of the different sectors. We do see that actually there is a lot of optimism to come through. I think also with the expectation that there will be a cut, I think will also add to that consumer confidence as well. I think also, this time of year tends to be a bit more kind of bullish. So I think a lot of people will be watching those holiday numbers and how they come through as well. But I think also kind of looking into next year, I think, we've also had some positive news around additional AI uses, additional models that I think will also add to that kind of exuberance and confidence coming through.
Okay, so that's the China story. Thinking more globally, or I suppose with a US lens, we were talking with our colleague Skylar Montgomery-Koning earlier about whether we're just really waiting for more data. We're kind of in the dark a little bit about what's going on with the US. We'll get that CPI data later on this week, it seems, in the end. But we haven't had any data for quite a long time. Do you get the sense that markets are waiting for that, waiting for a bit more of a light to be shone on the underlying conditions?
Yeah, I think so. Plus also there's just the general question mark of how long the shutdown will continue and when that might be resolved. And obviously they, in general, kind of say that, the markets do rebound, that productivity does return. But there is also always a wait and see in terms of how long it persists and how long and what that overall impact might be. I think that underlying uncertainty for particularly the kind of the lower end consumer, I think is still there. And I think while that uncertainty weighs, I think we'll see that holding back from a consumer perspective in terms of spending.
Would you hedge the downside at this point? It's kind of cheap to do so again.
That is what kind of some people are saying. Certainly for us, we maintain a long-only position, and I think there's plenty of other areas in the market that can offer some attractive valuations that we think would...
Okay. You don't have to hedge it through options, but are you taking a more defensive tilt?
So we're not. I think, in general, we are balanced across, we're broadly diversified across different styles. Okay. So in particular, although momentum has been very strong this year, quality hasn't performed. So to a certain extent, maybe coming into this year and at the end of the year, assuming some of that quality rebound might materialise. That said, because of the interest rate cuts that are expected to come in, we still have that kind of valuation exposure as well. So those value names that we expect to get a little bit more positivity around some of the earnings that, are coming through in the next week or so.
Does it all hang on rate cuts at this point?
Not just rate cuts, I think also deregulation and tax cuts are also key. I think that deregulation move through into next year and even the following year will continue to be positive for the US names.
Talk to us about the the buyback environment then, given what he's talking about. If there is a force that kind of pushes against any sort of market pessimism, feels like buybacks might be that. How significant is that force?
So I think, over the last couple of years, it has been a significant contribution to that kind of overall kind of stock momentum that we've seen. We are seeing less of that at the moment. And I think, we're seeing companies are choosing maybe to hold on to more of their cash also because they're seeing more growth opportunities out there, which I think is a positive thing. That said, where companies are making buyback announcements, they have actually been maybe stronger than the market have expected. I think we're kind of maybe at a lows in terms of buybacks. We expect more of that going forward.
Louise, your overall take on earnings season so far. I saw Oppenheimer putting out quite a positive comment yesterday on US earnings so far. We haven't had many of them, of course, but 16% of businesses, I think, showing an increase in profit versus an expectation of 12%. What are you seeing across Europe or the universe that you look at? What's impressing or otherwise?
Yeah, so Europe hasn't been as strong as the US. I think that's been the big takeaway so far. I think within the US, there's a lot more optimism about what next year will bring. And I think, there is still a bit of the kind of tariff overhang and how those costs will impact. But I think we have also had a lot of news from companies through last earnings season and this earnings season about how they're mitigating some of those costs. And in general, companies do seem to be doing a better job than they thought at the start of the year that they'd be able to kind of pass on in terms of pricing pressure. So in general, for the US, it looks stronger than maybe we were middle of the year. And certainly from earnings, that's supporting that trade at the moment.
Louise, good to see you. Thanks for coming to see us. Really appreciate it. Louise Dudley, Global Equities Portfolio Manager, joining us from Federated Hermes. Okay, let's talk a little bit about what we're seeing at the centre of gravity here in Europe this morning and where the price action is. We're starting, as Louise says, to get into the earnings season. It's early days. We're going to find out what is going to happen as we work our way through it. There's a few stocks that are on the move. Husqvarna is one of them. But at the centre of gravity this morning, you can see that the defence story is the standout. Did we hit a bottom yesterday or earlier, late last week in the defence trade? Because we're starting to gain a little bit of traction. It was one of the reasons why we saw maybe the German market doing better yesterday. The defence names came roaring back. It is the standout story in Europe. You've seen around 10 days lower. We saw maybe a bottoming of that back end of last week. Are we going to regain and fill some of that gap? I think is a key question now for European equities. Elsewhere, there's a lot of weakness, and we've seen that maybe being preluded by the move that we saw earlier on in Bitcoin. Let's talk about some of the individual names, some of this earnings that we're watching, some of the big banks also firmly in focus this morning. Chloe Melley's here with the details.
Good morning, guys. Some positive movement for HSBC this morning after it appointed a new CEO for its UK bank. So this is part of the broader changes that the group CEO, George Ellery, has been making over the last few months, making big management changes, changing the divisions as well, streamlining everything, trying to improve that profitability. And this latest appointment seems to be quite well received by the market, and we are up 1.7% for HSBC this morning. Moving on to Coca-Cola, HBC, the bottling partner to Coca-Cola, is down this morning after it announced that it was combining with another Coca-Cola bottling company in Africa in a deal worth $2.6 billion. And this is something that doesn't seem to be well received by the market at all. We are down 4.3% this morning. This would create the second largest bottling partner for Coca-Cola globally, but it seems that that's not making investors very happy. Moving on to BNP Paribas, which is seeing a second day of weakness today after a court ruling linked it to a genocide case in Sudan, which puts it on the hook for massive settlements that could range in the billions of dollars. So we are down 1.3% this morning. We had seen a massive dip yesterday on the back of that court ruling. And finally, let's move on to Edenred, which is a payment solutions provider, and we are seeing a really big positive move this morning for Edenred, up 10.7% after reporting better than expected third quarter revenue. And analysts are saying that this provides some relief after a lot of weakness in those shares for Edenred.
Chloe, thank you. Chloe Melley from our equities team. Let's just mention, Guy, you were pointing this one out, Husqvarna, agricultural machinery, chainsaws, trimmers, blowers, commercial lawnmowers, etc.
Important stuff.
Important stuff. Well, what what we were drawn to this morning was the fact that the stock is down by 10.7%. It's not a big stock. It's a, $3 billion market cap. But it's interesting that the things they cite for the weakness in their report, saying uncertainty remains, particularly in North America, ongoing trade policy turbulence, foreign exchange volatility, subdued consumer sentiment, seem to be the things that they're talking about. I suppose some of these items are bigger investments.
But these are the kind of clues we want from the earnings season.
Yeah.
We want to understand what is happening in terms of the impact that the trade story is having on corporate profitability. We want to understand what's happening with the consumer. Kind of where does that this may not be a direct consumer story. You can buy a Husqvarna chainsaw, I'm sure, and you can buy trimmers and you can buy all kinds of things, snow blowers and all that kind of essential kit that I love so much. What is the consumer doing right now? Is that the kind of thing you put off? If your old one is not looking that good, do you try and hang on to it for a little bit longer? Is that kind of where the consumer is at the moment?
Yes.
And I think that there's some quite interesting clues in that.
Getting a little insight, Critty, into guys' post-show life.
Yeah.
I think that's what's happening here.
I'm learning
I got a
so
very
much.
old trimmer. It needs replacing. I'm going to hold on to it for the time being.
This is a conversation for the break. This is what we'll be talking about.
I don't know. I'm learning. This is the news you can use. It's like, what does Guy Johnson do at 9:01 a.m.? To your point, though, of some of the earnings that are coming out of this, it's interesting. They're talking as well about closing down some of their factories as well and outsourcing them to third parties, which is something we've heard from a couple of other companies as well in terms of cost efficiency. I believe this was there was a company yesterday. It's missing. I'm completely missing it. That had to do with wind turbines. It's going to come to me in the Vestas. You're right. That was the one.
Yes, and part of the news we heard around Kering and L'Oreal was to do with what you manufacture in-house and what you get somebody else to make for you. Speaking of luxury brands and makeup brands, in fact, we will check in on L'Oreal ahead of its third quarter sales and revenue figures. Those are hitting the terminal later today. We'll get to that conversation next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
18 minutes past the hour, 18 minutes into the equity market session, going nowhere in a hurry, to be honest. Are we marking time looking for a catalyst, and does that catalyst come from what is happening in Bitcoin and gold this morning? Just keep an eye particularly on Bitcoin. There's a link into Treasuries, which is being pointed out on the MLive blog this morning as well, which is worth focusing on. And if you're in a liquidity market, this is the stuff you want to pay attention to. And you are certainly seeing some weakness in particularly Bitcoin this morning, which people will pay attention to. What else are we paying attention to? Well, let's take a look at what is happening with the rare earth trade, particularly the Australian rare earth trade. We saw some big moves over the last 48 hours as a result of President Donald Trump signing an agreement with the Australian Prime Minister, Anthony Albanese, for a supply of critical minerals that are basically there to replace what China is holding hostage at the moment. Critical to the chip industry, critical to the defense industry. Joining us now to talk about all of this, Martin Ritchie, who leads our metals and mining coverage out of Shanghai. Martin, talk us through some of the details of this deal. How long has it been in the works? How quickly can the Australians get this stuff to market?
Yeah, another hectic day for rare earths after a kind of action-packed year. This agreement with Australia really tries to lock in for the US some of the supplies from emerging projects in Australia, which is the very mineral resources-rich country. It was kind of presaged by a visit to Washington by a whole stack of Australian companies about a month ago, when they were sort of asked to essentially pitch to the US, given a bunch of questions about who does what do you guys need? And from that has emerged, I think, somewhat more quickly than I think the industry had expected, a fairly detailed deal. So you're seeing the US and Australian governments invest jointly in a whole swathe of projects. And we saw, as you said, some of those big stock moves this morning. Arafura Rare Earths, one of the beneficiaries, up 29%. It did come down later, and several other firms making very big moves. And it's not just about rare earths, which are a kind of subset of critical minerals. There's also things like gallium, which China put export controls on even long before rare earths. So there's a sort of emerging strategy from the Trump administration here.
Yes, and Martin, you've referenced a bit of the market reaction that we've seen here. It's interesting that some of the Australian rare earth businesses sort of popped in anticipation of this, didn't they? And then maybe have pulled back a little. What has struck you as interesting about the market reaction?
Yeah, there's already been a big pop-up in the share prices over the past few weeks because some of these announcements have been trailed a little bit. I think what's happening now is that there's going to be a bit of guesswork about who's next. So this initial agreement sees, I think, $2 billion, $1 billion each from each of the governments investing in companies. Some of those were named, made announcements already. But Anthony Albanese, the Australian Prime Minister, said there could be up to $8.5 billion on projects receiving funds. So there's going to be guesswork in terms of who's the next to get money, and a lot of these companies angling for cash. So, I mean, broadly, what you're seeing is this kind of premium now in the rare earth space because you've got the state intervening to support a lot of projects, not just in Australia, but inside the US, some in Europe, and some in the rest of the world.
Martin, talk to us a little bit about how we marry what we've learned from the deal with Australia and the United States to a potential or deal or no deal between the United States and China. Just make that link for us.
One of the things that Trump said in his White House meeting, I can't remember the exact words, but he's essentially saying we're going to be absolutely flush with critical minerals a year from now. So that kind of speaks to how he sees this deal, that it's going to give him leverage in negotiating with China. He's set to meet. He says he's going to meet Xi Jinping later this month in South Korea. It gives, going into that meeting, it gives him a sort of sense of we are fighting back. This great Chinese card that's been played maybe isn't all it's cracked up to be. But the difficulty is that, yes, they're rolling out money, putting money into these projects, but mining, processing, refining, making rare earth magnets, the main product, is going to take a much longer time. So you have to be skeptical about this, giving the US any kind of immediate clout in fighting back against China.
All right, Bloomberg's Martin Ritchie walking us through the rare earths and critical mineral story. We thank you so much. Let's go to another sector that has our attention. That, of course, is luxury, makeup, beauty, all the things that I certainly care about. Investors will be closely watching L'Oreal today as the cosmetics giant posts its third quarter sales and revenue figures after the market. Joining us for a preview is Deborah Atkin from Bloomberg Intelligence. Deborah, just walk us through what the market is expecting from some of these figures.
So for L'Oreal overall this evening, we're expecting a 5% like-for-like growth or thereabouts. And actually, across the 4 divisions, it's quite a similar pattern in terms of growth. The big trends and what we're looking for in terms of pushing the story is about looks improving, derma leading the growth, and also consumer being quite stable versus the last quarter. So all within that 4 to 5% growth rate. And in particular, that brings the second half and what's expected for 4Q with lots of phasing, pipeline and others, meaning that L'Oreal would have a better second half than first half and hope to beat by around 100 basis points the 4% beauty industry growth rate this year.
What are they going to say about China?
Yeah, we're looking for growth in China, and mid-single digit at least, and that comes on the back of LVMH last week having pushed out within their numbers mid to high single digit growth returning in China. We also saw, following LVMH from Chow Tai Fook, one of the big jewelry retailers over there, they also posed a much improved sentiment out of China from the consumer, even though the price of gold is so high. Yeah. So jewelry at the high end is also doing very well.
And we started this conversation thinking about L'Oreal. Let's continue to do that, Deborah, but bring in Caring as well, because the sort of dust has settled. We've had 24 hours, I suppose, to think about the acquisition of Caring's beauty business by L'Oreal. Yes. What's the takeaway?
Yeah, so it's a €4 billion deal, and what it does is it brings the fine fragrance brand of Creed, which was acquired in 2023 under the prior CEO of Caring, into L'Oreal's portfolio, probably through the first half of 2026. It really closes a high-end gap for them. You know, since 2017, we saw, because these beauty companies and luxury companies are really vying in the same beauty space now. So we saw in 2017, LVMH acquire the Maison Coeur de Jeanne, which has Baccarat Rouge, and you're buying that well above the price points that you would see Prada's and others, which are sitting within the L'Oreal portfolio. And incidentally, where L'Oreal is doing very well since 2021. So it's about the mindset of higher growth rate at higher price points, young consumers really buying into on-trend, high-end brands.
Younger consumers buying really high-end fragrance.
Yes.
Okay, Deborah, thank you very much. Bloomberg's Deborah Atkin from Bloomberg Intelligence with the take on L'Oreal and Caring. Coming up, we check in on day 2 of the BNP Paribas fallout after a US court found that the French bank was liable for damages to Sudanese refugees. More on that and wider markets next. This is Bloomberg.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Earnings season is here.
European earnings in focus. We'll break down the results.
Bloomberg is first to break the numbers.
Let me bring you some earnings that are coming through a Nordea Bank.
LVMH reporting a surprising return.
And BP.
The earnings story, I think, is really fascinating.
There's just so much news.
With the smartest insights.
It has been a record half-year result. We are committed to capital return. We were even able to increase our outlook. It's very good news, I think, for our shareholders.
Continuing coverage on Bloomberg.
Welcome back to the opening trade. About 30 minutes into today's session. Green on the screen across the board. Marginal moves in most of the indexes, though. I'm going to start off at the top. The Europe stock 600, higher by about 0.1%. A similar move in the CAC 40 and the DAX as well. But the party is right here in London. The FTSE 100 higher by almost 0.4%. Let's go to the life of the party, Guy. Walk us through what's going on.
That's where the party is this morning. We're up by 0.3. There's nothing going on out there, basically. This is a very quiet market. It looks like we're looking for another catalyst. If you want to see catalyst, though, take a look at what is happening with some of the alternative assets. Take a look at Bitcoin. Take a look at what is happening maybe in the gold space as well this morning. Defense stocks are coming back, which I think is interesting. 354 up, 225 down. I'm not sure there's much of a clue in there. Volume is pretty much bang on the average of the last 20 days. Again, there's not much of a clue as to what is happening there. This is a market in need of a narrative this morning. Well, I'm sure we'll find one as the day progresses. BPBR is up this morning. Apparently, it's buying a synthetic position in its own stock. Anyway, I'm going to dig into that, try and understand it a little bit more a little bit later. Assa Abloy is up. So there's some good earnings coming out of the Scandies this morning. Assa's one of them. Getting is the other one, up by 3%. Husqvarna, as we already mentioned, in the chainsaw space, looking a little bit weaker this morning. So it's maybe a more mixed picture coming out when it comes to the 52 highs and 52-week lows. But Assa and Getinge are both at 52-week highs, Anna.
Okay, let's put that into some context and think about some of the other stories that we need to know about this morning. Rare earth shares jumped in Sydney after the Australian Prime Minister Anthony Albanese signed a deal with Donald Trump that's been described as a, quote, shot in the arm for the Aussie industry. Both countries will spend $1 billion over the next 6 months on projects to secure a pipeline of critical minerals essential to the chip and defense sectors. Elsewhere, Donald Trump has cast doubt on Ukraine's ability to defeat Russia, walking back on earlier upbeat assessments. Addressing Kyiv's chances, Trump told reporters, quote, I don't think they will, but they could still win it. The remarks mark another shift in tone for the US president ahead of his meeting with the Russian counterpart, Vladimir Putin. That's coming up in Hungary, of course. And Japanese stocks whipsawed and the yen dropped as Sanae Takaichi became Japan's first female prime minister. Takaichi won the parliamentary vote earlier today, securing 237 votes in Japan's powerful lower house, before then winning a runoff in the upper house. Her ascension is expected to open the way for more fiscal spending in Japan. Pretty.
Let's go to another one of our top stories this morning in the stock market universe. That brings us to the banking sector. I want to check in on BNP Paribas, the stock dropping again today following its sizable losses yesterday. It comes after a court ruling links the French bank to human rights abuses in Sudan, triggering speculation that the firm will have to pay out a settlement that could total billions. Joining us now for more is Tom Metcalf, who leads our finance coverage in EMEA. Tom, just walk us through what we know about this BNP Paribas story and where it could go.
Yeah, well, I think it's one of those big potential impacts, and that's the emphasis on potential. So, the stock dropped about 8% yesterday, effectively because they lost a case in US courts where 3 Sudanese citizens who now live in the US effectively were able to claim damages against BNP for supporting the regime over there, and saying BNP Paribas is in effect, responsible in some ways. So they paid out about $6 to $7 million each to those plaintiffs, and the reason the stock is dropping so much of a $21 million verdict is because there's another 20,000 plus plaintiffs out there in the US. Now, of course, for these kind of class action suits, it's dangerous to kind of just extrapolate out, from an individual all the way across many thousands of cases. But I think what is clear is there's certainly a new risk that maybe wasn't perceived as being around this very, very long-running legal case, that perhaps there will be a big cost to BNP Paribas. And late last night, one of the lawyers for the plaintiffs was saying, look, we really think BNP Paribas should come to the table, should consider settling. And the figures they were mooting was in the sort of the low billions. So, with the stock dropping 8%, down again 1% or 2%, it does suggest that drop's maybe a bit overdone, but that's always the way when there's no certainty. And until there's clarity of just how big this risk could be, I think the market is probably just taking the worst case scenario and sitting on it for now.
The UK financial regulation and ring fencing. Let's talk about how HSBC is kind of fitting into all of this story this morning. New CEO coming in. This is still a ring-fenced bank. We should remember this. It's effectively a separate entity. What does it tell us about the future of that business, the new CEO, and what does he tell us about strategy?
Yeah, some musical chairs in UK banking. So this is former NatWest executive Lindbergh coming in. And I think it's kind of, again, under the new CEO, Georges Elhedery of the group, the latest shift there. They moved the current CEO into sort of a more group-facing role. I think, for the HSBC, the UK is just one of its 2 tentpole markets, right? You've seen that huge investment, that huge bet they placed on Hong Kong. I think what this shows is probably for the UK, it's their mature market. They're not likely to maybe expand massively, but equally, they're not going to shrink. It's a huge pool of liquidity. They think they can kind of work those margins, and so I suspect business as usual.
What can you tell us about risk and where it sits right now? Credit risk, financial plumbing and credit angst, I suppose, is what I want to ask you about, Tom, because this has been a theme, certainly in the regional banking sector. It's been a focus, whether this is because of concerns about underwriting standards at some businesses. It's got the market jittery. We seem calmer now. Does that mean it's all gone away?
No, definitely hasn't gone away. I mean, I think it was very sort of acute the past few weeks with First Brands, Tricolor. I mean, the interesting thing for me is those are, people were looking towards private credit as sort of, this is a sign of trouble there. And of course, the private credit industry was pushing back, going, wait a minute, this was a bank underwriting problem. This is sort of a bit rich. You have JP Morgan's Diamond coming out talking about cockroaches when, JP Morgan was one of the banks involved and facing losses with First Brands. But no, I mean, I think there's that general sentiment of unease, I suppose, but these markets, they just keep on bouncing back. So it does sort of feel like whatever gets thrown at the moment, it's just never enough to sort of break the camel's back.
Tom, great to see you. Thanks for updating us. Bloomberg's Tom Metcalf on what is happening in the banking space right now. We need a catalyst this morning. We need something to kind of get us going, and maybe the earnings picture is going to provide that a little bit later on. You're going to hear from General Motors. Remember, you've seen big write-downs within the auto space recently. We're going to get updates there. Netflix, Texas Instruments are going to be out on deck a little bit later on as well. Around 85% of companies in the S&P reporting results so far, remember there haven't been many, have beaten on profits. Earnings a key driver for the market in the absence of economic data as well in terms of the narrative that we are getting. Val's here to tell us what we can expect.
Look, I think it will be interesting to see what kind of macro things we can pick out from these earnings releases. At least for what is top of mind, I think for markets is more evidence of a K-shaped economy. We got that clearly from the airlines last week. Let's see if we get that with Coca-Cola today. We also hear from some telcos later in the week, like AT&T, and some leisure and hospitality companies like Hilton also reporting. It'll be interesting to see if they do continue to see this bifurcation between wealthy consumers doing well and the lower end consumers doing
the wealthy
poorly.
Consumers drink more Coke. Is that kind of how?
Or maybe they pay up for those more expensive probiotic sodas that everyone's drinking these days, right, Guy? I think the other thing that will be of interest is going to be any comments about rare earths. So we do hear today from Texas Instruments, as you mentioned. We also have some defense companies reporting today. Lockheed Martin, RTX, Northrop Grumman also reporting. Remember, rare earths are very key for some of these defense names and some of these defense equipment in particular. We also will be hearing from autos. Autos are heavily use those magnets that we know that that China's export restrictions could put those supply chains at risk. So any guidance from these companies on how long a squeeze in rare earth supply chain could last for them? I know you guys were just talking just a few moments ago about how Trump wants this rare earth supply to really be juiced by next year, but is that kind of timeline too long for some of these companies? And lastly, just the reflection of beats and misses. As you mentioned, we've had a big majority of companies beating market expectations. If that continues, you know, I think the market will be very quick to assume that this could be kind of a repeat of last earnings cycle, where we saw a lot of companies beating expectations that quickly turned around the narrative from a worry over tariffs and growth to excitement over AI and investment.
You said a lot of really smart things there. I'm still scarred by the probiotic soda. I mean, what even is that?
It makes Val dance though, so that's great.
That's really the key piece.
They're a big thing in the U.S. these days, guys. Come on, keep up.
It'll be a big thing here soon.
Yeah, exactly.
And then Val will be ahead of the trend. Talk us through some of the worries around the economic growth story. I mean, you laid out a laundry list of them. What else do we need to keep our eye on?
Look, I think Tesla will be interesting in the fact that GDP growth seemed to be supported by those rushing to buy EVs before the EV mandate was relieved earlier this year. Now, if we get some guidance from Tesla that they are expecting a steep drop-off in sales momentum, I think that could point us to the fact that perhaps the juice to that previous quarter GDP could really be down more to, again, consumers bringing up purchases ahead of key events like tariffs. That was very much a focus of Q2. And then the same thing with EVs. Secondly, you know, CapEx and the tech trade. We know that CapEx, at least some people have claimed this investment in AI is really something that's been masking a weaker part of the economy, but we are expected to see CapEx drop off towards the end of the year. That could also be something that could hamper GDP growth. And lastly, you know, I want to throw some curveballs out there. We've seen some quite extraordinary shifts from companies recently, Cleveland Cliffs being one of them yesterday, a steel maker who has now said that they are going to be looking at their mines for rare earth deposits. The shares flew off the back of that. Yeah. We also heard from Liberty Energy. This is a oil fracking company who also generates power for oil refiners, saying that they're now looking at data centers as a new customer. So any shifts in
buzzwords basically buzzwords work.
Well, these companies, you know, shifting their business model to the AI trade, which includes rare earths,
or at least their financial statements and disclosures to the market.
And the word counts.
Yes.
I remember when this was happening with crypto, wasn't it? That was a sort of height of lockdown, and everything that had crypto in the title suddenly was.
Well, we've seen some pretty impressive gains off the back of that, so let's see if that continues.
Yeah.
Valerie, thank you very much. Valerie Titel, with the latest on some of those market themes that we are certainly watching. Let's head now to Bloomberg's Tech Summit, taking place here in London. Tom McKenzie, as we saw earlier, is on the ground there for us. Tom.
Anna, it's starting to fill up here. Crypto is not going to be a central part of the conversation, but AI sovereignty will be, defense tech will be, and innovations in space as well, and space technology, what Europe can do to try and reduce its reliance on the US, but also how to implement AI, how to cut through the hype and actually work with enterprise on implementing some of these AI solutions at scale. And that's when we're going to be bringing in the CEO and co-founder of Pigment, one of the fastest growing software AI companies out there, Eleanor Crespo, joining us after the break. Stay with us. This is Bloomberg.
NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency. And also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the petroleum fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. Some breaking news crossing the Bloomberg terminal. Japan's Satsuki Katayama has been appointed the finance minister. This is just hours after Japan got its first female prime minister altogether, really marking a change in not only the leadership of Japan, whose coalition between the LDP and other parties had recently fallen apart. It looks like installing someone who is going to be an interesting choice when it comes to the financial markets. Strategists very much split on what she means, given she feels strongly about a strong Japanese yen, but not so strongly about FX intervention. So what do her policies look like, Anna, especially when it comes in contrast or in tandem with the BOJ?
In the moment, the yen's still weaker. Was weaker before this announcement, remains so, but just down by 0.2%. Let's put the focus on technology this morning. As we've seen, Tom McKenzie is at the Bloomberg Tech conference that is underway here in London, bringing together some of the top voices in Europe to discuss everything from tech sovereignty to AI regulation, cybersecurity, industrial policy, and all the rest. Tom McKenzie, take it away.
Anna, thank you very much indeed. Very pleased to say we're joined now by the co-founder, the CEO of Pigment, Elena Crespo, one of the fastest growing AI software companies in Europe, globally as well. Elena, always great to touch base with you. What is growth looking like for you and the team at Pigment right now? Are you seeing the kind of momentum that you saw in 2024? Is that continuing this year?
Yes, absolutely. So I think we'll still grow about 2x this year. Since I think I saw you last time, we kept working with very, very large companies, so leading AI companies in the like of Anthropic, 11 Labs, very large tech companies in the likes of MongoDB, ServiceNow, Uber, and also obviously Fortune 500 and very large companies in the like of EY or BG Wholesale. So
and I should remind our viewers that the software and the solutions you provide in terms of financial planning, forecasting, so you're looking at HR, you're looking at the finance part of the business as well, and this is a solution that is basically the proposition is a cooler and easier to use Excel spreadsheet. Is a simple way of putting it, but you're allowing businesses to better forecast, better predict, and better plan. What is the regional breakdown in terms of growth, Europe versus the US?
Yes, indeed. So the breakdown right now is 60% in the US and the rest in Europe.
60% in the US?
Yes. So this is our biggest market by far. And obviously this has been driven by very high demand because of the macroeconomic environment. You know, business leaders, they know that they cannot wait 3 months to make a decision that has to happen in 3 weeks. And they are very proactive to adopt AI because AI is really enabling them to go faster into every decision they have to make.
And in an environment where some companies and some corporates are seeing slightly tighter budgets, are you seeing anything in terms of a pushback a more conservative approach to implementing some of these solutions? Any nervousness at this point?
I don't think so. So what we see is that a lot of business leaders, a lot of CEOs are putting very big budgets to actually help their company adopt AI. And they know that they have no choice today but to adapt to a very difficult macroeconomic environment. And they also have to find ways to grow faster and reduce the way they think about their costs and improve their resilience thanks to AI. And this is really where we come and help them as a true business partner.
A big focus at the event today is tech sovereignty for Europe. You take a slightly different approach, or at least you put some question marks around whether that's achievable and whether that should be the aim. How are you thinking about what it means to have tech sovereignty?
Yeah, so for me, tech sovereignty is being very pragmatic about the future of Europe. I think sovereignty for me is all about growth. I think we cannot be consumer, we have to build. And I think for me, the way I think about tech sovereignty in Europe is not so much about protecting yourself, but more growing faster. And I think we have to ship faster, we have to be faster at bringing the right technology in Europe. And this is really what I try to push, working all together, creating the right energy infrastructure, the right talent infrastructure, the right business infrastructure. And what I encourage all of our customers and businesses is to adopt technology faster. If the US is our #1 market today, it's because they adopt our technology faster. I had CEOs buying pigment in 2 days, where it would perhaps take 6 months in Europe.
Wow, so 6 months versus 2 days
Yes.
in terms of adoption
Yes.
by European clients versus their US counterparts.
Yes.
I mean, that's a huge difference. What are the key roadblocks to you scaling at the pace you want to scale out at this point?
So I think what we see in terms of, I would say, AI adoptions for companies is that it's not so much just about adopting AI. I think every leader right now wants AI in the organization. That's not the question. The question now is more about helping them do change management. Because you cannot just throw AI at everybody and think everybody will adopt AI. You need to reskill your team. You need people to be trained on the new process. You need the right data foundation and the right layers. You need the right governance and the right security. And this is really where we try to help our customers.
When you take a step back and you look at the funding and the deals, particularly around the infrastructure part of the AI story, does it concern you? Does it look like a bubble?
So I think, look, as every revolution, you have to have at some point like this sort of very, very big amount of funding, and it's hard for me to say where that's going to go. I know that at the same time, it is very important to have this type of funding if you really want large market leaders, as we had, for instance, in the cloud revolution, to emerge and to do things very differently. What I know is that AI is a true revolution in the way we are going to work and function as the world and as a planet. So that's for sure. Now, we will see about the funding. It's hard to tell.
Talk to me about the talent wars. Are you attracting talent from the US? How just red hot is that talent war right now? How much of a challenge is that at this point?
Yeah, so I would say, so first of all, a lot of our go-to-market talents are in the US, definitely. But Europe has an amazing talent pool, especially in terms of AI engineers. And actually, a lot of US companies come to Europe for that reason. So we have an amazing talent pool. But I have to say that now it's a new revolution. And LLM is a new technology. So what is interesting is that this is also reshaping the genetic makeup of companies. And it's not so much about just finding the right AI talents, it's finding people that have the right mindset. It's not so much about the skills, but finding people that are super curious, engineers that are able to adapt, learn the new technology, and really bring it forward, because it's a white page for everybody. Agents didn't exist a year ago, so it's about on us to create that.
What are your fundraising plans for 2026? Do we lose you ultimately to an IPO in the US, Elena?
Not yet. I want to stay private for as long as possible. We are a very fast-growing company, so we don't have fundraising plan yet, but we are always thinking about that because we are growing fast and taking market share.
The benefits of staying private are?
Benefits of staying private are innovating faster. We see that with many companies. You take example of Databricks, you take example of Anthropic. They are innovating very, very fast, staying private or Stripe. And so that's really what we want to do for the near future. We want to be able to keep the momentum because innovation is our #1 driver, and it's the only way to win the AI race.
Elena Crespo, co-founder, CEO of Pigment. Thank you very much indeed. Guys, back to you.
Tom, great stuff. Fantastic interview. Staying private for longer. That's the takeaway there at the end. So many companies feel that way right now. Tom McKenzie's got a great lineup throughout the day. Stay with us for more from Bloomberg Tech London. Host of top names we are going to be seeing on stage a little bit later on as well. The UK Minister for AI and Online Safety. We've got the CEOs of a whole range of companies. Cloudflare is going to be there. I'm really looking forward to hearing what that company has to say, Creddy.
Especially in the last 24 hours, given the AWS outage that came and went. Lots going on in the day ahead as well. Earnings, specifically over in the States. General Motors due to report before the bell. After the bell is Netflix. We're going to find out about the K-pop Demon Hunters, I believe, is on Guy Johnson's agenda. Plus plenty of ECB speak as well. We have Christine Lagarde is going to be speaking. We have Nagel, and we have a few others that are going to be hitting the wire.
Something that's caught my eye is the fact that today Andrew Bailey is going to be testifying at the House of Lords Financial Services Regulation Committee. And the reason this is interesting is that we have a story out this morning, and this is what he's going to be talking about. The UK is exploring private credit stress tests as risk worries grow. So the fact that they need more information to assess the risk in what is typically by design a more opaque area of the market is really interesting.
Central banks have lost track of where the risk is in this market, and I think that's becoming increasingly clear. The Bank of England feels like it's out in front of this narrative, certainly with the risk warnings that we've been seeing from it over the last few days and weeks, and this fits into that narrative as well. But we learned 07, 08 kind of how the linkages can work. They clearly are concerned about where leverage is and where risk is, and they can't see it at the moment, and they want to know.
Yeah, and the Bank of England being really honest about the things they got wrong before the financial crisis. Just over the weekend, Andrew Bailey saying over at one of those World Bank meetings that they thought subprime mortgages, until that actually blew up, it wasn't going to be systemic. And he acknowledges now they got that wrong then, so they really don't want to get things wrong this time.
Don't you think it's really interesting that this is going to come on the same day that the Chancellor of the Exchequer, Rachel Reeves, is going to deliver a speech outlining the fact that she is looking to deregulate?
Yes, that could be an interesting dynamic.
I think what's fascinating here is that the bulls in the private credit space, the Apollos of the world, would argue that the question of systemic stress doesn't exist because it is a private market, and therefore the dominoes, and because we're this early in the democratization stage. No, I completely understand, but the democratization stage isn't far along for it to be a systemic risk. Because we're in the early innings of it, it's still a literally private, isolated
Or do
risk.
those dominoes just take so long to fall? Is that that's the argument?
But where does the money come from in order for this to all happen? Where does the risk lie in terms of the banks? And what about the insurance companies? Where is the risk there? There's all kinds of, you link back into public markets as well. The connection is not completely, there's not a big wall between these two markets. There are interplays between them.
The blurring of the lines between the two seems to be in focus. That was certainly what we heard from JP Morgan, Jamie Dimon talking about that. And of course, they've had to pay out money as a result of some of those linkages between the private and the public markets.
Absolutely. What are we going to be doing next? The Pulse is coming up. Anna's going to be doing some of it. I'm going to be doing some of it, I think. We're going to be certainly
I think it's Fran from the tech show.
Fran's going to be at the tech show doing it, but we're going to be, we're not going anywhere.
We're just here in case.
We're going to sit here and make sure that doesn't happen. Look, I think the really interesting thing about today is that we are definitely looking for a catalyst. We're trying to figure out exactly what's going to be happening a little bit later on. Pay attention to what is happening in the crypto market today. Generally, equities are going nowhere. Volume is not particularly substantial today. I think we're looking for the next catalyst. Are we going to have to wait until the back end of this week until we see the CPI data being delivered out of the United States? Or are earnings going to provide that catalyst for us a little bit later on? But it feels at the moment as if European markets are very much sitting on their hands, waiting for that next catalyst to arrive. When it does, Bloomberg Television will be here to explain it all, we hope. Anyway, the Pulse is up next from the Tech Show. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television, top experts, great questions.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to a special edition of The Pulse, live from Bloomberg Tech here in London. Now, industry heavyweights and policymakers are here to discuss everything from AI to the future of defense. Now, first, here are the top stories making the headlines. Sanae Takaishi wins a parliamentary vote to become Japan's prime minister, making her the first woman to clinch the nation's top leadership job. President Trump signs a landmark deal with the Australian Prime Minister to boost America's access to rare earths in an effort to counter China. And we'll bring you a boost and a host of top names from the Bloomberg Tech Summit in London this hour, including the Chief Executive of Pandora Bots, Lauren Kunze, and the Chief Security and Strategy Officer of Upwind Security, Rinki Sethi. But first thing is first, let's check on the rally that was, or actually let's check some of the stocks. Full stop. Now, the dollar does seem to be advancing against all major peers. Look, if you look at global shares, and I'm looking at the S&P futures, they're pretty much flat. So I guess it's at 0.1% lower. They seem to be wavering a little bit as investors are weighing trade tensions, but also the impact of upcoming inflation data from the U.S. This will be due on Friday, and of course they'll search for clues on the health of the economy and the Federal Reserve's rate path ahead. Very quickly, let's also get on to the European markets. I think, again, it's a little bit of a mixed bag. We always look at gold, 4,296. If you look at Europe, pretty much, if we have it, look, Europe is pretty much gaining some 0.2% across the board. Now, in just a moment, we'll discuss Japan's first female prime minister and what that means for the country's persistent inflation. We'll also look at how markets are weighing up trade tensions between Beijing and Washington. But first, let's begin here with the Bloomberg Tech Summit taking place in London today. We'll be examining the future of Europe's tech sovereignty, and I'm delighted to be joined by Lynn Doan, Bloomberg's managing editor for cybersecurity and tech. Lynn, so good to speak to you. So good to see you, Francine. And we're all wearing sneakers, which I love. I love your world. The tech world is really changing everything left, right, and center. What can you tell us about what you'll be focusing on in terms of cybersecurity and innovation today?
Obviously, the theme of the entire summit is tech sovereignty, and that is the theme of, honestly, the past year in Europe, right? We're talking about sovereignty on AI, sovereignty on the region's entire tech stack, sovereignty in defense technology, and we're super excited about the lineup at the Bloomberg Tech event today because it covers all of that. We have Helsing CEO, arguably the most consequential defense tech company in Europe today. We have Michael and Trader, the CEO of CoreWeave, that embodies the AI data center boom. We have the AI startup Cohere, who is going to speak about how the company is pitching Europe Europe on tech sovereignty and how that's different from the pitch in the United States. So we've got a great lineup that's going to talk about that theme in depth.
Lynn, when you look at cybersecurity and actually just sovereignty in general, I mean, Europe is kind of at the crosshairs because we're very close to Ukraine and therefore Russia. But how is this region doing, given also that they want to spend on defense, especially Germany?
Yes, I mean, the region has to catch up, right? I think that there is a recognition across Europe and in the UK that it's going to take a lot more funding, a lot more investment in innovation and in a homegrown defense, but also defense tech industry in order to build Europe's defenses from the ground up. And as you say, that's not just about national security, that's not just about physical security, that's also about tech security. I mean, if there was anything that established an argument for having your own systems, it was maybe the AWS outage yesterday and the fact that it took down hundreds, if not thousands, of websites around the world. And you see people using that as a business case for wanting things to be local and regional.
But I mean, this was a great example, right? If you look at AWS, right. I mean, is cybersecurity now just making sure that those aren't attacked and are up and running? Or is it more onto, because of AI, some of the cybersecurity stuff just needs to be sexier?
It's all of the above. It is all of the above. I mean, the cybersecurity companies we talk to are very much leaning into AI now, right? Their traditional bread and butter were hackers, cyber attacks, ransomware threats, things like that. But some of the CEOs I've talked to recently say that they believe that in the coming years, AI will pose a larger threat, security-wise, for companies' data and breaches than your typical ransomware hacker.
Lynn, thank you so much. Lynn Doan there, Bloomberg's managing editor for cybersecurity and tech. She has the coolest title and the coolest job. Now, Sanae Takaishi has become Japan's first female prime minister after winning a key vote. Her rise to the premiership is a historic feat in a country ranking low in female political representation. Well, we're now joined by Geroid Reedy, a Bloomberg opinion columnist in Tokyo. Geroid, what issues are likely to be top of her agenda coming into office?
Well, obviously she has a lot of things that she's going to have to tackle, but the number one thing that I think the public are going to want her to tackle is inflation. Japan, not unique in suffering from inflation over the past couple of years, but it is somewhat unique in that it's the only country that was suffering from deflation for so many years and even decades before that. Voters have made their discontent with the situation in terms of inflation known before she does anything, before she moves on to grand economic visions, before she moves on to any kind of major visions that she might want to implement. She's going to have to do something in the near term, and that's because her party, the LDP, is extremely unpopular. It has not been able to do much about the situation under the previous Prime Minister, Shigeru Ishiba. That's going to be the first thing she has to tackle. After that, she's going to also have to look at discontent or concern, shall I say, around the rising level of immigration in Japan. Very different in terms of absolute numbers to countries in the West, but still the pace of immigration has been on the rise in Japan over recent years. So that's going to be a top of her agenda. And then one other thing I should also say, there's a small matter of the visit from President Donald Trump to Japan next week.
Yeah, so Takashi also cites Margaret Thatcher as her inspiration, but will her conservative views place her a long way from progressive feminism?
I think that depends on your perspective. Takeishi certainly is no progressive feminist. To the best of my knowledge, she does not describe herself as a feminist at all. At the same time, she herself, obviously, taking this position is a huge step forward. You talked about the gender equality rankings in the intro there. One of the main reasons that Japan is so low in the gender equality rankings is because it's never had a female leader. That will obviously take care of this. She has also moved to try and increase female leadership within the country. Now, on the campaign trail to get the LDP leadership position, she talked about trying to fill the cabinet with Nordic levels of women. She wasn't able to do that. There's actually only 2 other women within the cabinet alongside herself. Having said that, one of them is in the very powerful and very prestigious position of the Minister of Finance. It's the first time also that a woman has ever occupied that office. So don't expect progressive, feminist policies from her. Having said that, she is, I think, supporting advancing women lawmakers, certainly within the country, and that's something to be encouraged.
Geroy, thank you so much. Bloomberg's opinion columnist there, Geroy Brady in Tokyo. Now, we're also joined by Vasiliki Bhattacharjee, head of EMEA iShares fixed income product strategy at BlackRock. Thank you for joining us. There's so much going on, Vasiliki. Of course, on the markets, we had credit worries and we have that inflation data. What do you think is driving the markets today?
Yeah, good morning, Francine. Thank you for having me. I mean, if we take a step back, it's been an extraordinary year. We've had equity markets and credit markets being very resilient despite all the macro and the geopolitics. At the same time, yes, there is some nervousness in the system. We're seeing traditional hedges like gold soaring at the same time, but also demand for fixed income this year has been exceptionally strong. Bond ETFs crossed 3 trillion in assets under management, and that has been driven by this relentless demand for high-quality income. So really where I sit from, I mean, we are entering this unprecedented stage where both risk assets and haven assets are driving portfolio allocations at the moment.
But Vasiliki, are you surprised that actually, even if you look at equities, I know there was a little bit of a bump because of credit. I don't know whether you're expecting something uglier to happen there. But are you surprised that despite a lot of the macro uncertainty, equities are fine?
Yeah, I mean, so I think that the drivers for the equity market, and again, it's primarily driven by U.S. equity markets, the earnings season that has been very strong, and obviously the AI theme, everything that you're hearing today over at your conference. But something that hasn't happened, given the strength of the U.S. equity market, is diversification, and particularly diversification away from U.S. assets and the stronger dollar. But remember, we're sitting here in Europe. Most investors are euro-denominated investors, and this diversification away from U.S. is something that I have seen happening within the fixed income market. So you can diversify your fixed income portfolio looking at European credit, but also other types of credit exposures, particularly within securitized, which gives you a completely different profile. Again, if people are worried about being maxed out in their allocations on IG credit, we think fundamentals are strong, but they can still get diversified income from assets such as securitized, CLOs, CMBSs. These are assets that they're not linked to corporate issuers, they're linked to consumer and other securitized assets. So there's still plenty of opportunities to anchor your fixed income portfolio based on high quality yields, but also gain some benefits from diversifying across regions and different issuer and security types.
Vasiliki, given the steepening yield curves, certainly in Europe, and we've seen a little bit of rumbling in France, are there any, again, countries that look more attractive? How do you play that space?
May I say first that the steepening yield curves that we've seen globally in Europe and in the US, but particularly in Europe, have been a major catalyst for investors putting cash to work. It's been the reason why we've seen fixed maturity strategies such as I-bonds, ETFs, things that they mature like a bond, essentially, gaining extreme traction this year because people, again, we talked about the demand for yield, but also people want stable income solutions given some of the volatility that you alluded to in the bond markets. So if there is more demand for more scope for steepening curves later on from where we stand, potentially we have seen the curve steepening kind of moderating itself. Obviously the ECB is where it should be when it comes to the rate decisions. The longer end, obviously, driven more by fiscal challenges. And of course, in Europe, yes, we do have divergence of growth outlooks across northern and southern countries. So yes, potentially there will be some further movements. But again, when it comes to what does it mean for fixed income portfolios, I see that steepening of the yield curve driving assets out of cash into the bond markets.
Vasiliki, do you see a rotation away from U.S. assets? I know some, big hedge funds, for example, point to the rise in gold. Is that now a de-dollarization play, or do you see moves elsewhere?
I mean, as I mentioned earlier, it's something that we haven't seen happening within equity portfolios, and rightly so. I mean, it's hard to ignore the structural tailwinds of the U.S. growth, the economy, the AI boom. But it is something that we see investors intentionally trying to diversify their portfolio in other parts. Gold could be one. As I mentioned, the demand that I see for European fixed income is another kind of manifestation of that. And let's not forget, hedging costs have become a lot more expensive. So if you're sitting here in Europe, it really doesn't make sense to take the dollar risk, hedge it back to Europe. On the other side, I see investors in the US potentially, buying European fixed income assets, hedging them back into dollar, and still getting yields higher than US IG credit. So FX can be a source of income if used correctly.
Vasiliki, overall, when you look at some of the moves that we've seen, I mean, is there any worry about liquidity or anything like that could come to the surface?
Yeah, I don't think so. I mean, liquidity is not something that we see as a major risk in either the credit markets or in the government bond space. We do see more kind of credit events that could be migration of credit ratings, like IG issuers going into high yield, or corporate actions. But I think that's highlights the need of kind of good credit selection and active management in portfolios. And I think it's also one of the reasons why we've seen, again, continuous growth into ETFs, the industry, both on the index side and on the active side. But when it comes to navigating those more idiosyncratic credit events, I wouldn't underestimate the need for good credit research and analysts kind of analyzing what's driving companies' fundamentals and activities.
Vasiliki, thanks so much for joining us. Vasiliki Pachaturini, their head of the EMEA iShares fixed income strategy at BlackRock. Now, coming up, we discuss the role of chatbots for businesses with Lauren Kunze, the Chief Executive Officer of Pandora Bots, an iconic co-founder. That's next, and this is Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility. There's still room to maneuver. We do see opportunities that allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Earnings season is here.
European earnings in focus. We'll break down the results.
Bloomberg is first to break the numbers.
We're bringing you some earnings that are coming through a Nordea Bank.
LVMH reporting a surprising return.
And BP.
The earnings story, I think, is really fascinating.
There's just so much news.
With the smartest insights.
It has been a record half-year result. We are committed to capital return. We were even able to increase our outlook. It's very good news, I think, for our shareholders.
Continuing coverage on Bloomberg.
So we've been doing AI since 2012. So people think it's a new thing. Gen AI is kind of new, but not all of AI. We have 2,000 people doing it. Spend $2 billion a year on it. It affects everything: risk, fraud, marketing, idea generation, customer service, and it's kind of the tip of the iceberg. And so we're deploying it. Every time we meet as a business, we ask, what are you doing in AI? What are you doing to serve your people? Why can you do better? What is somebody else doing? So we're freely deploying it and safely.
Well, that was Jamie Dimon, JP Morgan Chase chairman and, of course, chief executive, speaking to Bloomberg recently about the lender's use of AI. Now, with OpenAI set to offer chatbot romance and more adult content to try and monetize its user base, big questions being asked about how society uses technology. Well, my next guest says her AI company will not offer romantic companions. Lauren Kudzi is chief executive officer of Pandora Bots, which makes chatbots for a range of activities, including customer services. She's also the co-founder of Iconic, which focuses on consumer AI. Lauren, thank you so much for joining us.
Thank you for having me. It's great to be here.
I mean, this is I guess it's a tricky moment in history where if you're in your business and your space and your industry, you decide how you monetize it. And so you've been very clear, this won't be romantic, companionships. It's for business use.
Yeah, well, so our chatbot technology actually inspired the Spike Jonze movie, Her, and we've been in the business for 2 decades. And so we've seen from processing 100 billion interactions an overwhelming user demand for romantic use cases. And we believe that sexualized AI romantic companions are going to be a net negative for society, and also are not the best business choice in terms of working with blue chip brands.
So how do you see actually these chatbots evolving?
We still think that AI companion technology has wonderful opportunities in any sector where personalized listening and helping people feel heard and tutoring and anything that requires a conversation with a human expert, there's tremendous capability. But we think that sexualized use cases are really going to have a negative impact on our mental health, our interpersonal relationships, far beyond what we've seen with pornography and social media.
So, Lauren, when you look at the industries that, where the innovation will really come from, you mentioned education. Is there anything else that you think will really change because of the use of this technology?
Yeah, I mean, I think it really is akin to the internet. It is going to be everywhere, and it's going to have as big of a seismic shift. I'm really bullish on educational use cases. I think AI for writing code is already transformative. The problem with generative AI, as everyone knows by now, is there's a big accuracy problem. And so any use cases where you have to be 100% accurate to be safe, there's going to be a problem. But I think the technology is evolving, and we will get there.
Lauren, is there a way, like a utopia almost, where you see actually we'll be able to get, accurate information, unbiased information in everything, and how far away is that?
That's a tough question. I think a lot of people feel that generative AI is hitting a wall with regard to simply throwing more compute and more data at the problem, not yielding breakthroughs. We combine more of a rule-based approach to AI on top of generative systems, and we work with human experts to train any model that requires expertise in a specific domain. So I think that a blended approach is what's necessary for battle-tested enterprise applications that are going to be interacting with consumers at scale today.
So what have you learned? I mean, what surprised you the most, right, in the last 5 to 10 years? It's just
honestly, OpenAI's shift to erotica is deeply shocking. I feel like it's sort of, if you recall when Google dropped "Don't be evil" as their tagline, we sort of went from nonprofit making AI for the benefit of humanity to for-profit making AI for the benefit of humanity to now we're making porn. And it's understandable because there's a 40x gap between their valuation and the revenue, which they have to bridge somehow, but I never really thought we would see in our lifetime. And I think one of the we had many decision points over the last 2 decades looking at the demand for this use case and deciding not to do it. And I think what shocked us is the conversation logs. We saw the most engaged users were people who were coming back to enact the same rape and murder fantasies over and over and over again. And it didn't seem like the AI was going to be able to better socialize antisocial people. It seemed like it was going to help fan the flames of those fantasies. And then the other shocking thing is that the most engaged users are children or young teens. I think that's who gets really into the technology, is really curious, and so it is in fact very dangerous.
So, I mean, is it regulation that could help, or is it just a
regulation is slow, so I think the real responsibility lies in the hands of the creators, and I hope more people decide not to do this. But I do think we would need regulation akin to products we see that are dependency forming, like tobacco and gambling. I think that media is the wrong analogy. I think we also need warning labels. I think the Surgeon General has proposed that for social media. Something that goes beyond sort of the current cheeky disclaimer, AI can make mistakes, or everything I say is made up. And I think we need a new framework for liability. So holding creators responsible to prove their products are safe rather than consumers needing to show that they were harmed after the fact. Because I think one thing when we say, oh, let's just let adults be adults, and the mental health impact is only on people who are already unstable, that is simply not true. Ever since chatbots were invented in the 1960s, the early phenomenon proved that intelligent, grounded people are highly susceptible to being manipulated just by being agreed with, to being radicalized. So I think it's an everyone problem and not sort of a fringe, people who are already unstable are going to do what they want, but we've solved that. And it's okay to test on the rest of humanity, right? Because we have 1 billion people on the planet using this technology now.
So eloquently put. Lauren, is there a worry that actually it's because people just need to monetize? So I hear a lot of conversation with CEOs, in general, not even the tech space, saying I'm spending so much on innovation, I need at some point to really see a return.
Yeah, that is the most logical explanation, right? OpenAI started out with a very firm stance. We're not going to allow pornographic use cases. They have a history of kicking developers like Replica, the AI companion app that's been fined a lot, that I think famously encouraged someone to try to assassinate the Queen here. They've turned that off in the past and said you can't use our APIs, so this is a big shift. And 30% of all user inputs to chatbots, it doesn't matter if it's a general assistant or something that's sort of designed to be alluring by design, are romantic or sexual. So it's a user demand, and that's where the money is.
Lauren, thank you so much for joining us today. Laura Quincy there, the Chief Executive Officer of Pandora Bots and co-founder of Iconic. Coming up, as data security becomes increasingly important, we speak to Upwind Security's Rinki Sethi about how to be protected in a digital world. More on that conversation next, and this is Bloomberg.
you think the dollar will remain the only reserve currency in the world, and are you as comfortable with the dollar as it used to be?
The dollar has been, as you say, a reserve currency for about 80 years. Actually, if you wanted to go further back, you could say it's almost after World War I, when the US had lent money to Europe and the UK for ammunition and so on, and then they had to get paid back in dollars, and that's when the strength of the dollar really began. So it's 100 years, 80 years, 100 years of dollar strength, so much so that important commodities, gold, oil, are denominated in dollars. Dollars are part of the payment system. When countries talk to each other, they represent their GDP and various figures in dollars. I think undoing that will take a long, long time. And, 3% in foreign exchange terms is not that much.
Okay, so you think the dollar will stay as the reserve currency of the
Absolutely.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sart in Le Mans, and this is Bloomberg.
Good morning, everyone, and welcome to a special edition of The Pulse from Bloomberg Tech in London. I'm Francine Lacqua, and these are your top stories. Sanae Takaishi wins a parliamentary vote to become Japan's prime minister, making her the first woman to clinch the nation's top leadership job. President Trump signs a landmark deal with the Australian prime minister to boost America's access to rare earths in an effort to counter China. And Bloomberg understands that the Bank of England is considering stress tests for private credit, underlining rising concerns that the sector could be harboring systemic threats to financial stability. So President Trump has signed a landmark pact with Australian Prime Minister Anthony Albanese to boost America's access to rare earths and other critical minerals. It's part of U.S. efforts to counter China's tight grip on the supply chains of key metals. Well, joining us now is Martin Ritchie, who leads our metals and mining coverage in Shanghai. Martin, thank you for joining us. So what do we actually know about this minerals agreement?
Yeah, it's another big day for rare earths. The US and Australia agree a pretty sweeping deal, actually, to jointly invest in production facilities, mines, processing of critical minerals, including rare earths in Australia. The first tranche is $2 billion. That's $1 billion each. That will go to projects in Australia over the next 6 months. Australian Prime Minister Anthony Albanese talked about $8.5 billion of cash perhaps in the pipeline. Very important timing, obviously. Trump is going to meet President Xi, probably. We'll see at the end of this month, where rare earths is a key topic. Trump is obviously pitching this as his sort of effort to get more supply from outside of China. At the meeting in the White House with Albanese, he talked about the U.S. being pretty flush with rare earths a year from now. These projects do, however, take quite a long time to develop, and all the associated supply chain up to the finished products takes longer. So it's not a quick fix, but it shows that the U.S. is forming a fairly distinct policy now on critical minerals jointly with other countries and not going it alone.
So, Martin, given the vast natural resources of China, can Australia actually fill that gap in the market?
Yeah, it's a good question. So one of the sort of decisive features of the rare earth spat this year has been that China has focused on supplies of particular types of rare earths, so without going into too much detail, particular types that are really needed in high performance applications in multiple industries, electric vehicles, cars, fighter jets, defense equipment. And those particular rare earths are the ones that are in really short supply. Other types are really not. So what this deal should probably focus on is how the US can get the heavy rare earths, the ones that are in short supply, from Australia. China has this great advantage in that it gets most of its heavy rare earths from Myanmar. It's one of the great sort of factors that support China. So you've got this situation where the US is kind of scrambling, picking up pockets of heavy rare earths from all around the world, while China has this kind of very substantial chunk of supply on its doorstep in Myanmar.
Martin, thank you so much. So interesting. I know we'll talk more and more about rare earths. Martin Ritchie there. Now, as we keep hearing, technology, of course, is permeating every part of our lives. And we keep hearing about it, but also we just see it. The risk from ransomware attacks has also risen as more of our valuable details live in the digital sphere. We're now joined by Ricky Sethi, Chief Security and Strategy Officer at Upwind Security. Ricky, thank you so much for joining us. I mean, it's true, we see it, right? We're addicted to our phones. We rely so much more on Google. We had that shortage yesterday that kind of made a lot of people at the standstill. Like, your job just got a hell of a lot more complicated.
Well, thank you so much for having me. And yeah, I mean, cybersecurity is the hot topic of the day, especially with everything we're hearing around AI. And the outage yesterday was huge and affected customers of different companies all around the world.
I mean, is everything just getting much more sophisticated, or as some of these, cybersecurity threats are getting more sophisticated, it's a low-hanging fruit that we forget about?
Yeah, I think the attacks are getting more sophisticated, but also with AI, attackers are able to scale. And I think now enterprises are catching up, leveraging AI to be able to defend as well. And so the complexity is there. But I think with AI, we've got massive opportunity to do security better and at scale as well.
Ricky, I mean, I love cybersecurity because it's the kind of thing that you don't have to think about until you have a problem, which is why your space is so interesting. If you look at the overall landscape, like who's getting it right, who's investing enough, is it region by region, or is it really companies that then kind of dominate the global stage?
I think it's right now, cybersecurity is such an interesting space. You hear about, I think some of the top investments are happening in cybersecurity all around the world. I know I come from the Silicon Valley, which is becoming kind of, in San Francisco, is becoming an AI hub. Every security company right now is an AI company. Investments are happening all around the world because, we've got to invest in this. You see, like in every area of cyber, there's dozens and dozens of competitors that are being invested in because this is going to be a need for the market.
So can AI also help in actually tracking them? Again, how much of is AI a worry for cybersecurity, and how much of it is it an asset if used right?
Yeah, I think it's a challenge that we've got to think about because the attackers have AI in their hands, but it's also an equalizer too, right? When you think about it, because now as practitioners, we have AI to drive productivity and to be able to scale. We know that, like right now, that we don't have enough talent to fill the gaps that we have in the market, and AI is going to help us get there.
So what are the tools needed?
I think one of the biggest things to think about is like right now there's a whole shift, and you hear about the largest companies in the world talking about this in their earnings reports even, that everything's going to be focused on runtime security, where we've been focused on kind of where cloud security posture needs to be fixed and where configuration issues might be. Really, like, this is kind of the philosophy and why I joined Upwind Security, which is around you really need to focus at runtime. And what that means is as applications are running, that's where the attacks are happening. And you want to be able to prevent the attackers from even going and hacking your systems. Looking at configurations is important, but that's after the fact. You've got to be where the attacks are happening. And so the future of cybersecurity is all going to be at runtime. And you can't do security right if you're not at runtime.
Ricky, I mean, one of the most fascinating conversations I had was with actually a big Wall Street titan who was saying, their systems at banks sometimes prevents attacks on central bankers because they see it first. I mean, we don't often talk about, again, this crossover of like cybersecurity. Will that increase as AI attacks could come from all sides?
I think so. I think the information sharing has to happen. And you've heard about these, like, information sharing in the finance industry or in the tech industry that exists. There is information sharing happening, but we've got to get better at it. Like, we've been talking about this for decades, that the attackers are talking and they like share information. So we actually have to do that better as an industry. And I think that there is a lot of that information sharing that does happen.
Rinky, how's Silicon Valley? So you mentioned the fact, of course we know that it's the AI hub, but also there's a lot more investment. Is the money being deployed in the right places on cybersecurity? And are there enough VC funds in that space? Is like Silicon Valley going to be the hotspot for cybersecurity?
I think Silicon Valley is definitely, like, right now it's booming with AI, and I do think there's so many investments happening in cybersecurity. I'm actually really excited about, and being an investor myself, investing in the cybersecurity space. I think it is happening in all the domains right now, and people are taking bets because they know there's going to be some big winners, and even the ones that are smaller companies, they're going to help the larger companies get better at what they're doing in terms of just the capabilities that might be missing today.
So what are you hearing that's quite exciting in the Valley?
To me, I think runtime security is really interesting. Security operations, we know that kind of the ways that we've been doing things are not going to scale. So really doubling down in that. It's exciting to see every company being an AI company. And I don't know, some people think that it's kind of sci-fi, but I do believe the future is agentic. And we are going to rely on agents, maybe with human in the loop to begin with. But in the future, agents will be making decisions for us. And I think if you believe in that future, the investments are really exciting right now, because you're really seeing how these companies will help you scale in the future.
I mean, I think that, you know, the big companies invest quite a lot of money or speak to the experts, and they really want to make sure that their systems are locked down. For the smaller companies, they really worry about being vulnerable. So is there any advice, like if you're a smaller company that's worried about it, but again, your budget is not infinite, like what's the right way to think about security?
Yeah, I think you need to like figure out where your top priorities are as a company, but like go and find companies that are really going to help you secure at a lower cost. And there's a lot of companies that are focusing on that can be a true partner for you and help you figure out what your strategy for cyber is. And you're absolutely right that smaller companies struggle. They don't have the big budget and revenues to focus. And so like really finding those key partners. And there's so many cybersecurity companies that can help now.
Yeah, and sometimes it's also like we had some data breaches in the UK, and it could be as easy as something like phishing, right? Something that is so basic. Does that, you know, as attacks get more sophisticated, are there some vulnerable, is it the retailers that you think are more vulnerable, or are there industries that are just more vulnerable because of the nature of what they do?
I think, like, we always hear that people are kind of the weakest link. I actually think people are our biggest asset. We need to empower them. We need to put the right tech in place, and we need to empower them on how they prevent falling victim to these attacks. Phishing still is, you know, one of the biggest attack vectors, but we could say it's getting more sophisticated, but they were already sophisticated. Now with AI, you can scale it and get them to look like almost like a real email or social engineering attack. And so I do think that we've got to empower our employees and empower our users with the right information. I do worry about kids and the elderly in our communities, and making sure that they have what they need, and the enterprises are taking accountability to protect them.
Ricky, I mean, if you look at state-sponsored, of course, attacks and cyber attacks, are those the more complicated ones?
Yeah, the nation-state attacks are definitely like, they have the patience to wait in your environments, right? They're not in a rush, and so they will sit, they will gain context over time, and so they are very complex, they're hard to detect. But again, with the right partners, they'll help you detect that right from the get-go if you build that in by default in your environment.
What did you learn at Twitter? That, you know, I don't know if there's a best piece of advice for everyone out there who is trying to think about things differently.
Yeah, working at Twitter was a really interesting experience. I joined right after the very public security breach there. But what I've learned at working kind of across public and private companies is that like the principles are the same around cybersecurity. You're focused on building in really, like, you want to secure, you want to trust but verify, and that concept is what you want to build security on, regardless of the industry or the company that you're at.
And that, I mean, is it when you onboard employees that you need to make that message very clear? Or we are much more aware of security in our daily lives compared to 15 years ago.
Yeah, I think like that has to be baked in right from everything you do. It has to be within the culture of a company. That security's got to be baked into the DNA. That starts, of course, with tech. You've got to train your people in the right way. I think not just train them when you think they need to be trained in a lot of the checkbox training we see, but really like now with AI, you can do in the moment, very customized training such that employees are learning as about to make mistakes. And so I think that's really important. And of course, your processes need to constantly improve at companies. You need to be evaluating the security posture continuously.
Rinki, thanks so much for joining us. Rinki Sethi there, Chief Security and Strategy Officer at Upwind Security. Now, the first discussion is underway from Bloomberg Tech London. On the panel, Mistral's AI Vice President for Global Public Affairs, the UK Minister for AI and Online Safety, and Bloomberg's team leader for tech in EMEA. The panel, Europe's path to technological sovereignty, and looks, of course, at control over critical tech and how that can reduce dependencies, drive innovation, but also protect democratic values in an era of global competition. So I think we'll listen in a little bit. You can also look at it on LiveGo. Of course, the Mistral Vice President saying that Europe, UK need to move with bigger agency on AI. The Mistral VP also saying that e-regulation is so painful to navigate. Now, you can continue watching that, of course, on all of our Bloomberg Tech London or T-Live on your Bloomberg terminal. Coming up, we talk credit. There's a lot going on in the markets. Equities continuing to rally. We discuss whether investors should be prepared for a market correction. That's next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Welcome back, everyone. A special edition of The Pulse from Bloomberg Tech Summit here in London. Now, the event looking at all the major trends across the sector, from AI and infrastructure spending to cyber security. I am delighted to be joined now by Bloomberg's Senior Executive Editor of Technology, Tom Giles. Tom, you're a busy man. I mean, you do it all. It's like technology, it's like AI, infrastructure, entertainment. So let's talk about the money. There's so much money being piled into AI infrastructure.
Hundreds of billions of dollars.
Good or
and there's
bad?
a new announcement every day. Well, clearly what that is showing you is that there's absolutely demand for the infrastructure that's needed, the computing power, the chips, the data centers that are needed to fuel the AI revolution. That's not without question. In my mind, I worry about whether there's overcapacity. I worry about whether we are investing so much in the chips and the infrastructure, but are there going to be enough uses, practical applications for all these AI services that we're investing so much in? And more importantly, will these companies make money off of it?
But I mean, the money question is a great question, but is it also a timeline problem that actually they may make money, or are we going to adopt AI as fast as we think we are?
Right. And the answer seems to be we're adopting it very, very quickly. What I don't get is whether we're monetizing it as quickly. People are trying it out. They're dabbling in it, right? They're using free services. But how much are you going to pay for generative AI?
Talk to me about robots, chatbots, and actually everything that comes in between. Again, how does it change the way we work?
Oh my gosh, in every way possible. Especially, let's think about coding, right? The generative AI is absolutely transforming the way coders are getting their jobs done. It's making them more efficient. It's making them more productive. The question that we're struggling with, and a lot of AI companies are struggling with, is it going to put people out of jobs, or is it going to free them up to a higher order of work?
But also, how do they connect with each other, right? As long, I mean, you need an ecosystem. It's no good having a chat box here and something else over there.
Absolutely. And what we're seeing is that a lot of people are starting to develop relationships with artificial intelligence, and they're making friends, and they're finding romantic partners, and sometimes they're becoming overly dependent, emotionally speaking, on these types of services.
Tom, how's regulation here in Europe? I know there's a lot of frustration that it's over-regulated, but at the same time, Europe wants to be its own, like not really rely on outside sources.
Absolutely. One of the themes of the day is tech sovereignty, and can this region develop its own infrastructure, develop its own ecosystem to keep it from being overly dependent on the U.S., on China, for example. I'm optimistic on the regulation side. I think that regulators here are starting to get the message that they need to bring a more rational regime. They need to think about things much more pragmatically.
Talk to me about AWS. So there was a massive outage yesterday, and you kind of feel very vulnerable because there are only a couple of people in charge of this.
We were all affected, even right here at the conference. Our conference website was affected. So apologies to any of our viewers who tried to learn about it and couldn't. But more importantly, it did show that there's a concentration of technology in the hands of a very small number of really big, powerful players. Most of the time, things go fine, but we're really, when something goes wrong, we see how dependent we've become.
But is there a way around that? I mean, it reminds me, you know, without making too many parallels to rare earths, if you have a concentration on someone, it's fine until it doesn't work out anymore, but is now the time to think about breaking away? Can you even break away?
I think what happens is you're going to have to think about regional clusters. It's not the kind of thing that each individual country, for example, throughout Europe is going to be able to develop its own ecosystem. What you're going to see is groups banding together. You're seeing it happening in the Middle East. We see it in parts of Europe, and I think the message is finally getting across.
What else are you focusing on, Tom? I mean, you have, many reporters, a big job. This OpenAI pivot towards more sexualized content was a real eye-opener for some. Is there anything else like that in terms of, and this is about making money?
Yeah, I think, are there enough services? Bain put out a research recently that said that in the coming years, there is going to be an $800 billion with the B, US dollars, shortfall in terms of the revenue generated from the AI services that we're investing so much in. I'm really eager, I know I keep coming back to this, but I'm really eager to see which companies have found a way to monetize their services. We're seeing it, OpenAI is doing it, Mistral, we're talking to them today. Want to see how they're doing it, Anthropic, and all the rest.
I mean, how much time do they have to really start monetizing? Is there a little bit of a grace period because of technology? No grace period?
No, there's no grace period. I mean, the investments are so high, they're all raising, and these would-be investors are looking at them and saying, okay, what's your strategy? And what's your go-to-market strategy? And you can't just talk about, hey, we just need eyeballs. We just need people to, adopt this and we give it away for free. They're asking that next question is how do you monetize it and bring it into businesses?
Tom, thank you so much. Tom Giles there, Bloomberg Senior Executive Editor for Technology. Now, the Bank of England has begun industry outreach about stress testing the private credit market. The move underlines rising concerns that the sector could be harboring systemic threats to financial stability. Well, for more, let's bring in Bloomberg's Ven Ram. So, Ven, so happy to speak to you. What's going on in terms of private credit concerns?
Morning, Francine. I think that, the private credit concerns are coming to the forefront of investors' minds because, we've got those private credit incidents in the U.S., namely First World Financial Corp and First Brands going bankrupt, and then Jamie Dimon calling attention to those bankruptcies. So the markets are thinking that, look, there is this opaque corner of the market where, we have got this private credit, which is rarely seen in public eye, and there's a lot going on behind the scenes, but they are reporting good numbers, good earnings numbers, but what is the kind of volatility that underlies those numbers? That's something no one knows, and there is that opacity, which is why that BOE is concerned about private credit. And in the financial markets, you measure risk in terms of volatility. So if that volatility is understated, that means you're understating the risk, and therefore the returns on the risk may not be commensurate with the risk you're taking, and that is why the BOE seems to be concerned at this point.
Yeah. But then, if the BOE is concerned, others should be concerned too. Again, if you're regulating the part which we know about, but not the part that could be opaque, shouldn't everyone be worried about it?
Yeah, absolutely, which is what we saw in the U.S. Last week, less of a concern this week because of, investors seem to be focusing on earnings reports, which is okay to brush aside at the moment but if you look at it in the longer term structure of things, it never works out very well to brush aside these things under the carpet. We have seen those private credit concerns come to the foreground. Now, it reminds me of what happened in 2007 when First World Financial Corp reported bankruptcy, and investors kind of glossed over it in April 2007, and they continued glossing over those kind of reports coming out sporadically from the credit markets, from the subprime credit markets at that point, until October 2007 it was, then the markets started really fretting about what the implications were for the bigger financial economy. So I think that, the markets are thinking these are sporadic instances of credit imploding here and there, but I think it's never a good idea to ignore them altogether.
So then, is the rare earths deal between the U.S. and Australia a game changer? I want to ask you that because then we need to talk Japan as well with the new Prime Minister.
Well, I think that to the extent that they have signed a deal, and Australia is one of the bigger rare earth exporters, and therefore that means that it's going to alleviate some of the supply concerns that the U.S. has had vis-a-vis those rare earth minerals, which are vital inputs into smart technology. So I think that to the extent that it allays those fears, it means that the U.S. may be less apprehensive about what China does on that front, and therefore that means it's positive for risk-on sentiment. But as I said, markets are getting frothy and valuations are looking very stretched, and therefore I would definitely be concerned about valuations going forward, although this deal does mean that China-US tensions are going to be on the back burner for now.
Okay, Ven, thank you so much. We'll talk about Japan another time, but I know you're writing about Japan. We have great coverage, of course, on all of our MLive products about Japan, the new Prime Minister, and what it means for Japanese assets. That was, of course, Ven Ram. Now we continue our coverage from Bloomberg Tech London with plenty of big conversations still to come, including the chief executives of Pigment, CoreWeave, and Helsing. That's on stage, on TV, and on T-Live Go on the Bloomberg terminal. Coverage also from the Tech Summit continues right here, and we have live pictures of, the Mistral VP and the minister in charge for AI security, speaking to our very own Amy Thompson. Up next, Bloomberg Brief, and this is Bloomberg.
And across the regulatory context, because the main thing you can do in that sort of situation is to make sure that we're providing maximal clarity at the earliest possible point and working hand in hand with our firms as well. And I'm delighted, by the way, that Mistral.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's 5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A rare deal. The U.S. turns to Australia for supply of rare earths with a landmark pact. The Takaichi trade. JGB's under pressure as Sanae Takaichi becomes Japan's first female prime minister. And mega caps in focus. Earnings from GM, Coca-Cola and Netflix to give insight into consumer and corporate health. So let's take a look at the markets, because obviously we finished with the indices up more than 1% apiece yesterday. We look to be just experiencing maybe a little exhaustion once again today, or maybe we're repeating our pattern from the last 2 weeks, up day, down day. But either way, we're not pointed that much lower on futures. And don't forget, the Nasdaq 100 is up 20% year to date. For the S&P 500, we're talking about a 14.5% gain. Let's take a look at bonds, because there we're maybe seeing a little more of a reflection of what's going on in markets. The 10-year yield firmly below 4% once again. It is staying there. It peaked its head over 4% once or twice yesterday, but we're just definitely lower across the curve, with that 30-year yield down to 4.55 and the 2-year yield at that key level of 3.45. Ed Yardeni making some waves with his note saying that, you know, if oil prices continue to decline, that impact on inflation plus the correlation between the two means that we could see 3.75 on the 10-year yield. But given that we've moved 17 basis points this month alone, what's another 17 basis points, right? We do want to point out that we have a weaker yen today as well, with Japanese assets moving on political developments over there, and the VIX still above 18. Now let's get to some individual movers. For that, we'll go across to London and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with a check on regional banks, as we're continuing to get better than expected earnings from the likes of them. Zions last night out with better than expected earnings outside of that $50 million charge-off they announced last week. Remember, Zions was really at the core of those regional bank worries last week, up 2.6%, basically erasing its drop from last week. Now, this comes after better than expected earnings, as I mentioned, but you also had the CEO saying that the situation of last week was a one-off. The chief risk officer also saying that they have reviewed the loan portfolio, have not found any other issues. They've also hired external sources to come and review their loan portfolio, so that is undergoing. But this is really buffering the regional bank trend at the latest. We've had now two back-to-back sessions of some pretty strong gains across regional banks. Let's move on to the AI trade. Again, it is capturing most of our attention. Core Scientific in the headlines this morning. Now, Core Scientific used to be a Bitcoin miner. They have now changed to more power infrastructure for AI computing capacity. The shares are up nearly 3.5% in pre-market. Now, this is because a key proxy advisor has advised them to reject the bid from CoreWeave. CoreWeave is that major cloud infrastructure company, went public earlier this year and counts Microsoft as one of its key customers. Now, the bid from CoreWeave was around $20 a share, valued Core Scientific at around $9 billion, but the chorus is growing that is not enough for Core Scientific shareholders to accept the deal. They do vote on it on October 30th. Lastly, let's move on to the healthcare industry. DocGo, this is a virtual healthcare company, has announced it has acquired SteadyMD, which is a telehealth provider, and they're hoping to now offer telehealth services across 50 states and expand their breadth. So DocGo shares are up 32%, even though they have paid for SteadyMD. It was an undisclosed amount, but shareholders are still looking positively on the acquisition. Bonnie?
Valerie, thank you so much. Valerie Titel there in London. And later this hour, we're going to be taking a closer look to this earnings season with Sitara Sundar of JP Morgan Private Bank. But first, President Trump striking a landmark deal with Australia.
We're here to talk about trade, submarines, lots of other military equipment. We are discussing critical minerals and rare earths, and we're going to be signing an agreement that's been negotiated over a period of 4 or 5 months.
For more, Bloomberg's Brendan Murray joins us now. So, Brendan, a pretty unprecedented type of pact. Will it ensure that we will get a supply of rare earths pretty soon?
Yeah, exactly. So this is the biggest deal of its kind between two Western nations that we've seen to date, and we're likely to see more of them. Australia being a huge exporter of mined materials, and the U.S. Being a huge importer, consumer of rare earths, critical minerals, and those kinds of things. The timing of this is especially important because it was just 2 weeks ago that China increased its rare earth export restrictions and sort of put the world on notice that it has control over these supply chains. And so, as the president said, it's been in the works for several months now, but we're likely to see other such deals like this coming down the track as the U.S. tries to deal with this threat of China being able to control the global supply chain of rare earth minerals.
Brendan, will this particular pact make China a little sore? Does it give the president more leverage? As John Authers writes today, Trump's hand with China is improving, but is it enough?
Yeah, exactly. Australia is not a huge miner of these kinds of materials. The key really is processing, and China controls most of the world's processing of these rare earth. And so it's likely to catch China's attention, but in terms of taking market share from China, it's unlikely to make a huge difference. Australia has the capacity to produce about 1/10 of what China can. So it makes a difference, but it's not going to turn the tide.
The Supreme Court has been told that the Trump tariffs are illegal, so we got that side of the argument. What happens next, Brendan?
Yeah, so we're hearing from the companies that are complaining about Trump's tariffs and have taken legal action that Trump has lost in lower courts. He's now appealed to the Supreme Court, and this is all the lead up to a big November 5th hearing that we're going to have. Both sides are going to present their case. We're going to hear from the justices. The president has even said he wants to attend this hearing. We'll see if that's even possible. But it really comes down to whether the Supreme Court will say that Trump has the authority to use these tariffs or whether he doesn't. If he loses, he still has these 232 tariffs, these sectoral tariffs that he can use. There are currently 12 of those such investigations ongoing, so they could still put a lot of tariffs on American imports with some other authorities. But this will be a big test of whether the president can use kind of unilateral authority to put tariffs on the U.S.'s biggest trading partners.
Brendan, thank you so much. That is Brendan Murray, our trade czar. Over in Asia, Japan has elected its first female prime minister. Sanae Takaichi has won the parliamentary vote. That was earlier today, with just 4 votes above the majority line needed to confirm her victory. Garod Ridi of Bloomberg Opinion joins us now from Tokyo. So, Garod, she's been called hawkish, nationalistic, but what's she like fiscally? Will we see stimulus as the markets are anticipating?
Certainly you'll see, I think, a more
positive attitude towards stimulus than what we had under Ishiba or indeed his predecessor, Fumio Kishida. However, I think before she gets on to any large economic plans, we haven't really seen much of what they might be. We might actually get to see some of that later today when she holds her first press conference as Prime Minister. But I think before she does anything on that, she needs to do something about relief measures for inflation. That's the really big issue in the country at the moment, especially households suffering from inflation at the checkout. Measures to help households, especially low-income households, with tax rebates, maybe with some kind of handout. That's going to be the first thing that she's going to have to concentrate on in the extra budget that she's now going to have to draft. But certainly, you can expect a more positive attitude towards stimulus than we've been seeing from recent administrations.
Yeah, and of course, it has implications for the BOJ next week and whether it decides to raise interest rates or no. But I wanted to ask you about leaders in the private market, because those from Blackstone to Apollo, KKR, gathering at the Japan Asset Management Forum. Now, they're showing their enthusiasm for investment opportunities in that country. What makes the market particularly attractive for them at this time?
It's a great time, basically, for anyone to try to be investing in Japan. Obviously, the stock market is booming, but you still have so many companies in Japan that are undervalued, combined with an attitude within the country where these companies that were not using their assets effectively, that were not using their cash effectively in the past, were just kind of left to do whatever they wanted. Now there's an attitude within the country, within boardrooms, that managers, executives have to do something. They have to improve their valuations or otherwise sell themselves. That's been coming very heavily from the Tokyo Stock Exchange. So you have an environment there where it's perfect for people who want to come in. If a company wants to sell off assets that it hasn't been using, maybe it's got a division that it doesn't know what to do with and has been costing its money, those deals are everywhere now in Japan, and you're seeing that reflected in the attitudes of those asset managers coming in.
It's fascinating. I mean, the yen is weaker. We're above 151 today, and JGBs, as I was saying, under pressure. So for the regular investor that may be being attracted by this widowmaker trade, so-called, does that remain the consensus? I mean, bonds are down 4% on a total return basis year to date, which is worst performance in global bonds. Does that continue, Gerald?
I wouldn't expect a major shift in that at this point in time. Like I say, I think from the appointments that we're seeing Takaichi make today, you could expect stimulus, you could expect more bond issuance, or at least certainly less of an attitude of trying to restrain bond issuance. In Japan, there's always this back and forth between various governments and the Ministry of Finance, the bureaucrats of the Ministry of Finance, who want to constrain spending. I think you're likely to see, especially with the appointment of the new Finance Minister, Satsuki Katayama, you're likely to see more pressure being placed on the Finance Ministry to loosen the purse strings a little bit more compared to the attitude that we've seen a little bit. So I would expect that the trends that we've seen, certainly over the past couple of weeks, they're likely to hold for a while. And the BOJ, I personally think they're also likely to have to continue to adopt their wait-and-see approach.
Gerald, thank you so much. That is Gerald Reedy of Bloomberg Opinion in Tokyo. Thank you. Now, to other top stories trending on the terminal this morning. The UK government borrowed $9.6 billion, more than forecast, in the first 6 months of the fiscal year. The borrowing, the second highest on record, was driven by a spike in debt interest costs. Meantime, the BOE has started industry outreach about stress testing the private credit market. Any tests would likely be launched within the next 12 months. The BOE is expected to give more details before Christmas. Former French President Nicolas Sarkozy has entered Prison de la Santé in Paris after his conviction for a criminal conspiracy. This marks the first time a former French president goes to jail. He's unlikely to serve the full 5-year sentence and can immediately file a release request, which typically takes a month to process. Coming up, Bloomberg Tech Summit in full swing. We're live from London next. This is Bloomberg.
Ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Aqua in Sintra, Portugal, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Season is here.
Earnings season begins once again.
So much going on.
Bloomberg is first to break the numbers.
From Snowflake, from Pure Storage, from Urban Outfitters, and from NVIDIA.
Coming up, we'll talk about some of the other earnings that are coming out.
With the smartest insights.
Third quarter numbers are going to be really important. The commentary is going to be important. It's all going to be about margins because margins lead to earnings. And if earnings come down, we have a problem.
You have to come back again soon. This is really excellent.
Continuing coverage on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Bloomberg Tech London is underway, bringing together some of the top voices in Europe to discuss everything from tech sovereignty to AI regulation, cybersecurity, and industrial policy. Earlier today, we heard from the CEO of Pigment, a company that offers AI tools for financial planning.
The way I think about tech sovereignty in Europe is not so much about protecting yourself, but more growing faster. And I think we have to ship faster. We have to be faster at bringing the right technology in Europe. And this is really what I try to push, working all together, creating the right energy infrastructure, the right talent infrastructure, the right business infrastructure. And what I encourage all of our customers and businesses is to adopt technology faster.
Tom McKenzie, host of Bloomberg Tech Europe, joins us now. So, Tom, what have the executives there been saying about Europe's ability to build truly sovereign tech?
Yeah, Vonnie, well, actually, interestingly, the CEO of Pigment there, Elena Crespo, also saying that there's a need for European enterprise to adopt these AI solutions more quickly. She gave an example, in fact, of how some of our European clients might take 6 months to sign a deal and to actually adopt some of their AI solutions versus 2 days in the US. So that speed of adoption gap between Europe and the US is fundamental. And in fact, we've been hearing from executives at Mistral as well, Mistral being one of the leading LLMs, really the best hope when it comes to European sovereign large language models and AI. They've been talking as well. That executive at Mistral, she's been talking about the fact that there needs to be faster adoption because then it creates this circular momentum in terms of raising additional capital to keep funding these efforts. So adoption has been a key part of it. Sovereignty, why is that important? We've had a reminder in the news flow today of just why the focus on sovereignty is there for Europe. You think about the US signing a deal with Australia around rare earths. Rare earths, when we have a reduction there, it challenges the defense space. Defense technology and defense sovereignty is going to be key in terms of the conversations today as well. We're going to be hearing from Helsing, for example. I'll be sitting down with the co-founder and the CEO of what is the leading defense tech company in Europe. We're also talking about space innovation and how Europe needs to be less reliant, for example, on Starlink and SpaceX. So all of that is coming together in the conversations today here in London.
We are looking forward to those conversations. Our thanks to you. That is Bloomberg Tech Europe anchor Tom McKenzie. Let's stay there now because our executive editor for Global Tech, Tom Giles, is sitting down with CoreWeave co-founder and CEO Michael and Trader. Let's take a listen.
Customers in particular, and do you see a degree of urgency around sort of bespoke and very region-specific solutions in terms of the data center?
Yeah, so, you know, I think that the way that the demand comes through the market right now is it's sort of bifurcated in a lot of ways, right? Like you've got one driver of demand that's coming from the most enormous companies in the world, the largest labs in the world, you know, and you know, your OpenAIs, your Mistrals, all of them together, and they are very kind of tech forward, kind of thinking about how they're going to address this. And then in addition to that, you've got a host of startups, you've got a host of application layers that are looking to be able to orchestrate their compute that way. I mean, and you know, we just completed the acquisition of Monolith, which was a UK-based company. It's a good example of a company that has, you know, a significant distribution of clients, kind of outside of that first tier of really, really large consumers that touch a lot of other players. You know, another acquisition that we did earlier this year was Weights and Biases, another great example. They have a massive breadth of clients, really, that you know, globally, that really are providing us that roadmap. So we're kind of tackling the problem from two sides, right? One is the really scaled players, and those are kind of relatively small in number, always have been, and then there's this groundswell of smaller consumers that you need to be able to address, and you need to be able to help them as they're tackling these problems that are going to come up where they're not going to have the ability to kind of shift workloads around within their infrastructure.
Sure. Around the time of your IPO, there was some chatter on Wall Street about a lack of diversification of your customer base, right? And Microsoft accounting for a big chunk of it. Obviously, since then, you've announced some pretty breakthrough additional customers, OpenAI, Meta. Talk about. And your stock has more than tripled last I checked, so I get the sense that the market gives it a stamp of approval. I'd like to just get a sense of the degree of urgency for greater diversification to the extent that you have that. Where does it come from and how soon?
Yeah, so look, you know, regardless of what the street said about diversification's always been a priority for us. We understand the value in having a broad array of clients, both from the perspective of it stabilizes your business, but also the information that you're getting by serving lots of different clients help you tailor what you're building, where you're building, how you're building, so that you're better able to serve consumers of this type of product. And so I was in an investor meeting recently, and there was a large Microsoft deal that went.
All right, that's Bloomberg's Tom Giles speaking with CoreWeave CEO Michael and Trader there at Bloomberg Tech Summit in London, and you can continue to listen in on your Bloomberg terminal at LiveGo. Coming up, a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
In case you missed it on Bloomberg Surveillance,
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs?
How
and
are
you're
the
lowering the cost of meatballs.
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Time now for your front page news. First up, the Financial Times reporting the U.S. Army has asked private equity, Apollo, Carlyle, KKR, Cerberus among candidates, to pitch strategic projects to help the service fund a $150 billion infrastructure overhaul. It's the latest effort from the administration to enlist some of Wall Street's biggest investors in national security. Next up, sources telling the Wall Street Journal a group of banks, including JP Chase, Bank of America, Goldman Sachs, is struggling to put together a $20 billion loan to Argentina without leaving themselves on the hook to the virtually bankrupt South American country. Bankers are waiting on guidance from Treasury on what collateral Argentina would be able to provide for them, or if Washington would plan to backstop the facility on its own. And on the Washington Post's front page, a federal appeals court rules President Trump could deploy the National Guard to Portland, Oregon. That blocks a judge's ruling that prohibited the action. The 2-to-1 majority ruled it was likely Trump acted lawfully in federalizing the National Guard during protests over immigration enforcement. And those are your front page stories. Coming up, $3 trillion in market cap reporting today. We'll get more on earnings with Sitara Sundar of JP Morgan Private Bank. That's all next. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A rare deal. The U.S. turns to Australia for supply of rare earths with a landmark pact. The Takaichi trade. JGB is under pressure as Sanae Takaichi becomes Japan's first female prime minister. Mega caps in focus. Earnings from GM, Coca-Cola and Netflix among companies today to give insight into consumer and corporate health. So let's take a look at markets, because even with that rare earths deal, we still see futures pointed lower, although fractionally, and we should remember that we were up by 1.1% on the S&P yesterday and 1.3% on the NASDAQ. And year to date, well, don't even get me started, we're up 20% on the NASDAQ 100 year to date. Let's take a look at bonds, because yields have been moving, but they are staying where they were. We're back down to 3.96 on the 10-year yield. The 2-year yield came up to 3.45 and is staying there. The 30-year yield down to 4.55. So lots of movement in this yield curve. Ed Yardeni out with a note in the last few hours suggesting that the 10-year could actually hit 3.75 if oil continues to slide because of the correlation between the two asset classes longer run. But that's what we have to look at today. The VIX down to below 19, still slightly elevated. We have oil a bit softer, and the yen there, as you can see, weaker at 151.75 as Sanae Takaichi names new cabinet members. Let's get to some individual stocks to watch now. Over to London and Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check on Zions, that regional bank that was at the heart of those credit worries last week. Out with results better than expected, and shares are trading higher, up 2.5%. The CEO saying some positive things, that the issue last week was a one-off. It was an isolated incident. And even the chief credit officer saying they have gone through the loan portfolio. They don't see any other similar issues. They've also hired an external team to review their loan portfolio as well. So it seems like things are bouncing back when it comes to U.S. regional bank. Zions in the green this morning. Let's move on to the AI trade. The headlines this morning are around Core Scientific, who's attracted a takeover bid from CoreWeave. Now, Core Scientific used to be essentially a Bitcoin miner. It's now changed to having computing capacity available for AI data centers. Now, Core Scientific, the key proxy advisor, has suggested that the bid from CoreWeave is too low. Now, the shareholders will vote on this takeover next week, but it does seem like unless CoreWeave does increase their bid, they will vote no on this, and shares are trading 3% higher on the back of that. Lastly, let's end in the healthcare industry. DocGo, this is a mobile healthcare services provider, has announced an acquisition of SteadyMD. That is a telehealth platform. They're looking to offer services now across all 50 states in the U.S. Now, it was an undisclosed figure that DocGo had paid for SteadyMD, but still shareholders, I guess, are looking positively on this. DocGo is up 41% so far in pre-market trades. Bonnie?
Another massive move. Valerie, thank you so much. That's Valerie Teitel there. $3 trillion in market capitalization reporting today. JP Morgan's Sitara Sundar keeping a close look and writing, quote, "The critical test is whether ongoing AI spending is being effectively monetized with additional attention on supply chain indicators like book-to-bill ratios and data center power timelines." I'm pleased to say Sitara joins us now. She's head of alternative investment strategy at JP Morgan Private Bank. So Sitara, thank you so much for joining. Obviously, that particular quote is about the AI trade. So let's get started there, even though today it's more of the mega cap consumer focused names. The AI trade, will it bring us through this earnings season intact?
So it's the number one question we're all grappling with, because markets don't seem to be as patient when you think about this dual mandate that we've placed on a lot of the hyperscalers and the bigger tech players that have been dominating returns, not just year to date, but over the past 2 or 3 years, is this dual mandate of efficiency from the cost side and then optimization in terms of actually seeing productivity and efficiency gains from artificial intelligence in terms of it impacting the bottom line. But what we expect to see in this earnings season and what consensus expects to see is still around 8% earnings growth, which is still meaningful. It's a deceleration from what we've seen over the past couple of quarters, but still meaningful. And tech and comm services is going to contribute about 60% of that, which is meaningful. That's the expectation. So what we're looking for is any indications and signs about artificial intelligence and actual productivity gains or signs of productivity gains on the investment that's already been put into place. And then 2, on what that CapEx investment outlook is still going to be. Are these hyperscalers still going to be putting the same amount of CapEx to work as they have been, or are we seeing any signs of a slowdown?
So we do have a couple of weeks before we get to some of those big names. As for the universe of names that we saw on the screen a moment ago, they're all today. So 3M, Coca-Cola, and Netflix. We're going to get some real insight into the consumer, presumably, today.
Yes, and it's increasingly important. I think whenever we think about the market, there's always this adage that's mentioned that the market is not the economy. And a lot of that is because the economy is shored up by the consumer. It's a little bit different so far this year because we've actually seen AI CapEx actually boost up some of economic growth, at least within the United States. But the consumer still makes up 60% of GDP. So when we're looking into earnings so far this season, it's the health of the consumer balance sheet and what consumer spending levels look like. And whether or not consumer spending in general is just on staples, or if we're actually starting to see a pickup in discretionary spend, and whether or not we're seeing a pickup in broad-based discretionary spend. And we have seen some indications of airline activity pickup and travel pickup as well, that we still feel confident on not just the consumer balance sheet, but their propensity to spend.
Yeah, because we also haven't been getting readings of inflation expectations, right? Not official ones really anyway. So there's a lot to ask in these reports. That said, they're a little bit backward looking. So we have to watch for what is being said on the conference calls and so on as to the outlook for the consumer. But I mean, the executives are as flying as blind as we are on this, right? We still don't know the impact of tariffs.
So I think the biggest thing is that in the same way that we think about portfolio management as probability weighting scenarios, we know that even in the past couple of earnings seasons, a lot of executives have come out and trying to probability weight the different scenarios that are out there in terms of what that means for guidance and forward-looking guidance. You have usually the base case scenario, which is even our base case scenario of moderate economic growth, though economic growth is going to be slowing, but not a call for recession. We still don't believe that recession is our base case. But there is this left tail risk that continuously rises, which is this idea that inflation and inflation volatility is going to be a persistent risk that we have to monitor for. And that means in terms of companies, there's already been, when you think about tariffs, supply chain mitigation efforts that have happened over the past couple of years. This is not the first time that the United States has been in trade negotiations over the past few years. So there's already been some of that where we've already seen companies mitigate the risk of tariffs. But when we think about the outlook moving forward, it is 100% right to say that inflation volatility is likely going to be here to stay. We actually just released our long-term capital market assumptions yesterday, which is our forward-looking projections for what we think the world is going to look like over the next 10 to 15 years. And one of the findings from that is that inflation volatility is likely going to be persistent. Inflation is likely going to be a little bit higher, which means that the correlation benefits that you've usually gotten in a portfolio from just stocks and bonds may not persist moving forward.
Is that going to be visible as soon as Friday when we get the CPI data? Hopefully, fingers crossed. Or, are you talking more longer term? And also, how do you play this inflation volatility? Given that we know the Fed is, very concerned about the labor market, right? And likely to
Definitely. So on the first point, it's likely going to be a longer term story. I think you're going to see fits and starts in terms of where inflation is headed, but the likelihood that inflation stays higher for longer versus what we saw post-GFC to pre-2022 is a firm statement that we believe. On the second part, in terms of how to mitigate against inflation volatility, alternatives, and specifically, because alternatives is a broad basket, areas like less correlated hedge funds, when you think about relative value and discretionary macro, infrastructure and real estate are becoming bigger and bigger pieces of the client conversation now, because at least on the real asset side, when you think about infrastructure and real estate, you're getting inflation resilient income as well as the potential for capital appreciation.
Fascinating. Infrastructure and real estate. Sidara, thank you so much for coming into studio. In particular, that is Sidara Sundar of JP Morgan Private Bank. Now, to other top stories trending on the terminal this morning. Bond funds run by some of the world's largest asset managers, such as BlackRock and State Street, avoiding forced sales of French debt holdings by changing investment rules. The changes allow the funds to maintain exposure to French debt, even as rating downgrades push France below the AA threshold. Unilever pushed back its demerger with Magnum Ice Cream due to the U.S. government shutdown. Unilever has been working on the splitting of its ice cream division since last year. It expects to complete the spin-off this year. Chinese toy maker Pop Mart posts strong revenue growth through the quarter in mainland China and overseas markets following the release of a new series of Labubu dolls. Revenue increased as much as 250% year-on-year in the 3 months ended September. It launched new mini Labubus in late August, fueling another wave of buying frenzy. Coming up, the US and Australia strike a landmark rare earth pact. Your trade update next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the countdown to the market open as we bring you the first trades across Europe. We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta. And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
We're here to talk about trade, submarines, lots of other military equipment. We are discussing critical minerals and rare earths, and we're going to be signing an agreement that's been negotiated over a period of 4 or 5 months.
President Trump speaking there at a meeting with Australia's Prime Minister at the White House. For more on trade now, Bloomberg's Brendan Murray joins us. So, Brendan, this pact, does it even partially replace what China has been sending our way rare earths-wise?
Yeah, so what we're seeing is the U.S. is really trying to play catch-up in its ability to source rare earths from overseas. The U.S. is among the top 15 rare earth with the capacity to mine rare earths, but is really far behind China. China has something like 80% of the world's supply of this. And so what we're seeing are the Trump administration going down 2 tracks, these bilateral deals with countries like Australia. We've seen him make rare earths part of his negotiations with Ukraine. We've seen him talk about Greenland. Greenland also has a lot of rare earths. And then we're seeing the Trump administration along a parallel track take stakes in private rare earth mining companies in the U.S. and Canada. So we're only going to see more of these as China restricts the flow of these as leverage in the trade negotiations. And we could see, other deals down the track. The U.S. is going to start negotiating with Canada as part of the USMCA review. You could envision something with Canada coming together. Canada having a lot of rare earths as well. So this is a real sort of new field of rare earth diplomacy, if you will, and the Trump administration is really racing to try to make sure that it can catch up to China's big lead in this area.
Yeah, and I mean, these are definitely new avenues for the U.S. and a bit of a relief, I'm sure, to those who need rare earths. But at the same time, as John Authors, our Bloomberg opinion columnist, writes today, Trump's hand with China is improving, but is it enough? Is this enough leverage to make China back down a little on rare earths or other things?
It's not going to happen overnight. The Australian mining industry needs a lot of investment, and that's what's part of this arrangement. Is the U.S. will be part of the financing of some of these projects. But China has that control right now, and President Trump and President Xi are going to meet in a couple weeks, and it will really come down to who has the most leverage. And at the moment, a lot of people would tell you that China does, because it can turn the flow of those minerals on and off, and that can really hurt your automobile industry, your semiconductor industries, all sorts of medical equipment require rare earths. So it's really coming down to the U.S. planning long-term, but there is no short-term solution for this.
Okay, Brendan, thank you so much. Brendan Murray there, our trade czar. Let's head over to London now, where Bloomberg Tech is in full swing. The event looking at all the major trends across the sector, from AI and infrastructure spending to cybersecurity. Tom McKenzie, host of Bloomberg Tech Europe, is there, joins us now. So Tom, sovereignty is obviously a huge theme at this particular summit. What have executives there been saying about Europe's ability to build truly sovereign tech?
Bonnie, it's very interesting, given your conversation just now with Brendan focused on the question of rare earths and that deal being signed and inked between the US and Australia, because rare earths is also part of the conversation here because of that sovereignty issue, and particularly when it comes to European defense. As we look, for example, in recent weeks, at Russian jets that probe NATO airspace, Russian drones as well, the focus and the need for Europe to have its own sovereign defense capabilities is front and center part of the conversation here. And rare earths and supply chains, resilient supply chains, is part and parcel of that. Of course, so we're going to be hearing, for example, from the founder, co-founder and CEO of Helsing, which is the most valuable, really the most significant European defense tech startup here. That will be happening in a couple of hours' time. But we're also talking about sovereignty when it comes to space technology as well, and the reliance that Europe has still on Starlink and SpaceX. This at a time, of course, when even NASA is saying it wants some competition versus SpaceX. So all of that is coming together. It's worth mentioning as well that AI, on the AI front, when it comes to sovereignty, there is one player in Europe. It's called Mistral, the large language model, the French company, recently invested in by ASML. They've been on stage as well, talking about the need for adoption, faster adoption amongst European enterprises. So those are going to see some of the key themes we've been hearing, and recently just on stage, we've had the CEO of CoreWeave, but also Cohere as well, the large language model. CoreWeave, of course, the Neo cloud builder.
It's so fascinating, Tom. I have to ask you, what else is top of mind for these executives and for the conversations today?
Well, inevitably, this being Europe, yes, we're in the UK, we're in London, of course, but we're talking about the continent of Europe with UK playing its part. Regulation is certainly part of the conversation, and we heard from one of the executives at Mistral saying that regulation can be a real headwind and really very painful. She just gave one example of GDPR, one rule across Europe, but iterated for 27 different regions. So every 27 different European nations they have to go into, the GDPR rules are slightly different. That provides a headwind. She says there's multiple examples of that. Here in the UK, they're trying to create a more favourable regulatory environment. And we're hearing from the UK Minister for AI on that front. We're also thinking about agentic AI and embedded AI as well. So the focus on robotics. We'll be hearing from some executives on those lines later today here at the Bloomberg Tech Summit. Bonnie.
So many wonderful conversations. Tom, thank you. That's Tom McKenzie there. And stay with us for more from Bloomberg Tech London, which has a host of names, as Tom was saying, taking the stage, including the co-CEO of Helsing. You can follow on LiveGo as well. Now turning to earnings season, General Motors, among the companies scheduled to report results today. Let's get a preview with Craig Trudell, Bloomberg's Global Autos editor. So Craig, we're anticipating, an increase, in sales, but still down something like 24% year over year. What's the story there?
Yeah, I think a lot of focus will be on the sort of puts and takes with regard to tariffs today. This is a company that back in May estimated that they faced a $4 to $5 billion tariff exposure. They've taken some steps since then to try and mitigate that. A substantial amount of reshoring, $4 billion worth of investment to primarily shift manufacturing capacity from Mexico to the U.S. Of course, that's going to have some effect on sort of capital expenditures and costs for the company as they try to stand up that capacity and ramp up. And it will take some time. The other, I think, sort of factor that will come into play here is, just to what extent the company is willing to sort of lay out how much the relief that the Trump administration has announced in the last few months will sort of, work to GM's GM's benefit. I think in particular the trade agreement with South Korea, for example, being something that could redound to GM's benefit given the substantial amount of cars they ship over from Korea.
Yes. Now, just curious about the EV subsidies expiring and what GM will say about that. It obviously brought forward some demand, but what does it mean for the rest of the year and beyond?
Yeah, GM had a great third quarter and great end of the third quarter with respect to EV sales, and yet I think it's safe to say that even for a company that is coming off such a great period, the level of pessimism is pretty substantial. I think last week we heard from the company when they announced a $1.6 billion charge that they expect, because tax credits are going away, because there's this hollowing out of emissions regulation in the U.S., that they expect EV adoption to slow. They're adjusting their manufacturing presence as a result of that. On the other hand, this actually will, especially the emissions regulations changes, this will save them a substantial amount of costs in terms of money that they've spent over years, complying with EPA and Department of Transportation rules around fuel economy and emissions. So that is perhaps a headwind that falls by the wayside.
All right, looking forward to those earnings today. That is Bloomberg's Craig Trudell. Thank you. And you can catch the CFO of General Motors today on Bloomberg Surveillance. That's at 7:30 New York time. Coming up, earnings galore will get you set for your trading day next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead today. Earnings before the bell from GM, Lockheed Martin and Coca-Cola, among others. Then ECB President Christine Lagarde speaks at 7 a.m. Eastern Time. And we get more earnings after the market close. Netflix, Texas Instruments, and Western Alliance, interestingly, will be looking to hear what they say about bad loans or other collateral damage, as it were. Zions Bancorp, speaking of which, extending gains as they eased concerns about credit fears. So it was up after the market close yesterday, up about 2.5% today. Fluor, Wall Street Journal reporting that activist Starboard has built a near 5% stake in that company and sending those shares up more than 7%. Pre-market. And Danaher down about 2.6%. Earnings before the bell there. Clearly, we are not expecting too much from Danaher, at least at the moment. Let's take a look at the macro situation because we did have an up day yesterday, a very positive risk-on day yesterday. We do have the VIX coming down still, but futures are pointed fractionally lower. They were a little bit lower than they even are now earlier in the session. The 10-year yields perhaps providing a little bit of proof for why that is. Below 4% by 3 basis points and sticking around there. And we're also down about $100 on gold. Finally, a little bit of capitulation, although at 42.80, we're still not that far off our records for gold. We do have our MI strategists saying that if you see selling in gold at the same time as you see, selling in other asset classes, you may just see a very heavy bid into treasuries. I do want to point to the yen as well. It's weakening today above 151. Sanae Takaichi announcing members of her cabinet. She is now the first female Japanese prime minister, thought to be hawkish, but also potentially fiscally stimulative. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The key point for growth really is how these tech stocks are doing.
The AI momentum in the near term looks pretty solid.
If there's any slippage in earnings from the tech guys, I think you're going to see a more wobbly, more volatile market.
This is a very, what we're calling a high-risk bull market.
I'm very bullish. I think the market goes to new highs before Thanksgiving.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, just off record highs, the S&P 500 posting its biggest two-day rally since June as earnings from Zion's tempers fears about broader credit risk. Investors are now turning their attention to the embattled automakers. Earnings from GM. Up next.
Here's where it gets interesting. We heard from the banks, we heard from the airlines, a pretty clean read on the economy. The auto manufacturers are at the epicenter of a lot of the tariff concerns. They're at the epicenter of a lot of concerns about the consumer welfare and ability and willingness to spend, particularly on the middle class levels. How much do they give the same sort of sanguine look that we've seen? Do they give a sense of how much the costs of tariffs really are trickling out to the economy? These are the key questions a lot of people are looking for.
Those numbers drop in about 30 minutes' time. In many ways, that industry stuck between a rock and a hard place. The tariffs that Lisa talks about. And on the other side, EVs and attitudes to them.
Absolutely. There's wins and losses when it comes to this industry. They are higher tariffs, but the Trump administration recently gave a longer timeline for reduced tariff levels for imported parts. So they're getting some reprieve. On top of that, they're getting reprieve when it comes to emissions regulations. They're going to have to pay billions of dollars, or they were going to have to pay billions of dollars. They're not going to have to under this administration. But then, as you mentioned, the EV market, they're taking write-downs because there's an expansion of the EV market with the subsidies under the Biden administration. All of that has come to a pause under Trump.
The stock is a little bit softer this morning. You've got to make a decade-long investment decision, and you're being whipsawed by political cycles.
This is the difficulty right now. How do they give a forward look when they have to reverse on electric vehicles, when they have to come up with how much they can invest domestically, when they don't have a sense of what kind of reprieve they ultimately have? My ultimate question is, how much of a better situation are they in than the European auto manufacturers? Have they gotten the carve-outs they're looking for? How immunized are they to the threat coming from China? And how much have they fortified supply chains that really are going to be bulletproof no matter how the tariffs come through, even if the 232s are removed by the Supreme Court? These are the key questions.
The CFO, Paul Jacobson, joining us on the program from General Motors a little bit later this morning, 7:30 Eastern Time. Equities more broadly doing okay, just pulling back from close to all-time highs on the S&P 500, negative by not even 0.1%. Coming up this hour, we'll catch up with Drew Mattis of MetLife, with stocks coming off their biggest two-day gain since June. The former White House trade official, Kate Kalukowicz, as President Trump expects to deal with China, and Earl Davis of BMO on increasing odds of a 50 basis point cut at the Fed's December meeting. We begin this hour with stocks edging lower with a slew of earnings on deck. Drew Mattis of MetLife writing, in the absence of government data, the only information we have are earnings. Mediocre nominal growth expectations are out of sync with earnings expectations. Drew joins us now for more. Drew, good morning.
Good morning.
Does something have to give?
Something does have to give. Now, what that's going to be, I'm going to guess it's going to be markets, because it's easier for markets to give than it is for the economy to give. And if the economy gives, it's probably not giving in an unexpected acceleration in activity.
This is just one contradiction. There are many more. We talked about lots of them. Employment's dropped away. Retail sales has been really robust. People are still talking about the so-called K-shaped economy. Upper income okay, lower income struggling. Is one catching down to the other, or the other going to catch up to the top?
Well, just because someone's spending when they have money doesn't mean that they're doing fine, right? It doesn't mean that they feel like things are going to continue to be good. And when you look at the details of how income expectations are changing, particularly real income expectations, so accounting for the inflation component, what you see is actually that the upper income is beginning to feel a lot of pressure. I don't know whether it's what they're buying is just going up in price more aggressively, or whether they are beginning to worry about their jobs a little bit more. I suspect it's a combination of both.
Where are you seeing this in particular? And I say this as we were looking at airline earnings, for example, and a lot of people are shelling out for those premium cabins.
They shell out for the premium cabins, but those premium cabins cost more. And so they're actually seeing their lifestyle requires a much more expensive payment structure now. And so then they have to give in other areas. And so what we're actually seeing is when you look at spending, for example, goods versus services, people are beginning to actually cut back on spending on services. And those are the things that you never cut back on. And so typically, if you're not buying a cup of coffee in the morning, you're not going to go out and buy a car in the afternoon. It just takes a little while for that to catch up across the income spectrum. And what we're beginning to see now is that upper income tier is beginning to feel pressure. They can still keep spending, but the pressure builds, and it means probably that you'll see the savings rate begin to decline, even though it probably should be rising based on where interest rates are.
And maybe we'll get a holistic look at this when we get retail sales. Oh, wait, we don't have any data coming out of the government. There is this feeling right now. You need to parse through the earnings to get a better sense of it. Has there been anything in the earnings so far that has ratified the view you have, or are there a couple of earnings reports that you're really keyed into to give you the ultimate sense of whether this really is the reality, this weakening in even the upper echelons of income earners?
I mean, to be frank, no. But I mean, that's why, that's why I get to do what I do, is because I have to make decisions based on kind of the limited amount of information that I have. What we are paying very close attention to are Federal Reserve surveys. You have to pay attention to the Beige Book. You have to pay attention to the earnings reports. But even the earnings reports can see people transiting from one kind of product to another, right? From beef to chicken, or from, who knows what people like anymore. I don't understand actually what people, I am not the average consumer, and I am readily willing to admit it. And my tastes are not everyone's tastes, so it's hard to kind of figure out which direction everyone's heading. But I do know that people are shifting from what they're used to doing. And when people are shifting from what they're used to doing, that's happening because of a reason. And that reason typically isn't good. People are creatures of habit. They like to do what they did yesterday.
If the high-end consumer is under pressure, what kind of economy are you describing? Because everyone continuously says we're in a K-shaped economy, but what you're describing does not sound like a K-shaped economy.
So when you do economics for long enough, what you realize is the top 10% spends no matter what. The bottom 10% spends no matter what. And there's the cohort in the middle is actually the one that moves around their spending, because they've got some potential for savings. And so you really have to watch the movement into and out of the savings rate, and whether or not people are feeling like they can spend money. Now, it gets complicated when inflation's present, because oftentimes the way people make up for the increase in prices, at least initially, is by cutting back on their savings rate, even if they were feeling a lot of pressure or worries about their job. And so things begin to break down, those relationships begin to break down. And so, all the people using, AI to model the economy right now, it's the big new thing. Those models are incredibly complicated, and what you're going to see is that the coefficients on the front of each variable that you can use are probably shifting around, and they might be canceling each other out. And so your whole model might be breaking down, and you're probably not going to recognize it if you're using models that are too advanced, rather than looking at individual components of what's happening and the relationships between, for example, savings and interest rates.
What are you most looking at this week, next week, when it comes to earnings season, to really understand how much that high-end consumer is under pressure?
Well, as I said, it's difficult for us to kind of look at an individual company and figure out what's going on. Upper income consumers are going to continue to spend on things like airfare. They're going to continue to go on vacation. The question is, are they going on vacation, and instead of going to Europe, they're going to California? Or instead of going to, they're taking the slightly less expensive option. There are everyone's got a lifestyle, and certain things are downgrades for certain people. And it's easy for us to all kind of laugh about it, but for these people, it's actually a serious change in their lifestyle, and it affects their perception of what it means to be rich, for example. What's it mean to be rich when you actually have to think about the airfare? Right? These are people who are not used to thinking about how much they spend on airfare. They're not used to thinking about, gee, I really like that hotel. It's in the center of the city, and it's my favorite hotel, because they have a favorite hotel in Europe, right? And now they're thinking, well, I can't afford my favorite hotel in Europe. I have to downgrade. It actually it comes with a social cost. You don't have to cry for these people. Their lives are still really good and probably better than a lot of people's, but it doesn't mean that they feel as good as they used to.
Drew, banks aren't feeling as good as they used to after last week. Let's talk about the financials. Zion in the pre-market is up by 2.5%. It was the focal point of a lot of people last week, coming out and basically revealing some losses tied to potential fraud. This isn't the first time we've seen this kind of thing. We've seen some other credit issues as well. You've got the credit issues on the one side and then really robust earnings on the other side. And we saw that from Zion overnight. How are you, and what is your perspective on what is happening right now in this sector?
Well, so people are nervous. If you look at credit markets, spreads are incredibly tight. So you're in this weird world where all-in yields are okay. Right, the amount you can get paid for is okay, but the actual premium you're getting paid to take risk is actually maybe a little too low. And so I think what you're seeing is just the nervousness around the economy, that we don't really understand that everything's okay. We're waiting for that next shoe to drop. Jamie Dimon, put it famously. What he's really expressing is not that he sees anything, but that he's expecting something. It's kind of like you live in an apartment in New York City, and you might never see a roach, but they're there. You know they're in the wall. You know it, right? And so you don't leave food out. You do a whole bunch of different things when you live in New York. There's things that you can do in suburban New Jersey, where I live, that are okay because you're not going to attract animals that quickly. But if you do it in New York City, you're basically stunk. And I think the risk is that people are really focused on what they're not seeing. And the fact of the matter is with no economic data and with, earnings kind of, being okay for the most part, they're nervous that they're missing something, but they don't know what they're missing.
So, Drew, where are we? Are we in a grad house on Murray Hill, infested with cockroaches? Or are we in a nice Soho apartment? What is this?
We might be trading down from a Soho apartment to something on the Upper East Side.
Okay. Does that mean you're de-risking?
We've been de-risked for a while now. I mean, to be honest with you, since COVID, there have been there's been kind of one risk after another, and to the extent that we've been able to kind of go up in credit, we've been going up in credit. I don't think that's a surprise to anyone, and I think everyone who's able to has been doing that. Or you've been looking to things like privates, where you're taking maybe more liquidity risk, which you can more easily define. But getting less credit risk on most sides of it if you're doing your underwriting properly.
Drew, good to see you. This was a trip. Thanks. Thank you, sir. Drew Mattis there of MetLife. Equity futures this morning doing okay, just pulling back from close to all-time highs on the S&P 500, negative by close to 0.1%, with an update on stories worldwide this morning. With your Bloomberg Brief is Lizzie Burden. Hey, Lizzie.
Hey, John. President Donald Trump signed an agreement with Australian Prime Minister Anthony Albanese to boost access to critical minerals and rare earths. The deal is part of efforts to secure stable supply of critical minerals, with Australia positioning itself as a viable alternative to China. Elsewhere, Sanai Takaichi won the parliamentary vote to become Japan's first female prime minister. Takaichi has appointed a cabinet, including the country's first female finance minister. She's now preparing for diplomatic events, including a visit to Japan by US President Donald Trump next week. And Amazon Web Services says that operations are back to normal after a widespread outage that hit a broad spectrum of customers for around 15 hours. The episode disrupted hundreds of websites and apps, including the likes of Venmo, Robinhood, and Apple TV. The outage was caused by a database network issue and highlights just how much of the internet is dependent on the operations of the company. And that's your Bloomberg Brief. John.
Hey, Lizzie, thank you. More from Lizzie in about 30 minutes' time. I'm next on the programme, expecting a fair deal.
I expect we'll probably work out a very fair deal with President Xi of China. I want them to do great. I want them to thrive. But we have to thrive together. It's a two-way street.
In just a moment, we'll catch up with the former White House trade official, Kate Kalukowicz, from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Live from New York City this morning. Good morning. Check out this stock in the pre-market. Zion's Bancorp positive by 2.5%. A notable credit loss just last week. Good earnings delivered after the close yesterday. That's been the story more broadly for the sector. These flashy headlines around credit, but ultimately the earnings story has been okay. That stock at 53.31. Thursday's close, following all that mess, 46.93. We've rallied since then, Friday, Monday, and again so far this morning. The broader market this morning looks like this. Equity futures on the S&P 500 pulling back from yesterday's gains. We're down by not even 0.1% after closing very, very close to all-time highs. Under surveillance this morning, expecting a fair deal.
If they don't do business with us, I think China's in big trouble, I'll be honest with you. I don't know that they even make it. I really do. I believe that they're in big trouble, and I don't want them to be in big trouble. I want them to do great. I want them to thrive, but we have to thrive together. It's a two-way street. I expect we'll probably work out a very fair deal with President Xi of China. So most of you will be with us. It's going to be very exciting, and I think we're going to work out something that's good for both countries.
So here's the latest this morning. President Trump optimistic about reaching a trade deal with China, but maintaining he'll hike tariffs if a deal isn't reached by the November deadline. Joining us now is Bloomberg's Tyler Kendall. Tyler, good morning. We heard that word fair. What's a fair deal with China?
Yeah, hey, John, good morning. Well, it could look like a few different things. We know that the U.S. wants to see China in particular drop those export curbs that it unveiled on critical and rare earth minerals, which is why that November 1st date is so interesting when you hear President Trump reiterate his threat that higher levies could go into effect then, because November is also that timeline that Beijing has unveiled for its own enforcement actions when it comes to those export controls. We're going to have to wait and see what's going to ultimately be on the table here. We heard President Trump over the weekend outline those top demands when it comes to fentanyl, soybeans, but also worth mentioning that he did mention yesterday that he also expects Taiwan to now potentially come into these talks, though he did downplay the idea that there could be military conflict in the region and declined to say whether or not he felt that China was going to propose trade concessions in exchange for greater control of the island. We're going to be watching a few different things, but it's clear that this White House ahead of the meeting is bolstering up its position, particularly when it comes to rare earths. We know it was a key focus yesterday at the White House as the U.S. and Australia inked that $8.5 billion cooperation deal, largely seen as a way to bolster against China's grip on the critical mineral market. John, I'll also put on your radar that we got some pretty stark words from the USTR Jamieson Greer yesterday as well, threatening China, saying that it should not retaliate against any foreign companies looking to help the U.S. bolster its position in these critical industries, even beyond rare earths. The USTR threatening action after Beijing moved last week to sanction 5 U.S. units of a South Korean shipping giant amid this ongoing dispute when it comes to the maritime sector between the U.S. and Beijing. John, it's just another thread to pull on as we head into this critical meeting.
Some good cop, bad cop going into negotiations. Tyler, thank you. Building on this conversation, the former White House trade official, Kate Kalukowicz. Kate, welcome back to the program. We've talked lots about the president's asks going into these conversations, these negotiations. What do we know about what China wants in return?
Well, I think China wants lower tariffs. You know, it seems that they have been dealing with the pressure of tariffs, but that pressure is increasing from other trading partners as well. China's economy is slowing. They're dependent on trade, and I think they are struggling a bit to find some leverage in these discussions, which is why they keep going to this familiar threat to restrict rare earths.
Besides tariff levels, what is the equivalent the U.S. can use that matches China's use of rare earths in the negotiation?
It's a really great question, and I think it's why we keep finding ourselves back in this position where the U.S. threatens tariffs, China threatens rare earth controls, and we end up with a deal that resets us back at the status quo. Both sides are struggling to find leverage outside of these two areas, and I think it's why we now see both of them, particularly the United States, moving to encourage our trading partners to join the fray. We need to bring a bit more pressure from outside because we're struggling to do it ourselves.
Kate, what about barring Chinese companies that are listed on U.S. stock exchanges? Is that a third rail that the U.S. could float out there in these negotiations?
It could be. The United States is increasingly looking at these so-called entity lists, these ways in which they target U.S. companies and their affiliates. So certainly that would be one possible option for them to consider. What's happened, however, is that these actions are really bringing other companies from other countries into the fray. You heard the issue related to the South Korean shipping company. We have a Dutch semiconductor caught in the middle of this. This is creating a very uncomfortable position for companies around the world, but also their sovereign nations.
Meanwhile, there was this deal overnight between the United States and Australia to secure some rare earth minerals, and this idea that maybe the U.S. can source it from elsewhere. How does that fit in some of the discussions that are ongoing with China and the U.S.?
I think it's critically important. The United States, as I mentioned, is struggling a bit in these talks because the reality is we are heavily dependent on rare earths. And you all know how our car and defense and aerospace sectors cannot operate without the rare earths from China. So in the meantime, while President Trump continues to try to reset this status quo with China, he is also ensuring that this is not something that persists. He needs to find other sources of rare earths. The deal with Australia was a really important step forward in securing rare earths from a source other than China, but of course it will take time.
It feels like the administration and actually both sides are trying to buy time to insulate one another from some of the trade partnerships that they have ongoing. And I wonder how much Taiwan is increasingly going to be used as a chip in buying time. I mean, how much could you actually see the U.S. take a step back from protection of Taiwan or some other type of outreach to China, which is something that they would desire?
Well, I think you're exactly right that both sides are seeking to buy time. I think the United States, President Trump made those comments about Taiwan yesterday. That was the first time we've heard that really publicly entered back into this discussion. He's been quite clear, that he does not support any sort of military intervention into Taiwan, but I think he's going to try to dance around and not anger China. But remember, what else is important in bringing allies to our side is in South Asia Sea and what the president is hoping to achieve with the new Japanese prime minister. I think will be very focused on Japan offering some support in the military arena.
Kate, if you're China, do you just want to wait and keep the status quo until the Supreme Court rules on whether or not IEEPA is legal or not?
Well, perhaps, although I don't think that's the wisest strategy. I mean, even if President Trump loses the Supreme Court decision, and that's not a guarantee, he has many other authorities to bring tariff pain on the Chinese. And not least of that, he has all of these export restrictions that he can continue to place. So IEEPA or not, the president certainly is not going to change his approach toward China. And I don't think the Supreme Court is going to be any sort of victory lap for the Chinese in the near term.
Having worked under Trump 1.0, could you see a scenario where he does show up for oral arguments at the Supreme Court?
Anything's possible. When he says he's going to do something, it means he's really considering doing it. So it certainly would not be a shock to me if he shows up there.
Kate, appreciate your time. As always, Kate Kalukowicz there, the former White House trade official with the latest on these talks. Lots has been talked about what the president would like to see, soybeans, rare earths, all of those things. We all understand why. Ultimately, what do the Chinese want in return? Is it tariff relief? I think that's easy to give, given where tariffs are currently, super high. Or is it something else? Does it include an attitude, a shift towards Taiwan?
Potentially, and the president was clear that that would be part of the discussion, but then he stopped there. He didn't want to continue on actually what the United States would be willing maybe to discuss with China when it comes to Taiwan. When it comes to the tariff levels, though, if that's really what China wants, that's why the president continues that even though he says he thinks it's going to be a good deal, he always says, but we have the threat. We could bring it up north of 100% if we have to.
Can we just get some clarity on deadlines? November, it feels like there's two. November 10th, November 1. Which one's which?
November 10th is when the current truce, that 90-day rolling period we have where tariff levels are pretty much frozen back in Geneva in May that they agreed upon, the U.S. and Beijing. That's November 10th. That's the deadline. But they're going to meet before November 10th. So the market will have a lot to adjust, knowing whether or not an agreement was made or not. November 1st is what the president said he can bring the tariffs north of 100%. So he kind of puts two of the deadlines at loggerheads with each other. It doesn't exactly make sense, but keep both in mind.
Mike Wilson of Morgan Stanley, Lisa, had this to say yesterday. It's important to see clearer trade de-escalation from both sides before declaring the all clear on the risk of a further near-term correction. This spat has once again become the story in this market over the last few weeks.
The story, though, has changed from, oh my gosh, this is going to be a decoupling that's going to lead to some sort of Armageddon in markets, to do we get a dip that we can buy and then profit on the other side? So that really has been the feeling, and that is a market shift from April 2nd.
The dips are small and they don't last long. Here's another one. We're down by not even 1/10% on the S&P 500 after closing very close to record highs in yesterday's session. Up next on the program, we've got some earnings for you. The numbers from General Motors. This is a tough industry. Breaking down the figures in just a moment. Bloomberg's Craig Trudell. Plus, we'll catch up with you, Hira, with your morning movers. Sunrun soaring on an upgrade from Citi. That stock is up by more than 7%. From New York City, you're watching Bloomberg TV.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready
ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Two-day winning streak on the S&P 500, the best two-day rally since June. Equity futures this morning pulling back just a little bit. We're down 0.1% on the S&P, on the Nasdaq down by 0.12. For the regional banks, up 4% in just 2 sessions. The bounce continued through yesterday and continues through this morning. More on that in just a moment. On the Russell 2000, equity futures there, negative by 0.24%. Let's get you some morning movers, 3 hours away from the cash open. Here's Yahira. Hey, Yahira.
Hi, John. We start with Core Scientific. Those shares are rising nearly 3% in the pre-market after proxy advisor ISS said CoreWeave's $9 billion takeover offer undervalues the company. Now, the deal would help CoreWeave expand its AI computing capacity, but this new recommendation adds to a chorus of worries around the deal and injects fresh uncertainty since institutional investors typically follow the advice of ISS. Moving on to Zions, this of course was the bank at the center of last week's credit jitters. Shares are now up 2.5%. I know you all will discuss it, so just to check on shares, up again 2.5% after the lender topped profit and margin estimates, even after swallowing that $50 million hit from alleged loan loss. And we end on the residential solar company Sunrun. Shares are up 6.5% after Citi upgraded the stock to a buy and upped its price target to $26. The call comes as the solar sector tries to regain its footing under a Trump administration that has rolled back green incentives and made a renewed push for fossil fuels. John?
Yahira, thank you. Thanks for the update. More from Yahira in the next hour. On our radar this morning, credit fears easing on Wall Street following positive results from Zions. The company reporting third quarter results that topped estimates despite a $50 million loss from an alleged fraud. Elsewhere, President Donald Trump expecting to make a fair and great trade deal with China's Xi Jinping when the two meet in South Korea just next week. Trump warning new tariffs will go into effect. No agreement is reached by his November 1st deadline. Elsewhere, General Motors shares higher. Those numbers just dropped in moments ago. GM with a beat and a raise.
Pretty much across the board coming out with expectations for the full year adjusted earnings per share at the upper range from $9.75 to $10.50 from the high range of $10. Full year auto free cash flow above expectations. You can go through. It was a really clean read across the board. What's interesting is the tenor of this letter to shareholders. I also want to thank the president and his team for the important tariff updates they made on Friday, talking about making more than 2 million vehicles per year in the United States. A big discussion here, clearly in here, focused on the political backdrop and talking about how tariffs came in lower than expected and allowed them to more effectively mitigate any of the potential ramifications.
The automakers, or rather the lobbyists for the automakers, did their job and got a reprieve. Longer lag time, longer lead time in terms of how low the tariff could be for these imported parts. And you're seeing it right here. They're talking about full year gross tariff impact improve to $3.5 to $4.5 billion from $4 to $5 billion. Not a ton, but they are working on these mitigation efforts. On top of that, the CEO also talking about the evolving regulatory framework and the end of federal consumer incentives. Now clear that near-term EV adoption will be lower than planned. So they are dealing with a number of policy issues in Washington that are impacting their everyday decisions, whether it's EVs, tariffs, or fuel emissions.
Getting a bounce this morning at the pre-market. A stock is higher by 6%. Joining us now from London with more is Bloomberg's Craig Trudell. Craig, welcome to the program. How agile do these automakers need to be when they're getting whipsawed by political cycle after political cycle?
I mean, it's hard to sort of overstate, just how significant that whipsawing has been when you go from, from the Obama administration to Trump to Biden to Trump again. We've seen fuel economy regulations and emissions rules really sort of wax and wane to this really significant degree. And you saw, Mary Barr really sort of answer the call under the Biden administration, building an awful lot of battery supply in the U.S., building also, setting, reworking assembly lines to make electric vehicles. A lot of that is now being undone, to the tune of, this quarter they're taking a $1.6 billion charge related to undoing some of that investment. And they've warned that there may be more to come there. On the other hand, all of that investment in electric vehicles and in batteries has been costing this company money. And they've gone from, prior sort of forecasting that they would lose less, but that was still going to be a drag, to now they can do away with that. They can make more full-size SUVs and pickups that, all along have been what really sort of is their, money-making product. And oh, by the way, they don't have to pay for, compliance costs to regulatory credit revenue that flows right to Tesla's, bottom line. So this is a significant amount of relief for them, even as they have real sort of headwinds from the tariff perspective.
Craig, it's worth pointing out, Anne-Marie's done the same thing. There are positives and negatives for the auto industry. Just on the negatives, Craig, what's been the bigger challenge for this company? Has it been the tariffs or the issues and regulations around EVs?
I think, it's going to be, difficult for them to sell as many EVs as they expected. And yet, again, that may not be as big of a problem for them, at least in the near term. Longer term, that's a big question if this industry really goes electric outside of the U.S. and the U.S. becomes this sort of laggard market. I think in terms of the near term, far and away, the bigger issue is tariffs, and you're seeing Mary Barra sort of trying to mitigate that quickly by investing a heck of a lot in U.S. factories and trying to, sort of rework some of that capacity that had been dedicated to EVs to products like SUVs and pickups, and really banking on the ability that demand is going to be there, where the EV demand that everybody was hoping for didn't necessarily materialize.
Craig, on that tariff point, Anne-Marie was talking about this, that the company said that tariff mitigation actions are expected to offset about 35% of the cost due to a lower tariff base. Do we have a sense of what type of tariff mitigation actions they're taking? Is this a code for increasing prices? Is it code for laying people off?
I think some of it is investment. I mean, just in the last few months, this company has announced $4 billion of investment in U.S. factories, and some of this is going to be incremental shifting of production from Mexico to the U.S. I think that will cost the company some real capex, and also I think there's probably a fairly good likelihood of the need to perhaps consider raising prices to take into account for the fact that production in the U.S. is going to be costlier for GM than making in Mexico. And yet there's also, I think, sort of an argument to be made that, maybe this is for the best for the company going forward, in that, even in an age after Trump, when you're thinking about, sort of the political risk of just how much, manufacturing has been hollowed out in the U.S. and the fact that Trump has proved this is good politics to sort of saber rattle over how much companies are making in America. Maybe it's for the best that GM sort of takes heed here and sort of undoes some of this offshoring that has been taking place over decades.
And we certainly saw that in Mary Barra's letter, where she's talking about $4 billion of investments and onshoring production plants in Tennessee, Kansas, and Michigan, talking about jobs created in New York. I'm just wondering, on the other side of the GM equation, the idea that this is an incredible company to look at because it both is at the crosshairs of a lot of domestic policy, but also can get a read on consumer demand. Do we have a sense of how much consumers are absorbing higher prices, are continuing to buy cars? Do we have a sense of how much that beat as well?
It's a great question because, on one hand, you do see really strong sales of high-end vehicles, particularly, I would say, the big SUVs that GM and Ford make. We're seeing, some of the strongest sales of bigger vehicles, like, say, the Chevy Tahoe, the Ford Expedition, than we've seen, in 20 years. And yet, we're also, on the other hand, seeing, higher rates of delinquencies, signs of strain from a credit perspective. And so you do have to kind of wonder to what degree, we're seeing a bifurcation of sort of the best off consumers being able to afford going out and buying a new vehicle. And yet, under the surface is that incremental new car buyer now coming under greater strain than ever now that we're coming off a month, by the way, which, the average price of a new vehicle sold in the U.S. just hit a record of more than $50,000 for the first time. That's a lot of money for a lot of consumers, and that's likely going to cost us, some incremental new vehicle sales where the consumer says, you know what, I'm just going to buy a lightly used vehicle instead.
Greg, when it comes to their policy out of Washington, what you hear from a lot of auto lobbyists were that at one point, given the president was striking all these deals with Asian companies, you can get a Japanese-made car at a lower tariff level than an American-made car. Given the latest reprieve some of the auto sector industry companies have gotten, are they now on par to compete globally?
It's really hard to answer that question. I think, to what degree, this is a bit of gamesmanship in Washington. You talked about the lobbyists really doing their job here. I think it is still the case that if you're a Toyota or a Honda, that, even if you've gotten some relief in terms of, the cars that you're continuing to import from Japan, I don't think anyone who's, sort of managing, operations for Toyota, Honda, or Nissan is feeling at all comfortable about any capacity that they're relying on from outside of the U.S. And so we're also seeing a lot of incremental investment on those companies to sort of go from any slack that they have in their U.S. Plants, filling that slack, addressing that with investment, localizing more production. And, to the degree that there's some relief being offered by this administration, it is still costing you more than it did, before Trump was in office to ship cars from Japan into the U.S. It's a question of how much sort of competitive dynamics are, wash out. It's really difficult to get to the bottom of, whether this is, good messaging on the part of GM and Ford in Washington as opposed to legitimately, it's you're better off shipping from Japan into the U.S.
Stock is up this morning in the pre-market by 6.5%. Just a final question, Craig. Slightly provocative one. But on EVs and the strategy on EVs from GM, this predates this presidency. And I think we have to bring that up. It's important to highlight. And here's the provocative question, Craig. Do you think in some ways the administration has done this company a favor to get them to focus on the one thing over the other when investors have been asking that question for a long time?
Yeah, I mean, I think it is a question of long-term versus short-term. I think in the short term, absolutely, this is going to be better off for the company in terms of, investment that they're not going to have to make, spending that they've had to make in the past that they no longer will have to. The question will be, for me, is long-term, if this is still the case that we are going to get to a place where electric vehicles are what dominates the global industry, have we sort of benefited U.S. manufacturers for now, but sort of lost sight of the fact that for the long term, we've only made them, less competitive 10 years, 15 years from now.
Really important framing. Craig, thank you, sir. Appreciate it. Fantastic work. Craig Trudeau there of Bloomberg, out of London. Don't miss our conversation later on this morning. The GM CFO in just under 1 hour's time. We're going to catch up with him at 7:30. Paul Jacobson knows a lot about working in volatile industries in his time in the airline business over at Delta, and now at a big automaker heavyweight, General Motors, and they have got to be super agile because things have been incredibly volatile.
Super agile and super political. I mean, you can see that for the letter to shareholders. It talks a lot about Washington, D.C. and investments in the United States. A key question, especially given the fact that they are in these crosshairs of changing policies, how they also face off with a consumer that seems to be somewhat, I don't know, shifty or difficult to really pin down, and I'm curious about both of those things, policy and the consumer.
Shifty's like shady, right?
Okay,
I know
maybe,
what you meant.
yeah, okay, maybe just
like
I don't know, K-shaped, U-shaped, Y-shaped.
Just throw out a letter.
X.
You know how this works on Wall Street.
That's like kind of what we were doing this morning.
Basically. Odd start to the program today. General Motors up by 6.5% in the pre-market. Decent numbers from that company. Let's get you an update on stories worldwide with your Bloomberg brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. Shares of GE Aerospace higher after the company raised its full-year outlook for the second quarter in a row, thanks to the strong rebound in global air travel. The jet engine manufacturer boosted its forecast for revenue growth, operating profit and free cash flow. GE Aerospace shares have soared more than 80% this year, driven by rising demand for maintenance and new engines. And as you were discussing, shares of GM soaring after the automaker raised its full-year outlook and posted third-quarter results that topped analyst expectations on better-than-expected pickup truck sales and fresh relief from the Trump administration's tariffs on auto parts. GM will also be reducing its EV investment. In a letter to shareholders, the CEO, Mary Barra, says it is now clear that near-term EV adoption will be lower than planned. And Apple shares hit their first record this year after Loop Capital upgraded the stock to buy from hold, citing positive iPhone demand trends. Shares rose about 4%, surpassing an all-time high that had stood since December. Apple now closing in on a $4 trillion market cap. And that should be brief, John.
Lizzie, thank you. More from Lizzie in about 30 minutes' time. This from Loop Capital's Ananda Buraha, saying we are now at the front end of Apple's long-anticipated adoption cycle. Dan Ives of Wedbush has been waiting for this one for a long time.
iPhone 17, have you gotten it?
Getting closer.
Really? Well, this is, I mean, listen, this is the indicator. I checked out something in this phone yesterday, and I was like, it's cooked. You got to get a phone.
Yeah, it wasn't working properly yesterday, was it? I know. All right. Up next on the program, the Fed's easing regime.
Right now, they're almost getting a little bit of a free pass on this October meeting because both are in good shape, consumer spending and corporate credit. But this will help, I think, lower rates would help prevent maybe that next shoe to drop in terms of weakness.
That conversation up next with Earl Davis of BMO, live from New York City. You're watching Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
GM this morning in the pre-market higher by 8%. Really, really decent numbers from that company this morning. A beat and a raise, even though they've been whipsawed all year. We talked about mitigation strategies. Seems like something's working over at General Motors.
Yeah, and you can see that actually rebound into Ford shares also up, not as much, but you can see there's a positive tone that maybe the costs aren't as great, the mitigation tactics are effective, and the consumers are still buying cars, and that actually is the key kind of aspect of all of this.
The CFO, Paul Jacobson, joining the program a little bit later this morning, 40 minutes from now. For the broader market, welcome to the program. Pretty snoozy so far, unchanged on the S&P 500, negative by only 0.1% on the NASDAQ. Under surveillance this morning, the Fed's easing regime.
Ultimately, they are telegraphing that they're expecting to be lower over the next few quarters. Right now, they're almost getting a little bit of a free pass on this October meeting because there's going to be more cockroaches, right? There is going to be more credit stress. Both are in good shape, consumer spending and corporate credit. That this will help, I think, lower rates would help prevent maybe that next shoe to drop in terms of weakness.
So here's the latest this morning. Traders locking in bets. The Fed continues its easing cycle at next week's rate decision. Earl Davis of BMO seeing an increasing chance of a 50 basis point rate cut in December, saying the opaqueness and lack of transparency in private credit could be used to accelerate eases. Earl joins us now for more. Earl, welcome to the program, buddy. So let's skip October. That's done, dusted. What's on the table for December?
Well, December, our base case is still 25 basis points. We just see the chance of a 50 has increased dramatically. And the reason why it's increased dramatically is because we've moved our possible terminal rate. We saw a terminal around 3%, slightly higher than the market, to 250. And the reason why we see it, we've lowered it so dramatically is because of, your Tricolor, your True Rand, basically private credit in general. We believe that the private credit, where the opaqueness comes in from and the ownership of it, it's usually real money, pension plans and like. So it's going to be a slow seeping credit move wider, like things wider. So it's binary whether they go 50, but we see an increasing chance of 50 in December.
Do you believe then, based on the credit risk that you described, do you think it could lead to a broader tightening of financial conditions?
Temporarily, yes, we do believe it can. We don't believe it's systemic. And the reason why we don't believe it's systemic is, as I said, most of the holders of private credit are real money. So they could take the losses. Liabilities, they still have the liabilities to deal with. So it does have an impact on the economy, but they could take the losses. Having said that, why we see it as a possible increasing chance of 50 is they basically took the safety off the gun of 50 eases. And the thing about 50s is central banks just don't do 150. Otherwise, they wouldn't do it. So that's why we lowered our expectation for terminal to 250 by the end of 2026.
So I hate talking about cockroaches this early in the morning, but there is sort of this irony that the reason why there are these fears of credit problems is because of the prolific Fed policy that has enabled this, and the fact that monetary conditions used to be a lot lower to allow a lot of credit creation that may have overlooked a number of different underwriting standards. I'm just wondering if there's a bit of moral hazard here. The idea that the economy isn't cracking and that the Fed could respond to concerns in credit that were done in pretty easy financing conditions.
Yeah, no, we do believe, I don't know if I'd use the word moral hazard, but there's definitely inflation hazard risk because, it hasn't, our growth, despite what's going on in credit, our growth expectations have not changed for 2026. And it's because, big, beautiful bill, everything people are hearing. We think it's very supportive of growth, and growth will still be good. So then you're going to be in a very easy financial conditions market. And we think there's a big risk for inflation, but the market's not focused on that. We're not focused on that right now. We think that's a late 2026 story. One of the interesting things about inflation, though, we do get a print Friday. And if we do get a higher than expected print, the market, credit will widen, duration will go higher. We think that's temporary. We would use that as an opportunity to go longer duration and to go longer credit because we think the 50 basis point eases are very much on the table.
So if inflation is still a concern, Earl, how do you get conviction to go into long-term rates on Fed cuts that affect the front end of the yield curve?
Yeah, it's very easy. As I said, I've been in this market for 30 years, and one of the things with the market is it only focuses on one thing at a time. And right now, inflation is not the focus. So it's determining what is the catalyst to get inflation back on the radar. And there's basically two catalysts. One is employment. Employment starts improving. We don't expect to see that until 2026. And, there's no data or tier one data coming out on employment. And the second thing is geopolitical. And what I mean geopolitical is an oil price spike. That we'll see coming. And we'll be able to adjust positions accordingly. And the reason why I say we'll be able to adjust positions accordingly, in a higher yield bear market, you don't get, yields higher by 2 or 3 or 4 or 5 basis points a day. You get yields higher by 15 or 20. Once you start getting a sense of that, with the catalyst either being oil or employment, when that starts coming out, that's when you adjust duration to reflect that. Right now, it's an easing environment. There's no catalyst for that to turn. And our terminal, as I said before, has gone lower, which changes our view on duration right now.
Earl, will the government shutdown force the market just to focus on inflation? That's the data we're going to get. And what you hear from Washington is that they're expecting a prolonged shutdown, even potentially having congressmen and women come back to extend the date on the continuing resolution because they're hunkering down for a long shutdown.
Yeah, the market will focus on inflation. I think that's fair, but it won't be persistently focused on that because you'll get central banks speak once they're out of the blackout period or at the FOMC meeting, and you'll get, people focusing back on employment, and that's why we see it as a buying opportunity because that focus will be very short-lived, very temporary. So yes, it will focus on inflation, but, everyone's made clear that employment is the thing that the central bankers are looking at.
Earl Davis of BMO.
Could I say one more thing? Could I say
in
one
about
more thing?
20 seconds, sir, you can, absolutely.
Yeah. Go Blue Jays, go. Thank you.
Oh my God!
Nice.
Good luck
well done.
good luck with Otani, Earl. Good luck. It's showtime, baby.
Is he allowed back?
Yeah.
No.
Yeah, absolutely.
I thought it was going to be more piercing insight on markets, but it was just shade for Anne-Marie.
Evidently, although honestly, you're right. Shohei Ohtani was just absolutely a monster. So good luck with that.
Showtime is going to destroy Toronto.
Wasn't that brutal?
That was Earl. I didn't know he had it in him.
Regular
a dagger like that.
I think it's great. You're welcome back.
Killing AMH.
Oh, yeah.
Coming up on the program, Evan Brown of UBS Asset Management, Monica Guerra of Morgan Stanley, GM CFO, Paul Jacobson, and Michael Reed of RBC.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
We still have a very resilient and robust economy.
Profitability is still strong. Financial conditions aren't pulling back.
I think we should be very careful about cutting into higher inflation.
You're going to see the balance of risk shift back a little bit towards the inflation.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500 down by not even 0.1% following the biggest two-day rally since June on the S&P 500. In the bond market, twos pretty stable, likewise on tens. Across the curve at the moment, pretty much unchanged. Tens at 398, twos at 346. For the day ahead, lots of earnings. The earnings season starts to build up. We had Zions before the close, or rather before the open, yesterday. After the close, we will get Western Alliance after the close today. We've just had GM, decent numbers from them, and Netflix a little bit later as well.
What's interesting is all of these companies are telling a really positive story. I mean, really, they're all coming at different angles, but whether it's Zion's putting to rest some of the worst credit fears and the idea of some sort of big credit bubble that was busting, to GM putting aside some of the concerns about tariff-related costs really coming to the fore, the consumer's still strong from Coca-Cola. You look at all of these things, and you start wondering how many people can still feel bearish on the U.S. economy and feel like it is necessary to cut rates dramatically. And yet people are saying that you can cut rates dramatically because oil prices are low. So you put this together, and it feels like that melt-up just seems poised to continue.
Bramo questioning the bear thesis is the scariest thing I've heard all morning.
That's the top.
Right?
That's the top. Well, I mean,
Not
honestly,
a Gucci blazer.
all I can
This
say,
is the top.
all I can say is you have to wonder, where is the hole that's going to get poked in all of this narrative? I mean, really, we were talking about earlier about maybe some trade down. Is that really enough to hang your hat on?
Banks are making money. Saw that across the board in the last week. Saw it from Zions just yesterday. Will we see it with Western Alliance later on? And GM, to Bramo's point, is selling lots of cars. GM numbers are beating a race.
They're selling lots of cars, and they are doing tariff mitigation efforts. And as you said, the CEO is thanking the president in terms of the reprieve the auto industry recently gotten in terms of the high-level tariffs they were paying on auto parts coming into the United States. But still, 2025 full-year gross tariff impact improved. What is the improvement? $3.5 to $4.5 billion from $4 to $5 billion. They're still paying billions of dollars when it comes to the tariff policy out of the United States.
The stock is up this morning by close to 8% on General Motors. We'll speak to the CFO very shortly. Coming up this hour, Evan Brown of UBS as a big tech rally fizzles out. Monica Guerra of Morgan Stanley as President Trump finds a new ally in the rare earth space. And the CFO of General Motors, Paul Jacobson, with a big earnings beat for the automaker. He joins us in about 27 minutes' time. We begin this out with stocks hovering near record highs ahead of a busy week of earnings and inflation data. Evan Brown of UBS seeing resilience in the market, writing until the private sector meaningfully levers up, severe negative outcomes for the economy and market are a low probability. Evan joins us now for more. Evan, good morning.
Good morning, John.
It's good to see you. I think you've touched on something really important. We haven't had the leverage cycle yet, have we?
That's right. I mean, we came into this cycle with multi-decade lows in consumer leverage and non-financial corporate leverage, and that has kind of been our North Star, keeping us pretty glass half full throughout the cycle. Yeah, it's difficult to get worried about these, systemic credit risks or the consumer absolutely falling apart when you have not had that leverage build up yet.
Even Bramo questioning the bear thesis now. So,
I have one.
I'm sure you do. Do you want to share it now or wait?
We can wait.
Okay. Do you want to share what yours is? What is the most credible case now for this bull market running out of steam?
Yeah, I mean, I think the one thing we're all wondering about is the return on investment in AI CapEx, right? And it's difficult for any of us to have an edge in this because we've never seen it before. We don't know just how transformational this technology is going to be. It could end up being an absolute game changer for humanity. It could be we're just putting out, funny videos that we've made up and sending around, and that's that. So there's a lot of money that's being spent. And there are questions to be raised about the return on that money in the data centers and on the GPUs. And it's difficult to know right now if that money is going to be worth it. But I think, we're still early enough in that cycle that it's not a major concern just yet.
Yeah, and this goes to the AWS issue yesterday and a question around, is there going to be some sort of fissure or inability to deliver on some of the promises just by some of the technical constraints? They could potentially torpedo some of these valuations. How much is that part of your short U.S. dollar call?
Yeah, I mean, the U.S. dollar call is less about U.S. equities being, a major concern or an end of U.S. exceptional. It's more just that we think U.S. rates are going to continue to catch down to the rest of the world. I think the reality is that we're going to have a new Fed chair coming in next year who is going to be structurally more dovish, right? And so that might mean that as the economy recovers, should it recover as we respect, actually it doesn't need to recover that much because it's hanging in pretty well. But if the economy is picking up, the labor market's picking up, and you're going to get wages potentially rising because labor constraints are now more in effect due to immigration policy. Is that new Fed chair going to become less dovish, thinking about not cutting rates or maybe even hiking rates next year? We think the bias is that it's going to be kind of a run-it-hot Fed, and that's an environment where real interest rates remain low and the dollar weakens.
I just wonder how much a loss of Fed independence is sort of embedded in this call. The idea of go long equities around the world, go long EM, go long Japanese equities, go long U.S. equities, short the dollar, and overweight gold. How much is this a bet that the one loser is going to be debasement and you can see everything else do okay?
Yeah, I mean, I don't think it's a binary either or. The Fed is independent, the Fed is not independent. I think you will have a dovish Fed chair who will keep rates potentially a bit lower than Powell would have. And so on the margin, that is going to be more supportive of the kind of trades that you're mentioning. But I think if you have a chair that has complete lack of credibility, and I think that's difficult to do given it's still a committee, the decision, then that would be something that actually is more concerning. And I don't know if all of those trades, risk asset-wise, would do quite as well.
You asked me about the bear case.
Here we go.
Okay. The bear case to me has probably more to do with AI, and a question not necessarily of some AI bubble in some of the hyperscalers, but a question of where else has the money gone and how much do we get some sort of constraint from whether it's energy or whether it's some of these other areas that start to not come through in the way that people previously expected. How close are we to that? Or do we have a lot more to run before we even begin to find out where the pockets of excess really are?
Yeah, I mean, like I said, in the overall economy-wide, the leverage is pretty low. The CapEx that we've seen, the numbers are huge, but as a share of GDP, they're actually not that big compared to the tech bubble. We're talking about less than 1% of GDP compared to, getting up to 5% of GDP that we saw in the tech bubble. We do clearly have some constraints in terms of the grid and energy and the like, but maybe that's a good thing on some level and constraining some of the like overbuilding and the like. So yeah, I mean, I think this kind of AI CapEx cycle still has room here.
You're optimistic on China tech as a way to play the AI trade. How contingent on that trade is it that these trade talks go well?
I think it matters. I think it matters. You know, we did see as soon as we had Trump's tweets on that Friday and talking about 100% tariffs that China tech, the ETFs were down, 7%. So it matters for sentiment and the like over the short term. But what we have seen China do is that the more there are export controls on them, the more they kind of find their own solutions and develop their own hardware and own access to GPUs and the like. And so I think over the medium term, those kind of trade scares are an opportunity to get long China tech.
But long term, isn't the writing on the wall that these two economies, especially the technology sector, is going to be further apart from each other?
There will be a gradual strategic competition and moving away, but there can't be a complete divorce between the U.S. and China's economy. And I think Trump realizes that, and Xi realizes that there's just too much pain to be had on both sides to completely decouple. So, I think it's likely that China gives something on the rare earths, the U.S. gives something on the export controls and the tariffs, and they all realize that the downside scenario is much more severe than either of them want to agree to.
Evan, there appears to be a difference in approach, though. It's something that's been discussed on this program. In the US, these tech firms are investing as if they're confronting existential risk. Capacity, investing loads of money, NVIDIA's really benefiting. In China, by necessary means, they have to invest as if they're facing existential risk, sure, one, but two, it seems to be about efficiency over everything else. And it's interesting to me that this year, we've moved on from DeepSeek pretty quickly, and DeepSeek was the efficiency shock. And then we moved on, and we've gone back to whatever we're doing in the US. Is there an approach that you favor at the moment, the US versus, say, China?
I think you want to be long both approaches, and I think it's absolutely fascinating that in the US we're like, let's get to AGI and superintelligence as quickly as possible, whereas China, whether because they can't due to the export controls or just don't want to, they're saying, let's be as efficient as possible with what we kind of have, and then let's focus on the applications of it. And so I think, that AGI race and winner-takes-all race is something that's kind of compelling on the U.S. side, even if, it might be carried to an extreme. But I think China's approach makes a lot of sense from a kind of efficiency and monetization side. And so be long both, and that's a good diversified way to be in the AI trade.
Evan, it's good to see you. Evan Brown of UBS, thank you, sir. Breaking things down on the tech side, the US versus China. Things are so frothy out there, even France has hit a record high. CAC 40 index surpassing a May 2024 record all-time high. This is just an English France thing, that's all it is.
It's not actually anymore. Now it's kind of the world, the world-France thing, considering the recent reputation.
Yeah, not a great weekend. We were talking about that yesterday.
Terrible weekend.
No.
Yeah, I mean, look, this has been an ongoing difficult spot in the world, and it's sort of the weak child now of Europe in many ways, and for them to reach a record high.
And they lost the crown jewels.
We were talking about the French museums.
Yes, but it actually, okay, well, yes, the Louvre. Where do people sell jewels that they steal where everybody knows where they're from?
Wall Street Journal has a great story on this.
What did they say?
How difficult it is, but how quickly you have to move if you want to basically isolate, chop up these jewels, and then get them out to the market.
Sometimes it's targeted, like someone's got a list and these are the things they want.
Okay, so maybe that's what it was.
For their own private collection.
Yeah.
All I know is that we'll be watching Ocean's 25 for this.
The Thomas Crown Affair.
Yes, exactly.
Fantastic.
I like that too.
Yeah, love that movie. The Pierce Brosnan one, though.
Yeah, that was good.
Okay. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. Shares at GM soaring after the automaker raised its full-year outlook and posted third-quarter results that topped analyst expectations on better-than-expected pickup truck sales and fresh relief from the Trump administration's tariffs on auto parts. GM will also be reducing its EV investment. In a letter to shareholders, CEO Mary Barra saying it is now clear that near-term EV adoption will be lower than planned. Elsewhere, shares of Coca-Cola higher after posting third-quarter sales growth that beat Wall Street expectations, a sign that consumers aren't shying away from the company's beverages despite higher prices. Coca-Cola reported organic revenue growth of 6%, topping estimates, while adjusted earnings per share also outpaced expectations. And in sports, the Toronto Blue Jays are headed back to the World Series for the first time since 1993 after a thrilling Game 7 win over the Seattle Mariners. George Springer hit a go-ahead 3-run home run in the 7th inning on the way to the 4-3 victory. They'll be facing Shohei Ohtani and the LA Dodgers, who are looking to become the first repeat champions since the Yankees in 2000. And that's your Bloomberg Brief, John.
Touchy subject over here, Lizzie. Thank you. Thanks for the update. Up next on the program, mining for new deals.
We are discussing critical minerals and rare earths, and we're going to be signing an agreement that's been negotiated over a period of 4 or 5 months. In about a year from now, we'll have so much critical mineral and rare earths that you won't know what to do with them.
That conversation up next with Monica Guerra of Morgan Stanley, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Stocks just about unchanged, turning positive briefly on the S&P 500, going nowhere on the Nasdaq, on the Russell pulling back by just 0.1%. A better tone to this equity market in the last 24 hours. Last week worried about credit risk, particularly around the regional lenders. That was Thursday into Friday morning. That fear has really subsided, particularly with decent earnings coming from Zion after the close yesterday. So the tone doing a little bit better. The focus now on earnings. GM was okay, likewise on Coca-Cola. So far, so good.
And we get Western Alliance later today also. They might give another read on just how much these cockroaches are real or whether they are worries that people have. Look, right now we are seeing an economy that still is strong. And it's going to be bolstered by rate cuts. And we're not necessarily having any other data. So why wouldn't the market continue to melt up on the back of this?
That's the latest on Wall Street. For the latest down in Washington, D.C., under surveillance this morning, mining for new deals.
We're here to talk about trade, submarines, lots of other military equipment. We are discussing critical minerals and rare earths, and we're going to be signing an agreement that's been negotiated over a period of 4 or 5 months. In about a year from now, we'll have so much critical mineral and rare earths that you won't know what to do with them. They'll be worth about $2. But in the meantime, we're working with Australia and other countries. They're working with us, too.
So here's the latest this morning. President Donald Trump making a deal with Australia to boost America's access to rare earths. It's an attempt to counter China's dominance over the issue. Bloomberg's Tyler Kendall joins us now from Washington with more. Tyler, what precisely has been agreed between the two countries?
Yeah, hey, John, good morning. So this is actually considered to be a landmark agreement, appearing to make Australia the U.S.'s partner of choice when it comes to mineral projects. It's an estimated $8.5 billion deal that will see the U.S. and Australia jointly invest in critical and rare earth mineral mining, but also processing projects in Australia. Australia has also pledged to invest in U.S. defense companies. There are still big questions here on how concrete the agreement is and how long it will take to implement, but it is widely seen as a win for Australia, which has been trying to ink such a deal at this point for months, because up to this point, the administration has really been focused on these domestic projects. Think MP Materials or Trilogy Metals, which is why our own analysts at Bloomberg Economics say that this really does mark the first real tangible effort by the Trump administration to partner with a credible ally for help in this sector. And while the agreement itself is between the U.S. and Australia, it also is calling for this broader coalition to come together to agree on fair standards and also pricing mechanisms, all in a bid, of course, to compete with China, because that's what's really hanging over the backdrop here as we head into next week in this critical meeting between President Trump and Chinese President Xi Jinping. John, as you all know and discuss on this program all the time, China has a major grip on the industry. It accounted for more than 70% of rare earth global supply last year alone.
Tana Kendall with the latest down in Washington. Tana, thank you. With us around the table, Monica Quera of Morgan Stanley. Monica, good morning.
Good morning.
China's flexed, and it's flexed, and the whole world has listened, and arguably maybe even brought the likes of Australia and America closer together. Was that a strategic mistake going into negotiations later this month?
I think what's interesting about this deal is that China's response was actually constructive on paper, right? They were actually positive, saying, you know, yeah, join the party on rare earths. That was really surprising to me. That tells me that they're not worried. It's going to take at least 5 to 7 years, maybe longer, to have this whole initiative ramp up. A lot can change in that time. Doesn't mean that this isn't going to be a positive for the U.S. I think more, players at the table is ultimately long-term a benefit, but this isn't a zero, end game here.
So going into this meeting, it sounds like, do you think China has the leverage?
I would say that both parties, right, need each other. Right? When we're thinking about our combined economies, they don't want a 100% tariff on all of their goods. That's an issue for them. But they don't really need to worry about this move on rare earths. I think that they're going to be focusing on the other components. China is still in charge of 90% or more, right, of that market. So this isn't a now issue. It's going to make them have to focus on all these other factors that could impact their import-export relationship.
To Jonathan's point, China, though, flexing its muscles on rare earths, is it giving the Trump administration an excuse to continue making these deals where they take outright equity stakes in mining companies?
I'm not going to speak to that, right, to that piece. I think, we were all surprised by the other outright stakes in U.S. companies. Now, as far as the mining company component, we're going to continue to see foreign direct investment, right, directed out of the U.S. in order to make these deals happen. What's going to be interesting is as we build out our relationship with Australia and China, it's like, where do we land on that final tariff number? And I think that, again, when we go back to actually the beginning of the year, that you could see something that's in that 30 to 40% range if we're going to go back to those campaign promises.
Do you think that's where we end with China, say 2026? We're kind of there now on some products.
On some products. I think, you could see an increase on those Section 301 tariffs. You could see more on, Section 232. The other piece here, right, that we have to really appreciate is the U.S.'s reliance on that tariff revenue from a fiscal policy perspective, and the fact that we're in the middle of trying to just even determine if we can have the IEEPA tariffs in place. And once we get that, it's going to be that patchwork on Section 301, Section 232, and others, right, to try to make us whole from a fiscal policy perspective. So I would say from China's lens, yes, maybe they definitely have the advantage on rare earths. Is there something at stake for them? Big time, right, when we're thinking about that relationship. But the U.S. also has to think about their fiscal policy future and trying to find that sweet spot.
So given that concern and that hang-up and that, frankly, support to the debt market, how much of a risk case is it if the Supreme Court overrules the tariffs that have been put on and forces the administration to scramble and cobble together another sort of regime of tariffs to plug that fiscal gap?
Well, they're already working on it. So, for example, Section 232 tariffs, you have to have studies put in place. Those prior to the shutdown were in the works. And so I think we need to get through this shutdown period in order to see some of those puzzle pieces come into play. I think markets are right to assume that there will be some tariff revenue coming in at the end of the day. It's just how much? And that's going to be the big question. If they get a negative ruling, there will likely be a market response, right? That's natural. That's going to be a normal course of action, but soon to be backfilled with all those other tariff pieces that they've been, working on heavily.
We got GM earnings earlier this morning, and it showed that the tariff mitigation plans have been working and have offset a great deal of any extra cost. In general, earnings have been pretty positive across the board. Is the takeaway that the tariffs are manageable and that, frankly, companies are adjusting and adapting, and it wasn't as big of a hit, even if the tariffs go in and remain as such? It's not as big of a hit for the underlying profitability momentum of the United States as expected earlier this year?
I think that the full pull-through, right, of impact of tariffs hasn't been seen yet. So while I think that the GM reporting is a positive sign, that we're finding a sweet spot here, one of the key things we have to focus on is this patchwork, component of tariffs and what that's going to mean for the consumer in other areas. So while they might have found that sweet spot with GM and the auto industry, can they do it across the board when we're thinking about all goods and services? That's to be seen, and we'll get more information in November.
What channel are you and the team focused on? Prices or through the labor market? Cost cuts?
We're focusing on labor market right now, especially as it relates to the shutdown, because this is a really interesting period. Typically, when you have a shutdown, right, people get laid off and then they get brought back. And so that furlough period, you essentially get made whole. Doesn't have a major impact long term. Now, this is different because we don't know how many employees are actually going to be brought back. And so that could have an additional drag, especially when we're thinking about those inflationary factors.
Monica, good to see you. Thanks for being here. Monica Guerra of Morgan Stanley. It is different this time. We've heard that a few times already.
And also the fact that now you see Washington preparing for maybe being in a shutdown longer than November 21st. Talk about labor market data we're not going to get. Also, the clarity of that data, given the fact that a lot of these workers are not deemed essential, so they're not out there collecting these surveys. But when you have the Senate Majority Leader saying, yeah, maybe Speaker Johnson needs to bring Republicans back, so we need to extend the date on the CR, this looks like an administration and Republicans in Congress preparing for a shutdown that maybe will go past the record we had in 2018, 2019 of 35 days.
Didn't get the jobs data for September. Probably not getting it for October anytime soon. It's going to threaten November too.
Yeah, and now we're going to get a CPI, which is probably going to come in hot. So go square that with the idea of rate cuts.
And a bond market rallying into that too.
I mean, everything about this is
some real tension out there.
I mean, market only can focus on one thing at a time.
It's true. Coming up on the program, General Motors CFO Paul Jacobson with a big earnings beat. Plus, Yahara's got your morning movers. Coca-Cola shares rising on earnings and a resilient consumer.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Earnings pretty decent so far this morning. More on that in just a moment. Equity futures, your scores just about unchanged on the S&P 500. Big two-day gain on the S&P, the biggest we've seen since June. On the Nasdaq 100, just about unchanged so far this Tuesday morning. With your morning movers, let's cross over to Yahira for more. Hey, Yahira.
Hi, John. We have a slew of earnings to get through. We start with GM. Shares are rising 9% in the pre-market. It was a beat and a raise for the automaker after red-hot demand for its trucks and SUVs helped offset tariff pressure. And CEO Mary Barra is giving credit to President Donald Trump because those tariffs were not as bad as expected due to some discounts. And moving on to GE Aerospace, those shares are up 1.25%. The jet engine maker just raised its outlook for a second straight quarter, and that's thanks to booming demand for air travel, which fueled demand for new engines and maintenance work. Remember, CEO Larry Culp broke up the company, and the changes are gaining traction with those shares up 80% this year. And we end on Coca-Cola, another positive earnings story. Shares are up 2.8% after it topped third quarter sales expectations as shoppers continued buying across its beverage lineup. And it was its smaller sized bottles and cans that helped lift sales, showing that consumers are still buying but choosing slightly cheaper options as the cost of living remains an issue. John?
Yahara, thank you. The stock is higher by close to 4% so far this morning. On our radar this morning, the Vice President J.D. Vance arriving in Israel today. He's set to meet with the Prime Minister Netanyahu in an effort to shore up the fragile Gaza ceasefire deal between Israel and Hamas. The Vice President will hold a news conference at 11 a.m. Eastern Time this morning. Elsewhere, a group of U.S. banks behind the $20 billion Argentina bailout is looking for collateral. The Wall Street Journal reporting the group, which includes J.P. Morgan and Bank of America, is struggling to finalize the loan without leaving themselves on the hook. And finally, Amazon Web Services resolving all issues related to Monday's 15-hour outage, the company blaming a malfunctioning digital directory for the disruption. The outage affecting hundreds of sites, including financial services and gaming companies.
This is about a third of web services around the world, and it raises this question of how fragile some of these companies could be if they rely all on one cloud computing service. It raises a question about the systemic import of some of these companies and how much companies are willing to pay extra in order to duplicate some of those efforts and maybe diversify. A real question here about how much we're hinging ourselves in something that really hasn't been fully secured.
And right on target. You have individuals in Washington, like the Senator of Massachusetts, Elizabeth Warren, saying this just proves a point that big tech is monopoly and need to be broken up.
Sometimes it's very predictable in Washington, isn't it? Like we could write the letters for them sometimes based on who they are.
Yeah, but at a certain point, they have to have enough size and scope in order to be able to provide these services. We've been talking about the inability to fuel it through some of the energy sources, and then you're going to say they're too big. I mean, pick one. I mean, okay.
They've got the drafts ready to go.
Yeah. I mean, we just need to go back to
The
pad
senator
of paper.
from Massachusetts just has the draft ready to go. Something malfunctions in big tech. It's like send.
Monopoly one.
Yeah, every single time. All right, Amazon up by 0.2%. Let's turn back to earnings. Shares of General Motors jumping after the company beat earnings and raised guidance. The GM CFO, Paul Jacobson, joins us now for more. Paul, the stock is up by more than 9%. We'll spend some time talking about the numbers, but I just wanted to take a step back with you just for a brief moment. You've got real experience navigating volatile industries, experience in the airline business and experience in the automaker business too. You took over as CFO in the pandemic. Can you talk to us about this year, Paul? Just how agile have you and the team needed to be, and how volatile have things been too?
Well, Jonathan, first of all, thank you very much for having us. It's a great day to be at GM and celebrate the success of all of our employees and partners worldwide. So really appreciate you being here today, having me today. So, you know, at the end of the day, it's just another change. I mean, since coming to GM in 2020, we've gone through COVID, we've gone through chip shortage, we've gone through tariffs, we've gone through EV pivots and so on. But what we've really tried to do is create a model that is resilient. And when you look at our balance sheet, you look at our inventory discipline and the way we've gone to market, there's a lot of things that have changed that allow us to be able to react to the world around us faster. And I think that's paved the way for us to have another really strong year in the face of a lot of macro changes.
Paul, in order to increase resilience and maybe agility, do you have to sacrifice long-term planning? Is that something that becomes harder?
Well, you know, I think what we've really done well as a team, I think, is we've kept focus on that long-term vision. So, you know, for example, while we've taken a charge on reducing some of our EV capacity, reflecting the demand that's out there, we still believe that EVs are the future. And we think that there's an opportunity for us to take a little bit of a pause in demand growth that we've seen over the last few years, structurally improve it, right-size our capacity, and make sure that we can be successful as more and more customers adopt it. So it's just an example of how we make sure that we're managing the short term within the face of that longer term vision.
So what are the big steps, Paul, that you've taken in order to remain agile, particularly with supply chains and removing any kind of direct input from China in particular? How much have you rejiggered where you get your goods?
Well, I think we learned a lot in industry from COVID and a focused supply chain that was really susceptible to individualized shocks. And I think we've taken the effort to try to make sure that we diversify our supply chain base. We've made a number of investments, for example, in battery raw materials and other materials in the U.S., in addition to the $4 billion that we've announced this year to increase our U.S. manufacturing capacity. So I think it's been a case of making sure that that's balanced. And then when we went through the chip crisis of 2021, there were some more challenges about making sure that we expand the places where some of our chips are fabricated and our supply base that we use. So this has just been part of it. I think we've learned a lot of lessons over the last 5 years that have helped us and positioned us well to be able to thrive in ever-changing circumstances like we see right now.
All of this costs a lot of money, and I'm just trying to get my head around, we've all been trying to get our head around where it comes from, these extra costs in order to rejigger supply chains, to offset any kind of increased costs that might come along the way. How much is coming from, whether it's freezing labor forces or trimming around the edges, how much is coming from higher prices on consumer vehicles?
Well, I think if you look at what GM has done, we've saved a lot of money by rationalizing our inventory balances. So we used to keep probably about 40% more inventory on the ground at our dealerships around the country. And we've cut that down. That frees up a lot of working capital to be able to invest and redeploy back into the business. But it also makes sure that we can change much more quickly to changing demand around us. So our pricing has been stabilized, and I think that's given us a little bit more comfort to invest a little bit more than what we have historically, but still making sure that we're very disciplined with our capital allocation, because we still have opportunities to pay down debt and also return capital to shareholders. So it's that balanced approach that I think has really paved the way for our success.
Paul, you and your colleagues in the industry recently had a big win in Washington, a little bit of a reprieve when it comes to the arrangement on the timeline for the tariff costs for imported auto parts. What else are you asking in terms of tariff relief from Washington?
Well, I think I want to praise the administration for really listening to the concerns of the industry and making sure that they're helping us to be positioned to be really successful as one of the largest U.S. industrial producers that are out there. And the announcements that were made Friday essentially take what had already been done by the administration in the spring and expands it a little bit to be able to use those MSRP offsets on a wider variety of parts that we're bringing into the country. And as a result of that, we were able to lower our total tariff forecast for the year by about $500 million from where we started the year. And I think it's that proactive partnership in terms of really making sure that we can remain competitive and help to drive more investment into the U.S., which we've done.
So do you expect more reprieves, especially as the U.S. goes into negotiations next year with Mexico and Canada?
Well, I think what we're looking for is a little bit of stability. Obviously, this year's been a bit of a transition year. For us, the handshake deal that we have with Korea, we're really eager to get that finalized. We do have some production of some of our lower cost models in Korea that help with some of the affordability concerns of our consumers here in the U.S. But also, obviously, Mexico and Canada are going to be really important to us. But as we look at those deals being finalized and we start to look into 2026, we think that there's actually an opportunity for us to do better in 2026 than we've done in 2025 and start to work our way back up to those 8 to 10% targeted margins that we set for ourselves before the tariffs were put in place.
Paul, just finally, can we stay in Asia and finish on China? Paul, for a long time, we've said on this program, this must be the most competitive market on the planet in any industry. How difficult is it to operate in that country right now? And how much harder is it going to get in the future for U.S. automakers like yourself?
About a year ago, Jonathan, we undertook a pretty ambitious restructuring program in China with the realization that, we were probably not going to be as big in China as we have been historically going forward with the amount of just tremendous competition that's in the country going forward. But, together with our partners, we were able to restructure that business, and we've been profitable every quarter this year and look to be able to sustain that. So it's really about making sure that we're right-sized for where we are. We've got great products over there. We've got a long legacy, and we've got a good partnership that I think has really paved the way. And with that work that the team did in China, really proud of what they accomplished and think we can be sustainable there.
Paul, appreciate your insight and your experience as always, sir. Paul Jacobson there, the General Motors CFO, a beat in a race from that company. Stock is higher in the pre-market by around 9%. $80 million in China in the latest quarter. That's what GM made. That's a turnaround. That's important.
And it was actually better than expected. And they've been trying to right-size that team. It's sort of a difficult dance between both investing in that nation and also navigating this sort of tit-for-tat between the two countries at a time where both countries are really prioritizing their domestic champions.
Three completely different markets.
Completely.
Right now, you've sort of got China going one way, the US going another, Europe stuck in between, and these global players trying to work out what product sells best where.
Yeah, and exactly what the future is going to be, too, is sort of the Craig Trudell kind of view of the world. Near term, it might make sense in one region to get out of EVs or to go into EVs. Long term, what is the ultimate goal? And that, I think, is less clear right now than it was, at least what the lip service was maybe a year ago.
GM this morning higher by around 9%. Let's get you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. President Donald Trump and Australian Prime Minister Anthony Albanese have signed an agreement to boost production of critical rare earth minerals in Australia. The two governments will invest more than $1 billion over the next 6 months for initial projects, both pledging to protect their domestic markets from unfair trade practices. Elsewhere, the US government shutdown is in its 21st day after the Senate failed for an 11th time to advance a House-passed measure to fund the government. The impact is being felt across the federal workforce. Senate staffers were told they'll no longer be paid for the rest of the shutdown, and the federal agency overseeing the US nuclear stockpile furloughing most of its workforce. And parts of the White House's East Wing have been demolished as construction begins on President Donald Trump's new ballroom. Trump announced the construction in a social media post, saying for more than 150 years, every president has dreamt about having a ballroom at the White House to accommodate people for grand parties and state visits. And that's your Bloomberg Brief, John.
Lizzie, thanks for the update. More from Lizzie in about 30 minutes' time. Up next on the program, the last clean inflation report.
This coming CPI report, this one on Friday, is likely to be one of the better ones. What's going to be more worrisome is next month, or whenever the shutdown ends, as people come back from to the BLS.
The data desert, get a drip of water on Friday. CPI. After that, I don't know what comes next and when it drops. From New York City, you're watching Bloomberg TV.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of the meatballs.
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Live from New York City, welcome to the program. Equity futures on the S&P 500, just about unchanged. On the NASDAQ going absolutely nowhere. Snoozy on the Russell too. We finally get some data later this week. CPI coming up on Friday. Under surveillance this morning, the last clean inflation report.
This coming CPI report, this one on Friday, is likely to be one of the better ones. These individuals were not actually on furlough for all that long, so they're not that far behind schedule. What's going to be more worrisome is next month, or whenever the shutdown ends, as people come back from to the BLS. Even if the shutdown were to end today and people were to come back tomorrow, they're already going to have to ask about stuff that had happened retroactively.
It's the latest this morning. Investors looking ahead to this week's CPI report, an oasis in the data desert. And I tell you, based on this government shutdown chat with Anne-Marie and everyone down in Washington, D.C., might be a while before we ever see an employment report.
I mean, honestly, at this point, there seems like an incentive once it gets past November just to keep on going. In the meantime, the earnings have been pretty good, and yet people still have confidence that the Fed is going to cut rates. And this coming from Ed Yardeni overnight. I thought this was interesting. He said that he thinks that 10-year treasuries could hit 3.75%. Why? Because the Fed's cutting and oil prices. And that's the key. Oil prices keep going down, and that will keep a lid on anything potentially.
When it comes to the shutdown, though, what this administration is doing is trying to mitigate all the pressure points. There's an article yesterday in Politico. They're trying to find ways to pay air traffic controllers because, remember, 2019, that was the sticking point. That was the day Trump caved because there was a ton of flight delays going into Orlando, New York City, really big airports, and it was starting to, really hurt citizens, getting curmudgeon. They're trying to find ways because they're preparing for a protracted shutdown.
The Federal Reserve, they're essential workers, apparently, we're told. We've got that confirmed. They meet this time next week, a two-day meeting with very little economic data and the prospect of a big change at the top of the Federal Reserve in May of next year. Joining us in the last week, Governor Waller, a candidate to be the next chief of the Fed. We talked to him about leadership and his view on what's happening in the economy right now. Take a listen. How's the process going? Let's start there, and then we can get into all the other good stuff. How's the interview process going?
It's going well. As far as I can tell, the secretary has a very systematic way of going down the list and doing the interviews. As I said the other week, I had a great interview with Secretary Bessent. Talked a lot about economics, Fed policy, the Fed, balance sheet, just general stuff in the economy and financial markets. It went very quick. It was about an hour and 45 minutes. The next thing I knew, it was over. So it was a great conversation. Of course, I love those kind of conversations. I can do that all day long.
The Treasury Secretary's spoken about in the past, he wants almost a visionary, someone who looks forward, like an Alan Greenspan type, open-minded. Do you get a sense of what he means by that?
I think it's the idea of if you're looking at the data and it's always looking back at the data, the data is always kind of old and you have to think forward, like where are you going with this stuff? I've managed to do that a couple of times with thinking about this beverage curve argument back in May of 22, that we could have the soft landing earlier this summer with the weakness in the labor market, which turned out to be true. People doubted it at the time I said it, but so I think I don't want to, brag, but it's that kind of being able to look at the data and see forward where things are going, and I think that's a critical thing he's looking for.
You were certainly vindicated. The president was obviously excited about the fact the Fed finally was cutting interest rates. Have you spoken to him at all?
No, I have not.
Is that on the schedule?
I don't know. That's up to Secretary Bessent.
We're going to find out soon, hopefully. We'll talk to the man himself, the Treasury Secretary, hopefully later on in a month. I want to talk about the meeting that takes place at the end of this month as well. You were pretty clear going into the last meeting. You delivered a speech, and I believe the title was, "Let's get on with it." Yep. Are you advocating for the same thing at this meeting?
Yeah, I think it's the right thing to do. Back then, there was an issue of whether you go 50 or 25, and I argued we could do 25 and see how the data comes in. Of course, we're not getting much data. And then we can think about the next 25. So in the last 6 weeks, I don't think a lot has changed. We're not getting the public data, but all the private sector data that we're getting, Beige Book yesterday, everything we're getting is telling roughly the same story. The labor market's weak. Growth seems to be on the stronger side, which is a bit of a puzzle right now because you can't have a really strong growing economy and negative job growth or zero job growth. And people talk about productivity, but AI hasn't had that effect yet on the labor market or productivity. It will down the road, I think, but not right away. So I don't think that's the story that's driving it. So in that case, one of these things has to move, right? Either GDP numbers start coming back down or the labor market rebounds. You just can't have growing economy and very weak labor market. They just don't go together.
In the meantime, do you just continue to reduce interest rates meeting by meeting as you wait to see what's going on? What's your overall approach, and what do you think about that?
That's exactly what I've been arguing, is since we don't know which way this is going to break, if the labor market rebounds, there's less of pressure for cutting rates. If the growth comes back down, there's more pressure for cutting rates. You don't want to make a mistake. So the way to avoid that is to go, cautiously or carefully and do 25, wait and see what happens, and then you can get a better idea of what to do. But if you've already started the process, you're providing whatever initial support for the labor market that you feel is necessary.
So we've had this obvious step down in payrolls growth. It's pretty clear. It feels like that alone, though, might be an outlier compared to everything else that's going on in the economy. You yourself just acknowledged that. What do you think is behind that? And can that persist?
That's the thing. When I've talked to private sector CEOs about hiring, we typically get a couple things. Maybe early part of the summer, there was a lot of uncertainty about tariffs. We're just holding off on doing anything. One of the things I heard is firms were going to have to pay the tariffs. One easy way to do that is just not hire. Take all the labor savings to pay off whatever the tariffs were. So that was one thing. Then you have this AI story, which was people like, we don't know if we're going to need to hire, but we're going to wait and find out. We're not going to go out and hire a lot of people right away. So I think the tariff uncertainty, paying for tariffs, trying to sort out what AI really is going to do, kind of put firms on their back foot. Now, that's what I mean. Either they decide the AI is not going to be in the near term the big job replacement that they thought, and they're going to have to start hiring, and it comes back, tariff uncertainty goes down. All of those things could lead to a rebound. On the other hand, if GDP starts softening, it's not as strong as we think, that somehow the data is a kind of a mirage right now. Then the labor market is telling you things are just not as good as you think. Now, the financial markets are the big puzzle. I mean, I'm not the only one. How much of this is just a big boom in AI and everything else is marginal? I've kind of been arguing there's a big difference between the financial conditions for corporate America and financial conditions for Main Street America. If you're Main Street America, you're looking at mortgages over 6%, very expensive housing, car loans over 7%, credit card interest rates in the 20s. These are not loose financial conditions for American households. So when we look at the financial markets, you're seeing a lot of when people talk about credit spreads and all that. I don't think most American households care what the credit spread between corporates and treasuries are. That doesn't really, unless it shows up in mortgages. So I think there's this is one of the things that I find kind of puzzling right now, is there's just always these dichotomies between things. If you look at AI, if you take out anything data center AI related, business fixed investment is turning down. It's not widespread. All this investment is not widespread across. There's a real reallocation from kind of everything else into AI. So there's this bifurcation in so many ways that make kind of reading the economy tough right now.
How much influence do you have on one versus the other? Financial conditions on Main Street versus Wall Street. Wall Street's immediate. Wall Street's gone. It's off to the races. Yeah. Can you really influence financial conditions on Main Street?
Well, that's kind of what we hope. If you think about cutting rates, which we're doing and I think we'll continue doing, that does have a pass-through to the 10-year. And the 10-year is often the anchor for pricing mortgages. So the 10-year is down to like 4%. It's come down from 4.5%. That's about 0.5% off. If it were to continue drifting below 4%, you'll start seeing some downward pressure for certainly mortgages. Auto loans are kind of a different thing. They're trying to figure out how to deal with tariffs on the auto industry. One thing I've heard is they got rid of a lot of cheap financing that they used to subsidize for consumers. That's going to raise the cost of financing. All these things are more tightening for Main Street America. So hopefully these things, as we go on through the rest of the year, start loosening up some.
Governor Chris Waller of the Federal Reserve and potential Fed chief May of next year on the economy and what's happening. All these dichotomies, these contradictions that we've been discussing on this program, the fact you can have employment drop off the way it has, but retail sales have remained solid, the fact that people can freak out about what's happening with credit issues, but bank earnings are absolutely fantastic. We're all grappling with the same thing right now.
And it seems like the Fed doesn't have an edge on it, and they don't have the data, and yet what they are seeing is a labor market that is deteriorating, and the K-shape that some people reject, but other people see as being one that they need to cater to, and they want to ameliorate some of the issues for people on the lower end of the income spectrum.
And even if we get this hot CPI, they're going to look through it. They're going to continue to look through it, as you've been talking about really for months, Jonathan. 2026 is going to be so challenging for the Fed because you're going to have to potentially deal with hotter inflation and a brand new regime when it comes to the head of the Federal Reserve.
And a bond market's rallying into it. It's a very intriguing moment in fixed income at the moment. Coming up on the program, we'll catch up with Julie Beal of Kane Anderson Rudnick, Alicia Reese of Wedbush. We'll catch up with Lorena Urici of T. Rowe Price and the CEO of Atlas Merchant Capital, Bob Diamond.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
The key point for growth really is how these tech stocks are doing.
The AI momentum in the near term looks pretty solid.
If there's any slippage in earnings from the tech guys, I think you're going to see a more wobbly, more volatile market.
This is a very, what we're calling a high-risk bull market.
I'm very bullish. I think the market goes to new highs before Thanksgiving.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The opening bound 90 minutes away, live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. Your scores look like this, just about positive on the S&P 500 following 2 days of gains on the benchmark. The biggest two-day rally since June on the S&P 500, leaving behind the credit fears for now at least. Solid earnings across the board from Zions overnight. We saw it from Coca-Cola and General Motors already this morning. Later on, we'll be catching up with Netflix, and you'll hear from Western Alliance.
Yeah, do you get the same sort of confirmation that the economy is solid, that the credit problems are less concerning than maybe some people feared, and that everything is a go? People have been looking for things to worry about, and so far the earnings have not given them that node of anxiety that they otherwise would have gotten. And what you're seeing is really resilience, both in corporate earnings, corporate expenditures, as well as in consumer spending, and that continues to be the theme.
It's a breath of fresh air as the world is trying to figure out, and investors trying to figure out what is going on with the tariff policy going into this meeting with China, as we don't have tier one data coming out of Washington except for what's going to be the CPI print. Zions is talking about that this was an incident, isolated incident, not idiosyncratic, isolated, because Jonathan hates that word. And then GM is talking about the fact that they are able to weather the storm of whipsaw changing policy in Washington, whether it's tariffs, whether it's emissions, or whether or not they're going to EV subsidies or not.
Give credit to some of these management teams. Give a ton of credit to them. Savita Subramaniam of Bank of America said it a long time ago. Never underestimate corporate America. The agility of these management teams through getting whipsawed after one political cycle to the other, from Biden to Trump, on things like EVs and tariffs, and they're still making money the way they are.
Yeah, and if you think about it, it'd be Paul Jacobson of GM in the last hour talking about how he came in during the pandemic and he had to manage supply chains during that moment, and they learned a lot from that. Look, they were also the ones, corporate America, that termed out their balance sheets in a way that the United States did not. And so they've been more resilient to the Fed rate cycle in addition to everything else. And it's the reason why people are wondering, well, even if they report earnings that are really good, does that really represent the rest of the economy? Because we have seen that split in a growing way.
Increasing agility, adaptability, are you sacrificing long-term planning? Are you at the mercy of the next political cycle? General Motors would obviously push back to some of that, but that's certainly a question we've got to ask.
We're dealing with that right now when it comes to rare earths. China has the entire control of the supply chain. They have the rare earths, they can process them, they refine them, they can ship the magnets. They doubled down the CCP when it came to rare earths decades ago. They're doing the same exact thing when it comes to EVs, which the United States is flip-flopping back and forth every 4 years. China is doubling down. At some point, China is going to say to EV car makers, GM, Tesla, who it may be, you cannot buy our battery, you have to buy our car. And they are going to become the superpower when it comes to EV car making and shipping.
General Motors this morning higher in the pre-market by more than 10%. Coming up this hour, we'll catch up with Judy Beale of Kane Anderson Rudnick with the latest market rally on pause. Alicia Reese of Wedbush ahead of earnings from Netflix later on today. And the former Barclays boss, Bob Diamond, the CEO. He's going to join us as he remains bullish on regional banking. We begin this hour with stocks flat as Wall Street awaits another round of earnings. Judy Beale of Kane Anderson Rudnick writes, investors will continue to overlook government shutdowns and geopolitical tensions as long as corporate profitability is strong. Judy joins us now for more. Judy, welcome back. You've talked about this a million times too. How impressive is the adaptability of management teams across corporate America?
I agree. I think your sentiment is exactly right. If you think of everything that has been thrown at them, it's not just, right, tariffs, right? It's pandemics, it's supply shutdowns, it's huge swings in demand, huge swings in policy. They've really been able to put their ingenuity to good work. Imagine actually how productive they could have been if we didn't have tariffs, right? How they could have really used their ingenuity in good ways, but that's neither here nor there.
Judy, are you seeing this across market caps? Is this something that just management teams at large cap America can handle well and small caps can't? Or are you seeing this across the board?
I think we're starting to see that small caps really struggled with inflation in a way that large caps had more pricing power and they were much better able to maintain their margins. And then the bigger issue for small caps was they were not able to borrow long with, fixed rate interest. For them, they've been on variable rate debt and they've really struggled under that. I think we've reached the peak of their interest rate costs rising, and now we're in a place where they can finally start to have some earnings expansion just based off of that.
Do you think that's been priced in, or do you think that that's an upside in the months to come?
I think what's interesting, right, in this rally in small caps is that it's been very localized in super high beta stocks and stocks that don't have earnings. So that's biotech and quantum. The rest of the kind of higher quality scale really hasn't gotten to participate in this rally in small cap in the same kind of way. And so I actually don't think it's reflected everywhere in the same. But of course, I'm going to say that I'm an active small cap manager, and I'm going to say that you need to be selective.
I'm trying to square this idea that you're seeing profits reaccelerate in some small caps, that you're seeing earnings from the large caps come in better than expected, the increase in full year expectations that we're seeing pretty much across the board. And yet one manager after another is saying you have to be cautious. You have to move up in quality. You've got to be prepared for the next shoe to drop. Why? Can you square those sort of distinctions, the idea that we're seeing real optimism from the C-suite at the same time that fund managers are looking for something to get nervous about?
I think it's connected to the labor market. I think we kind of all recognize that the part of the reason why we have had such a strong economy is that we have a consumer who is so willing to go out there and spend money. And that has really propped up a lot of this economy in a really major way. If we lose that, as we're starting to see some degradation in the consumer strength at the low income, it really does ripple through this economy when so much of it is driven off the health of what the retail consumer is doing. So I think that's where people have a lot of anxiety. And look, how many articles are you going to read about a bubble in AI and not start to be a little bit worried when you have valuations as stretched as they are?
Julie, not just a bubble, you call it the AI pixie dust that is basically floating around when it comes to the stock market. What vulnerabilities are you seeing?
You know, I was at an AI conference just this last week, and what struck me is how many panels people use the word unlimited. And the word unlimited, when you're in finance, it's a non-word, right? It doesn't really exist. Everything is limited. And if you talk to mega cap tech, they're all talking about how capacity constrained they are, how they need more GPUs, how they don't have enough power, and they don't have enough data. It was strange to me hearing all of this talk about unlimited. And it reminded me, do you remember when cell phone plans went to unlimited, right? I used to call my girlfriend, put the phone down, and just watch TV with pure silence, right? Because we were so excited about unlimited. I'm worried that we're not going to have the most cogent, thoughtful, capacity-constrained minds with AI and CapEx, because there's this thought that if demand is unlimited, I can do whatever I want.
So, Julie, is there a side of the story you're more comfortable with? Maybe you want to buy into the constraints and maybe fade the moves where everyone's talking about investing like their lives depend on it.
Like, I think the thing is that the place where you really want to be thoughtful of is now that we're at this stage of the capacity investment where we're using debt, I think it's really critical to have a keen eye on valuations. It's exciting to see places where there's growth and expansion, and we've moved beyond the mega cap tech. But part of the reason why mega cap tech can rally with such strength is that fundamentally those names are defensive, even if you exclude their AI benefits. That's not the case for a lot of other players that are more fringe and adjacent. So that's the place where I think you see the most vulnerability. And you see that in the pullbacks that we've had recently. People really run away from those names because they know they're not as high quality.
Julie Bill with the latest. Julie, thank you. Julie Bill of Kane Anderson Rudnick, the latest on the equity market, looking ahead to tech earnings. Next week, Microsoft, Meta, and Alphabet after the close on October 29th. October 29th, a week tomorrow. Fed decision in the afternoon. After the close, big tech players report.
You know what I think is going to be more important? Big tech, by far. And ultimately, this entire market hinges on growth expectations that are, to use Julie Beal's word, unlimited, given the fact that that is what we've seen, and that's the promise that people are pricing in with the multiples.
The promise without real use case. We don't see it yet. And this is why it's so uncomfortable for everyone. She calls it AI pixie dust instead of a bubble. But isn't that what is really so uncomfortable? They're spending all this money. Where's actually the use case just yet?
We keep going back to the comments of the Alphabet CEO last summer, when he said the greater risk was underinvesting and not overinvesting. That really set the tone for their approach to this whole moment. Meta acting like, behaving like, investing like they're confronting existential risk. That's the psychology of the tech firms right now. That's why you're seeing them invest the way they are.
And honestly, I mean, I understand the idea of pixie dust, and I understand the idea of not necessarily seeing the profitability, but every CEO you ask, none of them think it's overstated. And they say that it's just the beginning and that they're starting to figure out exactly how they can percolate it through their staff. So it does seem like they also see the promise is unlimited, and they also are investing a lot of money. So we have to start asking the question, how long are you going to wait before seeing a use case while continuing to invest this kind of money? Is there sort of a tipping point at which you can't justify it
You know why people are nervous? Their behavior and their communication is a guarantee of a misallocation of resources. When some of the richest companies on the planet tell you that they believe the greater risk here is underinvesting, you should believe them. You should listen to them, and that's why people are nervous.
Well, and it is going to be something where people lose money. I mean, even the OpenAI CEO, Sam Altman, has come out and said, yeah, people are going to lose money big time, and people are going to make the wrong bets. But this is what always has to happen during a technological innovation. It's making people nervous, because why buy some sort of data center in the middle of a cornfield out somewhere in nowhere close to a big city if it's essentially there's going to be another DeepSeek moment that's going to bring the energy back close to a lot of these cities? Look, there are a lot of questions here. At the same time, people keep investing.
Next Wednesday, they'll mint money.
Exactly.
Which is what they typically do. Maybe things have changed, but that's ultimately the expectation for Wednesday's earnings reports. Equity futures on the S&P 500 just about unchanged, with an update on stories worldwide with your Bloomberg brief. Let's cross over to Lizzie Burden for more. Hey, Lizzie.
Hey, John. President Donald Trump and Australian Prime Minister Anthony Albanese have signed an agreement to boost production of critical rare earth minerals in Australia. The two governments will invest more than $1 billion over the next 6 months for initial projects, both pledging to protect their domestic markets from unfair trade practices. And a US appeals court is allowing, for now, President Donald Trump's plan to send National Guard troops to Portland to counter protests against his immigration crackdown. A divided court in San Francisco lifted the order blocking deployment of 200 troops. And billionaire John Katzimatidis is urging Republican mayoral nominee Curtis Sliwa to drop out of the race to consolidate support behind Governor Andrew Cuomo. This echoes the calls from billionaire investor Bill Ackman in an effort to challenge the frontrunner Zohran Mamdani. Katzimatidis, a longtime Republican and former mayoral candidate himself, said that the move is essential for avoiding a potentially damaging outcome for the city. And that should be my brief, John.
Sort of mental gymnastics right now that I'm trying to figure out. The politics of New York City. We've got to get the Republican to drop out to help the failed Democrat defeat the Democrat that won the primary.
Yes. That's correct, yes.
Because the existential risk the city faces.
Yes, correct. You put it perfectly.
The Republicans have got to clean this up.
The Republicans...
Can you just help me out with that bit? Because that's the bit of it I'm struggling with.
Because basically they view Sliwa's not going to win, so they're basically saying they think Cuomo
Shouldn't
is
the Democrats
better than
address this
Mamdani.
mess?
Okay,
Really up
all
to the
right,
Republicans.
all right.
Still waiting for Hakeem Jeffries, who
tweaking.
apparently yesterday said he will at some point talk about it and make an endorsement.
My point precisely.
Okay,
You know?
there's a huge split in the party, and this is
Obviously.
highlighting this, and I wonder at a certain point if there starts to be more consolidation around the center.
The Republicans are like, we prefer the Democrat, not the socialist.
Right, okay. Up next on the programme, the Morning Calls Plus. Alicia Reese of Wedbush ahead of earnings from Netflix later on today. That conversation just around the corner, live from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
We were able to lower our total tariff forecast for the year by about $500 million from where we started the year. And I think it's that proactive partnership in terms of really making sure that we can remain competitive and help to drive more investment into the U.S., which we've done. We think that there's actually an opportunity for us to do better in 2026 and start to work our way back up to those 8 to 10% targeted margins that we set for ourselves before the tariffs were put in place.
That was the General Motors CFO, Paul Jacobson, with us in the last hour. This hour, that stock up in a pre-market by 11%. A beat and a raise underlining the adaptability of corporate America. GM knocking it out of the park in many ways this morning.
Yeah, and highlighting how they're able to adapt and adjust to the changing policy landscape while also continuing to sell cars. It raises a question long-term, how much companies can use upper-income buyers to support their earnings, because it's the trucks and the more expensive cars that have bolstered things and allowed them to keep prices stable more broadly. And that, I think, is a key question. Are they benefiting from the K-shaped economy, and can that actually sustain things in a way for a longer period of time than people previously expected?
The stock is up by 11%. We'll have more on that stock in about 15 minutes' time. The broader market's doing okay, just about positive, following a big two-day run on the S&P 500, bouncing back from the credit scaries on Thursday. Equity futures this morning just about unchanged. That's the price action. Let's get to some morning calls. First up, JP Morgan raising its price target on Zions to 62, noting credit quality trends outside of Tricolor and First Brands are well contained. Your second call from Wells Fargo downgrading Cleveland Cliffs to underway, calling Monday's 22% rally excess exuberance. And finally, TD Cowen reiterating General Motors as a top pick after earnings, citing positive 2026 commentary. There's that name again. The stock is higher by more than 11%. Let's stick with earnings. Netflix reporting after the closing bell later on today. Geetha Raghunathan of Bloomberg Intelligence joins us now for more. Geetha, welcome to the program. What are you and the team focused on when they release their earnings later on this afternoon?
Yeah, thank you so much, John. So I think the big number that everybody is looking for, obviously, now that they no longer disclose subscriber metrics, is the revenue growth number. So, they've guided to about 17% revenue growth. Operating margin, of course, also upwards of 30%. They've guided to about 31% or so. The big thing I think that everybody is going to be looking for is, fourth quarter guidance. Again, we expect strong double-digit revenue growth. Consensus is at about 16%. And then whether they're going to raise their operating margin guide for the entire year, I think that's, again, something that we're looking at. Right now, they're at about 30% target for the full year, whether they take that up and then provide any forward guidance for 2026.
Geetha, can we talk about subs? I know they don't emphasize that anymore, but historically, this name would be the source of massive beats and misses. Have we smoothed that out over the last few quarters? Geetha, is this easier now to forecast?
I'm not sure whether it's easier, John, but I think definitely we've seen definitely a pattern of somewhat of smoothing. I wouldn't say it's a very smooth story, but I think what Netflix is really trying to get investors to focus on right now, instead of subscribers, is really engagement. And we saw a huge bump in engagement in the third quarter. Think of K-pop Demon Hunters. That was a monster hit for Netflix in the third quarter. By the metrics that we're tracking, it led to about, maybe about a 20% increase in engagement through the third quarter. And we expect that to be extremely strong through the fourth quarter as well. So that is really the new metric that they're trying to get everybody to focus on.
Geetha, thank you. Thanks for jumping on. Geetha Raghunathan there of Bloomberg Intelligence. Alicia Reese of Wedbush Securities has an outperform rating on Netflix and a target of 1,500, writing the following: as Netflix continues to enhance its ads business, its aim of doubling ads revenue this year is entirely achievable. Alicia joins us now for more. Alicia, welcome to the show. We talked to Geetha about it briefly. Can you just offer us your thoughts? What are you laser focused on later on this afternoon?
Yeah, I think Netflix is poised for to hit their guidance this quarter, but I do think the focus is primarily on the fourth quarter guidance and whether or not they give 2026 guidance. I think there's a lot of high expectations that they'll give 26 guidance, and I think they might give a couple metrics, but not overall guidance. The fourth quarter, though, is shaping up to be extremely strong from all the metrics that we have seen. The upfront season was really healthy for Netflix, and they have a lot working for them in terms of their partnerships, live events, and like Geetha said, that there's incredible engagement, and I think that crosses the ad tier as well as the premium tiers, and so they're positioned very well going into the fourth quarter and certainly throughout 2026 here.
We've been talking a lot about how frustrating it is for people, Alicia, to not know where their favorite programs are playing, whether it comes to sporting events or whether it comes to their favorite shows. And that's the reason why M&A has always been percolating in the distance. How much do you expect them to address M&A in 2026? We know that they kind of shunned it this year.
Yeah, I don't think Netflix is as keen on M&A generally as many others. I think Roku and Amazon, the other platforms, are doing a good job of, curating the content and working with the likes of, Roku and Amazon as a platform on just M&A spending, doing some good marketing, having the sports landing page on the Roku. I think it's really helpful. So those are good partners, and I think as Netflix continues to partner with Amazon ads, the Roku platform, and in the future, performance marketers, I think there's a lot more potential with that than pure M&A.
Are we reaching a breaking point when it comes to how much, Alicia, consumers are willing to pay right now, given the fact that prices have been going up significantly and there are so many different outlets?
I think, all the data that we have seen shows incredible resilience on this latest round of price increases, which says to us that, there's still a room. You have something for everyone on the Netflix tiers. You have premium tiers that's incredibly elastic. And then you have the ad tier, which is less so. But, it's reasonably priced. It's, $7. They increased it $1 and, there was no pushback from what we could see.
Alicia, do you think there's going to be any impact from Elon Musk earlier this month in October calling for his supporters on X to cancel their Netflix subscriptions?
There was probably some brief pushback, but our survey work that we did, which kind of coincided with that happening, indicated very little pushback. There's some churn, but interestingly, the amount of people who are planning to subscribe in the fourth quarter who had never been on the service before was higher than we've ever seen it. So I think people are planning to come on for the Christmas NFL games and for some other live content, some specialty content, and all the content that Netflix is bringing to the service to increase that engagement, and they're spending quite a bit on content. That should keep that engagement high and keep those people on the service.
Is basically all press good press? Individuals want to know what Elon Musk is talking about, why he's saying they should cancel their subscriptions?
That's a tough one. I think to some extent, yes. But the boycotts, look at Disney. That boycott, was really impactful, and that was quite damaging, I think. I don't know how long that will last for them, but it certainly did impact them. I think this is less important.
Alicia, are content decisions getting harder? Is that ultimately what we're witnessing here? The kind of content that you produce, you have to be a little bit more careful about the decisions you make and maybe not follow and chase the political winds of the moment.
Sure, to some extent, yes, but you also want something for everyone, and that's what Netflix's strategy is. They have content for everyone, and they have such a huge user base across the world that they have to have something for, people of all political persuasions, geographic locations, so they're trying to get content on there for everyone. That's, to the point that they're, adding podcast content, video games. They have something for everyone. Sports, it doesn't matter. So I think, if people don't like some content, they can avoid it.
Alicia Reese of Wedbush. Alicia, thank you. Appreciate it. Just need Landman. More Landman. That's Paramount, right? We get another season.
Yeah, we get another season of Landman.
Very cool.
And Sheridan is, I'm sure, working on his next hit to really placate.
I saw the commercials at the F1 race over the weekend.
I gotta say, I love that show. It was actually
It's
amazing.
fantastic,
It was an
right?
amazing first season. So I'm looking forward to
You want
what
some
he
more
does
good
next.
news?
Yes.
Cane sugar Coke will be sold in glass bottles, according to the Coca-Cola CFO.
How long have we been waiting
We
for
don't need
this?
microplastics.
There we go.
Oh, they're actually
Another
more
win for RFK, right?
Yeah, I mean, yeah, it actually is.
There are more microplastics in recycled glass than there is in plastic bottles. They've actually found that.
You're just trying to ruin this for us.
Yeah, I don't think that's true.
A glass bottle of chilled Coca-Cola with cane sugar.
I think it's great. I'm just
Fantastic thing, Bramo. Why are you a downer about everything?
I'm not a downer at all.
the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The opening bell 60 minutes away after closing yesterday, that close to all-time highs. Equity futures on the S&P 500 up by not even 0.1%. On the Nasdaq, just about unchanged. Earnings so far this morning, pretty good. Coca-Cola, General Motors, Zion's overnight. More still to come. With your morning movers, let's cross over to Yahira for more. Hey, Yahira.
Hi, John. Exactly. A strong showing in earnings. And among the winners is Halliburton. Shares are up nearly 5% in the pre-market after the oilfield services giant beat on revenue and blew past adjusted earnings estimates, even as oil prices remain under pressure amid global oversupply. So investors are rewarding the company's ability to hold up in this tough market. And we move on to Coca-Cola. Those shares are also rising 2.7% after it topped third quarter expectations, thanks in large part to higher prices amid steady demand. The company raised prices 6% in the last quarter, and yet shoppers continue to snap up its beverages. Coca-Cola Zero Sugar was a standout in the quarter, topping sales of Diet Coke. And yes, they are 2 different products, but I'm just waiting for that cane sugar Coke that's, as you said, is coming in glass bottles. And we end on GM shares. Those are stealing the spotlight this morning, up 11% now. It was a beat and a raise for the car maker after red-hot demand for its trucks and SUVs helped offset tariff pressures. And CEO Mary Barra giving credit to President Trump because those tariffs were not as bad as expected due to some discounts. CFO Paul Jacobson saying the same to you guys earlier. John?
Thank you very much, Yahira. Diet Coke's got a different flavor profile. You know?
Have you ever tasted Diet Coke?
Sure, of course, yeah.
Okay.
Once upon a time.
Okay.
I'm a Diet Coke
not a regular
fan
drinker.
Over a regular
I've never
Coke
met
fan.
a healthy person that is a regular drinker of Diet Coke. Have you?
How do you define healthy? I mean, honestly, yes, okay, sure. It's not a healthy thing to do, but everyone can have a treat.
2 biggest Coke drinkers I know, President of the United States and the former Treasury Secretary Janet Yellen.
How healthy are they? Don't
No
go there.
comment.
Don't go there. Let's stick with General Motors. The stock's surging after delivering a beat and a raise. Does she still smoke? I think she still smokes, right? Or she
Definitely likes Diet
Okay,
Coke.
back to GM. Bloomberg's Craig Trudell joined us now for more. The stock is higher by close to 11%. Craig, don't worry. We're avoiding all of that. This is a safe place for you. Let's talk about General Motors. Craig, just frame for us how impressive this beat and raise is, given what this company has faced down so far this year.
Yeah, I can vouch for GM being healthy. I think you know the trifecta here, as Evercore put it, was a beat, a raise, and also maybe some upside for the fourth quarter, and even you know, sort of an early taste of where GM's head is at for the outlook for 2026. I think there was a lot to like in these results, and you know, coming into these numbers, you know, reasons for pause, right? We've been very concerned about the degree of tariff disruption to car makers, and even the likes of GM, where, you know, as big as they are in the U.S., as much of a presence as they have, they also do a heck of a lot of importing from you know, Mexico and Canada and even South Korea. And so, you know, for them to be able to execute through all of this tumult is pretty impressive for the company, and the reason why we're seeing the shares move the way they are.
Craig, in a few days we get Ford. Did the bar just creep higher for Jim Farley and the team in a few days' time?
I think absolutely, and we've seen this, sort of long-standing, pattern of Mary Barra and GM sort of outperforming Ford from an execution standpoint, where Jim Farley will be the first to sort of cop to this idea of particularly on warranty expense and quality issues. We've seen that continue into this year, where Ford has had to delay new product introductions and really take it on the chin in terms of just how much it's spending on a regular basis with recalls and fixing up vehicles that have already been sold. That is something that we've not seen anywhere near to the degree out of GM. So much sort of smoother execution on GM's part through all of these ups and downs that is difficult for any automaker to be navigating at this juncture.
Craig, just before you go, in just a moment, we'll be talking about prices, looking ahead to CPI data in America that drops on Friday. Can you briefly describe pricing power and how that's evolved at these automakers and whether that changes going into the new year?
Yeah, we've talked, offline. Anne-Marie and I were just exchanging messages. It really is eye-popping to see average new vehicle transaction prices with a 5 on it, $50,000. Last month that was a new record for the U.S. We've absolutely seen pricing power, and yet we've seen reasons to be concerned about just how sort of long-standing or sort of sustainable that is when we see 84-month auto loans becoming the new 72-month auto loans. There is reason to sort of pause and consider just how long we can sort of keep this up, and as we monitor this industry closely of what some of the dynamics are under the hood that are allowing for sales to continue at a strong level for the likes of GM.
50K. Craig, thank you, sir. Craig Trudell. And when we talk about the banks and some of the credit issues, this is the industry that's been a source of some of those issues more recently.
Yeah, especially when you talk about the idea of a 7-year loan to buy the car. And what you're seeing is the pace of the value of the car is actually coming in lower than the total outstanding loan that people owe. It creates a real issue in terms of just what kinds of losses there could be on the financing of this, and what the willingness really is to continue to extend it.
Let's talk about prices. $50,000 for a car. Unreal. The data desert getting a drip of water this week with the September CPI report set to be released on Friday. Blurino Urucci of T. Rowe Price writing the following: the availability of data has been curtailed because of the shutdown, but what we have seen so far from the private sector suggests that the economy is still holding up quite well. Blurina joins us now for more. Let's start with that data on Friday. There are several sources for inflation: goods, services, energy, and labor. What's the dominant source at the moment?
I think there is an interaction here of various components of core inflation. So we've seen deflation and disinflation in goods, in the goods sector for quite some time, and that's reversed this year. I think that's a combination of a number of factors, including tariffs. And it's true that the pass-through of tariffs to consumer prices has been slow, but we've seen signs of it already happening this year. But I also think that we are seeing a stickiness in services inflation that hasn't been here before. We're looking at 3% or more services inflation. It has not gone back to pre-pandemic levels yet. And that, I think, is reflecting the fact that you have a labor market that maybe has cooled a bit from the peak of the tightness back in 2022, but it's not really weak, and we're talking about consumer demand being there, and sort of consumers finding different ways to fund their spending. Perhaps initially post-pandemic, it was being funded by excess savings and aggregate income being very strong, and now it's shifting a bit more to leverage and financing of that consumption. So there is a resilience here on the part of demand that is allowing companies to continue increasing prices at a pace that so far is not consistent with the Fed's 2% inflation target, I'm afraid.
How much has the inflation story really been muddied by oil prices that have come down as much as they have?
I think that's definitely been very helpful for two reasons. We're seeing headline inflation running a little bit below core inflation every now and then. We also know that consumers, they buy oil, they buy gasoline on a daily basis. They're much more exposed to it, and it can affect inflation expectations. So I think this has been helpful for policymakers. But if you're looking at where inflation is going to settle over the medium to long run, I think core inflation is really what matters. And I think the fact that we've been now for over 4 years above the inflation target, and we've been stuck at 3% for the last 12 months, I think that's problematic, even with the help of energy. One other area that I think we're not paying enough attention to is food inflation, because again, this is something that consumers buy more frequently, and it can affect inflation expectations, even though it's not part of the core index. If I'm correct in my prediction, I think in 2026 we will see a pickup in food inflation, both food services as well as food at home, and that's going to be a mixture of the fact that we are importing food ingredients and we're going to pay more tariffs on them, but also the tightness in the labor market and the immigration enforcement that seems to be one of the key pillars of this administration's policy. I think that's going to lead to tightness both in farming, in the farming industry, but also in retail and hospitality. And that's going to reflect in higher prices next year.
Gloria, what's the role of the Fed in terms of curtailing inflation right now? And I ask this because a lot of these inflationary forces are exogenous and don't necessarily come from wage increases and the typical wage price spiral. And there's this idea that some of this will just work itself off on one-time effects. And the Fed wants to cater to the fact that there is weakness in certain parts of the labor market. Do you think that if the Fed cuts rates later this month, in December, that actually will cause a reacceleration of inflation higher?
I think the risk is there. The ingredients are there for a reflation or inflation trade in 2026, and I'll tell you why. I think, of course, we've seen that deceleration in employment growth, and that's something that is concerning the Fed, and it has a dual mandate, and it needs to pay attention to the employment side of the mandate. But when you look at the unemployment rate, that's still fairly low. Wage inflation has slowed, but it has not come down all the way to where it needs to be to hit the 2% inflation target over the medium run. Maybe there will be productivity gains next year that will help the Fed on the wage front, but we're still not there at target. And then I honestly think it's problematic that inflation has been stuck at 3% for the last year, for the last 12 months. And we also have seen since spring a real easing in financial conditions. We know that that works through the economy with a bit of a lag. So next year, we're going to have the boost to demand from easing financial conditions and probably some positive fiscal impulse. I know that over the forecast horizon for the government, the deficits will be neutral to growth, but over the next 12 months, I think they will be positive to growth. So you have, in my view, a rebound in activity next year, helped by financial conditions easing and some positive fiscal impulse. You have an unemployment rate that is still fairly low. U.S. consumers don't have excess savings anymore, but they're very good at leveraging. And we just spoke about that, and taking auto loans and extending the window of borrowing compared to previous business cycles. So you can do all sorts of things to support demand next year. And you have a Fed that is easing or cutting interest rates when all those factors are pointing to demand picking up in 2026. I think that sets us up for an environment where inflation certainly won't go back to target, but it might even accelerate.
You wonder where that leaves the bond market, which is 90 basis points lower on a 10-year maturity compared to where it was in the middle of January. Blorina, thank you, as always. Blorina Urici there of T. Rowe Price, looking for higher inflation in 2026. The Federal Reserve's cutting interest rates into that.
And at the same time, what we heard from Earl Davis earlier is that even if the Fed cuts aggressively, it's going to cause the long end to rally. And when we asked why, it doesn't make any sense if you expect inflation's going to pick up. And he said, well, the market can only focus on one thing at a time. So that's a 2026 story. And that seems to be what a lot of people are banking on.
Chairman Powell set himself up to ignore it. Is this market going to ignore it too? Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. A U.S. appeals court is allowing, for now, President Donald Trump's plan to send National Guard troops to Portland to counter protests against his immigration crackdown. A divided court in San Francisco lifted the order, blocking deployment of 200 troops. Elsewhere, Unilever has delayed its demerger from Magnum Ice Cream due to the U.S. government shutdown. The company shared the SEC is currently unable to approve its registration to list on the New York Stock Exchange. The spun-off unit was initially scheduled to debut in the Amsterdam trade on November the 10th, with planned secondary listings in New York and London. And police are still looking for those precious jewellery stolen from the Louvre, and the thieves behind the heist as well. The robbers got away with a haul on Sunday that included a tiara, an emerald necklace, earrings and a sapphire necklace. They dropped a crown and a yellow vest with DNA traces, which gives authorities hope for recovery. And that's your Bloomberg Brief, John.
As you do, just casually dropping a crown.
Okay, actually, they damaged this crown from the 1800s, and people are saying amateurs. That was their response, amateurs. Come on, get with Ocean's 11.
Thank you. Great work, Lizzie, as always. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with the former Barclays CEO, Bob Diamond, as he remains bullish on regional banking. That conversation up next.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We kind of all recognize that the part of the reason why we have had such a strong economy is that we have a consumer who is so willing to go out there and spend money. And that has really propped up a lot of this economy in a really major way. if we lose that, as we're starting to see some degradation in the consumer strength at the low income, it really does ripple through this economy when so much of it is driven off the health of what the retail consumer is doing.
That was Julie Beale of Kane Anderson Rudnick talking about the adaptability of corporate America and a whole lot more. As we count you down to the opening bell, lots of earnings in focus. Later on today, Netflix results after the market close. You'll also hear from Western Alliance 2. As we make our way to Wednesday, Tesla and IBM results. On Thursday, numbers from Intel, Ford, and American Airlines. On Friday, CPI data, the main event on the data front, because we don't get much of it these days, and UMich consumer sentiment going into the weekend. Let's stick with earnings. Zion's reporting a beat on earnings with a net income of $222 million, despite a $50 million loss from an alleged fraud. The former Barclays CEO, Bob Diamond, writes the following: the dislocation in regional banks stems from a few single bank-specific issues, but doesn't change our view on the opportunity. We remain very bullish on regional bank consolidation. Bob joins us now for more. Bob, good morning.
Good morning, John.
It's good to see you, sir. Look, a few years ago, we had some problems managing interest rate risk. Can we avoid it with credit risk in this segment now?
I think broadly in regional banks, as you just quoted me, we're very bullish. I think, both the interest rate dislocation that started with SVB, or was recognized with SVB, and we're really a function of rates going from 0 to 5.5%, is in the market. I think the regional bank area has some really strong banks and some that are not as well managed. So, of course, some have more exposure, for example, to commercial real estate than others have. And if the commercial real estate is in Iowa, it might be different than if it's in LA. So we look at all of those things. But as a sector, this is a really, really strong sector, the banks. There's 4,500. It has the support of Secretary of the Treasury Bessent, that consolidation is necessary, makes the banks more competitive. It increases the ROEs. It makes them just better investments. And I think 4,500 banks in the United States of America, it's the wrong number. And so we see this going over the next 2 to 3 years to closer to 1,000 or 1,500. And we think also, John, I think this is really important. The thesis here is one of consolidation and taking costs out. So many of these smaller community banks are just too small to succeed. They're very good banks, but to get a positive ROE with technology costs, with regulatory relation costs, virtually all of these banks have the same technology platform. So you eliminate one technology platform. Many of them, or all of them, have regulatory relations staffs. You can eliminate one of those. You don't really need two. So if you add the cost synergies, which we've proven in back testing really come out and are real, and you add the increase in ROE, because when a bank buys another bank, there's purchasing accounting, and you have to market fully through the P&L, the bank that you're acquiring. You're putting capital in. Automatically, the ROE goes up because the asset prices are different. So when we look at the cost savings, we look at the increase in ROE, we look at 4,500 banks, we look at too many or too small to succeed. This is probably the best investment we've seen where the downside is really, really protected and there's good upside.
It's happening. Your forecast is happening. Yeah. We've seen it with Fifth Third and Comerica. You're suggesting there's more to come. You talked about how region-specific some of these issues can be. Is there a common thread in the consolidation so far?
I think what we have seen is where the synergy around deposits and loans, and a similarity in terms of region where you're really adding clients and customers and taking out costs. Those are the best opportunities, but not in terms of where in the U.S. It's more that in-state and close to state is the preference.
There's been this fear that some of the biggest banks have really taken the wealthiest and the highest credit ratings in terms of customer base, and that mid-tier banks are stuck with everybody else, and that's where the credit problems have really come. Has there been anything that you've seen that proves that to be true?
No. We've seen idiosyncratic issues. We've seen certain banks that, may have a specific name issue. But the truth is that, 40 to 50% of lending to small businesses in the U.S. come from the regional and community banks. They don't come from the big banks. Many of the big four, many of the larger regionals just don't have the cost structure or the attention to service smaller businesses. So we think the credit quality on balance in lending is very, very good across regional and community banks.
If there's no real weakness that they're seeing with respect to consumers or smaller businesses, does it make sense and does it really help the case to have the Fed cutting rates at the same time that inflation is still a concern?
I think the cutting rates, I mean, if you think of the go-forward environment, so let's say a regional bank buys a community bank, you get the synergies, you have an ROE, and now you're focused on additional acquisitions and what's the go-forward. The go-forward is terrific. I mean, the Treasury, the Fed, the SEC are encouraging consolidation. They're talking about simplifying capital rules. They're talking about endorsing these mergers and this consolidation, and then you have rates at 4 to 4.25%, likely coming down this month, potentially again in December. You have 100 basis points between 2s and 10s. You can't make a better environment for banks going forward than this. So if you strengthen through consolidation, and then you look at the go forward, obviously, assuming that the economy stays stable and strong, it's a great environment for banks.
But you're forecasting at least that 4,500 number to be cut in half in the next 3 years. Is that right?
More than that.
More than that.
Yeah.
How is that possible?
I think one of the situations we faced prior to this administration is there wasn't quite the same support for approving mergers. Was it Elizabeth Warren and Bernie Sanders a little bit on the edge? Like, I'm very, very surprised, Anne Marie, that Elizabeth Warren would come out and say we shouldn't approve consolidation in banks. And we're talking about putting additional capital in banks, making them stronger, making them better competitors with JP Morgan and Citi, and yet she's against it. And that's the politics of being a liberal and saying no, no, no to anything that looks like it's positive for business and positive for profits. This administration has been very clear. It's going to make the banks stronger. It's going to make them better competitors to the big banks. It's going to provide more lending. In a way, it's getting more, it's kind of monetary easing, right? It's getting more money into the market for businesses that need to raise money, small businesses to expand what they do.
Bob, we've got 30 seconds left with you, which is not enough, I know.
Oh, come on, give me more.
The mayoral race in New York City.
Yes.
The beating heart of capitalism and the socialists ahead. What's your brief take on what's happening in this city?
You know, I think the city is at the strongest it's been since pre-COVID. You know, I live in Midtown. We have our office in Midtown. I walk to work in the morning for 11 blocks, and I have never seen so many people on the streets every morning as we've seen in the last couple of months. The city was really hit by COVID. It was really, really tough. I think we all kind of, you know, struggled through, not quite able to admit this is really bad. And it's really good. The city's back, new restaurants, new clubs, people excited, down in the village. My son and his family who live in London are moving to Brooklyn. They're really excited. I think the city has a lot of buzz.
You managed to answer that question without answering that question.
Don't you love the way I avoided that?
He's running. Diplomat.
Bob Diamond, everyone.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Little change this morning, just 0.3% away from all-time highs. 30 minutes ago into the start of your cash equity trade, I'm Danny Berger. Matt Miller is off today. Bloomberg Open Interest starts right now. Coming up on the show, earnings season kicks into high gear. Corporate America provides an upbeat picture in the absence of wider economic data. Meanwhile, investors weigh signs of easing trade tensions as President Trump predicts a fair deal with China. And CoreWeave tells Bloomberg it won't raise its bid for Core Scientific despite opposition from major shareholders. The overall stock market might be flat, but we had some earnings shaking things up some morning. Some of the stocks we are watching, General Electric up more than 2.5%, raising its full-year outlook for a second consecutive quarter due to strong air travel demand. Coca-Cola, those are up 2.6%. Shares and sales topped estimates, and a sign that consumers are buying drinks at higher prices. And apparently Mexican Coca-Cola. GM, meanwhile, raised its full-year outlook on better-than-expected pickup truck sales and tariff relief. Those shares up a whopping 10.8%. General Motors CFO Paul Jacobson spoke on the company's strong quarter.
We were able to lower our total tariff forecast for the year by about $500 million from where we started the year. And I think it's that proactive partnership in terms of really making sure that we can remain competitive and help to drive more investment into the U.S., which we've done. We think that there's actually an opportunity for us to do better in 2026 and start to work our way back up to those 8 to 10% targeted margins that we set for ourselves before the tariffs were put in place.
For more on GM, we are joined by Bloomberg's Global Autos editor, Craig Trudell. Craig, not only were the results strong, the big and expensive trucks and SUVs did well, and they're continuing to raise prices. How big of a surprise is it that the pricey stuff is doing so well at GM?
Yeah, I mean, I guess it tracks with what we're seeing from the industry. We talked this morning about the idea that the average transaction price for a new vehicle in the U.S. just hit a record last month of more than $50,000. So we're seeing this industry sort of, continue to be able to take pricing. I think there are some questions about the sort of sustainability of that. Also, maybe some sense that may have been inflated a little bit by the fact that electric vehicles are still more expensive than the rest of the cars that you can get on the U.S. market. And we did see a big boost in EV sales last month and last quarter from all of the consumers that were looking to take advantage of tax credits before they went away. But all that is to say, GM is absolutely managing to sort of ride that tide and take advantage of these dynamics, and is doing so with brands like Cadillac and GMC that are really important to them, not only doing well on volume but also on value.
it is also a sector, a company that is so exposed to policy, from the tax credits, which you were talking about, to tariffs. And in this earnings, the CEO, Mary Barra, thanked Donald Trump for extending a 2030 tariff discount on some imports. Craig, is this a GM that is now in the White House's favor?
I think Mary Barra's been very strategic about, taking a sort of line with this administration of trying to work with, as opposed to being critical in terms of, relative to even Ford, where you've heard Jim Farley talk about, a lot of costs and a lot of chaos. I think in his defense, we've seen both of those things in spades, and yet Mary Barra is working with the administration. I think while you heard Paul Jacobson, the CFO, talk about reducing their estimate for tariff exposure this year, they're still estimating up to $4.5 billion. So we are seeing manufacturers really take it on the chin with tariff costs. I think we also are likely seeing some incremental sales that the likes of GM are able to take advantage of, on the basis that they do have more U.S. production capacity than some of their competitors who are hit by these tariffs even harder.
Hey, Craig, thank you so much for that update on GM. Shares up more than 11% this morning. Bloomberg's Craig Trudell. Some other earnings to get through this morning. GE, they raised their full-year outlook. Shares up 2.4%. It's the second straight quarter that they've done that, citing strong air travel demand. Bloomberg Markets correspondent Nora Melinda joins us now. Nora, it echoes with what we heard from the other airlines that we've heard from. There is a demand to travel right now, and the likes of GE are benefiting.
Absolutely. You're really seeing a lot of green on the screen for GE Aerospace. They've had a terrific year. I mean, up more than 80% so far year to date. But what's really pushing them through this earnings season, of course, is what you called out, air travel demand, also rising demand for maintenance and new engines. This is really buoying this company forward, and you're seeing a lot of people pouring a lot of money into aerospace and defense. If you take a look at the S15 Aero Index, that is composed by defense and aerospace companies, and you do see aerospace companies as pretty much pushing that index higher so far this year.
How much of the success was due to retail travel demand versus defense? Because we also heard from some of the defense companies reporting earnings today.
We did hear from some of the defense companies. We heard from Lockheed Martin, which of course we know they're the largest defense operator here in the United States. We also heard from Northrop Grumman. Those are some earnings that we got through today. And this is also just seeing a lot of emphasis right now on defense here. We're of course getting the Pentagon, which is putting a lot of pressure on a lot of these companies to produce more missiles, especially as we think about the tensions that are rising between the U.S. and China. That's definitely been a lot of discussion between the Pentagon putting a lot of pressure on these companies, and you're seeing a lot of them ramping up their output right now.
Yeah, Northrop Grumman falling 2%, even though that they did raise their earnings forecast. Nora, thank you so much. Always a pleasure to see you. Nora Melinda of the Bloomberg Markets team here on TV. Now, elsewhere, shares of Coca-Cola are popping pre-market. Is that a soda pun? I'm not sure. The company's sales growth beat estimates despite higher prices. Shares up about 2 3/4%. Joining us now is Bloomberg Managing Editor for Global Business, Shelley Banjo. Shelley, be it travel, be it trucks, be it Coca-Cola, the consumer is buying things.
Today was a good day for earnings. I mean, I will cautious all of this with that we're very beginning of the business earnings, season, and there could be definitely a lot of negative surprises coming through. But today is the day that says, you know what? Everything seems to be humming around just fine.
On the Coca-Cola, the company executive said something along the lines of, everyone wants to be healthy right now, and that's why we're doing so well. Healthy and Coca-Cola usually aren't the two things that I'd put together necessarily.
Yeah, everyone wants to be healthier right now. So what does that mean? What does healthy even mean these days is a good question. But they are seeing good sales of, their water, their milk, their low sugar, zero sugar, all a sort of whole assortment of things that they are selling. And also they are raising prices as well.
And I guess the cane sugar in the Coca-Cola, the so-called Mexican Coke, came from President Trump himself, right? Last earnings, he made this big splashy announcement that they're switching to cane sugar.
Yeah, I mean, this had been something that had been in the works, and obviously you mentioned the Mexico Coke. It's something that they have been selling, but yes, they definitely bowed to Trump in that sense and said, yes, of course, President Trump, we will give you the Coke that you want.
Yeah, whether it be Mary Barra or Coca-Cola, their call out to the president. We are in this moment, though, and you've been writing about this, Shelley, that we don't have economic data right now. How much can we learn from that gap in the economic data via the strength we're seeing from at least the early days of earnings?
Yeah, so a lot of earnings can be backward-looking, but the difference between this earnings, results are they're saying, okay, we're actually going to raise our outlooks because we're pretty positive and confident, for the next half of the year. And so what's been interesting to me is the last 10 months we've been hearing words like uncertainty and consumer weakness and, oh my gosh, what's going on? We don't know, tariff confusion, whatnot. In at least today's slew of earnings, there were words like confidence, optimism, upbeat. These are, sort of adjectives that, matter to investors when they're parsing every single little bit and don't really have the full picture of economic data.
Flying blind. At least we get CPI at the end of the week. We'll see whether that even tells us anything. Shelley, thank you so much for joining. That is Shelley Banjo. All right, in those slew of earnings, let's get a quick check on futures because it is the second busiest week of the earnings season, I believe. And we are a little changed. We are 0.02% lower on the S&P 500 after climbing higher yesterday, closing just 0.3% away from all-time highs. Yesterday, we were helped by the president saying that we might get closer to a China deal and optimism that maybe we are closer to the end of a shutdown. We are officially in the second longest shutdown in history, but it is small caps that are getting hit this morning, down 0.2%. Look at some of the other movers on our radar because though that looks calm, gold has been increasingly erratic. It is down 3.4%. It is set for the biggest drop in 4 years. Just yesterday, it was up nearly 3%. It underscores the volatility that is not present in this bond and equity market. It is present in this gold and silver market, precious metals, some extreme volatility. And following on from that, precious metals and mining stocks are falling with that retreat from record highs due to maybe easing global trade tensions. Shares down some 6% for Newmont Mining and Barrick. Anglo Gold falls 8.3%. Meanwhile, Warner Brothers Discovery, they have started a review of strategic alternatives to maximize shareholder value in light of unsolicited interest it has received from multiple parties for both the entire company and Warner Brothers Discovery. Those shares up 8.3%. Meanwhile, Zyn maker Philip Morris, they also reported earnings. Their net revenue beat Wall Street expectations. They narrowed its adjusted EPS forecast for the full year, but were expectations high. Shares fall 1.6%. Meanwhile, Blackstone and TPG will buy medical device maker Hologic, in a deal with an enterprise value worth $18 billion. Those shares up 4%. Coming up, Zion's earnings eases concerns about regional bank credit. We're going to discuss with Herman Chan of Bloomberg Intelligence. That's coming up next on the show. You are watching Bloomberg TV.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Do you think the dollar will remain the only reserve currency in the world, and are you as comfortable with the dollar as you used to be?
The dollar has been, as you say, a reserve currency for about 80 years. Actually, if you wanted to go further back, you could say it's almost after World War I, when the US had lent money to Europe and the UK for ammunition and so on, and then they had to get paid back in dollars, and that's when the strength of the dollar really began. So it's 100 years, 80 years, 100 years. Of dollar strength, so much so that important commodities, gold, oil, are denominated in dollars. Dollars are part of the payment system. When countries talk to each other, they represent their GDP and various figures in dollars. I think undoing that will take a long, long time. And, 3% in foreign exchange terms is not that much.
Okay, So you think the dollar will stay as the reserve currency of the
Absolutely.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Let's look at some of our high-interest stories, what's making headlines around the world. The U.S. Treasury has reached an economic stabilization agreement with Argentina's central bank. Treasury Secretary Scott Bessent posted this on X. He described the deal as a bridge to a better economic future, aimed at helping Argentina restore stability and embrace market reforms. Bessent stressed the program is designed to support economic freedom, not serve as a bailout. OpenAI has hired over 100 former investment bankers for a secretive project called Mercury, training its AI to build financial models that could replace Wall Street's junior analysts. The ex-staffers from Goldman Sachs, JP Morgan, and Morgan Stanley are paid $150 an hour to teach the system how to handle IPOs, restructuring, and other deal work. The move also shows Sam Altman's push to make OpenAI's tech indispensable to industries like finance, even as the world's most valuable startup has yet to turn a profit. Sorry, junior bankers. Elsewhere in banking, Goldman Sachs CEO David Solomon said recent regional bank losses tied to alleged fraud look isolated, not systematic, nonetheless are still a wake-up call on underwriting. He pointed at failures at Tricolor Holdings and First Brands and losses at Zions and Western Alliance, urging lenders to revisit risk controls as the credit cycle turns for the first time in a very, very long time. Now, speaking of those banks, Zion's topped estimates despite a $50 million loss from an alleged fraud, helping reassure investors who feared the credit markets might expose deeper pain. Bloomberg Intelligence senior analyst Herman Chan says that the bank showed solid credit quality despite the charge-off, and he joins us now. So, Herman, is this nothing to see here? We can move on.
Yes, I think Zions did reassure the market that there was no other cracks within credit quality, and really, they mentioned that only 4 basis points of charge-offs outside of that $50 million that you mentioned earlier. So really good showing all around.
How much is it the all clear, though? We were looking at the pre-market share price. It was rallying first, and now it's given back some of that. It has yet to reach the level that it was before it announced that it had this exposure to an alleged fraud. Are there still concerns, at least for a wider investor base, that maybe there's a reason not to fully price things back to where they were?
Yeah, I think investors are still sort of trying to suss out the management team's comments from the call yesterday in terms of what the lessons learned and really what could they have done to prevent an issue that occurred. So really, we'd like to hear more from the management teams in terms of their due diligence, what their outside party is looking at in terms of findings, and I think there are additional questions that need to be resolved.
Well, we might get some answers, maybe, from Western Alliance earnings today. What are you looking out for from them?
That's right. So Western Alliance has 2 problematic issues: the First Brands indirect exposure, and also the same issue with the borrower with Zions. So I'm sure the management team will address those in their lending to non-bank financial institutions, but we do expect credit quality to be pretty solid all across the board for them as well.
Still what you continue to hear, and just talking about David Solomon saying this, that this is idiosyncratic, it's not a systematic issue, but then goes on to say, this is what happens when the credit cycle turns. Is this a credit cycle that is turning right now? And if it is, what does it mean for some of these regional lenders?
I think we're seeing a slow turn. I'm not sure the dial is ratcheting higher. I would say that the earnings quality and credit quality for the regional banks that have reported thus far in 3Q earnings has been pretty solid across the board. We're seeing declining non-performers, criticized loans improving. So these are early warning signs that aren't really showing the cracks that the market was sort of worrying about last week.
Well, you feel the worry. The market feels primed for any wobble to sell off, although we are coming back somewhat, not for Zions this morning, though. Herman, thank you so much for joining. Always a pleasure to have you on. Herman Chan of Bloomberg Intelligence. A quick check on futures ahead of the opening bell, under 15 minutes away. Little change when it comes to the S&P and NASDAQ after gains yesterday on optimism of reaching a deal with China and a government shutdown ending. Earnings have been the topic du jour, not helping again to lift the overall benchmark. Russell 2000 futures, though, those are down 1/3% this morning, trading at 2,503. Coming up, the AI theme has supported 80% of the earnings and stock price returns since 2022. That's according to North Star's Nimrit Kang. She's going to be joining me next on her outlook for these markets as we sit here just under all-time highs. You're watching Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Goldman Sachs says, quote, everything is weird when it comes to asset class movements. I believe that is the technical term, weird. Bobby Mavali says that historical correlations between bonds, equities, and gold are, quote, thrown out the window. He points to indexes, single stocks, and other assets like gold at record highs, subdued volatility, continued retail buying, and non-stop AI spending. Joining us on this everything is weird market is North Star Asset Management Chief Investment Officer Nimrit Kang. Nimrit, if we want to throw in another strange aspect of this market, it is gold. Charting new highs, up more than 2% yesterday, and this morning down more than 3% for its biggest drop in 4 years. This is supposed to be a staid, boring protection asset class. What does it mean to have so much volatility imbued into it?
We couldn't agree more. It is indeed a very weird market. You know, things that you historically could rely on, you can no longer rely on. I mean, whoever would have thought that the kind of volatility we're seeing in developed market currencies versus the emerging market currencies are doing relatively okay. And that kind of feeds into the whole theme around gold as well. You know, Danny, we've heard 3 big arguments as to why we're seeing the volatility in gold, or why gold has actually been the best performing asset class year to date. I mean, it's related to investors trying to hedge their dollar exposure. It's related to collateral for digital assets and cryptocurrencies. You know, there's a number of different reasons, and also because there's an increasing retail participation in the market, and gold might be seen as one of those meme areas areas for retails to participate in? We don't really know. But what we do know is if you look back 30, 40 years, gold has same kind of returns as equities, but twice the volatility. And that's what we're seeing come true today as well. And, you know, what we would expect going forward as well.
That volatility is real. And maybe that is a historical correlation that's holding up because it's an equity market that, yes, you've had some wobbles around trade, but for the most part, it has this melt-up quality to it that it just feels inching towards new highs or slightly above them. Nimrat, are you surprised that equity market volatility has been relatively calm, that some of the issues in the gold market, for example, this morning aren't seeping over to wider sentiment shifts?
Danny, actually, one of the data I saw just yesterday on Bloomberg said that volatility, equity market volatility is actually at its highest level outside of recession years. So we are seeing the volatility. I think when we think about volatility, we think up and down. The problem is we've only seen volatility going up, right? A lot of upward movement. But I think, you know, what is surprising is the kind of euphoria we're seeing in the market. In some ways, it makes sense because you're saying, okay, you've had this huge boom from AI contribution coming through, and now it's going to trickle down to the other sectors of the economy. I mean, you look at GDP estimates for Q3, 3.9%, inflation 3%. And this is an environment that we're looking to cut interest rates. So talk about adding fuel to the fire here. And we've got deregulation. All those things are bringing out what we would call animal spirits.
Can we talk about maybe some of the risks ahead, at least those that we know about? We have corporate earnings. The season is continuing to kick up into high gear. We're going to get a CPI report at the end of this month, an FOMC meeting, at the end of this week, an FOMC meeting on the 29th, and then we have the Trump-Xi summit at the end of the month. Nimrat, where is the event risk for this market?
The event risk, honestly, could be anything. It could be a tweet, right? Like we saw on October 9th, getting hostile with the China and the rare earths spat that we saw. So it could be anywhere. And you can see this how skittish the market is. Just that tweet and that back and forth on October 9th triggered a 3% sell-off in the S&P and about 4.5%, 5% in the AI names. So you see how skittish the market is, and it could be anywhere. And actually, you see institutional investors looking to take profits at the first sign of there's any weakness. Another thing will be some of these earnings that we see come through a lot of the AI bellwether stocks in the next few weeks, and what that means, and if they can continue to give confidence on the momentum and investment into AI.
Only about a minute here, Nimrat, and we'll get more into earnings after the next break. But considering we're back above where we were those levels after the Trump tweet, is this a market that you want to buy those dips, especially those policy-induced ones?
Danny, this looks like a very dangerous environment to us, because you are seeing this phenomena whereby the dip is your default way to play this market. But we're very cautious. We're very, we think it's a very dangerous environment because you are continuing to seeing that concentration. I mean, just on the earnings too, right? You see this big bifurcation between the AI names and the rest of the companies. So until we can see that momentum, we wouldn't be buying the dip here.
Yeah, and there you see, since the tweet, we are now unchanged on this equity market. Nimrat, much more to discuss. Stay with us, Nimrat Kong there, and a quick check on futures as we are little changed, just moments away from your opening bell. You're watching Bloomberg TV.
NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency. And also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the petroleum fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
You are just moments away from the start of your cash equity trade. You are watching Bloomberg Open Interest. I'm Danny Berger. It's a market that is flat to down for the futures trade. Actually flat to up, I guess, for the S&P 500. But not a lot of things to move on, except some pretty strong earnings, I should say. But that's not moving the dial. After we finished yesterday, just 0.3% away from all-time highs. The Russell 2000 Futures Index is weaker this morning, down about 1/3%. Even so, we are looking at extreme volatility in gold. How is that shaping things up? Over here at the New York Stock Exchange, we got some beautiful outfits ringing the bell. RHP, they are a REIT and they own the Grand Ole Opry down in Nashville, hence this southern-looking majesty that we are seeing out of them. Dolly Parton, the likes of those have played out there. Truly a historic venue. Looks like they're celebrating 100 years of it. In a very different tone. Cybersecurity, Okta, they're ringing the opening bell this morning. They were on this very program yesterday. Sadly, I was not here, but the chairman talking about AI threats to the world. So if you want to be able to not sleep tonight, I would recommend going back and watching our interview with them. Even so, markets are open, little change, and there are some stocks that we are keeping an eye on at the open this morning. General Electric, those shares up 2%, a full-year outlook for a second consecutive quarter that was raised. They see strong air travel demand. Larry Culp's bets on this company really paying off. General Motors, those shares up 8.8%. They raised their full-year outlook. They had a better-than-expected pickup truck sales. And tariff relief, Mary Barra in the earnings writing a letter to President Trump saying, thank you for allowing us the relief of tariffs until 2030. Finally, Warner Brothers Discovery, those shares are up 8%, climbing. They announced a strategic review of their assets, and it follows offers from multiple parties, including that one flowing around from Skydance. So again, those shares are outperforming this morning. Still with us, Nimrat Kang, Chief Investment Officer at North Star Asset Management. And Nimrat, before the break, you were just talking about the fragility of this market and how it's a dangerous time. Even so, we had earnings from Coca-Cola, from GE, from GM. GM, for its part, everyone's buying those big, expensive trucks and SUVs. Is the consumer still acting as an underpinning, as a floor for this equity market?
The consumer has been extremely resilient. And the earnings today from General Motors are very heartening because these are the kinds of companies that have been really crushed with the tariff uncertainty, the trade wars, the weakening consumers. So those are very good data points. At the same time, Danny, it is too early. I mean, it's too early in the earnings season. We really got to hear more from the retailers. One of the themes that we've heard over and over again is the down trading, how the lower end consumer, the younger consumer is barely making it. I mean, just even look at the auto delinquencies reaching almost, for the subprime, reaching almost 7%. Student loan delinquencies, almost 11, 12%. So we would say it's a tale of two types of consumers. The wealthier consumers that have the jobs not impacted by the AI, phenomena, they seem to be spending, holding up the economy. They're also benefiting from the wealth impact from the stock market. And then there's the rest of the consumers that are just barely struggling to get by.
It's been the case for some time now, and it exacerbated by the outcome of COVID and continuing, feels like, to be exacerbated to the K-shaped economy that's been talked about and written about ad nauseum. Nimrod, is there a point where obviously it is horrible to have this divergence, especially for those that can't afford or are struggling every day, but at what point does that impact headline economic concerns? At what point does it lead to wider trends where maybe some of the middle and upper income folks as well start to feel the pain and it shows up in markets?
Yeah, so two things have to happen, right? Either the lower income consumer has to start seeing the trickle down effect from all the spending, from the wealth effect, from the AI spending investments that we're seeing, or we see some deceleration actually come through for the higher end consumer. It's actually the same case we're seeing even for the companies. Large cap continues to do well, whereas small cap continues to struggle. Large banks are doing really well, trading, investment banking activity. Smaller regional banks, not so great, dependent on loan growth, and loan growth still remains very tepid, 1 to 2%. So this bifurcation is at so many different levels, and one of those two things have to happen. They haven't happened. We've been talking about it, so maybe they don't have to happen, and it can continue to go on into perpetuity. But if you look at historical data, it's the numbers game. At what point do we start to see the same cohort of consumers, the same cohort of companies just keeping the rest of the economy afloat?
Putting all this together, Nimrod, you are quite cautious. I think that's fair to say. At a time when you see, at least from the sell side, they've been raising their year-end estimates day after day. How do you express that cautiousness? Because it could be quite painful to take a step back or not to fully participate in some of the FOMO AI chasing that's happening in this market.
It is absolutely painful. You're absolutely right. One of the things that we've been talking a lot about is diversification. Diversification outside of just the same theme of stocks, same types of companies, large companies, diversification. And diversification has not really worked. That's actually the fact. But I think what you have to do is, yes, in an uptrending market, in a strong momentum market, it doesn't work. It's painful. But, there is the other side of that. That's the downside. We've lived through it over and over again in the history. Just look back at 2022, even before that. And you've had these periods where diversification does work. And I think ultimately it comes down to what is the intent and the objective of the portfolio? Is it to get rich quick and participate fully in the market, or to preserve and compound wealth? And in that case, I think diversification is a strategy we would still anchor around.
Is it concerning that it feels like the get rich quick thing is so dominant, especially in retail? Maybe it is born from COVID and all the crypto that's been doing well, but you look at these betting sites and every day there's some bet that you can make. How many times they say Chipotle or they say burrito in the Chipotle earnings call, for example. Are you concerned that that behavior is really picking up, especially among the younger cohort of investors?
It is concerning. A lot of the younger investor and younger consumer demographics have been priced out of the whole housing market, and yet they are increasingly participating in the stock market, and also participating it at a level that we haven't seen in really decades at this point. So yes, it's concerning. I mean, the same thing when OpenAI was announcing its framework for $1 trillion of deals. The stock market kept going up. All these stocks continue to add billions, hundreds of billions of market cap in response to these framework deals that have yet to materialize into revenues, cash flows, earnings. So absolutely it is concerning, but that is the name of the game today. The question is, how long can it persist? I think our concern is that a lot of retail investor that's participating and more active in this market is not well equipped to see the other side of that. And when you marry that with the fact that we have less and less regulation, it is concerning in the long term.
Hey, Nimrit, we're going to have to leave it there on a very sobering view of this market. Really wonderful to have you on. Please come join us again soon. North Star's Nimrit Kong. A quick check on this equity market about 8 minutes into your trading day. You are looking at basically an even amount of movers to the upside as to the downside. We are just ever so slightly higher on this equity market. What is leading us there? Amazon, I guess there's some happiness that AWS is up and running again. That's great. AWS and Amazon didn't crash the world's internet. Apple, that had closed at a record high yesterday, trading at another record this morning, up 0.5%. Elsewhere, you see some of the winners of this earnings season, this earnings day. RTX had earnings, they did well. General Electric and Coca-Cola, those did well too. To the downside, ouch, Alphabet down 1.3%. Philip Morris, they also had earnings. Expectations are high, I suppose, with how much everyone is having those gross little Zyn packets. Sorry if you are among those who have them. Those are down 6%. NVIDIA, Broadcom, some of the big tech names, Oracle also down this morning. But again, we are higher by 0.07%. So let's get a look at the sectors and how that is shaking up, what's winning and what's losing. The big loser this morning does seem to be materials to the downside. Utilities follows a close second behind, along with communications. So some of the AI names in that. To the upside, industrials, I would hesitate or take a guess that a lot of that is because some of the defense stocks like Northrop Grumman and the like had good earnings. Consumer discretionary, again, that's Coca-Cola, also with some solid earnings alongside GM. So that's what we're looking out there. But coming up on the show, some more corporate news for you. CoreWeave standing firm on its offer for Core Scientific. Despite opposition, we have the latest on the potential deal. And all of that happening at the Bloomberg Tech Summit in London, which is currently underway. The CEO of Helsing is speaking with Bloomberg Tech anchor Tom McKenzie. Helsing is Europe's most valuable defense startup. He's talking currently about all of the money going into that sector. And you can watch that conversation on your terminal by typing Live Go.
Talking of your acquisition strategy, if you can just outline that for us, because you recently made an acquisition in Australia for underwater drones. So you've got the air drones.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
Very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
All right, over 10 minutes into your trading day, let's get some top calls, some of the analyst action that we are watching this morning. First up, Wells Fargo. They cut Cleveland Cliffs to underweight, citing excessive exuberance after it rallied 21% yesterday. The analysts say that rally looks unwarranted, so shares plunge 13%, still up, though, over the past 2 days. Next up, Goldman Sachs. That gets a downgrade at JP Morgan. Analysts there say the stock is fairly valued, and they prefer European rivals like Barclays or Deutsche Bank. They also add that share buybacks are not very attractive at Goldman's valuations, but those shares, little change this morning. Finally, BNP Paribas Exxon cutting its rating on Verizon and trimming its price target. The analysts say that the new CEO's arrival has created uncertainty. They also expect higher spending tied to fiber expansion and customer retention, with costs that will likely exceed expectations. Those shares down 0.7%. Now, in other corporate news this morning, CoreWeave will not be increasing its $9 billion offer for Core Scientific, despite opposition from major shareholders. CoreWeave CEO broke the news at the Bloomberg Tech Summit in London earlier this morning.
If there's someone else that would like to step in, they can step in. But, you know, we're excited. We think it makes sense. We continue to think it makes sense. And, you know, it will go to a vote, but you won't see us bump our price or increase our price.
Let's get more on the takeover bid. We're joined by Bloomberg Tech co-host Ed Ludlow. Ed, it feels like a moment where everyone is willing to pay huge sums for data centers, their firstborn child, one of their limbs, whatever it takes. Was it surprising to hear the CEO there saying that he wouldn't up his offer?
No. He said exactly the same thing on October 7th on this network. So, you know, from CoreWeave's perspective, their position hasn't changed. They're not going to budge. Team can bring up the Core Scientific shares. That's nice timing. We're trading at $19 a share. The offer from July was $20.40 a share. The bit that's new or news is that Monday, ISS, the proxy advisor service, recommended that shareholders vote against the deal. And you'll note, Danny, that a number of Core Scientific existing shareholders already voiced their concerns about it. It values the company at $9 billion. The pressure point is that the vote's on October 30th. So we're closer to that now. And what was interesting was to hear Mr. Intrator say maybe someone else will come in for it. Because you're right, what they're getting with Core Scientific is a company that's good at building data center capacity very quickly, and that they already work with in that context.
Is there another natural bidder for this company? Who could be coming in for Core Scientific, if not CoreWeave?
Excellent question. We don't know. We don't have the reporting on it. What I would say is that a lot of the Europe or Britain-based, UK-based, similar names, neo-cloud and sort of fast-moving infrastructure companies have got a lot of backing at the moment, a lot of capital. You know, it's analogous. I'm not saying this is an option, but N-Scale, right, is a similar kind of company. So it was interesting to hear Mr. Intrator invite that idea. Maybe it's just his confidence that somebody won't.
Meanwhile, Warner Brothers Discovery, every day it's, are they going to break up? Is someone going to buy them? Is someone else going to buy them? Ed, the latest, it appears that they are considering various options. What are the options for this company as it stands?
So they're basically threefold. Continue with the existing plan, which is to separate Warner Brothers Discovery into two businesses, one focused on legacy cable TV and the other a streaming and studios business. That's the existing plan that was in place for mid-2026. The board is saying that because of these unsolicited, quote, bids, they could also look at selling off one part of it or the value of their portfolio in aggregate as a whole, although they don't name the bidders. I would say, since you've been on air or we came back from break, Danny, there are other media reports that it is Comcast and Netflix that are looking at the Warner Brothers Discovery portfolio. And you'll remember that Bloomberg reported about Paramount Skydance considering or making an unsolicited bid as well. So this is the board formally reacting and the stock up 9%.
Ed, you were at Screen Time. It's a lot of changes coming to this industry. What does it say about this moment that there are so many bidders for Warner Brothers Discovery, that what initially started as a story of slimming down, to your point of the two splitting off, is now turning into maybe the media giants getting even more giant? Yeah,
it's the same idea that content is king. You know, that at least through the wording of the executives and the board in this Warner Brothers Discovery statement, you know, they're recognizing that there is a value that they've been able to find with the portfolio on the studio and streaming side in particular. When Netflix rolls around this evening with earnings, you know, it's the age-old story, which is how have the shows that they've put out done, and what is the pipeline for new shows, because it will drive all of the historic and common financial metrics that Wall Street looks at: advertising, revenue growth, margin expansion, etc. Now that the broader environment for streaming is a bit better, and they've worked out the balance between ad-supported pricing and non-ad pricing, content is king. I think that was the message.
So, Ed, fair to say that we're expecting an upbeat report from Netflix today then, given what you're saying?
So Netflix has like 300 million subscribers, right? And they don't give us this sort of contemporaneous subscriber data anymore. Executives at Netflix have been banging the table for a long time saying, Wall Street, please just judge us by our financial performance. But the ad business in particular, and ad revenues and how that impacts profitability, is a big focus for the street tonight. And that's where they will benefit. Also, I love this, like the editors roll their eyes at me, Danny, but I think you might vibe with me on it. Currency impact, like they might get favorable FX, and when the release hits, sometimes people are like, oh, that's boring. Really important. Netflix has a big footprint outside of America. Think about how they're doing business in those jurisdictions. So, yeah, I think that's cool.
I can't believe anyone here at Bloomberg would be bored by FX impact. If you're going to be excited about it, this is obviously the place to do
Probably just me then, just rolling their eyes at me, whatever the subject matter.
Ed, we would never roll our eyes at you. Thank you so much for joining us. Bloomberg Tech co-host Ed Ludlow. And of course, 11 a.m. Eastern, tune in where Ed Ludlow has Bloomberg Tech, and we'll go through what's to expect for some of these earnings. Coming up, speaking of earnings, both GE and 3M boost their outlooks for the second straight quarter. We're going to have more on corporate results in this, the second busiest week for American earnings. That's coming up next. You're watching Bloomberg Open Interest.
up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller, the Circuit de la Sart in Le Mans, and this is Bloomberg.
You're watching Bloomberg Open Interest, 20 minutes into your trading day, and equity indexes unable to hang on to the near record high levels that they were yesterday. The NASDAQ down by 0.2%. Some of the giants like NVIDIA falling today. The Russell 2000, that performs even worse, nearing a 1% loss this morning. Again, after the indices were just 0.3% away from all-time highs yesterday. That happening despite the fact that 10-year yields are moving lower. In the words of Goldman Sachs, everything is weird and correlations do not make sense. Maybe the poster child of the weird Z's this morning is gold, down 4%, on track for its biggest daily loss in 4 years after touching all-time highs. Apple also at all-time highs, up 1.1%. Coca-Cola, GM, really strong earnings for the two of them. The consumer is alive and well. Same story goes for General Electric and 3M. Both GE and 3M boosted their outlooks for a second straight quarter. Joining us now is Brooke Sutherland, Bloomberg's Boston Bureau Chief and the writer of the Industrial Strength newsletter. Brooke did also, I should say, just get off the phone with GE CEO Larry Culp. Brooke, the earnings themselves, the consumer demand is strong. How much of this was about defense versus just air travel and the fact that we still want to go everywhere in the world?
Yeah, I mean, I think actually what's interesting that you've seen from GE and other aftermarket aerospace suppliers is that their growth has really diverged from what we've seen in terms of air travel. And so, you know, departures globally are actually trending below, you know, what was sort of expected at the beginning of the year, as you know, a lot of this uncertainty sort of takes its toll. But you've just had such a buildup in the aerospace market because of those supply chain challenges that companies are still, you know, working as hard as they can to satisfy that demand. And you're seeing, you know, that really robust growth continue to play out here. And I think, you know, you're going to continue to see this divide as we get deeper into earnings season between the industrial companies that cater to more of these growth markets, aerospace in particular, and then certainly anything that supplies the AI data center boom, versus, you know, your typical industrials that do more kind of quicker turnaround products. I mean, that's an area that's been under a lot of pressure, and there's not really a sign of improvement there. And I think you saw 3M talking to that point today, where they talked about, you know, the macro environment into 2026 will likely be the same as 2025, which has been pretty sluggish for the general industrial market.
How much of that sluggishness also has something to do with the quickly changing business environment, with the confusion and the back and forth on tariffs, what level we do or don't have with China and other countries?
I think that has a lot to do with it. You know, coming into this year, there was a lot of enthusiasm that we might start to see a rebound in the general industrial market. Remember, this is an area of the economy that's been really slow for a couple years now, and analysts were really looking for a pickup, and that has not materialized. And what you hear from CEOs is tariffs are one thing, and whatever the cost is, they will figure it out, they will adjust their business as needed, but they need to know what the rules of the road are, and they still don't know. There's a lot of changing policies, there's new tariffs, you know, announced constantly, new investigations into imports of certain products, and that makes it really difficult for companies to plan. And if you think about investments, you need to know what these things cost. If you're gonna build a new factory, you need to know what it's going to cost to do so, and what that trade environment looks like down the road. And so that's continuing to handicap decision-making among manufacturers.
Well, Brooke, we're really looking forward to reading about your conversation with Larry Culp. Keep an eye out for that. That is Bloomberg's Brooke Sutherland joining us. She's on the road today in Paris. I can promise you that is not the skyline of Boston in the background. Coming up in the next hour, some fantastic conversations you do not want to miss. Harris Oakmark's David Harrow tells us where to find value in this market, plus the CEO of EQT on AI energy demand and potential acquisitions for the company as a whole. This is Bloomberg Open Interest on a day when equities fall just under all-time highs.
take us inside and tell us what you can, without violating confidences, what it's like to be in a board meeting of Berkshire Hathaway. You've got, for a long time, you had Charlie Munger, you have Warren Buffett still there as the chair, and you've got other people now on the board. Do people ever say, Warren, you're wrong on this? Or Charlie, you don't really know what you're talking about? Does that ever happen?
The difference on the inside versus the outside is really very limited. In other words, this is a company that's valued transparency, candor. I mentioned Warren and Charlie, their ability to teach. And so I would say there were no surprises being on the inside versus the outside because of that culture. I would say the one difference of nuance is it's just amazing how much Warren and before Warren and Charlie together think about the durability of the business, how much they think about risk, how much they are determined that they are trying to build something to last, and the sense of responsibility they feel to their shareholders, the people that have their life savings in it. And that was one of the big lessons from Charlie in terms of our business, was to really reinforce this culture of stewardship.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CBS News on the Hour, sponsored by Eggland's Best.
I'm Deborah Rodriguez. Vice President J.D. Vance joined Special Envoys Steve Witkoff and Jared Kushner in Israel today to try to shore up a fragile peace in Gaza. Linda Gradstein reports from Jerusalem.
During his two-day visit, Vice President Vance will visit the headquarters of the fledgling U.S.-backed force that will oversee the implementation of the Gaza ceasefire. That ceasefire, which President Trump helped broker 10 days ago, has been tenuous, with both Israel and Hamas accusing each other of violations, and 2 Israeli soldiers and dozens of Palestinians killed in several incidents.
CBS News has learned exclusively convicted January 6th attacker, a guy named Christopher Moynihan, is in trouble again for allegedly threatening to kill House Minority Leader Hakeem Jeffries. Correspondent Scott McFarlane has more from Washington.
Moynihan was pardoned January 20th for his January 6, 2021 Capitol riot crimes. He'd been found guilty on several charges and imprisoned as part of the riot.
Court documents seen by CBS News show he sent a text saying he would, quote, eliminate Jeffries during a speech he gave yesterday in New York. Senate Republicans headed to the White House for a meeting with the president as the government shutdown enters day number 21. Majority Leader John Thune.
We're not going to negotiate on anything until Democrats stop holding government funding hostage.
Florida has issued criminal subpoenas to Roblox over fears sexual predators are using the gaming platform to gain access to children.
Florida Attorney General James Uthmeier says the subpoenas will let prosecutors find evidence of what he calls criminal activity,
as well as evidence on the predators that are out there and the victims that are abused.
Uthmeier accuses Roblox of profiting from kids while failing to protect them. Roblox Chief Safety Officer Matt Kaufman spoke with CBS News earlier this month, and he says while big gaming platforms will always attract bad actors,
our job is to do the best that we possibly can to prevent anything from happening on our platform and to report those situations as quickly as possible.
Peter King, CBS News, Orlando.
You'd think the crown jewels would get top-level protection. That was not the case, turns out, at the Louvre, where a quick-acting gang of bad guys swooped in Sunday and made off with priceless diamond and pearl-studded royal necklaces, earrings, and crowns in broad daylight. CBS's Liz Palmer from Paris.
A recent security audit noted that 35% of the rooms in the Denon wing, where the jewels were, have no security cameras. And France's justice minister admitted the glass on the cases wasn't strong enough. The thieves were able to cut right through it.
And they are still on the run. This is CBS News. American chess grandmaster Daniel Naroditsky has died.
The Charlotte Chess Center in North Carolina announced the 29-year-old's death. Naroditsky trained there and worked as a chess coach. He introduced the game to a wider audience by streaming his matches online. His YouTube channel has 500,000 subscribers. He posted his last video Friday.
The episodes have been few and far between. I've been sort of taking kind of a creative break.
Naroditsky started as a child prodigy and became a grandmaster at 18. A cause of death has not been released. Michael Wallace, CBS News.
Workers at a zoo in Northern California asked, who invited this guy? They were conducting a routine pre-opening inspection at the Sequoia Park Zoo in Eureka when they were surprised by a wild and obviously lonely black bear that had wandered in. The zoo's Facebook post shows the animal leaning on a gate, staring at 3 black bears inside their park habitat. They believe the visiting bear wandered in from woods nearby. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning. We are broadcasting live from the Commonwealth Financial Network's 2025 National Conference at the Gaylord National Resort in Maryland. Scarlett Fu is out. Lisa Mateo sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive. We're down here in Washington, D.C. Coming up, we're going to have some really smart guests coming from this conference down here in Maryland. We're going to kick it off with Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. I want to talk about gold. Gold had its weakest session in several years here, so maybe a little bit of a cooling rally for gold and some of the precious metals. We'll break it down with Mike McGlone. Will Lee, Bloomberg Intelligence Aerospace and Defense Analyst. We'll talk about some of the defense contractors reporting earnings. I'm talking about Lockheed Martin and Northrop Grumman, so we'll see what's happening there. Chris Fasciano, Chief Market Strategist at Commonwealth Financial Networks, on ways Commonwealth is helping its clients navigate this market here. So we got a lot coming up from the Gaylord Center down here in Maryland, broadcasting live from the Commonwealth Financial National Conference here. Let's kick this whole thing off as we do with Mr. John Tucker in a...
All right, guys, good morning. And this Bloomberg Business Flash is being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. Right now, the major stock averages, they are mixed to a little change. This comes after yesterday's 1% rally across the board. The S&P 500 down 6 points, 67.29 in the index. The Dow Jones Industrial Average, that is up right now 89 points. The NASDAQ 157 points lower, down just about 0.2%. The slew of earnings reports, that continues. General Motors right now, best performing stock in the S&P 500, up close to 13%, boosting the full year adjusted earnings per share guidance to a range above the consensus estimates. apparently a lot of people are buying pickup trucks, too. RTX raising its full-year profit outlook, reporting third-quarter earnings that topped expectations. Sales and profit rose across the commercial, aerospace, and military hardware businesses, and that is right now 10% higher. Again, the second best performer in the S&P 500 right now. And people are looking at it, kicking the tires. Warner Brothers Discovery, those shares up close to 10%, the third best performer in the S&P 500. They have started a review of strategic alternatives to maximize shareholder value. They had unsolicited interest. Apparently one of those is Skydance Media and the young Mr. Ellison there. Hologic being acquired by funds managed by Blackstone and TPG. We've heard about this since earlier this year, finally taking place. Up to $79 per share, an enterprise value. It represents just over $18.3 billion. Shares of Hologic this morning, they're up 3.6% as a result. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. We appreciate that. Red and green on the screen here today. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo. We're joined by Bailey Lipschultz. Bailey, what are you looking at here?
Yeah, I want to start with the best performer in the S&P 500. That is General Motors, ticker GM. Right now up 14%. Best day since March 2020 and on pace to close at an all-time high. The company rallying after it boosted its full-year earnings per share guidance well above what Wall Street was looking for. Citi calling out that the company is, quote, turning the big ship faster. We saw management talk up the fact that they are dialing back their investments in EVs. They saw not only strong demand for some of their trucks and other vehicles, but also price increases. So passing along those costs. And also we saw management talk about tariff mitigations, actions to walk back some impacts of that. Obviously, GM, a U.S. company, so kind of leaning into that America First rhetoric that we've heard from the White House, but seeming to play out again for GM ticker. GM up 14%, again, on pace for a record close.
Bailey, you also had some good news from Coca-Cola. Apparently the sugar-free ones are doing pretty well for the company.
The sugar-free ones are doing well. The diet sodas are also doing well. Coca-Cola, ticker KO, right now up just under 4%. So one of the top 10 performers in the S&P 500. Biggest intraday move since February. This came after the company's organic sales growth came in stronger than Wall Street was looking for. As you mentioned, Lisa, we saw the company kind of talking up the demand for their sugar-free soda. We saw strength for their regular Diet Coke and Coke flagship Coke products. One thing that was interesting was weakness for their dairy and juice products, so certainly something to keep an eye on. Analysts calling out that part of that is driven by capacity constraints in North America, but broadly speaking, Wall Street quite optimistic on the company. And again, another example of a company that was able to raise prices, so maybe not seeing as much case growth, but also seeing consumers willing to pay up for premium brands, or at least perceived premium brands, with Coca-Cola, Coke, sugar-free, as well as Diet Coke.
So there's another company that seems to be doing well or adjusting to the world of tariffs.
Yeah, exactly. And we're also going to keep an eye on a stock of RTX, trades under the ticker RTX. This is formerly known as Raytheon, right now up 9.7%, on pace to close at its own all-time high, up the most since July. Second best performer in the S&P 500. The company talking about their strength for earnings, their robust backlog, as management called it. Revenues better than analysts were expecting. Notable upside, according to the folks over at Vertical, with their jet engine division. So really seeing some of the tailwinds playing out for more defensive stocks. Obviously a straight up defensive company in RTX, but also the likes of GM and Coca-Cola in a day that the S&P 500 is essentially flat. So kind of the other companies stepping up on a day when we're seeing, some of the recent high flyers pulling back, whether that's in riskier spaces like quantum computing or kind of a Mag 7 NASDAQ 100 that's not doing quite what investors might have been hoping for after what was a pretty strong Monday.
All right, Bailey, thanks so much. Really appreciate that. Bailey Lipschultz, senior equities reporter for Bloomberg News. For more conversations like this, Subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Well, one of the stories we woke up to this morning was gold. Finally, a little bit of a pullback here. And the question is, just kind of a trading pullback in an otherwise crazy strong market for precious metals, or is it something else? So let's go down to Miami Beach, Florida. Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. Mike, you're a trader. You've been on the floors, the pits, and all that kind of stuff here. Is this just some traders taking some profits here?
Hey, Paul, you're supposed to be selling when they're yelling, and the yelling in gold is about the most extreme it's been since 1979. So you nailed it. Yeah, right now it's just a little bit of profit taking, but it's what's happening in gold that's very disconcerting. As of yesterday, it was up 66% in the year. That put it among the top 4 of the last 100 years, with only 1979, 73, and 74 ahead of it. So it's very expensive. At the same time, crude oil was down about 20%. That disparity around 86% has never happened. It's never been that extreme. So gold going up, crude oil going down that much is a severe global deflationary force. And the question is what it means. I'm really concerned that also this is happening. One thing that has never happened to with stock market volatility this low. Gold usually goes up when stock market's having a problem. So I'm worried about a little bit of reversion, uptick in stock market volatility. Gold might be warning us.
Well, you talked about oil. What about the strengthening of the U.S. dollar? I mean, can you talk about that relationship between the dollar and gold?
Yes, it's definitely a key factor this year. The dollar's been weaker, gold's been stronger. All commodities are mostly denominated in the dollar. It's just not as much of a factor here. The key thing for the dollar is, first of all, we have a very controversial president, which is somewhat very good for gold. Every time Mr. Trump speaks and pushes back on the Fed, gold market seems to smile. And also we have recurring wars, and according to NATO, the second largest economy in the world being a decisive enabler of the war in Europe. So that's all really good for gold. The problem is it always goes up for a reason. I like to stick to the disciplines of, you just take gold versus its 60-month moving average. It reached the highest yesterday since 1981. And certain signals, you're supposed to just ignore everything. And if you've been long, if you've been bullish, that's not a spot to be overweight long. It's usually a spot you're supposed to say thank you and give some back to the market.
So how much pullback would be a reasonable or a healthy pullback in gold?
Well, 4,000 was the key resistance. It's now support. It could easily pull back to 3,500. The significance, Paul, I want to point out is in 2011, when gold got this relatively expensive, it put in the high for 10 years. In 2008, when it got to around $1,000, it backed down about $700, about 30%. So a 30% correction from these levels is normal. The key thing is what could be a trigger, and I'm worried about a similar 2008 type scenario, because gold went down because everything went down back then. Now the problem is both. It could be negative for gold if stocks keep strong and volatility stays low. There could be a little pressure factor on the ancient store value. But if the stock market has a bit of a 5-10% correction, which we haven't had in a long time, that can push everything lower. So right now it's also the time of year we get volatility, and I'm kind of it just makes me very concerned about what might happen as we get through the end of the year.
Hey, Mike, we've been talking a lot about a government shutdown, right? I think we're in day 21 if we're keeping track. But the Commodity Futures Trading Commission, that report, that's been put on hold. I mean, how crucial is that for you to keep an eye on?
Well, I'm glad you mentioned the shutdown. We seem to have forgotten. It's also part of the perfect storm for gold, which might be ending. The COT data, Commodity Futures Trading, is delayed. We haven't seen it for about a month. Before this happened, gold was not really overbought. So that, in terms of futures, the key thing you can watch is open interest. The key thing I've been watching, open interest in gold has been flat for years. It's not really jumping up. There's not a lot of signs of speculation in there. There's definitely pickup in ETF buying, ETF inflows. But the key thing that's really seems to be moving gold is the cash market, and central banks are still the underlying buyer below the market. The thing is, I think they're somewhat elastic. They're big buyers from 2,000 to 3,000, but as we get into 4,000 handle, I think they're going to be curtailing their buying.
All right, Mike, thanks so much. We appreciate that. We'll get to pork bellies next time. Mike McGlone, Senior Commodity Strategist, Bloomberg Intelligence. He's down there manning our Miami Beach office here. So commodities have just been on a tear, Lisa. The gold in particular, silver as well. Silver actually performing,
yes, we didn't even get to it.
better than gold, and it's kind of the poor man's gold is what a lot of folks historically have said, but it's had a better rally here. But it's got to pull back at some point. time. My question is just what are the central banks going to do, as Mike was suggesting? Does China just continue to buy because they want to own more gold, or is there a level at which even they pull back?
And I wonder if the concerns about this, this correction kind of have been around, like a trader's kind of looking over their shoulder.
Exactly.
They've been doing that for a bit.
Yeah, give a little bit back, as Mike was saying. So gold, we're down about $180 here, 4.2% on the precious metal. Bitcoin, I'm going to call that out for Tom on the Upper East Side. That's down 1%. We're around below 110,000 on Bitcoin, 109,900. So we'll keep an eye on that. Red and green on the screen. S&P unched. The Dow's up 130. The Nasdaq's down 45. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg newsroom with his Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Better than expected pickup truck sales helping General Motors. GM raising its full-year outlook, posting third-quarter results, topping estimates. The CEO there, Mary Barra, also says near-term EV adoption going to be a lot lower than planned. General Motors is actually the best performing stock in the S&P 500, up right now close to 13%. And General Electric raising the full-year outlook for the second consecutive quarter. Interestingly enough, the newly built turbines, the jet engines, sold at a loss. They harvest the earnings over several years through the maintenance agreements they come up with. Apple approaching the $4 trillion club, right now somewhere around 3.92 trillion. Shares taking out the all-time highs. Analyst Dan Ives writes it's clear they have a hit with the iPhone 17, among other things. And then real quick, Beyond Meat, those shares are soaring. They announced plans with Walmart to increase availability of select products over at 2,000 stores nationwide. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
All right. Thank you so much, John Tucker. Welcome back. Yes, Bloomberg Intelligence. We are live from Commonwealth Financial Network's 2025 National Conference in Maryland, just down the road from D.C. This is actually the 13th time. I didn't even realize broadcasting live Bloomberg Radio. Your sixth time?
I think so, yep.
You're about number 6?
Yep.
So we've definitely been a part of this, and we're going to continue to bring some fabulous guests from all over the financial landscape. For now, though, we're going to talking earnings. It is a big day for earnings. We are talking about two of them in particular, Lockheed Martin, Northrop Grumman. So I want to dive right into it. Who better to join us than Will Lee? He's Bloomberg Intelligence Aerospace Defense Analyst, joining us from New York. So, Will, I want to start out by talking about Lockheed Martin first. Okay, so it's the world's largest defense contractor, right? Stronger profits in its missile space divisions. Can you talk more about this turnaround for the company? Because over the past several quarters, I mean, they frequently disappointed investors. So kind of paint that picture to where they are now.
Sure. So in terms of with Lockheed, they posted strong third quarter performance, and that's driven by higher F-35 production volumes as they're starting to deliver the Tech Refresh 3 F-35s, and then also from the ramp up in the missile productions. And so that's for the stealthy anti-ship LRASM, the air-to-surface JASSM, the PAC-3 interceptors used in the Patriot air missile defense systems, and the long-range PrISM that replaces the Army's ATACMS missile. And so if you think about Lockheed, what we're seeing is that growth is driven from their missiles and fire control segment, and that could continue to grow double digits as the Pentagon presses the industry to accelerate missile production. In that the DoD wants production on 12 critical weapons to jump about 2.5 times by 2027, and Lockheed has 4 of those, the 4 that I mentioned, LRASM, JASSM, PrISM, and PAC-3.
Hey, well, let's be honest here. I could make money as a defense contractor today. They are spending money hand over fist all around the globe here today. How do you think about that as just a longer-term trend? How sustainable is this being? Because it just seems like President Trump is pushing countries all around the world to step up their defense spending.
Right. And so I would say go to, if we think about being prepared for the next potential conflict, U.S. needs to invest heavily on precision missiles. There was a study last year that suggested that U.S. could run out of critical missiles in a conflict with China in less than a week. And so all this and the timing of 2027 relates to the Pentagon want to be prepared for this. So we're essentially seeing this push, and this has multiple years, like spending out into the 2030s, 2040s around the missiles.
Now, when it comes to Northrop Grumman, they raised their earnings forecast. So it seemed like some good news. Was there any downside to the report? I mean, I was reading something about a wind down and work on some space programs that kind of weighed on their sales.
Yeah, so the space program, that was something where they lost one competitive program. That's the Next Generation Interceptor to Lockheed. And then they also had a classified satellite program that was canceled. So that was headwinds that happened last year. They should start anniversary come next year. But in terms, that's the space headwind. But then we also saw Northrop trim their full-year guidance by 1%, and that's driven in part by the softer aeronautics sales, in part because of delays on certain contracts and awards on certain contracts and programs, and then also around revenue recognition with the B-21 bomber, where they changed the timing around their production activities, and based on a percentage of completion, revenue recognition, that pushes some of the sales out from third quarter and fourth quarter into 2026. So it's not necessarily lost sales, but just delayed sales.
Is there any bear case here for these defense contractors right here? It just seems like, again, the fundamental demand over the next several years just remains fundamentally above trend.
What I would say is just the focus around affordability. So there's a big push for the DoD to get more bang for the buck. And so when you look at the traditional defense contractors versus the new defense tech startups that are offering low cost, there's that balance of with the DoD and the U.S. Trying to understand their portfolio mix of high-low systems. And so the defense primes typically will live in the high-end exotics. And so for them to remain competitive is to broaden out their cost structure and be able to target both the high and the low end. And so I say that would be one of the bigger challenges as we move forward.
All right, Will, thanks so much for joining us. Appreciate it. Will Lee, he is Bloomberg Intelligence Aerospace and Defense Analyst. We got a lot of the defense contractors, RTX, Northrop Grumman, Lockheed Martin, all reporting some strong numbers today. And why not? It just seems like everybody's building up their armed forces and their stockpiles there. So we'll keep an eye on that. Let's get back to these markets here. We're joined today by Chris Fasciano. He is Chief Market Strategist at Commonwealth Financial Network. Joins us here at the Commonwealth get-together here in Maryland. Chris, what's the message you're trying to get to your advisors here this week about kind of where we go from the markets? Because, boy, we've had some extraordinary volatility with the big sell-off earlier this year, but then an even stronger rebound.
I think it's a simple message. There's uncertainty and opportunities, and there are things to worry about, but there are always things to worry about. And what I've been trying to focus on in my conversations is the strength in corporate earnings. And as long as that earnings growth continues to come in above expectations, I think it'll be supportive for the market, and it should lead to more breadth in the market and more opportunities across asset classes.
Now, when you talk to a financial advisor, I mean, they're all around here. There are more than 2,000 people attending this event. What are some of the things they're talking about, or maybe from your perspective, what are some of the mistakes you might see them making?
I think their job is to listen to their clients and understand what their concerns are, right? So in March and April, I was very busy because clients were very nervous with how fast the market dropped. And you need to be able to understand that. I certainly understood why people were nervous, but my experience tells me that volatility creates opportunities. So at that point, I'm trying to make sure clients stay in the market. Interestingly, I think now is a great time to have conversations with clients because the concerns that we saw earlier in the year are still fresh in their mind. But I'd rather make adjustments to portfolios at all-time highs than in April. So now the conversation is, what were the concerns, and do your portfolios meet your long-term objectives, or should we come up with a bucket strategy or at least rebalance to take some money off the table?
To the extent you want to take some money off the table from the equity side, what's your fixed income call, or what's your call about maybe where to put some of those profits?
Yeah, to me, it's just rebalancing, right? When you have so much strength in the equity market off the lows in April, if you're running a traditional 60-40 portfolio, you're overweight equities now. And do you want to be? So I encourage advisors to, at a minimum, rebalance, and that would result in increasing your fixed income side. But I feel pretty good about high-quality intermediate on the fixed income side. Credit spreads are tight. I think there's a place in portfolios for yields. But I'm equally as encouraged on the equity side because I really do believe diversification is back in vogue and that there's a lot of opportunities outside of large cap growth in the equity markets.
Earnings season gets underway. You know that. It's the best time for S&P 500. Okay, so it logged its biggest two-day gain since June. This stat, about 85% of the U.S. firms beating profit estimates so far. I mean, have you been impressed so far with what you've heard?
I've been really impressed with the health of corporate America and how well they have navigated all the headwinds they've seen. And it's not this quarter, right? We have seen it all year. Second quarter was stunning to me because growth at the S&P 500 for earnings came in at 11.8%. and consensus estimates were 4.9%. That's really good performance in a tough environment. Now, the hurdle was a little higher coming into this quarter at 8%, but as you said, so far earnings continue to beat expectations. And what encourages me most about the outlook for the markets is that we're finally seeing 2025 full year and 2026 full year estimates move higher after coming down for much of the year despite the strength in earnings we saw, because analysts were worried about tariffs and what the impact on the economy and corporations' P&Ls would be.
Yeah, we just had a couple of consumer-facing companies today, General Motors and Coca-Cola, beat their estimates, and call out the fact that they're able to deal with the tariffs. Despite the tariffs, they're able to grow their margins and grow their business. It seems like corporate America is dealing with the tariffs quite well at this point.
Yeah, I think that's been one of the big surprises this year coming out of April, right? And it hasn't just surprised investors, it's surprised the Fed, too, and I think they've acknowledged that the impact of tariffs has not been as high as they thought and could prove to be temporary, and that's why they're comfortable cutting rates to support the employment outlook. But to your point, on the consumer side, consumers are saying one thing in the confidence survey, but we're seeing another thing in their behavior, and they're still spending money, and retail sales are still strong. And as I always say, consumer drives the economy. So if they have jobs, they have money, and if they have money, they tend to spend it.
30 seconds left or so. Big tech, of course, earnings coming up too. So what are you looking for? I mean, are you looking closely to see how spending on AI, like, is that leading to profitability? Are we going to start to see that?
I think that's been an interesting change in what investors are beginning to look for, right? You've now started to see some things about earning return on that spending. And I think that's an interesting inflection point. Now, when I talk to advisors, you have to own large growth, right? But I do believe that there are other pockets of the market, whether it's international or mid-cap, that are starting to act well. So own it, but be aware of the fact that it may not just be one asset class that drives returns going forward. You can benefit your clients by having exposures to other places.
All right, Chris, thanks so much for joining us. Really appreciate checking in with you. Hopefully your Tar Heels can have a decent basketball season this year. Chris Fasciano, Chief Market Strategist at Commonwealth Financial Networks, getting the thoughts on the markets here today. And we got a mixed screen out there, folks. The S&P is pretty much unchanged on the day. The Dow's up 170 points. Thanks to some of those big defense contractors. NASDAQ off about 80 points. That's 0.3%. The Bloomberg Dollar Index, it's higher again today. So, again, more stabilization in the U.S. dollar. Still about 8% below where it was earlier in the year. But certainly we've had now probably 4 or 5 weeks of a stable U.S. dollar. 10-year Treasury yields, 3.95%. How about that? This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. And we're being brought to you by IBKR. Will the Fed leave the rate unchanged at the October 29th, 2025 meeting? At IBKR Forecast Trader, the yes was recently at 38%. Start predicting today at ibkr.com/forecast. The last trading day for this contract, October 29th. Let's start off with Warner Brothers Discovery. They've begun to consider various deal scenarios. They've received unsolicited interest from multiple parties, as they put it, for all or part of the company. Now, earlier this year, Warner Brothers did announce plans to split into two businesses, one focused on cable TV, the other on streaming and studios. And Warner Brothers Discovery, as they look for people to kick the tires, those shares right now up 10%. One of the best performing stocks right now in the S&P 500, in fact. General Motors shares jumping 14%. Right now, the best performing stock in the S&P 500. They boosted the full year adjusted earnings per share guidance to a range above the consensus estimates. And then more deal news. Medical device maker Hologic being acquired by funds managed by Blackstone and TPG. This is a deal valued up to $79 per share, so it represents an enterprise value of $18.3 billion. Shares of Hologic, they were up right now 3.3%. Overall, the S&P 500 is 3 points higher. We're at 6738 on the index. The Dow Jones Industrial Average is up 250 points. NASDAQ 100 down 43 points. That's a decline right now of 0.2%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Lisa and Paul.
All right. Thank you, John Tucker. Yes, welcome back. Bloomberg Intelligence. Lisa Mateo filling in for Scarlett Fu alongside Paul Sweeney. And we are live from Commonwealth Financial Network's 2025 National Conference right here in Maryland, right down the road from Washington, D.C., where there's a lot of stuff going on. It's particularly a government shutdown. That is front and center. It's certainly the topic being discussed here at the conference. Joining us now live here from here is Garrett Fish. He's head of model portfolio management at LPL Financial. All right. So Garrett, first, thanks for joining us here. I have to ask you, we have government shutdown, trade tensions. I mean, you have all this volatility talk. Do you see it as an opportunity to add risk to your portfolios?
Actually, we've been going in the opposite direction regarding risk reduction. So from an equity aspect is we are at a lot of good news is priced in. And if you look at the valuations now, we continue to have more and more good news in the U.S. regarding earnings. But it's effectively at a 22 or 23 time multiple, is a lot of that good news is priced in. If we go over to the fixed income aspect, is spreads between the premium or the price paid for investment grade corporates and treasuries is at all-time lows or very close to all-time lows. So a lot of that good news is priced in. So what we've been actually doing is reducing risk. So right now we're very neutral positioned. We have some allocation changes which we can get into, but effectively we've been in more risk reduction mode.
So is that beefing up fixed income allocations or moving out of maybe some higher growth, higher beta, higher value tech stocks into something other parts of the equity market? How are you doing that?
Yeah, so good question. So within the U.S. equity market, we still remain overweight U.S. large and mid-cap growth. Okay. Because that's where basically the real powering of earnings growth is. So where we're underweight is cash, because cash is kind of low and going lower. What we're really into, and then fixed income, Paul, you mentioned going from equity to fixed income. Fixed income, we're neutral as well. Neutral duration, neutral exposure. So where does that capital then go if we're neutral, if we're underweight cash? Really, it's into alternatives. We're looking for those diversifying strategies. Is basically volatility right now. It's picked up in the past few weeks, but effectively volatility has been very low. We had a spike early in the year. I think your prior guest, Chris, was mentioning regarding volatility. Volatility can be a good thing as far as capturing those moves within the market. So we still expect volatility to increase from here, and that would be beneficial to those alternative strategies. So, and they're doing what they're supposed to do. So if we go back to the March, April, May timeframe, they provided that kind of downside volatility and kind of dampened that volatility. So on the upside, they're not going to participate quite as much on the upside, but as long as they're doing what we expect them to do.
Now, I'm curious to think of what your clients are asking for. Like, what's their curiosity? What do they want to know? Is it ETFs? What do they want to know about?
Yeah, so if we look on our platform, it's really, as far as investment vehicles, is the shift away from mutual funds. Mutual funds are still a fantastic investment vehicle, but they're really moving into ETFs, including active ETFs, and SMAs. So SMAs, many of the minimums for an SMA separately managed account where you're owning the underlying securities. So those minimums for those accounts many times are $50,000 or $100,000. That's a lot of money, but it's not quite as much money as it was 25 years ago. So that availability for those people with that amount of capital. So we're seeing the growth of ETFs and also of SMA separately managed accounts.
On the alternative side, I guess I grew up with private equity, then hedge funds. Now private credit's become a huge, huge part of the alternative space. How do you guys look at alternatives and kind of where do you point your clients to?
Yeah, so it's a great question. It's kind of, you mentioned several things regarding hedge funds. Simple term, but when you look underneath it, it's very, very broad. I would say almost alternatives, whether it be private equity or private debt, same thing, maybe even more so, potentially more so. Longer conversation. The issue that we have from a model portfolio management aspect is the private aspect is liquidity. So on our largest platform, which is a centrally managed platform, it requires daily liquidity. So the alternative exposure that we can get there are through 40 Act funds or mutual funds. Increasingly, they're trying to put those investments into ETF strategies, simply because ETFs are growing, because we all know the advantages of ETFs versus mutual funds. Again, mutual funds, been around for a long time, still provide a great kind of collection of assets and liquidity, of course, whereas ETFs is just simply the flow is into ETFs. The biggest issue regarding the true private equity and private debt, the issue for us is those liquidity requirements as far as in and out. Here's the other aspect from an advisor or an underlying individual compared to an endowment or foundation. An endowment or foundation is kind of investing into perpetuity. Now, for the individual, they might have a long time frame of 10 years or 20 years or 30 years, depending on their time frame. But what happens if that one individual that is in that account, in the ownership, what happens if they die? Then what happens to that responsibility for that second-year commitment, third-year commitment, fourth-year commitment? So this is just really an education that is taking part in the industry.
If we talk about, for equities, there have been, bouts of volatility. We've been talking about that here. Does the underlying backdrop remain healthy for equities?
So high valuation, but really supported by that earnings growth. So you would say is that valuation unduly rewarded? We would say no. Is simply recognizing that there is growth. So it's kind of like looking outside and saying, okay, it continues to be sunny weather. Right. So we're going to prepare for sunny weather, knowing that if we look beyond the horizon, that we should expect some storms. We just don't know when that will happen.
How about the Federal Reserve? It appears that the Federal Reserve is in an accommodative mode. How do you guys think about that? How do you communicate that to your advisors?
Yeah, so that's one of the reasons why we're actually underweight cash. Okay. So we think cash regarding the FOMC, they meet next week. We're expecting more cuts in the future. So that will decrease the kind of viability of cash from an asset allocation aspect. Now, cash is always going to be the most liquid asset, but effectively, we've been decreasing, or we're underweight cash because basically we think those rates will be coming down. So.
And how do you think, because we have finally CPI, there's finally some data coming out on Friday. So in the last 30 seconds or so, do you think how do you feel like that's going to turn out?
Yeah, so I don't think it's really, the good news is we've had multiple government shutdowns over the past 30 years. So this is not new to us. Every time we go into a government shutdown, we think, oh my gosh, this has never happened before. It actually has happened before. And it just kind of shows you the strength and resiliency of the U.S. economy, of U.S. businesses. Chris mentioned earlier regarding really kudos to U.S. corporates for how they have managed really the last 5 years regarding what they've done on their balance sheets, and they've been rewarded with that higher multiple.
Yep. Garrett, thank you so much for joining us. Really appreciate it. Garrett Fish, he's head of model portfolio management at LPL Financial, giving us some thoughts on these markets. getting a little bit cautious on the margin. Why not? We've had a rip in the market here. Maybe a little bit of a pause here. The S&P's up 3 points. The Dow's up 250 points. The NASDAQ down 49 points. It's 0.2%. We're going to have more coming up from Maryland.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Lisa Mateo, sitting in for Scarlett Fu. I'm Paul Sweeney. We are broadcasting live from the Commonwealth Financial Network's 2025 National Conference at the Gaylord National Resort in Maryland. Here we've been talking about a lot of smart guests about this market. Where do we go? I know the folks at LPL Financial we just chatted with getting a little bit more cautious on the margin, and that not surprising after the rip we've had in this market off of the April lows here. Let's talk to somebody who also does this stuff for a living. Jim Harvey, he's president and chief investment officer of Opus 111 Group. They're out there in Seattle, Washington. Jim, thanks so much for joining us here. You know, if you just kind of went to sleep on New Year's Eve and woke up today, you'd say, the market's up double digits. Nice. We had a nice year, nice little year there. But, boy, there's a lot of volatility to get there with the sell-off earlier in the year. What's your view of these markets right here? What's the conversation you're having with your clients these days?
Well, thanks for having me. What I can tell you, first of all, is that the concentration risk on the S&P 500 with the Mag 7 is so profound that it's masking, I think, some potential trouble underneath. And so, you know, I think the last statistic I saw about a month ago was 40% of the S&P's market cap is the Mag 7. So, you know, we are basically people that believe that for people to be effective, that they can't time the market. So we're looking for ways to have them have a diversified enough portfolio that they're not whipping in and out. So we don't really look at these developments or any of the volatility as anything other than a buying opportunity, if we can, to enhance the structure of the portfolio that we build.
Now, Opus 111, I'm curious about the name of the company, but also curious into how you build and grow an independent financial advisory firm.
Well, that's, that's probably more time than we have to go through that. But, I mean, honestly, the name basically came from Beethoven's Last Piano Sonata, which I happen to play, where he had a vision of ragtime jazz well in advance. And I think one of the characteristics that's critical in our business, just as an advisor, is to be able to read what's going on right now, but also see the evolutionary impact of that as you see it unfold in the future. In terms of building, we have we're sort of a ultra high net worth practice, and so most of our growth comes from introductions, we call them. We have a swear jar if we call them referrals, so I owe $1 for them for that. But basically, if we do really well for our top clients, then they'll introduce us to other people, and so that's how we grow. We've managed to grow quite well here with our almost fourth year with Commonwealth by virtue of doing that.
Jim, with ultra-high net worth individuals, I'm guessing in your part of the world, location-wise in Seattle, Pacific Northwest, there's Microsoft, there's Amazon, there's so many companies that have been created out of that part of the world with a lot of equity wealth created for a lot of people. What's kind of your strategy when you approach those types of people? What's kind of the challenges for those people?
Well, actually, that's one of my target markets, so thanks for bringing that up. I appreciate it. C-level executives, early employees of those kinds of companies, and it's Microsoft, it's Amazon, it's Costco, it's Starbucks. I mean, there are a lot of them. And what I've found is that often those clients don't really think of their equity compensation and this high concentration of their net worth as an asset that needs to be managed. And so we come up against almost like they feel like they're disloyal if they sell their stock. And so, we have to let them know, for example, that, the S&P over the last, 50 years has a standard deviation of 18, but the individual standard deviation average of any one of the 502 stocks on it is 50. So, you have a high concentration. It's sort of like the red-haired stepchild. When it's good, it's really, really good. And then there's the other times.
Can you talk about the recent swings we've been seeing in the stock market? Is it, from tariffs or trade or geopolitical tension, or is it just seasonal volatility in October?
Well, I think we have a kind of a triumvirate right now of difficulty. First of all, with the tariffs and the economic policies, they change so quickly, it's really hard for anybody to know what the heck's going on. And then you've got that concentration risk masking what I think is some fundamental underpinnings that could be reason for caution. And now with the government shutdown, you don't have data. So, in the absence of that, how do you make a decision?
I went over to the Capitol Hill yesterday to kind of knock some heads together, but there's nobody there. I mean,
you couldn't work the magic.
Exactly. Jim, real quick, how do you diversify here? What's the best way to diversify when you go to somebody who's got some concentration?
Well, we have developed and refined a portfolio construction process, which is pretty different than the industry, and so we call it SAT. Just to remember having to take tests to go to college, which is strategic allocation, alternative, and tactical. And most investors in my 42 years of experience make mistakes by whipping in and out or trying to time things, or we call it chasing the hot dot, whatever is really cool, fear of missing out and all that. So strategic allocation is just basically, good things that we know that make money over time. And it could be fixed income, it can be international and emerging. Alternatives we know will dampen, not eliminate, volatility. All right. So if I can have somebody that goes like this and then smooth out the ride, there's value in that. And then tactical is what you might think. So there's a part of the portfolio that we will whip in and out.
All right, Jim, thanks so much for joining us. Jim Harvey, President, Chief Investment Officer at Opus 111 Group. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Oracle. Stay tuned for latest market news and industry research right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Lisa Mateo sitting in for Scarlett Fu. I'm Paul Sweeney. We are broadcasting live from Commonwealth Financial Network's 2025 National Conference at the Gaylord National Resort in Maryland, just across the Potomac River from Washington, D.C. Coming up in this hour, we're going to check in with George Ferguson, Bloomberg Intelligence, Senior Aerospace, Defense, and Airlines Analyst. Get the latest on some more defense contractors. RTX put out some good numbers here, boost their guidance here. That's the old Raytheon. And GE Aerospace boosts its outlook a second time on aviation rebound. So we're seeing some good themes there. Steve Mann, Bloomberg Intelligence, Global Autos and Industrial Analyst, break down his GM earnings, boosting guidance. I think the big thing was they're kind of paring back some of their investments in EVs. I think that's what's popping the stock here. Geetha Ranganathan, Bloomberg Intelligence Analyst. She covers all the media stuff. What is Warner Brothers Discover going to do? Are they going to merge with Paramount? Are they going to just break up the company? We'll figure it all out for you. Geetha's on top of that stuff. So we got a lot coming up in this hour from Gaylord Resort in suburban Maryland. And we're going to kick that off in just a moment. But let's go to get a layup on what's happening with the market. Alexis Christophers joins us here with the Bloomberg Business Flash.
Busy day, Paul and Lisa. Stocks are mixed as we enter the heart of earnings season. The Dow Jones Industrial Average climbing 353 points, a gain of 0.7%, but the broader market not as enthusiastic. The S&P 500 up by 11, the NASDAQ actually down about 20, and gold is off 5% right now, pulling back from its record-breaking rally as a stronger dollar makes the precious metal more expensive for buyers. Shares of General Motors skyrocketing nearly 15% off the back of better than expected earnings driven by pickup truck sales and fresh relief from auto parts tariffs. GM CFO Paul Jacobson tells Bloomberg Surveillance the automaker has focused on staying resilient.
When you look at our balance sheet, you look at our inventory discipline and the way we've gone to market, there's a lot of things that have changed that allow us to be able to react to the world around us faster. And I think that's paved the way for us to have another really strong year in the face of a lot of macro changes.
GM also expects next year's results to top 2025's earnings. And shares of Coca-Cola popping more than 3% after quarterly results beat the street. The beverage giant also reiterating its full-year forecast. Coke saw the largest volume growth from its water, sports, coffee, and tea segments. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christophers. That's your Bloomberg Business Flash. Let's send it back to Lisa and Paul and Bloomberg Intelligence.
All right. Thank you so much, Alexis. Yes, we are live here. This is Commonwealth Financial Network's 2025 National Conference. We'll be bringing you some fabulous guests here throughout the next hour. Right now, what we want to do is take a look at some of the stocks on the move. We'll do that today with Bloomberg's Nora Melinda. Nora, so what are we starting? We're starting GE Aerospace. Pretty good numbers for them.
Well, there's clearly no shortage of things to report on this morning. Looking at GE Aerospace, that's ticker GE. Shares are up as much as 4.6%. We are seeing a strong showing from a lot of these aerospace and defense companies. This is after GE Aerospace raised its full-year outlook for the second quarter in a row here. The company citing strong air travel demand. And of course, we know this has really just been a high-flying stock this year. A lot of Wall Street pouring money into it. Shares are up about 85% year to date, but it really is that rebound in global air travel and the rising demand for maintenance and new engines, Lisa.
I didn't fly down here. I took the train. Dude.
I know, me too.
Amtrak took care of us big time.
I like how Nora did the high flying.
Yes, I saw that. I
yes, very
that.
good, Nora.
I tried.
Hey, Nora, I spent most of my career on Wall Street putting together Warner Brothers, Discovery, and all these assets. Now it looks like the street wants to break it apart. What's going on there?
Seems to be the case. I know this is a space that you follow very closely here, Paul. Looking at shares of Warner Brothers, this is ticker WBD here, soaring as much as 12%. That's for the highest level since 2022. But the news here being that the company said it started a review of strategic alternatives to maximize shareholder value in light of unsolicited interest that it's received from multiple parties for both the entire company and Warner Brothers here. And it was earlier reported that Netflix and Comcast are among the interested parties here. Lots to parse. Lots going on here, Paul, in this situation.
Yeah, but what you have there is you have a CEO and you have a board that wants to do a deal. That's usually not the case. So even I could get something done here.
Gosh, where's Paramount in all of this?
Yes, exactly. Good question.
We need Geetha. We'll look at her later.
Yeah.
Lastly, Coca-Cola.
Yes, let's look at a bit of the consumer space. Not sure if you guys are avid drinkers of Coca-Cola, but we did see Coca-Cola beating Okay, there you go. Well, they beat expectations. Clearly, maybe you are a contributor here, but Coca-Cola, ticker KO, posting third quarter sales growth that beat expectations here. They had organic revenue growth of 6%, adjusted earnings per share also outpacing expectations. And this is all kind of due to the price hikes and the low sugar drinks. It seems as though a lot of customers are snapping up these drinks based off of those different propelling factors here.
All right, Nora, thanks so much for joining us. Really appreciate it. Nora Melinda there, Bloomberg News, giving us the latest on the stock market. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. I tell you, it's good days to be a defense contractor. I mean, that we had, all these companies reporting earnings, Lockheed Martin, just Raytheon, some really good numbers. GE Aerospace, RTX, which is your Raytheon, also reported some good numbers. Let's go to the analyst who covers this stuff for Bloomberg Intelligence, George Ferguson. He's been covering these companies for decades, and he is Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. George, let's start with GE Aerospace. Here's a company that, we've all grown up with GE putting itself together, then breaking itself apart into smaller companies. I think the market likes this GE Aerospace business, doesn't it?
Yeah, so I think it's telling, too, that Larry Culp, the CEO of the combined companies, broke them apart and went with the aerospace business, right? That was the crown jewel. They're the largest maker of jet engines globally. I think they have probably the best technology for jet engines globally. And look, this was a really nice quarter. Margins were even stronger than we expected. I think they may be close to plateauing, though, here. There's just a heavy demand for aircraft maintenance, even higher than sort of the amount of the increase in airline traffic would indicate. Just a lot of pent-up demand, I think, coming out of the pandemic, and some of the newer technology engines just aren't as robust. So a lot of people flying the old ones longer. And we heard a lot of good news about supply chain. Supply chain sounded like it was delivering for Larry. It's generally been a challenge. It was delivering, and he had parts to put on airplanes, and those were high-margin parts, and he showed it in the financial statements.
Hey, George, you mentioned maintenance and repair. So does that help the company kind of offset those higher costs when you have the rise in the new engine deliveries?
Yeah, so like I said, I think we might be seeing a plateau here in the margins we're gonna get out of this company. So the airframers, Boeing and Airbus, have been slow in ramping up deliveries because they're working through their supply chain challenges. So we really see Boeing and Airbus increasing deliveries of new aircraft all the way to the back end of the decade. And that increase in deliveries is will come with those new engines from GE and RTX, for that matter, and those are dilutive to margins. So, so they're kind of in this sweet spot where the original equipment, shipments haven't taken off yet because Boeing and Airbus are working on that supply chain, and they're doing a lot of spare parts deliveries, and that's really juicing profitability very strongly. So next year, I think, becomes more challenging on the whole profitability front.
All right, George, RTX, it's the old Raytheon. That's kind of how I know this company. Tell us, the business of RTX, what are their specialties and what did they report?
So they make jet engines as well, right? Competitor to GE. They make the Pratt & Whitney geared turbofan. They have the Collins business, which is all kinds of parts for aircraft. You know, it could be brakes, it could be landing gear. And then they've got the Raytheon business, which is the old Raytheon that you know, the defense contractor from up Boston area. And they make radars, they make missiles, they make air defense kind of equipment, and like all of those businesses in that portfolio are really clicking right now. Look, defense is going to grow slower. Yeah. It takes time. The backlog builds quickly, but it takes a lot longer to build some of those products because they're not, running down a line that are making, as many like, 737s or A320s where you're doing 500 or 600 a year. These are a lot slower cadence, but we're seeing a lot of demand from customers around the world for missiles and for air defense. And so that backlog continues to build, and they're building margin in that business. They're still at kind of 11-ish, 12-ish% margin that was quite good in that defense business. And then at the same time, like I just told you for GE, the strength of demand for aircraft maintenance right now and the high margin parts that go into it thoroughly drove that Collins business. Their Collins business is a 13-ish, 14%-ish operating margin business, really seeing strong growth. Their engine business is not as strong as GE's. GE's returns in the 20+% margins. Pratt & Whitney's kind of an 8 to 9% operating margin. They've had problems with their latest narrow-body engines, so they're managing some of those issues. They just don't have the volume that GE has. But they continue to see margin growth in that business, too, as they deliver spare parts into some of the older legacy V2500 engines. We know them as that power old A320s. Really did a nice job in that business. And they raised guidance even more than GE going into the last quarter of the year. I think they had some of that in their back pocket, but it looked pretty nice.
Hey, George, before you go, about a minute left. They're one of the largest recipients of U.S. federal contract funding. We're talking about RTX. Can you name some of the projects they're working on with the Trump administration? What are they working on?
Yeah, so, I mean, they're going to do things like Patriot missile systems. They're going to do a bunch of, Patriot air defense systems. They're going to do a bunch of missile systems like GEM-T, right? You could think of, in air defense, they make radars as well. You use a radar, you find a target, you sort all the targets you got coming at it, and then you have to shoot a high-value interceptor at that target. And the reason that interceptor is so high value is it's got to go and hit a missile approaching, your position, your country, whatever, which means you put a lot of value add in that missile so it can go find another one and destroy it. So that's part of what they're building. They'll also probably be involved in the Global Dome or whatever, our version of Iron Dome.
Nice. Golden Dome, yeah.
I mean, yeah, so there's just a lot of demand for the products that they're going to build.
It's good to be a defense contractor today. That's my takeaway from today's results. George Ferguson, Bloomberg Intelligence, Senior Aerospace, Defense, and Airlines Analyst. It's also good to be an automaker. General Motors put out some really good numbers here, and the stock's reacting up double digits here. Steve Mann joins us, Bloomberg Intelligence, Global Autos and Industrials Research Analyst. Steve, what are your takeaways from the results from our friends at General Motors?
Hey, Paul. I mean, the earnings report was just half of the story. The call was very, very positive. That's my takeaway. And the biggest takeaway from that call was really the mix shift towards more, selling more bigger SUVs, the pickup trucks. Those are usually the highest margin business for them.
Now, they did get some relief from the Trump administration's tariffs on auto parts, right? Wasn't that part of the discussions?
Yeah, tariffs is one thing, but I think for 2026, the stars are really aligning for higher profit for General Motors. So you got lower tariffs, but lower tariff costs for General Motors and for the industry, right? You have actually the elimination of emission penalties. So a lot of in the past, automakers in the U.S. had to pay a penalty for selling these gas-guzzling SUVs and pickup trucks. Now they don't have to do that anymore. So that's going to contribute to the bottom line, right? And then they're also not going to sell as many EVs. EVs are basically loss-making for many of the automakers.
Yep.
So, you know, you got all these contributors for the 2026 earnings.
And Steve, maybe this is just me being a cynical Wall Street guy, but reading between the lines, I took away that message that they were backing up as much as they possibly could from EVs. And if I'm an investor, that's a positive for me from a profitability standpoint. Is that too much reading between the lines, or do you think GM and maybe even Ford and Stellantis are backing away?
Absolutely not. They are backing away. GM just took a $1.6 billion charge. Most of it was to rationalize EV production capacity in the U.S. I think everybody is seeing that EV sales in the U.S. in the next quarter, maybe 2 quarters, will be down quite a bit after the pull ahead demand. We'll see what the penetration is beyond that. But you know, they're cutting capacity. They're going to have to revisit their portfolio, especially GM. They have launched more vehicles than, you know, their Detroit rivals, so they're going to have to look at that. So, you know, EVs for GM, you know, they call it variable profit, but at the end of the day, the bottom line is still loss making for these vehicles. And you know, when they sell less of them, the mix shift improves. You know, and then now they're probably going to even sell more SUVs and pickup trucks. Those are typically the highest margin business vehicles for them.
So what exactly did Mary Barra have to say about the EV adoption? Did she give any specific numbers or dates, extend any dates?
No, she wouldn't. She didn't give any dates, but it is still a priority, quote unquote priority. She called it the North Star for General Motors. She thinks that long term, and she didn't really define what long term is that there's going to be a continued shift into EVs. And I think, you know, when you listen to some of the consumers in the marketplace, you know, a lot of them who switched over to EVs do like them. Not sure if that the EVs are going to be their only vehicle. I think it fits, especially in the U.S. marketplace, as a second vehicle, a commuter vehicle. So I think, you know, there will be adoption of EVs. I think even before the $7,500 credit was available, there was some, you know, we did see a start of EV adoption.
All right, Steve. Good stuff right there. I'm just looking at the stocks. You know, Ford year-to-date up 25%. General Motors year-to-date up 25%. So the market's reacting well to maybe a little bit of a shifting strategy from the automaker. Steve Mann, Bloomberg Intelligence General, Global Autos and Industrials Research Analyst, giving us the recap there on GM earning some better-than-expected results. Perhaps shifting away on the margin from the EVs, at least in the near to intermediate term, and that has a positive impact on the P&L there. So we'll keep an eye on that for General Motors. Both of those stocks trading well. The market, S&P's up 5, the Dow's up 370, and the NASDAQ is down 55 points. 10-year Treasury yield, 3.95%. How about that? Let's go out there and refinance some mortgages, maybe. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
11:21 on Wall Street. I'm Alexis Christoforous in this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Busy day on the markets. This just coming over the Bloomberg terminal. Netflix and Comcast said to be interested in Warner Brothers Studios. We've got shares of Warner Brothers Discovery up better than 10% on this news. As for the markets, the Dow extending yesterday's rally, but the broader market is treading water as Wall Street puts aside the trade war and the government shutdown and focuses instead on a strong batch of quarterly earnings. The Dow Industrials up 350 points right now, but the S&P 500 is up just about 5, and the NASDAQ Composite giving back about 50. Gold now down 5.25%, biggest drop there since 2013. Elsewhere, we have got shares of GE up 2% after raising its full-year outlook for a second consecutive quarter as the jet engine maker cashes in on strong air travel demand and high demand for maintenance and new engines. And Halliburton beat Wall Street estimates for third-quarter profits, supported by steady North American oil field activity and equipment demand. The company also said its cost-cutting measures are expected to save it $400 million annually. We've got shares of Halliburton up now, better than 9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back over to Paul and Lisa and Bloomberg Intelligence.
All right, Alexis, thank you so much. We appreciate that. We've got Lisa Mateo sitting in for Scarlett Fu. We are here outside Washington, D.C., broadcasting live from the Commonwealth Financial Network's 2025 National Conference at the Gaylord National Resort in Maryland. Perfect timing for our next guest. I mean, look at this red headline. Netflix and Comcast said to be interested in Warner Brothers. Who isn't interested in Warner Brothers Discovery? Again, I spent most of my career putting that company together. Now they're taking it apart. Go figure. That's how the bankers and lawyers get paid. That's how it works, folks. Geetha Ranganathan, Bloomberg Intelligence analyst. She covers all the media stuff. She's been covering media for, gosh, north of 15 years now, one of the best on the street. Geetha, I'm going to put it to you. You got to get this deal done. I mean, what happens to Warner Brothers Discovery here?
Oh, they're going to get sold, Paul, one way or the other, and David Zaslav will make sure of that. So his whole move this morning, yes, we got the red headline on Netflix and Comcast, but before that, basically what Warner Brothers management team did is they kind of launched this whole strategic review of the company, which was basically amounting to just putting on like a for sale sign. So, you know, we know that they wanted to already split their company into two parts. You have the low growth business, which was TV networks. You have the other high growth streaming and studios. But really the problem for Warner Brothers Discovery was that they were, you know, I guess the way that people were thinking about it was not everybody was kind of incentivized to put in a bid for the whole company other than Paramount. And this is really the way that they kind of drum up interest from everybody to kind of get that sale process going.
So where does Paramount stand? I mean, wasn't their offer too low? Are they going to come back? What are they doing now?
Yeah, so, you know, we had a Bloomberg report suggesting that Paramount made a $20 per share offer, which was rejected. There were multiple reports this morning suggested that Paramount actually made several bids for Warner Brothers Discovery, all higher than that reported $20 price. So probably somewhere even upwards of $25. But again, those were rejected. So this is basically, you know, really kind of forcing Paramount's hand to raise their price pretty significantly. We know it's been reported that, you know, David Zaslav is seeking something like $40 per share for all of the company. And so this is really his way, you know, kind of putting, you know, basically inviting everybody out there to bid on all of the assets, really kind of forcing Paramount to take that price up, or the price point up for Warner Brothers pretty dramatically.
All right, here's my prediction. You heard it here, folks. This will be the biggest M&A ticket, certainly in the TMT space ever, because they have so many companies have to be bought and sold here, so much financing, so much refinancing. Everybody's going to get paid here. The name that kind of came out of nowhere for some people, Geetha, is Comcast. But we know Brian Roberts. We know the team there. They are very comfortable doing transformational deals here. What do you think Comcast's strategy is?
So this actually, Paul, if you just kind of think about it, even more than Netflix, and you know this really well, that Warner Brothers Discovery really makes perfect sense for Comcast. I mean, they have linear TV assets. They have a streaming business with Peacock. They have a fabulous studio with Universal. They could do a lot with the Warner Brothers Discovery assets. And I think everybody's kind of looking at this as a once in a generation, as a once in a lifetime opportunity. I mean, you let Warner Brothers Discovery go, there's really nothing else on the market that even compares, that even comes close to these assets. I mean, you have top tier IP here, whether you're thinking about DC Comics or Harry Potter or Game of Thrones. So everybody knows they have to do something. I think it makes a lot of sense for Comcast. The only problem for them is really going to be getting regulatory approval. We know that, Brian Roberts has not exactly been in the good graces of either the FCC or the Trump administration. So that's going to be a difficult hurdle to cross. And then, of course, financing. I mean, this is going to be, as you just said, it's going to be the biggest deal probably for a long time to come in the media space. So we're looking at, tens of billions of dollars, if not maybe even hundreds.
Yeah, I'm not going to be a part of it.
You're not.
I'm sitting here with you.
Darn it.
Exactly. All right, I got my bite of that apple years ago.
He did.
So anyway, good stuff, Geetha. Thanks so much for joining us there, Geetha Ranganathan. She covers all the media space right now, and what that means is she has to be kind of an M&A banker, really value all these assets for all these media companies and maybe where they might sit best in 2 or 3 years' time. So check out her research on the Bloomberg Terminal BIGO. She writes extensively on these big media companies and kind of where the values are there. Let's get back to this market here. Brian Sanford joins us. He's a managing partner at Union Street Financial, joining us here live at the conference here, the Commonwealth Financial Network's 2025 conference. Thanks so much for joining us here. What's the conversation you're having with your clients today? Because there are a lot of cross currents out there for individual investors to kind of deal with. And it would be easy to panic, to get concerned, to get it, maybe sell early, buy too late. What are the conversations you have?
Sure. Well, thanks for the question. I think that there's a lot of exciting things happening, right? I look at the CapEx cycle that we're in currently, right? The hyperscalers willing to spend. I think that's very healthy for the markets, right? We've obviously had a great, almost 3 full years here since the lows of 22. But as we continue to move forward, it's a lot different than it was, I would say, in the late 90s, early 2000s, right? That CapEx cycle, telecom, was mostly led by companies that weren't in great credit quality, right? They were leveraging their balance sheets. They didn't have the cash. So when I look at today, I see, companies say the data center spend is $3 trillion. And about half of that is going to come from cash, right? From hyperscalers' balance sheets. So that, I think, is healthy. Add another $300 to $400 billion for energy, power needs, right? A lot of that money is already here, right? We don't have to go into the credit markets for too much of it. So what we're telling clients is, we have come a long way, but at the same time, I think that there's good momentum and movement forward. We don't want to cut a rally short, but also risk management is always key for us. We're always, making sure that clients have the liquidity they need. We're balancing fixed income as well, right? So it's multifaceted, but I think that we still have a strong market.
I got to ask, because we were talking about this in the break, and I'm going to put you on the spot here. You moved from a wirehouse to independence. Is it a difficult transition to make? What was your thought process behind it? I mean, what did it take to do that?
Difficult. I mean, I think for us specifically, every business is different. We're very proud of the trust level that we have with our client base, right? So when we were making that move and kind of going through that whole process, it's not easy. It's a heavy lift. I think anyone who's gone through it will tell you that. But we were confident with the relationships that we had. And really, from a service standpoint, that's why we're here at Commonwealth. We put that out as hugely important to us. We're a very high-touch point business with our clients. So having a rock star service department was probably the most important thing. There's a lot of moving parts, but we're thrilled to be here.
In terms of the risk profile for your maybe called like a model portfolio for one of your average clients. Are you dialing up the risk these days, dialing it down? Because we've heard both today.
Sure. We've been invested, right? I would say we're increasing any risk. I'm just kind of maintaining. We utilize private investments, so we have some illiquidity premium in there with private equity and private real estate and things like that. So we definitely take the ocean liner approach as opposed to the speedboat. We're built for long-term, more of like an endowment style strategy. So on the equity side, yeah, we're fully invested there, and happy that that's the case, right? It's been a good market and people are being rewarded. But yeah, not increasing, but not decreasing.
How pivotal will this week's tech earnings be?
I mean, I think it's always big, right?
Sure.
They make up, with 30-40% of the S&P. But I'm interested to see how these companies do. I think I already mentioned it, but the data center spend, right? The IT spend is hugely important. I don't expect any real surprises there. I think everyone is moving, is going to continue with the game plan. I think that's at least what I'm expecting. So I think they're going to do well. It's more about the forward guidance that I'm more interested in.
I see in your notes here you guys have a little bit of a focus on energy infrastructure. Talk to us about that.
Yeah, I'm glad you brought that up because I think that's a really exciting space. It's bipartisan, right? It's not something that's going to be, I think, going away. And I think for us to be competitive on the global scale, right now we have this shining star in AI in the United States. I think we need to maintain that, right? And we're going to need every electron we can get. Chris Wright, Energy Secretary, I think has done a fantastic job. The Biden administration did a lot of work in cutting or subsidizing clean energy, and now this administration is doing similar things with deregulation. So I think that's really important. We can't have a Ferrari without gas to put in it, right? And so I'm excited about that. I think there's some developments in the nuclear space which are really exciting. And just that whole movement, I think, changing the narrative around, what our energy needs are, becoming a net exporter, those sort of things, I think are going to be really important for us to maintain with all the geopolitical stuff going on and, different large language models that are out there. We're going to need all the energy we can get.
Well, you mentioned it, Brian. So is the bigger deal for markets next week's Fed decision or the meeting between, Presidents Trump and Xi?
Well, that's good. I think they're both really important. That's a loaded question. But, yeah, the geopolitical stuff is always going to be there. We have two superpowers at this point who both, want a seat at the table. I think we're also at a point where both countries realize that we need to decouple a bit. We're a little bit too integrated. So I think that's some of the conversations that they should be having is, basically saying, hey, we can't be so reliant on each other, whether it's rare earths or, different exports. We need to figure out a path forward. Yeah.
Brian, thanks so much for joining us there. Brian Sanford, he is managing partner at Union Street Financial, giving us some thoughts on these markets here. The markets are kind of churning out there, folks. We got the S&P up about 7 points, the Dow up 330. That's 0.7%, but the Nasdaq taking a little bit of a break today, down about 25 points. That's 0.1%. Yields coming in. 10-year Treasury up 3.95%. How about that? We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm Alexis Christoforous with your Bloomberg Business Flash. A fresh batch of earnings reports are flooding the stock market today as the major averages are mixed. We've got the Dow Jones Industrial Average continuing yesterday's big rally, up another 325 points right now, 0.7%. But the broader market is pulling back a bit. The S&P 500 up just 6.5 points right now, while the NASDAQ Composite is down about 30. The Russell 2000 also slightly down after yesterday's big rally. And we've also got a sell-off in precious metals, something we haven't seen for quite some time. Spot gold is down 5% right now. We've got spot silver off about 8%. It's gold's biggest decline since 2013 and silver's biggest drop since 2021. The stronger dollar making these precious metals more expensive for buyers. JP Morgan Chase's new multi-billion-dollar Manhattan headquarters is officially open. CEO Jamie Dimon cut the ribbon at 270 Park Avenue today, capping a project announced nearly 8 years ago. The 60-story building will fit about 10,000 employees. We've also got Lockheed Martin down more than 3.6% today, and Northrop Grumman off more than 1%, despite both of those defense companies reporting better than expected earnings. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Now back to Lisa and Paul and Bloomberg Intelligence.
All right. Thank you, Alexis. Yes, she was just talking about it. We have a mixed look on the screen. We are here live at Commonwealth Financial Network's 2025 National Conference. Joining us now is Emily Promise. She's president of Blakely Financial. I'm glad to see you here, Emily. Thank you for joining us. I'm glad to see another woman sitting next to me. This is incredible. Let's start there. I mean, are you seeing more women in the financial services industry?
I think we are. I think we're starting to see a trend where women are seeing that this is a really valid career path for them. Women, they may not be inclined to it because they think, oh, I'm going to have to trade stocks all day, but there's so much more to financial planning than investment management. I mean, a lot of people come to us for that holistic planning approach, and for a female to come into this field, they fit in so nicely into that.
How so? Yeah.
Yeah, so I think with being a woman, a little bit biased here, but, you know, we have that empathy for others, and we take a holistic approach when they come into the office. Just being a female, we're able to connect with that widow or the woman going through divorce, and then also just the empathy to see them through the whole situation rather than just looking at them as a slew of investment accounts. We see them as a whole person.
How do you view, at Blakely Financial, how do you view financial planning? How do you start the process? What's the process look like?
Yeah, that's a great question. So at Blakely Financial, every client that comes into our firm, we require them to do a financial plan. So we won't manage your investments unless we're doing a full plan for you. And we really believe in that, because if we don't know your goals and where you want to go, we can't manage your investments properly. The two are intertwined. So our financial planning process starts with an intake form, gathering all the documents about the client. And we're not just talking investment statements. We're talking pay stubs, employee benefit packets, any mortgages, real estates, business evaluations, anything and everything about the couple or the individual we're looking at to build a full picture of who they are. And then from there, it's the conversations about what are your goals in life, both in the short term, the long term, and what are your concerns. We work with a lot of multi-generational families, so oftentimes it's how do we steward that wealth for the next generation, and planning for that as well.
What's the sentiment among your clients? I mean, with everything we've been talking about, from government shutdowns to tariffs to trade, I mean, just that in mind, how are they feeling?
I would say that our clients are feeling pretty confident, and I would say that it's because of the trust that we develop with them. They know that it is our job to manage their portfolios, and that we have their best interest in mind. Also, by being planning focused, we talk about this during the planning process. We talk about the fact that there's going to be up years in the market and there's going to be down years, and it's how do we weather the storm and make sure that they're always on track for their goals, no matter what's going on in the market. So I would say, no, I'm not getting calls from clients very often asking about the markets, because they know that's what we're looking at.
You talk about generational wealth, and one of the big stories in your business and wealth management, financial planning, is this big transfer of wealth. I see just massive numbers, trillions of dollars, coming from the boomer generation down to the younger generations, and it's one of the biggest transfers of wealth ever. How do you guys think about that from the 30,000-foot level when you're talking to your clients?
Certainly. I think over the last couple of years, too, as a firm, we've really seen that as a growth point for our clients, is that we've started to get that senior generation come to us and say, you know, our investments are managed properly, but we really need that whole family office support. We need someone that's going to come and look at us and say, okay, we also want you to meet with our kids and our grandkids. Right? We're not sharing necessarily numbers of what the family's estate is worth, but it's talking about the stewardship of that wealth. So maybe how the parents would like their children to use it, whether it's charitable intention, education for their future grandchildren, whatever that may be. With this transfer, I think it comes to the point where a lot of families are having to have conversations about what they want done with this wealth.
How do you attract that customer, that multi-generational customer?
Yeah, that's a great question. So our firm, we have 22 team members. We have 5 office locations. But one thing that's unique is, you know, I'm president of the firm. I'm younger. I'm not your average age of an advisor. And one thing that's unique about our firm is I've also developed that culture within. We have a really strong intern program. 6 of our full-time team members right now were interns, and they came up the ranks. So what's really unique, and I've had clients say this, is they come into our office, they look at our website, they meet the team, and they think to themselves, okay, this firm, not only Emily, but her team members will be here not only to manage my money, but to actually manage it for those generations, because they see that we've built that structure not only on the planning side, which I lead, but also on the investment team. We have Next Gen on our investment team, so there's that same philosophy that will be passed along once our director of investment operations, you know, retires. So we have built that culture internally.
How about taxes? I know for a lot of people, taxes are they're a worry, they're a concern. How do you guys approach taxes and all of this planning?
Yeah, we get that question a lot. Clients come in and they're like, okay, what's the best way to mitigate taxes? We all know that there's no silver bullet to that, but I think it's being, you know, conversational with the client, whether it's tax efficient investments or whether it's charitable intentions, right? Or working with an estate attorney that oftentimes also bringing in the CPA to make sure we're taking that holistic approach. So we may have ideas from an investment standpoint, or again, simply such as a donor advised fund, but we're looping in the other professionals to make sure we develop a holistic strategy for the clients.
How did you get your start in this business? For a woman coming in, it's not, you know, something typical. So how did you get interested in it?
Yeah, so I got interested in finance. I was in high school, and I had the opportunity to do a senior project my senior year in high school, and I had won an award for athletics, the most random thing, and my prize was to meet the state of Massachusetts, the treasurer, and had a phenomenal mentor there that talked me through the different areas in finance. So when I got to be a freshman in college, I cold called local advisors to see if anyone was hiring or would want an intern. And I ended up, you know, getting an internship at Blakely Financial. We were much smaller at the time, one office, but a great firm, again, planning focused. And I saw the career path there. You know, I had the thought of maybe I want to do asset management or investment banking, did some internships in that realm, but then came back to Blakely and said, you know, here I'm really able to make a difference in the lives of the families we work with. It goes well beyond just investment management. I mean, we're taking care of these families.
Thank you so much. Really appreciate it, Emily.
Yeah,
Emily Promise bringing this. Some thoughts on kind of managing the business from a little bit different perspective on the wealth management, financial planning side. So that's interesting there. Emily Promise, she's president of Blakely Financial, joining us on site here at the Commonwealth Financial Network's 2025 National Conference at the Gaylord National Resort in Maryland. Looking at these markets here, we've got some mixed performance here. I don't think the market really has a sense of what it wants to do here, but those earnings coming out of Industrial America today were really good. Defense contractors, General
RTX,
Motors, RTX, just kind of goes to the point of corporate America here when just looking at these earnings. And the managements are saying it in their remarks that they're learning to live in a world with uncertainty and tariffs. They're managing in their cost structure, and they seem to be managing some of those costs and putting up some good numbers, better than expected numbers, good margins, and I think that's generally a good thing for investors that really need strong earnings.
And they definitely do. We're going to hear from about Coca-Cola, Philip Morris coming up too. That's with Kenneth Shea. He's Bloomberg Intelligence Senior Consumer Products Analyst. So we'll stay tuned for that as well.
Absolutely. All right, we're going to have more here from this conference here as we look at this market. WTI crude oil finally gets a little bit of a bid out there. We're sitting at $57.70. Had been trading off dramatically over the last 4 or 5 days on supply concerns. Is there a glut out there in global crude? That's kind of the story that's been milling around just over the last several days. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Lisa Mateo sitting in for Scarlett Fu. I'm Paul Sweeney. We're broadcasting live from the Commonwealth Financial Network's 2025 National Conference at the Gaylord National Resort in Maryland, just across the Potomac River from Washington, D.C. Big day for earnings. We had the industrial companies out. We also had General Motors out. Got some consumer companies coming out with earnings today as well. Philip Morris, Coca-Cola, and we go to Ken Shea. He covers all these consumer-facing companies for Bloomberg Intelligence. Hey, Ken, let's start with Coca-Cola. I am a Coca-Cola person, but again, it's been widely reported that if you put a Pepsi in front of me, I'm just as happy. But talk to us about Coca-Cola, Ken. What did you hear from them?
Sure. Hi, Paul. So Coca-Cola today, they reported numbers that were slightly better than expected. The organic growth, probably the biggest metric of all, was up about 6%. Operating margins widened better than expected. EPS came in a little better. So that's why probably why the shares are trading a little higher today. So it's good. They reiterated their expectations for the full year. They gave a hint for next year. They said basically they see lots of opportunities in some product innovation. So look out for things like more rollout of the zero Coke and Sprites, zero sugar, I should say, more Fairlife protein drinks, more enhanced and low sugar sports drinks and enhanced waters. So these are really the franchise full beverage products that they're known for, and so they're going to continue to innovate next year. I should add one other quick thing. Another big news with Coke today is that they were successful in sort of the refranchising. Basically what that means is they're monetizing a lot of their bottling assets. They were instrumental in selling some 75% of their Coca-Cola Africa unit today. So anyway, what that does is streamlines and strengthens their global bottling network. And so I think that was another reason for investor encouragement today.
Yeah, that was some big news that came out earlier, before the earnings came out. Now, if we talk about earnings, you said that consumers are still buying the drinks, but they're buying them at higher prices too, no?
They are, for the most part, and that's one of the things Coca-Cola did mention today. He said, you get a company that's this global, you're going to have pockets of strength and weakness. And so they said, in some areas they're doing well. People are trading up and still favoring the premium products. Affordability, though, is a key issue in other big markets. So Mexico, for instance, is having a tough time, macroeconomics. And by the way, Mexico is also going to pass a big sugar tax beginning of next year. So they're a little wary on that. And so they're going to be rolling out a lot of affordability, universal bottles, returnable bottles, smaller packages sizes. So the company, it's been doing this a long time, though. So they've been through, some of these ebbs and flows of the markets. It's well positioned.
Philip Morris, this is the tobacco company. They had some numbers out today. Stock trading down a little bit here today.
Yeah, Paul, Philip Morris also hit their numbers. It was a really strong quarter. EPS on a comparable basis of 17%. Strong top-line margin improvement. It was hard to find any fault with the actual numbers that came in. But I think what may have gotten some people a little nervous was that they lowered their guidance for organic operating earnings. And a lot of that is just reinvestment in the business. One of the biggest successes in recent years has been this Zyn oral nicotine product. It's a non-tobacco pouch product. You put in your mouth, you don't have to spit, you get your nicotine buzz that way. It's doing wonderful. The company said that now that it has recently added some manufacturing capacity and has some more supplies, it's going to look to expand the market. How do you expand the market? You convince smokers to move to a non-combustible variety, particularly in the U.S. So it's spending quite a bit of money to do that. And so for those, with a short-term mind, I guess, they were a little nervous about, that lowered guidance for operating earnings. But I think they're doing the smart thing longer term, though. If you're a long-term investor, it's hard to find fault in that strategy.
How big is their smoke-free business?
It's now about 41% of their total business and way ahead of their competitors. When I say smoke-free, you're talking about a combination of things. The so-called heat not burn IQOS family of products that contains actually some nicotine in there that it heats it and doesn't burn it. You have the Revive e-vapor product, kind of like an e-cigarette. And then you also have the Zyn oral nicotine products. So it's combined, you have really three really strong franchises. And they're at the point now where on a combined basis, they're more profitable from an operating margin standpoint than their conventional cigarette business. So the faster this thing grows and it has a bigger proportion of their business, it's all good from a margin standpoint.
Boy, I tell you, when I was over in Italy, everybody's got those the vape cigarettes. Everybody.
I'm always wondering if they're going to get a hit because of cannabis, like more people popping gummies instead of.
I don't know.
I don't know.
Stuff, but that's right up Ken's alley there. All right, Ken, thanks so much for joining us. Ken Shea covers all the consumer-facing stocks, including the weed stocks. He covers the cannabis. He had some of the original research on Wall Street out on the cannabis industry, like 7, 8, 9 years ago, kind of framing out the size of the business and the growth and the opportunities. And it was actually a really well-read piece of research, as you can imagine.
I'm sure.
So Ken Shea, he's our weed guy. So anyway, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just moments. And that wraps it up for Lisa Mateo and me from the Commonwealth National Conference in the 2025 conference. We are at the Gaylord National Resort. We thank the good folks at Gaylord. Once again, they throw a great conference. We got a great time out here in Maryland, right across the river from Washington, D.C. More Bloomberg Radio coming up right now. This is Bloomberg. Good morning.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. A man pardoned for the Capitol attack is now charged with threatening to kill the top House Democrat Hakeem Jeffries. Christopher Moynihan's pleaded not guilty. CBS's Jake Rosen says text messages are part of the prosecution case.
He said that he planned to, quote, eliminate Jeffries while Jeffries was speaking at an event in New York City at the Economic Club of New York on Monday. According to court documents in the state of New York, Moynihan wrote, Hakeem Jeffries makes a speech in a few days. I cannot allow this terrorist to live.
Vice President Vance is in Israel to shore up the Gaza ceasefire, and he says he is optimistic it will hold.
Here at the Civilian Military Cooperation Center, which we are announcing the opening of, you have Israelis and Americans working hand in hand to try to begin the plan to rebuild Gaza, to implement a long-term peace, and to actually ensure that you have security forces on the ground in Gaza, not composed of Americans, who can keep the peace over the long term.
Tomorrow he meets with Israeli Prime Minister Netanyahu. Now to Paris, CBS's Elizabeth Palmer is following the investigation after the stunning jewel heist at the Louvre.
A recent security audit noted that 35% of the rooms in the Denon wing, where the jewels were, have no security cameras. And France's justice minister admitted the glass on the cases wasn't strong enough. The thieves were able to cut right through it.
Here at home, CBS's Michael Wallace tells us Warner Brothers Discovery is drawing interest from potential buyers.
Just a few months ago, the entertainment giant announced plans to split into two companies. Now it says it is reviewing unsolicited interest from multiple parties for both the entire company and for Warner Brothers alone. It won't say who the potential bidders are, but CNBC reports Netflix and Comcast are interested. There are also reports Paramount Skydance, the parent company of CBS News, made an offer for Warner Brothers Discovery last month, but was rejected.
Dozens of families and attorneys general are suing the gaming platform Roblox, alleging it allows sexual predators access to children. Now, as we hear from CBS's Peter King, Florida has issued criminal subpoenas to Roblox.
Florida Attorney General James Uthmeyer says the subpoenas will let prosecutors find evidence of what he calls criminal activity,
as well as evidence on the predators that are out there and the victims that are abused.
Uthmeyer accuses Roblox of profiting from kids while failing to protect them.
Tropical storm Melissa has formed in the Caribbean. A hurricane watch is up for parts of Haiti. Checking Wall Street's, right now the Dow Jones Industrial Average up 296, the S&P 500 up 12. This is CBS News. The NBA regular season opens tonight.
Reigning NBA MVP Shai Gilgeous-Alexander and the Oklahoma City Thunder begin defense of their NBA title tonight when they open up the season against the Houston Rockets. SGA says he's excited to begin at home.
It should be very fun. The challenge is going to be reeling all the emotions and the joy and the excitement, reeling it all in to be able to get the job done and start their season off the right way. But I think this group is well equipped to do so.
Meanwhile, five-time All-Star Luka Doncic and the Lakers open up the season against the Warriors in Los Angeles. For the first time in 23 years, LeBron James will not be playing in the season opener as he deals with sciatica. The NBA's two-game slate tips off at 7:30 Eastern. Erica Herskowitz for CBS News.
The Toronto Blue Jays punched a ticket to the World Series with a 4-3 Game 7 win over Seattle to take the American League Championship Series. The Jays will take on the National League champion Los Angeles Dodgers. World Series begins on Friday. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The government shutdown hits day 21. Let's have lunch in the Rose Garden. Welcome to the Tuesday edition as President Trump hosts Republican senators at the White House today for lunch to say thank you for not blinking. And there are no signs of this ending, as we'll get the latest momentarily from Jonathan Tamari at Bloomberg Government. He's live on Capitol Hill. What's happening to gold today? We'll ask Mike McGlone from Bloomberg Intelligence as gold slumps the most we've seen in 12 years. And with oil prices falling, we're going to follow up on the idea of secondary sanctions when we spend some time with Bloomberg national security reporter Jamie Tarabay. Analysis this hour from our political panel. Bloomberg Politics contributor Jeannie Shanzano is with us, our Democratic analyst, alongside Republican strategist Maura Gillespie. It's all after a look at Wall Street. For that, we turn to Alexis Christoforous at World Headquarters in New York. Alexis.
Thanks very much, Joe. We've got stocks mostly higher as earnings season kicks into high gear. The Dow Jones Industrial Average off its best level of the session, but still notching a gain of 291 points. The gains are less enthusiastic in the broader market, where the S&P 500 is up just 11. The NASDAQ has now turned positive and is up about 8 points. You heard Joe talk about gold prices. Well, they're pulling back after their torrid run-up, down now more than 5%, biggest one-day drop for spot gold in 12 years. Shares of General Electric up 1% after raising its full-year outlook for a second consecutive quarter. That's due to strong air travel demand. But the big earnings story comes after the closing bell. That's when Netflix reports its third quarter results. Heath Ranganathan covers media for Bloomberg Intelligence.
The big number that everybody is looking for, obviously, now that they no longer disclose subscriber metrics, is the revenue growth number. So, they've guided to about 17% revenue growth. Operating margin, of course, also upwards of 30%. They've guided to about 31% or so.
Netflix and Comcast are reportedly among the companies interested in Warner Brothers movie and TV studios. Paramount Skydance, the parent company of CBS, has already reportedly made at least one offer for the whole company and was rejected. You'll remember Warner Brothers announced earlier this year that it would split into two separate companies, but now it's said to be reviewing these unsolicited offers. Checking these stocks, we've got Warner Brothers up 11%, Netflix up 0.2%, Comcast up 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back over to Joe Matthew in Balance of Power.
All right, Alexis, great to have you aboard today, and welcome to the Tuesday edition of Balance of Power here on Bloomberg Radio. We're on your satellite radio at channel 121, and you can always watch the radio on TV by going to YouTube. Search Bloomberg Business News Live. We'll, of course, welcome our global television audience to the second hour of Balance of Power as we dig into day 21. You still keeping track? Not as many people are talking about it, and of course, we don't have as many lawmakers in town right now with a House that's been on recess for a full month. The Speaker's strategy, in part, to keep the stare down happening and put the pressure, presumably, on Democrats, who, of course, are still not blinking either. So, yes, there's no solution in sight. And now we're floating the idea. It was in all the tip sheets this morning, and it's on the tips of many tongues on Capitol Hill, a full-year CR. And if you go back a couple of months, we were talking about that same idea. Could have done that months ago, which, of course, would upset a lot of budget hawks and defense hawks while we're out it. But keep that in mind if this ends up in a full year CR, because if everybody came together today and started singing Kumbaya, we would still have a government shutdown set for November 21st. So either they're going to have to change that date or the entire concept, potentially, of what is going on here. We're looking at the notices go out in a number of states around the country. In Georgia, reports monthly Obamacare premiums could as much as quadruple. In Maine, plans will see premiums rise by an average of 24% next year. In Michigan, Blue Cross average rate for Obamacare could surpass 18%. That's before factoring in the expiration. So that's the backdrop of this conversation. Now, they're probably getting together right now. I don't know. James got an invite. I did not. To the Rose Garden Club. That's what they call it now that it's got the pavers and the yellow and white. You know, it's been all redone. The yellow and white umbrellas still look like Mar-a-Lago. The beautiful sound system out there. And Republican senators are making their way for lunch with Donald Trump to say thank you for holding the line. Now, of course, that has to do with nominees as well, and that part of the story could get a little bit different as the day goes on here. Yeah, we've got pictures of them now, guys. Look at that. Just checking this out here. If you're with us on YouTube, I'll show you the Rose Garden Club. It looks like Lindsey Graham is having a nice time. Josh Hawley and others enjoying the benefits of membership. Jonathan Tamari is with us live from Capitol Hill as all of this goes on. And you're going to hear about this contrast all day, right? This is what we do in Washington. And everyone's going to freak out about the split screen of this posh gathering happening at the Rose Garden Club as the government languishes in a 21-day-long shutdown. Jonathan Tamari at Bloomberg Government, where he is our senior Congress reporter, writing about this and the strategy by the president himself. Jonathan, it's great to see you. As you write, Trump mostly absent from the shutdown fight. Is that a lack of interest, or is that, in fact, a strategy in itself?
I think it's mostly a lack of interest. I think the president has been much more focused on securing the ceasefire, the peace deal in the Middle East, in trying to secure a peace deal between Russia and Ukraine, between launching military strikes in the Caribbean. He has never shown this deep interest in Congress, and he's basically gotten from Congress what he wants. He got his tax bill, he's gotten his nominees confirmed, the oversight has been pretty much non-existent. So I think he's content to just assert his power as an executive and doesn't seem to mind that much if Congress is stuck in a stalemate and even if the government's shut down. I mean, he's kind of been a one-man force his entire term, and this allows him to keep doing that.
Well, and he can, of course, have his budget director do what he wants as well. I mean, Russ Vought's already been laying off. They say they're going to go up to 10,000. We'll see if the courts let them do that. But as the president reshapes government and the White House, I guess they're going to be hearing sounds of construction noises in the Rose Garden Club because he started building the ballroom on the East Wing. I just wonder where this leaves the leadership. I mean, Mike Johnson just keeps everybody home until the president provides direction?
Yeah, I mean, it's interesting. The Democrats in the Senate today have spent a lot of energy focusing on Mike Johnson and saying there can't be any deal while the House is not here, that it has to involve the House because the senators need some assurance that if they agree to a deal, that it's going to pass the House. So that's been a pressure point. But they also will tell you that they believe Donald Trump needs to be involved, too, that nothing's going to get through either chamber of Congress unless the president is behind it to kind of encourage Republicans to support it or give them cover. And Democrats are going to want to know that his administration abides by it. So it is a challenge with him being somewhat removed from this fight in a way that most presidents would not be during a government shutdown. That they don't have the most powerful force in Washington to get behind a deal. And that leaves the Senate Republican leaders, House Republican leaders, and the Democratic leaders in both those chambers basically saying the same thing day after day without either side giving any kind of ground or anybody to broker a deal right now.
Right. Yeah. Interesting. I don't know if this lunch at the Rose Garden Club helps to move the ball or actually keep everybody nailed in place. I feel like it's probably more about the latter. But Jonathan, what do you make about this not so quiet conversation about just pulling the ripcord and doing a year-long CR? Because even if they pass this thing now, the government's going to be set to shut down in a couple weeks anyway.
Yeah, I mean, it makes sense that even if they reached a deal today, that passing a funding mechanism that runs through November 21st doesn't do a lot for anybody, right? It's 30 days. We'll be right back in the same situation. There's not really time to negotiate the bigger picture issues in that time. But it would be another kind of death almost of a really significant congressional authority, because one of their most powerful authorities is to shape spending, shape what appropriations bills look like. And if you do a year-long CR, you're basically just wiping that all away and saying, we're just going to continue doing what we're already doing. And it'll be just another example of Congress kind of losing its authority or giving up its authority to the administration if that happens. And that'll be frustrating for a lot of members of Congress, but probably pleasing to the White House.
What about the jailbreak that a lot of people were expecting? We still got the same 3 Democrats, I guess 2 actually, and an independent who caucuses with the Democrats breaking ranks here. Does it say a lot about Chuck Schumer's leadership that he's managed to keep the line outside of these 3?
I think it says a lot about the pressures that Democrats face in order to stand up to Trump in some way. I think it says a lot about the fact that they've been looking for a chance for 9-10 months here to do something that stops the administration in its tracks, at least slows it down, if not stops it. And I think it says something about the fact that Democrats really think healthcare is a winning issue for them, and that they're glad to have a fight about healthcare. I think it says a lot more about those things than Schumer specifically. And I agree with your assessment that a lot of people thought Democrats would not last very long in this, but they're showing no signs of budging right now.
You know, there's an interesting story about John Fetterman saying earlier here to The Hill that he's willing to nuke the filibuster. He supports the Republican Party in the Senate nuking the filibuster to end the shutdown. Maybe we shouldn't be surprised that Senator Fetterman would say something like this, but there's a lot of talk of him being courted by Republicans and maybe actually leaving the Democratic Party. Is that a likely occurrence here, and how much of a thorn in Chuck Schumer's side has he become?
Well, he's certainly become a thorn in that he often is willing to elevate Republican talking points, but put a Democratic name behind it, and Republicans can point to him as justification that their criticisms of the other party are accurate. As far as the idea of him leaving, there's been a lot of talk about that for some time, and he has been very consistent on the point that he says he will not join the Republican Party. I think there's a lot of issues that he does hold very dear that are just at odds with the Republican Party. Remember, he was one of the, I believe, the first mayor in Pennsylvania to conduct same-sex marriages. So, like issues like that, he's really not aligned with the GOP on. Could he leave the Democratic Party and become an independent? That would not very much surprise me. And when you look at his polling in Pennsylvania, it's kind of reversed. Even though he's a Democrat, his approval rating is higher with Republicans and very low with Democrats. So it might make some sense, but I think ideologically he's not a fit there overall.
Well, I had to ask you about that as our Pennsylvania expert, Jonathan. I've only got a couple of seconds. What's more likely, he leaves the Democratic Party or chooses not to run for re-election?
I think chooses not to run for re-election is probably the most likely option.
Interesting.
But remember, it's 2 years away.
Jonathan's great work on the terminal and online. Yeah, we got a couple of years to figure that out. Why Trump is mostly absent from the shutdown fight, the great Jonathan Samari at Bloomberg Government. It's been a while, Jonathan, and great to have you back. Thanks for your read on this day 21. Coming up, we're going to entertain the idea of secondary sanctions. You haven't heard those 2 words in a while when it comes to Russia. Jamie Tarabay will join us here in our Washington Bureau, straight ahead on Bloomberg.
12:21 on Wall Street. I'm Alexis Christoforous. Stocks are mostly higher as investors sift through a flurry of earnings reports. The Dow Jones Industrial Average up 295 points. The S&P 500 adding 9. The Nasdaq Composite basically flat. Gold down 5 1/3%. Its biggest one-day drop since 2013. Shares of Coca-Cola rallying 3.5% after third-quarter earnings beat street expectations on resilient demand for its zero sugar drinks. Coca-Cola is also set to launch its cane sugar trademark soda in the U.S. this fall, and it's going to roll out mini 7.5-ounce single-serve cans priced at less than $2 to target lower-income consumers. And Beyond Meat's stock is up 61%. The maker of plant-based burgers and sausages announcing an increased availability of its products at Walmart. The products will be available at more than 2,000 Walmart stores. The retailer will be one of the first to offer Beyond Meat's 6-pack of burgers. It will also carry its chicken pieces and Korean barbecue product. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Joe Matthew in Balance of Power.
Alexis, thank you so much. We've got our eyes on the Rose Garden, or should I say the Rose Garden Club, at the White House right now, where Republican senators are gathering for a nice lunch here. It's a beautiful day in the nation's capital. Welcome to day 21 of the government shutdown. YMCA is blaring over the speaker system right now in the Rose Garden, and this is just a curious moment for those of us who appreciate presidential history and all things Washington. President of the United States has the door to the Oval Office wide open right now to the colonnade, and you've got a press pool that's in the Rose Garden with a live shot of that. I don't know if we can see. Look at this right now. He's been walking around the office. I don't know if he's going to post something on Truth, but at some point he's going to come out. There is a podium there. We don't know if he's taking questions or what, but yeah, there's a live view inside the Oval Office, which is not something that you see very often. The scenario here with the cameras in the Rose Garden as YMCA blares over the speaker systems. This was the big lunch, the celebration that the president promised to Senate Republicans for holding the line on the government shutdown, as well as passing his nominees. And of course, there's going to be a lot of conversation, I suspect, out there on the patio today. You know, it's all paved, he said. That way the ladies' high heels don't sink into the muddy grass. Either way, they'll talk about some things, like maybe regular order, or two other words we haven't heard so much these days: secondary sanctions. Now look at that. You can see, if you're with us on YouTube, President's back behind the Resolute desk. What's he writing there, James? Can we see? He's tweaking the speech before he comes out. I don't know if he knows he's on camera. This is really interesting. I'm really reluctant to turn away from it. You've got Josh Hawley out in the Rose Garden, Tim Scott, Chuck Grassley, Ted Cruz is there, James Langford, Bill Cassidy, and others, Joni Ernst, all waiting for the boss to come out. Now, as I mentioned, secondary sanctions might come up because there's a bill. They've been working on this. In fact, they've been sitting on it in the Senate for some time. We've talked about it going back to when this was a massive priority here in Washington, D.C. Since then, we've had a summit in Alaska. We're talking about another one in Budapest. And the aforementioned Lindsey Graham is probably wondering when we're going to pull the trigger on this, because this was supposed to be the end-all to get Vladimir Putin to the table. Fast forward to the story today with Jamie Tarabay's byline shared with Eric Wasson on the Bloomberg. The Senate will hold off on considering new sanctions. At least at the moment, John Thune says, we're kind of hitting the pause button. And Jamie is with us now live in studio. It's great to see you. Welcome back.
Thanks.
How long can you sit on the pause button here before this doesn't mean anything anymore?
I feel like, Joe, we've had this conversation.
We have, haven't
several
we?
times, and I feel like John Thune said the exact same thing over the summer when there was again this renewed momentum to pass this bill, to get this bill to a vote, and it's sort of this ebb and flow in tandem with the president's feelings regarding Vladimir Putin and whether or not he wants to put pressure on him, or whether he's angry with him, or whether he wants to get along with him and meet him. Yeah. And that's really it. The Hill, the Senate, and the House have essentially yielded authority on this bill on any action, because there is a mirror version of the House of the Senate bill in the House, ready to move. All of them are ready to move, but no one wants to do it, despite incredible majority bipartisanship on both bills, if they think it's going to land on the president's desk and it doesn't get signed.
Because this would likely pass, yes? Do they have the votes?
100%. They have over 85 senators on both sides of the aisle in the Senate ready to move on this, who have all co-sponsored it. So it's really incredible, especially given the lack of bipartisanship that we're seeing.
Sure.
All of this year, this is one thing that they've all been able to agree on, is that Ukraine needs help, and this is one way that they really believe that they can sort of punish Russia, but bring Russia to a point where that ability to maintain that military assault will be tempered, crippled, paralyzed, depending on how punitive the sanctions are. We've watched this sort of transformation of the bill go from being something that gave Congress the ability to turn these sanctions on and off to the White House now having this ability. And that was also meant to help it become a little more palatable for the president to pass.
I see.
At the moment, though, he does have it, and he's using it as leverage, as a cudgel against President Putin. And I think that it's really worth noting that we heard a lot of chatter about this bill last week, and we know that the president was about to sit down with the Ukrainian president on Friday. And then on Thursday, what happened? He got a call from Vladimir Putin.
A couple hours on the phone.
And then, they kind of agreed, maybe somehow, we're not really sure, to meet up in Budapest at some point in the future. Who knows?
So they may be waiting, I guess, for the summit to happen, although just as recently as today, the White House said we've got no date, there are no real plans for a summit here. So you wonder, how the clock ticks on this. President Trump wants to be, I guess, flexible when it comes to Vladimir Putin. And if he was hearing this conversation, he would say, hey, we already put sanctions on India, right? That was buying Russian oil. Who are the other players, if not just China, who you've got in mind?
Listen, I've got the bill in front of me.
Yeah.
The bill not only puts these incredibly punitive 500% tariffs on countries that import. So it's to be clear, any Russian energy that gets imported into this country would have a 500% tariff. Any imports that come into this country from countries that do buy energy from Russia would have a 500% tariff. Russian entities, financial organizations, commanders, military officials, government officials would all be hit with sanctions. So it doesn't just put pressure on China, for example, as a very major consumer of Russian energy, but also on European partners and essentially anyone in the U.S. who also wants to buy some of those energy exports.
Sure.
It's a far-reaching bill, and it's a measure that not everyone's convinced sanctions will work. Marco Rubio, the Secretary of State, said in May to lawmakers that the White House did not believe that sanctions have been effective, and that they also believe that were in negotiators with Russia to come and suggest more sanctions, that Russia wouldn't come to the table to negotiate.
Well, could Russia skirt these restrictions with the black fleet of oil ships out there now, or would this in fact be as damaging to the economy as Lindsey Graham would tell you?
I don't think that there is any notion that we've seen sanctions get overridden, walked around. I spent a lot of time in Iraq. We saw Saddam Hussein for the longest time, avoid sanctions and managed to get everything he wanted. Bashar Assad also managed to deal with sanctions quite well. You also have to look at countries like North Korea that have been dealing in sort of black market fuel forever. Right, so there is some truth to that. I think that it's also a possibility that Europe doesn't really know what else to do, right? I think that there's no indication from Vladimir Putin that he is moving on this at all, despite the enormous cost militarily, with loss of life on his, from his people. There's been no indication that he's interested. He wants more territory, not less. So whether all of this chatter and all of this diplomacy means anything to anyone inside Russia is a question that I really think we haven't really gotten a proper answer to. I don't see any willingness from Russia to move on this. So they obviously feel like they can continue.
Well, it strikes me the last time we heard from President Trump on this was that Truth Post, and then he kind of reiterated that verbally a couple of times when he was overseas, that until Europe stops buying Russian oil, we're not doing anything on secondary sanctions, and he's, I guess, held true to that. Do we expect that Europe will make good on its own side of the bargain?
I think that's a really good question. And from my conversations with people on the Hill, particularly with, co-authors, Senator Lindsey Graham and Senator Richard Blumenthal, the Democrat, they've sort of said to me that they believe that Europe is prepared to stomach the cost to allow these sanctions to go through. And I think that that's a really interesting question.
Fascinating. It's great to have you back.
Thanks.
Jamie Terabay, find the story on the terminal and online at Bloomberg.com. I'm Joe Matthew in Washington. Just one of the stories that we're talking about today, as the president hosts Republican senators in the Rose Garden. If he has remarks that are newsworthy, we'll bring you there. It's basically right now, I think they're having sandwiches and tea and doing that kind of thing. We are keeping our eyes on the markets, of course, whether it's stocks that are in rally mode once again today. Pretty remarkable risk-off situation despite the lack of certainty when it comes to China trade or multiple hotspots around the world. But one thing that is tipping sharply lower, as you've likely heard or maybe felt yourself by now, is gold. This has been quite remarkable to watch the downturn here in gold prices today. Currently down about 6%. We're off our lows, but the miners are taking it pretty hard as well. And, when it comes to all things gold, we'd only talk to Donald Trump. We talked to Mike McGlone at Bloomberg Intelligence. Of course, the senior commodity strategist who talks gold and crypto and oil, among other things. Mike, it's great to have you back. We were talking just a couple of days ago about the prospect of $5,000. I know that you've been a massive bull here, and with the huge run-up that we've seen, what do you make of the declines today? Is this just par for the course? Things got too frothy, or is there something more involved?
You're supposed to be selling when they're yelling, Joe, and I think you're just right. Things just got too frothy. Gold, as of yesterday's close, was up 66% on the year. It's the best year we've all heard since 1979. Of the last 100 years, it was among the top 4, ranked behind 1979, 73, and 74. All massive inflationary years. That's different this year. It's happening in an environment with volatility going down and crude oil collapsing. So that disparity, crude oil down about 20%. Gold was up about 60% or so. That disparity of 80% was the most in history. The most comparable example was when crude oil was down about 50% and gold was up about 10% in 2008. See the comparison? So gold's just an stretched, overbought bull market that needs to back and fill, needs some profit taking. The question is, how low does it go? And I'm more worried about the macro indications here, because we've never had a high velocity gold rally like this with the stock market volatility going down. So does it mean maybe stock volatility will pick up? Is gold warning us? And that's what I'm worried about.
Interesting. So this may not be an opportunity then? You want to see the sellers exhaust themselves for a couple more days?
Yeah, I don't know how long it's going to last. Just an example of relative to its 60-month moving average, gold yesterday was the highest since 1981. I mean, I was pretty young back then. I suspect you were too. It's a long time ago. So it's just an example of a bull market that gets stretched. But the bottom line is central banks have been key buyers, and they're still buying, although I think they've curtailed. There's probably some elasticity. But it's just a bull market that's getting stretched. The key thing I'm worried about, though, is what does it mean for the end of the year and other markets? So gold has pulled up all the metals, and now they're all coming back a little bit. Silver is one of them. And just a question of how far they go and what matters until the end of the year. I'm just saying, here's what I end with. Bitcoin reached a threshold at 100,000 last year and hasn't really moved above that. And I think gold at 4,000 this year is very similar to Bitcoin's 4,000 threshold last year.
Got it. Interesting. How come the miners, which were supposed to be the catch-up trade, are falling more? I'm looking at GDX down almost 10% right now, Mike, while the GLD is down 6%. Is that something we rationalize easily?
Well, GDX was up about 140% in the year, but if you look at it versus GLD, the most widely traded ETF, it's been going down for almost 20 years, and it just caught up a little bit this year. It was way overdue, but the bottom line is typically the miners, the producers, they're somewhat leveraged gold. They're an option on gold. So if gold's up 10%, they're usually up more, and gold's down 10%, they're usually down more, and that's just what's happening. But overall, they've been some of the best investments this year, and that's the mining stocks.
Are the fundamentals intact? Is the story still intact? Because the last we heard, China and everybody else couldn't buy enough gold because they wanted to get away from the dollar. Mike, is that story still there?
Yes, but all things get extreme. I think the bottom line to remember about gold is the gold market absolutely loves Mr. Trump. Pushing back in the Fed, the shutdown. It's all perfect storm for gold. But I put on my risk manager hat, and I kind of try to ignore some of the reasons and point out how stretched it is. It was just so expensive, and it's still so expensive. The prudent thing to do is what's the bottom line in this business is sometimes take profits, and I think rational investors are doing that.
You still got 5,000 in your sights, or am I putting words in your mouth?
It's kind of words in my mouth. I never really called for 5,000. I did call for 4,000 a little while ago, but I'm really worried if it gets to 5,000 because it's so stretched now. I don't know how far it goes, but it's just what's going to happen. To me, the key thing, the next driver for gold is if what happens to the stock market. If the stock market stays strong and volatility stays subdued, gold's going to have pressure factors. But if volatility picks up a little bit, the stock market backs down a little bit, that's going to be putting some underpinnings in gold as long as it doesn't happen too fast like it did in 2008.
Okay. I know you say gold loves Trump, but so does crypto. And I wonder your thoughts on Bitcoin. You mentioned it briefly here. We are up today, and we're back up almost to 114,000, but it's been lagging quite a bit recently, despite the same kind of story being intact, this decentralizing of finance. Does crypto get another leg up here before the year's over?
It might, as long as the stock market goes up. That's the difference. Gold is a risk-off asset, typically zero correlation to the stock market. Bitcoin and cryptos have a very high correlation to the stock market. But the narratives that change is significant. In the past, when you bought cryptos and Bitcoin, you're kind of pushing back on the government. It's something independent, and you're on your own. Now, if you're investing in this space, you're actually supporting the Trump administration. Trump members, family members are highly invested, and you're somewhat dependent on the Trump administration. So I think the whole crypto space is kind of pushing back on that. And also, Bitcoin reached such a threshold at $100,000 that I think that's going to hold resistance for a while. To me, the biggest risk is cryptos go down with the stock market, and they're a top leading indicator. And right now, Bitcoin's dropped back to its 200-day moving average. If the S&P 500 does that, it will drop almost 10%.
Wow. All right. Got it. You know, we're talking about the metal and the miners, and just to separate them a little bit more, a lot of these miners are involved in mining a lot of other things like copper, like nickel, and other elements that are used in the drive for EVs to make batteries, all the stuff that we talk about here every day. It's a huge data center play, right, when you consider some of these companies. So I wonder, Mike, if it's a different narrative when you're talking about the miners right now, as the U.S. government even starts taking stakes in rare earth companies. People are looking at the free ports of the world in a very different way than they were a couple of months ago.
You just mentioned pretty solid underpinnings for the overall miners, particularly if they're mining rare earth metals. That's a good solid underpinning. That'll probably last for a while. So that's a good foundation below the mark. And that's somewhat the intention of the Trump administration. Create some capital, maybe increase prices, bring on that supply. It's a matter of time.
Just got a headline on the terminal that I need to ask you about. It's perfect that you're here, Mike. The U.S. to buy 1 million barrels for the SPR, the Strategic Petroleum Reserve. We asked Bob McNally from Rapidan about this yesterday. He said that the government should be bidding on this now, and he actually used to help to do that in the Bush administration. Crude oil today, it's up about 1% to just above $58. Is this the time to be investing in the SPR, and should they continue buying? Because you're seeing this go down to 40 or so, right?
I still think it's going to 40. It's time to start buying. But remember, one of the best trades in history was Mr. Biden releasing from the SPR when crude oil was above 100. Now we're looking at buying it at 57. It was a wonderful trade. The key thing is, remember, we started the SPR when President Ford was president to cover 9 days of net imports. Now the U.S. is a massive net exporter. It's just not needed as much as it used to be in the past.
How about that? Isn't that? So you're going to have to write the book, Mike, like greatest trade of all time. It's going to be Biden and Trump together in the oil market. Who would have thought? Mike McGlone, Bloomberg Intelligence senior commodity strategist. Looks like he's back in Miami, which is what we call him, Miami Mike. There you have it with the gold. That's a big story today, and it's one that we'll be tracking throughout the day and follow up with Romaine on the late edition of Balance of Power, which, of course, starts at 5 p.m. Eastern time. We've got our eyes on the Rose Garden, and while there's not a lot going on there, the president is being the host, of course, that he is, as the hotelier that he is in the Rose Garden with Republican senators who are there for lunch. One of them, as a matter of fact, joined us here yesterday in our studio. Yeah, Ted Cruz is out at the Rose Garden Club right now. We sat down here in our Washington bureau for a conversation about a number of things, including the shutdown and the No Kings rallies that took place over the weekend. Remembering, of course, 2,600 sites. The optics were pretty impressive here when you look at the scale of these demonstrations. And I will add, not a single arrest. That apparently is the case, which is incredible. Not a single arrest with that massive humanity moving around the country together. We asked Senator Cruz about the impact here of these marches and whether the Republican Party should be taking this movement, if we can call it that, seriously. Here's what he told us.
Unquestionably, we should take political peril seriously. Number one, I think it's bad for America when one of our two major political parties has gotten so extreme and radical the way the Democrats are. I mean, they're a party that is unified behind hate for Donald Trump. But number two, politically, in terms of the midterms in 2026, it's dangerous. And I'm telling my colleagues, look, if the election in 2026 depends on results, I think we have a lot to campaign on, whether it is securing the border and seeing illegal border crossings drop 99%, whether it is ending wars and President Trump negotiating the deal to release the hostages that Hamas had taken, or whether it is the economy and the record amount of money being invested in new factories and new jobs in the United States. I think substantively, Republicans have a lot to campaign on. That being said, and you're exactly right, Julie, there is a lot of energy, there is a lot of anger on the left, and elections can be dangerous when one side is mobilized, is angry. I'll tell you, in terms of fundraising, the Democrats are raising a lot more money because their radicals hate Trump so much, and look, angry, energized voters show up to vote, and I do worry about just ordinary voters who are happy or complacent, who say, gosh, Trump won, things are good, I don't need to show up and vote. There's no doubt if one side shows up and the other doesn't, that leads to a bad election.
Senator Ted Cruz talking with us in studio here yesterday alongside Julie Fine, who will be back with us on the late edition of Balance of Power. Generating headlines around the world. On the terminal, Cruz warns of 26 risk for GOP as protests show voter anger. They even wrote us up at the Daily Beast. Put it up on my fridge this morning. Ted Cruz begs GOP to take political peril seriously after furious anti-Trump protests. I'm not sure begging was the verb I would have chosen, but we want to see what our panel thinks about this. Bloomberg Politics contributor and Democratic analyst Jeannie Shanzano is here, democracy visiting fellow at Harvard Kennedy School's Ash Center, alongside Maura Gillespie, Republican strategist, founder, BlueStack Strategies. Great to see you both, Jeannie. We got into this a little bit yesterday, and I'm wondering your thoughts, having heard Ted Cruz weigh in on this, referring to a party in peril, warning of 2026 risk. Is he onto something?
He is. First of all, Joe, I thought you'd be at the tea party at the Rose Garden, so I'm glad you're here. I thought you'd have your invitation and be there.
No, not invited, Jeannie.
Me neither. You know, it was such a fascinating interview with Ted Cruz, because on the one hand, you hear him saying to you and Julie things about, you know, the radicals that were out there. And of course, to anybody who is familiar with what happened over the weekend, the 7 million people out in 2,600 places around the country, small towns, big cities. There was almost no violence, no arrests, and the people hardly looked like radical Hamas terrorists. They were like your next door neighbor, your grandmother, right? So that didn't come to fruition for all the sort of consternation, and we heard it over the weekend from Mike Johnson. That said, Ted Cruz is onto something. When you can galvanize 7 million people, up 2 million from the No Kings rally a few months ago, that's almost 3% of your American population. And that's a big movement. And that can impact voting, because these people are frustrated with what we see as an enormous overreach on the part of the president. And so I do think he is onto something, and he is right to warn Republicans about what is coming in the midterm as we turn the corner next year.
Maura, your former boss, John Boehner, I'm sure remembers all too well the formation of the Tea Party following the election of Barack Obama. And I heard that comparison a couple of times yesterday, that this is something that Republicans need to pay attention to in a way that Democrats didn't take the Tea Party seriously. Do you see it the same way?
I see that this is a motivating factor, this unified disappointment and disapproval of the current administration. So I do think that Ted Cruz is right to say Republicans should be paying attention to it and recognizing that their constituents as well may not be pleased with the cost of living right now. It hasn't gone down as promised. And so how are they addressing those issues, and how are they addressing the issues in their community directly? Again, I think when it comes to Congress and to the midterms, members of Congress, whether they're current members or running for election, they should be, they should be really focused on the core issues of their constituency and not so much of all the things that Trump is saying and doing, really focusing in and honing in on where their constituents are frustrated or wondering when they're going to see the fruits of their labor or their vote, quite frankly. Right. President Trump told them the golden age of America, and so members of Congress need to say, here's what we're working towards to achieve that.
Jeannie, I'm supposed to ask you as the host of the program on a political show here, how do you turn this into votes? How do you take how do you action all that, whatever? But isn't it actually a little early for that? Is this the time for Democrats to pursue some sort of registration move, or just let things take care of themselves for a while, actually allow a grassroots movement to take place?
Yeah, Joe, I will never say it's too early to talk elections. I love it. So never too early for me. But to your point, I mean, they are organizing, they are getting people out in this organic way. It matters so much. And then what they do need to do is to be working to turn that into turnout in Virginia, New Jersey, New York City, and elsewhere as these elections come in a few weeks. But more importantly, the midterm. That is the big focus and should be the big focus of the Democratic Party. And who takes this very seriously in addition to Ted Cruz is Donald Trump. I mean, just look at what is happening today in North Carolina, where we have the Senate voting once again following Texas, following Missouri for a mid-decade redistricting. The House in North Carolina will likely follow. That means they will have one more seat flipped from blue to red. The only reason the president is making this very concerted effort for these mid-decade redistricting is because he knows how vulnerable he is for the very reasons Maura just talked about. He promised a golden age for America, and so far we've seen what? A lot of gold in the Oval Office, a lot of new gold on the Rose Garden Club that he's opening, and promising gold for the 999 people that will be allowed in the new ballroom. But not a lot of people feeling like they are benefiting in their pocketbook. And you look at the frustration with the economy right now on the street, and it is about 6 or 7 out of 10 Americans feel like the economy is not what they think it should be. And so he knows he's vulnerable. That's why he's trying to gerrymander those districts in North Carolina and elsewhere.
All right, well, twist my arm. We'll talk about the ballroom if you want, Jeannie, because the president just mentioned the sound of demolition in the East Wing as music to his ears as he's out there in the Rose Garden. This was startling. I just want people to know, and I'll hear all about pearl clutching later on. I think the White House referred to losers quick to criticize the need to stop their pearl clutching and understand the building needs to be modernized. This isn't really about modernizing, though. I think Harry Truman did some of that. This is about adding a massive ballroom. We've talked about this quite a bit. The ballroom that the president said, quote, will not interfere with the current building. This is when he signed the EO back in July. He said it'll be near it, but not touching it, and pays total respect to the existing building. Much to the shock of people walking by the complex or around the Treasury Department, or those guys who were day drinking up at the rooftop of the W Hotel, they saw a backhoe tearing into the facade of the East Wing, which now looks like, a construction site. Because, there you go. If you're with us on YouTube, look at this thing. Looked like a tree fell on it. And I guess this is going to be a big old project, $250 million, they say. But, forget the pearl clutching, Maura, and whatever else is happening architecturally there at the White House. It looks like a car went through the side of the East Wing. What do you think of the optics? On day 21 of a government shutdown, we're talking about healthcare premiums quadrupling in the state of Georgia, along with other places around the country. And the president's building a gilded ballroom that will fit 999 people for grand affairs at the White House. Is this just Washington, or is this a tone-deaf administration?
I mean, the optics aren't great, let's just be honest. And I think that, it's not surprising that the president said it won't interfere with the current, facade of the White House. It won't damage the integrity of the White House. That's certainly, Donald Trump says a lot of things that don't pan out and don't hold true. So I don't think we should all be so shocked about that. But what I am curious about was the White House Historical Association consulted? There is a process for these things to happen, and I don't know that Congress was necessarily notified. Granted, the House has been out since mid-September, but there's a process, and did Donald Trump's team follow that process? I'm not sure. And before this construction and demolition took place, did the White House Historical Association get to survey, anything that would be taken and, considered for our museums across D.C.? There's just a lot of questions that I have, I think, as far as the building itself. Yes, the president and his family, they live there, right? It's their residency as well, but it's also an integral part of our history, of the city itself, but preservation of America's role in the world, and to just treat it kind of cavalierly like this and not go through the proper stages and proper process, I have concerns with. But listen, the other thing I'll say too is that the White House is old, and people have gone in there and said it's old and musty and needs an update, and Donald Trump certainly does not want to be associated with old and musty. So I can see why he would want to make some upgrades, but doing it through the proper channels I would prefer.
A White House spokesperson, Jeannie, says construction has always been part of the evolution of the White House. That, of course, is right. Remember when the piano fell through the floor? Truman had to shut the whole thing down and bring it down to the studs. Quote, losers who are quick to criticize need to stop their pearl clutching and understand the building needs to be modernized, Jeannie. Otherwise, you're just living in the past, unquote. Does this president deserve credit for soliciting private funds and not using taxpayer money to build the ballroom?
Yeah, our builder-in-chief, he is hard at work. It is $250 million, I think, was the estimate for building. That's right. And to your point, not paid for by public money, or was it? Because these are coming from big donors, Silicon Valley, Wall Street. These are coming from people in the weapons industry. He just held like a thank you dinner for all of them, from Lockheed Martin, from Microsoft, from Google, some paying as much as $25 million. This coming just, on the heels of a march where he is described as a king, and he is attempting to build this ballroom. So the optics don't look good. And no American really thinks that Lockheed Martin, Google, any of these folks are giving $25 million because they just really want to renovate the White House. It's because they expect something in return, and they're getting it from this president. And so that is the problem with this argument, that it is not taxpayer money. The reality is there is a process, to Maura's point, by which these things are done. The National Planning Commission, I think it's the National Capital Planning Agency or Commission, has not yet approved this. So yeah, you can do it, but this is not, a house you bought in Florida that you can just renovate on your own. You are simply put in there as president, and you will leave in a matter of years. And that is why you can't just demolish it to your whim and then, or not demolish it, but rebuild it without approval.
Right. Well, they say it'll be up and running by the time this president is wrapping things before the end of the term, 2028. I guess we'll see how that goes. Great conversation with Jeannie Shanzano and Maura Gillespie. They'll be back in our second hour here. Our great panel with us on Balance of Power. I'm Joe Matthew. Tyler Kendall's on the way in, only here on the fastest show in politics. This is Bloomberg.
Washington, D.C. This is Balance of Power with Joe Matthew and Kaylee Lines.
The vice president arrives in Israel with a ceasefire in the balance. Welcome to the Tuesday edition as J.D. Vance meets with officials at a monitoring base near Gaza, delivering remarks a short time ago amid very challenging conditions on the ground. I'm Joe Matthew alongside Tyler Kendall in Washington. Thanks for being with us here indeed. The Tuesday early edition of Balance of Power here on Bloomberg TV and radio. Tyler, it's hard to believe, but it's been just over a week since President Trump rolled out this ceasefire agreement.
Right, and today marking the first day of a 3-day tour for the Vice President, J.D. Vance, in Israel, speaking alongside the key negotiators earlier today, Joe. Yeah. Jared Kushner, of course, the president's son-in-law, and also Special Envoy Steve Witkoff. And J.D. Vance saying that there is still a lot of hard work ahead.
Well, that's true, as he made very clear. Hard work and a difficult time framing this. He was not terribly pleased with the way some of this has been playing in the media, knowing that stakes are very high right now. Tempers are pretty high on both sides as well, with just days, of course, in place now on this ceasefire agreement. We're going to get the latest from Nick Wadhams, who runs our national security team here in Washington. And looking forward, Tyler, to spending some time with Natasha Hall, who's with us from CSIS, a reliable voice since this all began some 2 years ago.
Right, of course, and perhaps we could get some clearer clarity on some of our biggest questions, including the future of rebuilding Gaza, but also, of course, Joe, whether or not Hamas is ultimately going to disarm. We got this post from President Trump earlier today talking about that. We'll get into all of those details. And of course, the markets are watching this very closely.
That's for sure.
Worth mentioning, in the last hour, we got this redhead on the terminal that the U.S. will buy 1 million barrels for the Strategic Petroleum Reserve, oil spiking on that news. So for the latest, we're going to go now to Alexis Christoforous, World Headquarters in New York, for a look at the Tuesday trade. Hey, Alexis.
Thanks very much. And we have got the Dow hovering near an all-time high, but the broader market pulling back a little bit as investors sift through a flurry of earnings reports. The Dow is up 260 points off its best level of the day now. The S&P 500 down about 1.5 points, and the NASDAQ composite is off 60 points. We've got gold and silver seeing some steep losses today as the dollar rises. Gold is down more than 5.5% right now, its biggest one-day drop since 2013. And you mentioned oil. We've got West Texas Intermediate up now about 0.2% at 57.67 the barrel. Coca-Cola is rallying more than 3%, helping to lead the Dow higher after quarterly earnings and revenue topped estimates. Coke is also going to start selling smaller pack sizes, targeting low-income consumers. We are watching Netflix. That stock basically flat ahead of its earnings report due out after the closing bell. Results expected to get a boost from advertising revenue and the K-pop movie K-pop Demon Hunters. Netflix also reportedly among the companies interested in buying some or all of Warner Brothers Studios. And shares of Amazon rallying 2.5% one day after a massive 15-hour outage at its Amazon Web Services disrupted operations for hundreds of companies, including Apple, Facebook, McDonald's, Epic Games. Analysts say the outage could make it harder for Amazon to attract new customers and may force them to spread their infrastructure between multiple clouds. For on-demand news 24 hours a day, subscribe to Bloomberg News wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
All right, Alexis, thanks so much for reporting for us live from World Headquarters in New York. But here in Washington, I'm Tyler Kendall alongside Joe Matthew. And as Joe laid out earlier, we have our full attention today on Israel as Vice President J.D. Vance begins a 3-day tour of the country. He spoke earlier today to reporters. He was at this U.S.-led military civilian command center, which is hoping to help implement this ceasefire for the long term. He told reporters, though, that there's a lot of hard work ahead.
There's this inclination to say, oh, this is the end of the ceasefire. This is the end of the peace plan. It's not the end. It is, in fact, exactly how this is going to have to happen when you have people who hate each other, who have been fighting against each other for a very long time. We are doing very well. We are in a very good place. We're going to have to keep working on it, but I think we have the team to do exactly that.
Vice President in Tel Aviv earlier, standing alongside, if you're with us on Bloomberg TV, Jared Kushner, Steve Witkoff. They're on the trip together here. As Tyler mentioned, he'll have a couple of days ahead, but he went on to chide the media for celebrating, as he mentioned, the idea of failure. And it was a tough weekend. We have to be honest about what's been happening on the ground. Heavy fighting in Gaza over the weekend with both a deadly Hamas ambush and Israeli airstrikes are causing many to ask the very obvious question, if this ceasefire can hold. Before we're joined by Natasha Hall at CSIS, we spent some time with Nick Wadhams, who runs our national security coverage here from Washington. He's with us in our D.C. bureau. Nick, I don't know if it's possible to answer this question right now. What are you watching to try to find out?
Well, I think the big question is going to be what happens next and whether Hamas is able to is willing to disarm. I mean, so you had the initial element of the ceasefire, which was the release of hostages and the release of Palestinian prisoners, and now we move to the much more difficult phase, is what happens to Hamas, because Israel has made very clear all along that it will not accept a solution in Gaza where Hamas remains in power or with any sort of control or leverage. They basically want it wiped off the map. And then obviously Hamas counters and says, well, we don't really have any interest in that, though they did say recently, you know, we are willing to undergo this power transition. But I mean, when I look at that, what I really see is, you know, the Trump administration has billed this ceasefire as a signature achievement by the president. Obviously, they want it to stick. If it doesn't stick, it will also be seen as a major failure, not only for the region, but it will say a lot about his deal-making prowess. I mean, they have hailed this as something that essentially should give him the Nobel Peace Prize. And if, you know, 10 days into it, it's already showing signs of failure. I mean, it should be pointed out that, yes, the vice president is right. These things do not proceed smoothly a lot of the time, and the challenge is really holding the thing together.
Well, let's talk about some of the ways that the administration is trying to make this stick. Can you walk us through what this coordination center entails? We know that about 200 American troops are staffed there, but what does this effort actually look like in practice? What is happening on the ground, as we know that the vice president is visiting with this center today?
Right. I mean, he's there really for sort of as a symbolic show of support and trying to, I think, send a message to both sides. Listen, Vice President is here. President Donald Trump and the administration has a great deal invested in this deal, and so that's in a way putting pressure on Israel not to go too far against Hamas, and also trying to exert pressure on Hamas. So keeping this thing from sort of spinning out of control, you know, and the Joint Coordination Center really is a similar move by the U.S. They're monitoring the ceasefire. He's been very explicit. They're not going to be U.S. troops on the ground in Gaza, but it's really a way of sort of the U.S. putting its assets where its mouth is, saying we have a stake in this as well, to try to keep the two sides in this thing and committed to a ceasefire where efforts at ceasefires in the past have failed so many times.
Those American troops will not cross into Gaza, is what we have heard.
Correct.
Are they directing IDF in Gaza?
We have not gotten that level of detail. I think what you're seeing really is the U.S. offering intelligence, satellite imagery, other assets to help identify where ceasefire violations are occurring, and then bringing U.S. advice and involvement. I mean, you know, the U.S. Central Command has been involved a great deal. For example, when Israel exchanged fire with Iran, Israeli armed forces were consulting with the U.S. military over what to do and how to respond. So there is a deep partnership between the U.S. military and the Israeli military, and has been very explicitly in the last couple of years. So I think what you're seeing is a continuation of that.
In the final minute we have you, I want to turn to another foreign policy issue, which is that we had this redhead on the terminal. People familiar telling Bloomberg News that European allies are working with Ukraine to prepare a 12-point peace proposal. Now, it was interesting to me because it mirrors a little of what we've heard in Gaza, including that President Trump could potentially lead a peace commission that would oversee this ceasefire. Just top lines here, what do we know about what this plan would entail if it goes through?
Well, I think what you're really seeing is a European effort to essentially set the terms of a potential Ukraine deal along the lines of what President Trump had done in Gaza, to try to mimic that. It would offer some form of security guarantees for Ukraine, but really what this is an effort by the Europeans to get involved and say essentially, okay, here's a potential proposal that we could get both sides to agree to. Obviously, U.S. involvement would need to be crucial to this as well. There's some indication that the Trump administration has not quite given its imprimatur to this. So this is really a push by the Europeans to essentially halt the fighting where it is now, and then push the two sides toward a conversation. They're not talking. They want to at least give them something to talk about as we head into the possibility of a Trump-Putin summit at some point in the future.
All right. Bloomberg's Nick Wadhams. He runs our national security coverage here in Washington. Thank you so much. And to expand the conversation, we're joined now by Natasha Hall, non-resident senior associate at the Center for Strategic and International Studies. Natasha, thanks so much for joining Bloomberg today. And as we've been talking about, Vice President J.D. Vance is there in Israel. He said that there is still work to be done and a long road ahead. Just from your view, what are some of those biggest hurdles that we could actually see progress on in the coming days and weeks?
Yeah, thanks for having me again. I mean, I think that J.D. Vance's visit is really meant to throw more weight behind this peace proposal, because one should note that this was a peace plan, not just a ceasefire agreement. And we're already seeing the ceasefire agreement fall apart within the first week. So there's a lot of hurdles ahead. In answer to your question, in terms of aid trucks going in, Israel has already said that it's slashing that in half due to the delayed return of deceased hostages from Hamas. We've seen 100 killed in recent days due to Israeli airstrikes. We're seeing a lot of lawlessness in Gaza right now because there's really no security mechanisms in place. So there's a lot that can potentially go wrong. So it's good to hear the vice president saying they understand that the signing of this first phase of the agreement is not the end of it and that there's a lot of hard work ahead. Because I think myself and many other analysts watching this very closely have said exactly that the end of U.S. pressure to move this through is simply not over.
Hard work is a given, Natasha. But what's the threshold for violence? Sunday, I wondered if we would still have a ceasefire by the time the work week opened here when Israel launched strikes against Hamas in Gaza, suspended all aid shipments. How many more headlines like that can a ceasefire survive?
Thank you so much for that question. I think it's a really vital question for all of us to be asking, because the reality, I think, is that the U.S. and the international community might accept a very low boil, essentially, of violence in Gaza, as long as it wasn't making the headlines quite in the same way that the famine and the constant bombardment was just days earlier. But the reality is that Israel can really put the pressure on Gaza simply through these aid obstructions, as we've seen in the past week, and these sort of more irregular airstrikes, in addition to the fact that Israeli forces still occupy more than half of Gazan territory. So, there's the direct violence of the actual war and the conflict, but then there's also the indirect violence on a place that has been experiencing widespread famine and, really requires somewhat of a Marshall Plan, not just sort of a seeping in of hundreds of trucks per day. It really needs to be a pronounced, scaled up response to reverse, I think, some of that indirect violence. But I think the issue here is whether or not there's going to be put in place a monitoring mechanism that really looks at not just the number of trucks going through, but actually the effects on the ground. Are we seeing a reversal of a lot of the various issues that I just mentioned, starvation, the lack of medical personnel and equipment? Are we seeing a reversal and a rebuilding of the Gaza Strip? Because we haven't even gotten to, the phase 2 where we're talking about an international stabilization force, the actual rebuilding of Gaza. 80% of the structures have been destroyed in the Gaza Strip. So there's a long road ahead.
Well, speaking about these big questions, including what the reconstruction of Gaza is going to look like, another big question is surrounding the future of whether or not Hamas is going to disarm. And we heard from President Trump earlier today on Truth Social, posting that if Hamas does not disarm, quote, an end to Hamas will be fast, furious, and brutal, unquote. Can you just give us a little bit of context here? What do the discussions look like for Hamas to disarm, and what are we looking at if the group ultimately doesn't?
Right. So let's just zoom out a little bit and acknowledge the fact that Hamas, regardless of what anyone thinks of them, has been the government in Gaza for over 2 decades and has also been essentially the police force there. And right now you have essentially vacuums throughout the Gaza Strip. There is no international stabilization force. There is no other entity. And so you've seen rising inter-gang violence in Hamas, which in Gaza, which Hamas has, essentially tried to eradicate through these very public executions that we've seen in recent days. But I think the real question is, if you disarm Hamas, which is clearly the goal of many regional partners in Israel and the United States and others, what will take its place? Because there needs to be some kind of governance structure in Gaza, and there needs to be some kind of police force as well. Because what we've seen is Israel has also been supporting some of these other gangs and militias within Gaza that have been looting aid in recent months. So there needs to be something there. So I think the big question is, if the international stabilization force, by some accounts, might take months to actually put in place, what's going to be there in the meantime to restore order, to allow, humanitarian workers to go through in safety, et cetera. And that's a really big question. And so I think for that reason, you've seen President Trump essentially go back and forth on this. At one point, he said he's not so unhappy about seeing these public executions of gang members by Hamas, and at the same time saying that they need to eradicate Hamas if it fails to disarm. So, I mean, I think that this is the larger question: who is going to provide security in Gaza in the weeks and months ahead?
Natasha, the president said a lot in that post at 9 o'clock this morning, including numerous of our now great allies, as he called them, in the Middle East and areas surrounding the Middle East, have explicitly and strongly, with great enthusiasm, informed me they would welcome the opportunity at my request to go into Gaza with a heavy force and straighten out Hamas if Hamas continues to act badly in violation of their agreement with us. I'm just wondering your thoughts on the neighbors, as the president likes to call them, in light of the headline today that the Saudi Crown Prince will be visiting the White House next month. What will that meeting bring?
Yeah, well, I think the Saudi Crown Prince, MBS, will be focused very much on a defense pact with the United States rather than simply offering a peace force, as he put it, to the Gaza Strip. Listen, I don't think that this is attractive to any Arab or Muslim country. We're still seeing airstrikes. We're still seeing infighting. This is not an area that I think any Arab or Muslim country would want to inject their own forces into, because it's not really peacekeeping, it's peace enforcing, which one could also say is fighting. And so I think that that's the big issue today. It's probably not going to be a majority force from oil-rich nations, but it's probably going to be from Egypt and other countries that actually stand up a pretty major military elements, or have a larger military to offer to the Gaza Strip. But I think that remains to be seen, again, what those forces will entail. We haven't even really talked very much about how much money these oil-rich countries are willing to inject into Gaza, which is going to take about $50 billion or more to reconstruct. So, again, I think we're a long ways off from seeing Saudi forces in Gaza.
Natasha, thank you. It's always a pleasure to spend some time. Natasha Hall at CSIS, the Center for Strategic and International Studies. We've got our eyes on the Rose Garden Club. We're going to assemble our panel next, right here on the fastest show in politics. This is Bloomberg.
121 on Wall Street. I'm Alexis Christoforous. A tale of two markets right now. The Dow is higher, but the broader market pulling back as investors sift through a new batch of earnings reports. The Dow up 279 points. The S&P 500 up just a point, while the Nasdaq Composite is giving back about 49. Gold is down more than 5.5%, biggest one-day drop since 2013. The Trump administration plans to buy 1 million barrels for the U.S. Strategic Petroleum Reserve, taking advantage of low oil prices to begin filling the depleted stockpile. On that news, WTI crude barely budging, now at $57.60 the barrel. Shares of General Electric up now nearly 1% after raising its full-year outlook for a second consecutive quarter as the jet engine maker cashes in on strong air travel demand. And Warner Brothers Discovery up now better than 10%. The company is said to be considering a possible sale after receiving unsolicited interest from multiple parties, including Netflix and Comcast. Netflix, by the way, out with earnings after today's closing bell. And Beyond Meat teaming up with Walmart. The retailer will sell the company's plant-based meat and sausages at 2,000 locations, including its six-pack burgers and Korean barbecue. Shares of Beyond Meat going beyond today, up 85%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back over to Tyler and Joe in Balance of Power.
All right, Alexis, thanks so much. As Alexis mentioned, I'm Tyler Kendall here alongside Joe Matthew in Washington, and we have one eye on Pennsylvania Avenue, where today President Trump welcomed Senate Republicans. They spoke about a range of issues earlier, including what's been an expedited process for confirmation of some of President Trump's nominees. But of course, top of mind has been the government shutdown, which is now officially in day 21, with little sign that there is any progress towards a deal to reopen. Now, President Trump addressed this earlier, saying that it is all about partisan politics.
Unfortunately, in a craven and pointless act of partisan spite, Chuck Schumer, who I've known for a long time, and the radical left Democrats are holding the entire federal government hostage to appease the extremists in their party.
President Trump reading prepared remarks in the Rose Garden, or the Rose Garden Club, as he likes to put it, a short time ago, where Republican senators have gathered in the sun today to celebrate unity. The president inviting them to talk about holding the line on the government shutdown and helping to pass his nominations in the Senate, which have been moving on a bit more. And we've got a new wrinkle on that we'll mention to you. The president's nominee to run the special counsel's office could be in trouble. His hearing is set for Thursday, and we've got another potential text scandal, it looks like. But on day 21, we are still talking about a shutdown with no end in sight. And in fact, even floating the idea, you know, that things could be a little bit troubled when we're floating the idea of a year-long continuing resolution. Just kick the can for a year so we don't have to fight anymore. That's the narrative today in the Capitol as we assemble our political panel. Bloomberg Politics contributor and Democratic analyst Jeannie Shanzano is with us, Democracy visiting fellow at Harvard Kennedy School's Ash Center. Maura Gillespie is with us as well, Republican strategist and founder of Blue Stack Strategies. Maura, you worked for a former Speaker of the House in John Boehner, and the idea of a year-long CR is something that a lot of Republicans have an allergy to. Is that, in fact, how this all ends?
I mean, speaking of my years in Speaker Boehner's office, it's hard for me to maybe stomach that, but I do think that things are just so divisive right now that I worry that without something more long-term, we'll be having this fight on repeat and unfortunately have another shutdown in the future, and I'd rather not see that happen. And so I do think that maybe looking at getting past this stage, which at this point, and I know we'll get into it, but it does feel as though Democrats need to come and just end the shutdown, because I do think Thune is being fair in the sense that he's willing to have conversations. He's willing to bring legislation to the floor to extend subsidies in a way that also doesn't, isolate every Republican vote in both chambers. But the shutdown isn't serving the greater good. And I think that no American benefits when we have a government shutdown. And unfortunately, Congress has for a long time struggled to get this, their funding appropriations done in a timely fashion.
Well, Jeannie, what is the risk-reward calculus here for Democrats? Because as Maura points out, we've heard from Senate Majority Leader John Thune, who says that Democrats can have a up and down vote on a one-year extension of those Premium Affordable Care Act tax subsidies. How are Democrats looking at their options on the table right now? Or is this just going to keep going on until they actually get some tangible policy changes?
Yeah, my view, Tyler, is that shutdowns never result in policy changes or wins, I should say. And so it's usually and always about the politics of this thing. And at this point, both sides feel like they're winning on the politics. And that's the problem. Until one or both start to feel pain, we're not going to see this change. And so Democrats, I suspect, will hold out at least until that November 1st date. Because, of course, what we're going to see then, and Bloomberg has been reporting this, is the skyrocketing of healthcare subsidies. I think, Joe, you said at the beginning at the top of the show, quadrupling in Georgia, about a quarter in Maine, almost 20% in Michigan. The list goes on. And oddly, this is going to be impacting Trump's states, red states, more viciously than it's going to impact blue states. So it's his own voters. And the president knows that because he's spoken about it in the past. So I think we will see the Democrats hold out for that. And the reality of this, and I don't know anybody in Washington who doesn't think that this thing also is not going to end until one person comes to the table and forces it. And that one person, I'm sorry to say, as a Democrat, is not Chuck Schumer. It is Donald Trump. Until Donald Trump pulls the plug on this thing, it is not going to move forward.
Donald Trump, just a short time ago, invited John Thune to the podium in the Rose Garden to talk to his members who were lunching in the sun, knowing that he said we may have no choice but to pursue a one-year CR. And by the way, Donald Trump may not have a problem with that. It was the White House that suggested that a couple of months ago when everyone's head exploded on Capitol Hill at the idea that could, in fact, become a reality. But I want to ask you about the nominations that are also being celebrated in the Rose Garden Club today. It's not just holding the line on the shutdown. Maura, as you well know, the president wanted to thank Republican senators for moving en bloc in some cases a huge number of nominees. Of course, that's the job of the Senate, and it's one that doesn't get a lot of coverage. But there's one that may just not make it. According to John Thune himself, quote, he's not going to pass. The line from the majority leader. We're talking about Paul Ingrassia, the president's nominee to run the office of the special counsel. This is another text scandal that has been made public by Politico, allegedly, of course, that has now prompted at least 3 other Republicans to oppose his nomination. In this text chain, which was repeatedly bumping into themes of Nazism, he said that Martin Luther King Jr.'s holiday should be tossed into the 7th circle of hell, and that when asked about his viewpoints, he said he has a bit of a Nazi streak. Is Mr. Ingrassia's nomination as good as dead, Maura?
It certainly should be. I mean, that's a disgusting way to speak, just even if it's in private text messages. The fact that he has that on his heart and he believes that enough to say it, whether he's in his mind joking or not, there's something that spurred him to say it, and that should be disqualifying in and of itself. And so Thune is right to say that, he's not going to pass on Thursday. I'm sure that's a conversation that's being had in that lunch right now as they're celebrating. I think there are probably some Republican senators who have a bit of a queasiness about some of the ones that they've gotten through in that first, few months there that, I think of Pam Bondi, I think of RFK Jr. I think there are a couple of senators who are wondering if they made the right choices. But with this, the fact that so many, again, you said 3, at least maybe 4 or 5 I've seen, they're going to say that this isn't a yes vote for them. That's encouraging to me.
Right, and the Republican senators expressing opposition. The list keeps building. We also heard from Senator James Lankford, a Republican from Oklahoma, earlier today, saying that he thinks Ingrassia should withdraw. Jeannie, is this just mounting pressure on the White House? When can we expect to hear from them, if at all, on this nomination?
Yeah, I mean, it is telling, and I agree wholeheartedly with what Maura just said. It is telling to me that the White House has not yet come out and said, we are going to withdraw his name, considering how disgusting these texts are. This is, though, not surprising from the White House, right? We have had a president who has flirted with neo-Nazis in the past. He is being accused, by the way, of at the Quantico speech of dog whistling to neo-Nazis. The list of things goes on. And of course, this comes at a time when people in this country who have long fought for civil rights are feeling under threat from a variety of specters, including the attack on DEI, but also the Voting Rights Act case that the Supreme Court is arguing and may strike down Section 2 any day now, or at least in the spring. So it is shocking, and his name should be withdrawn immediately from this White House, but they haven't, at least as far as I know, had any statement on this, which is not surprising, but it is upsetting.
It's an oddity here because I don't think anyone really even knows who leads the office of the special counsel. It's not like we're talking about Attorney General here, more or Secretary of State. This could have been handled pretty quietly, right? If you're a nominee, it's not unusual to have a withdrawal letter handy in case something happens. Does Ingrassia just handle this on his own?
I mean, I don't know. I think when you look at some of the Trump White House, either whether they're candidates or acting positions, they have all mostly decided to go with the Trump method of doubling down, tripling down, and holding firm, and more or less hoping that the president will back them, and then the public scrutiny and our distaste for it will subside because something else will come and distract us from their issue. And unfortunately, I do think that's probably what he is holding out for. He's waiting for direction from the White House. He's not going to back down on his own accord, which speaks more about him and his own personal moral compass than anything else. But I do think there are some people in the White House who should have acted and have not done so yet. And maybe today's meetings with Republican senators giving the president a real picture of what's going to happen on Thursday may help spur that action to take place today.
Jeannie, final 30 seconds here. I do want to ask you about some policy we could see hit the Senate floor this week, this bill to pay federal workers and our troops. Are we expecting this to actually pass amid the shutdown? Because it looks like Democrats are the ones opposing this.
Yeah, my view is that it should pass, but I can see the Democrats' point, which is that it still doesn't address the underlying issue, which is the Obamacare subsidy. So I think it's still an open question whether it passed. And of course, you've got some Democrats like Fetterman out there calling for real changes to Senate rules to avoid these kinds of things in the future in this filibuster, the necessity of the filibuster-proof majority. That's going to obviously rankle people on both sides of the aisle.
All right, our political panel today, Jeannie Shanzano and Maura Gillespie, we thank you both so much for joining, as always. And Joe, we did get a redhead on the Bloomberg terminal moments ago. President Trump's administration is involved in talks for a U.S. company to access one of the world's largest untapped deposits of tungsten in Kazakhstan.
That's right. News coming from Kazakhstan, potentially by way of the White House. We'll keep tabs on this for you. As Tyler mentioned, it just went red on the terminal, so we'll have much more straight ahead. Also, our conversation with Congressman Brian Stile. We've been talking shutdown. Let's hear from a stakeholder in the House. The Republican from Wisconsin is in the nation's capital, and will join us live straight ahead here as we talk politics in Washington on Balance of Power. This is Blue.
1:40 on Wall Street. I'm Alexis Christoforous. Stocks are wavering after President Trump said that while he expects to make a good deal with Chinese President Xi Jinping, maybe that meeting set for this month won't happen after all. The Dow Jones Industrial Average off its best level of the day, but still managing to rally 283 points. The S&P 500 up just about 4 points. And we have the NASDAQ Composite now down by about 35. Gold sliding, pulling back from that recent torrid run-up to records, now down 5.6%, its biggest one-day drop since 2013. Shares of General Electric up now about 0.6% after raising its full-year profit outlook for the second consecutive quarter as the jet engine maker cashes in on strong air travel demand and high demand for maintenance and new engines. We also have shares of General Motors in the spotlight today. That stock revving up 16% off the back of better than expected earnings driven by pickup truck sales and fresh relief from those auto part tariffs. GM also expects next year's results to top 2025's earnings. And it's official, Blackstone and TPG have agreed to acquire Hologic for as much as $18.3 billion. That includes debt. It represents a 15% premium to Hologic's closing price yesterday. The Abu Dhabi Investment Authority and Singaporean sovereign wealth fund, GIC, will take minority stakes in Hologic as part of that deal. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
Alexis, thank you so much. We'll have more from Alexis Christoforous. Top of the hour, 2 p.m. Eastern Time, as Business Week Daily kicks off live from New York, as we keep tabs on the Tuesday trade here on Balance of Power, with our eyes on Capitol Hill and a government shutdown that is now 21 days old. Maybe you've stopped keeping count at this point because nobody seems to see light at the end of the tunnel. We do see some important dates, though, including the next paycheck fulfillment for our military, our active duty military, remembering that $8 billion that the president managed to find to pay the troops only covers a single pay period. You've also got federal law enforcement, and there's a piece of legislation that's going up in the United States Senate that would address some of this. It's just not expected necessarily to pass. As we told you yesterday, Democrats are not on board, just like they are not on board with the continuing resolution. And I'll tell you what, Tyler, as we consider the idea here of a CR expiring on the 21st of November, that's the plan on the table. It's a month away from today. You've also got November 1st, open enrollment beginning, and the expiration of SNAP benefits. So maybe it's no wonder John Thune suggests a full-year CR might be coming.
Not just suggesting a full-year CR might be in the pipeline, but also that maybe it's time for the House to come back into session so that they can repass a clean CR that has that end date in place. Because, as you mentioned, November 21st is what they're currently voting on, but we are just ticking closer and closer to that. Now, we're lucky to be joined now by one of those members of Congress who is currently out of session, but joins us now from Capitol Hill. That's Congressman Brian Stile, Republican representing Wisconsin's 1st District. Congressman, it's good to see you, and thanks so much for joining. I'd love your opinion on this. The Senate Majority Leader suggesting it's time for the House to come back into session. Do you think that's a good idea?
Well, it's time for the Senate to pass the clean CR. We're in this situation because the Senate Democratic leadership under Chuck Schumer refuses to vote for a clean CR. This used to be a non-controversial vote here on Capitol Hill. In fact, Democrats have voted time and again in favor of clean CRs, most recently in the spring. What changed is the politics for Democrats in the United States Senate. So the House has done our job. We're all waiting for the Senate to do their job. Chuck Schumer is beholden to his radical base. A lot of us are frustrated. It's time for us to move on because there's really important negotiations in front of us, including fiscal year 26 appropriations, as well as other policy priorities that you mentioned.
Congressman, it's good to see you. Kevin Hassett had suggested yesterday maybe there's capitulation this week and this whole thing comes to an end. But every time the Senate votes on this, it's the same 2 Democrats and independent who break ranks here. So, I mean, at some point, we could be bumping up against November 21st. What do we do then? Do you wait forever for Senate Democrats? We just stay shut down until Chuck Schumer changes his tune?
Well, the consequences of the Schumer shutdown continue to build. President Trump has done a great job taking some extraordinary actions to make sure that the consequences aren't felt by our troops, for example. But many of these are one-time actions, and so the consequences will continue to build. The pressure will build, and I do believe at some point the Senate will come to the table and recognize that their action to close the federal government and put at risk, for example, payment to our troops, the men and women wearing the United States military uniform, was the wrong bet. The sooner we come out of the shutdown and begin the substantive negotiations on fiscal year 26 approach as well as other policy priorities, the better off we are.
Well, the White House has come to the table on some of these really critical issues like military pay for the Coast Guard, also finding that supplementary funding for that key federal nutrition assistance program that helps women and children. But, Congressman, we hear from Democrats that they want President Trump to come to the negotiating table when it comes to the policy stances at stake here, particularly related to health care. We know he had this luncheon today with Senate Republicans, but do you think President Trump should be getting more involved as this shutdown drags on?
Well, I think, again, the challenge here is we put forward a clean CR now, as you noted, weeks ago, passed in the House. We're 3 weeks into a shutdown. We should be 3 weeks into the CR, utilizing the time that we're burning right now to negotiate those policy priorities. Many of these have year-end deadlines, appropriate conversations for us to be having, but we should be doing that in the context of an open and operational government. Again, the House did our job. The Senate is running into filibuster challenges. Senator Fetterman is even calling now and saying maybe we have to overcome that because a minority of United States senators are standing in the way under the leadership of Chuck Schumer from reopening the federal government.
You've seen what's going on with the premiums here, Congressman, and I know that you're careful not to conflate this debate with that of government funding. But we saw a couple of states this morning in Georgia where I know Congresswoman Marjorie Taylor Greene has been making some noise here. Obamacare premiums could rise as much as 4 times. They could quadruple. In Maine, plans will see premiums up an average of 24%. In Michigan, could surpass 18%, and that's before factoring in the expiration. What would it mean for people looking at their subsidies rise in Wisconsin?
Well, I think what we see as the data continues to come in, that the Affordable Care Act was anything but affordable for the American people. The program the Democrats put in place, and again, the Democrats set the sunset date themselves. This was a Democrat decision to sunset it at the end of the year. But what we continue to see is challenges inside the structure of the program. There is plenty of evidence of the waste, fraud, and abuse inside this Democrat-created program. There's a Treasury report that came out under President Biden that identifies the significant flaws inside these premium credits that go back to insurance companies as to why it's structurally unsound. So at an absolute minimum, we would need to make meaningful and substantive reform in the program. But again, these are the conversations and the debates that we should be having right now on Capitol Hill. Instead, we're shut down, all because Chuck Schumer and Democrats in the Senate refused to open the government with a clean CR to allow these negotiations and debates to take place.
Well, Congressman, Joe just outlined one of the potential impacts for constituents. Another has to do with economic assistance for farmers. A senior administration official tells me that's currently been delayed because of this ongoing shutdown. I looked up the stats. The USDA estimates Wisconsin farmers produce $1.3 billion worth of soybeans each year. This is, of course, at the center of this issue, as China hasn't imported any U.S. soybeans so far this harvest season. I'm wondering if you're in any discussions with the administration on what this aid package might look like. Are they talking with Congress on this, and any update on when it could be rolled out?
I had a long conversation with 2 soybean farmers from Wisconsin yesterday talking about this exact challenge. The short-term fix may be that type of a subsidy, but the long-term fix is getting trade agreements in place and having China once again purchasing U.S. soy. The U.S. soy exports are heavily dependent on the Chinese markets. The broader trade negotiations that we're having is causing concern. I'm of the view that we have a huge opportunity here to work with our allies, hold China accountable, and then strike the trade deal. I think President Trump's in a position to do that. The short-term fix may be providing some level of assistance. The long-term fix is striking these trade agreements to the benefit of American workers and farmers.
Congressman, we appreciate the insights as always. That's Brian Stile, Republican congressman from Wisconsin, who chairs the House Admin Committee, and always a pleasure to have the chairman with us as part of our conversation here on Bloomberg. Tyler, there's more breaking news. You mentioned it very quickly. We're learning more about tungsten than some of us have ever known. When we start talking about rare earths and rare minerals that are used, in this case, in the manufacturing of defense equipment and other critical technologies, this is a big one, a chemical element. If I bring you back to chemistry class, it has the symbol W. Its atomic number is 74, and it has the highest melting point of all known elements, which is why, Tyler, this is one of the most sought-after ingredients for weapons manufacturing, especially when it comes to building rockets.
Right, exactly. And this headline appears to be underscoring the administration's push to try to bolster its own supply and position in the critical and rare earth market to really compete with China ahead of this really important meeting next week between President Trump and Chinese President Xi Jinping.
Yeah, that's right. Joe Doe is writing about this right now on The Breaker, and I hope that Joe doesn't mind us interrupting his coverage here in the clutch. Bloomberg News economic statecraft reporter. Joe, it's great to have you. This is a big one, of course, as we remind ourselves that all roads lead to China.
Yeah, exactly. It, in a lot of ways, is just another thing that really kind of emphasizes this this ongoing trade war between the United States and China, which we have seen escalated now in recent weeks. Tungsten is just another one of those critical minerals that the Defense Department needs more of, and that the U.S. has said, listen, we need to wean our needs off of China specific.
Joe, let's connect the dots here and look at the broader picture. Yesterday, the U.S. and Australia inking this $8.5 billion cooperation agreement when it comes to critical minerals. Does this mark perhaps a new era for the administration as it is looking at supply chains? Because up to this point, we've really seen them focus on domestic projects, right? I'm thinking MP Materials, Trilogy Metals, things like that. But now it looks like we're kind of pointing outward.
Yeah, I think, you know, this is one of the things we had been talking about recently, which is we had reported at the end of September that there were a group of mining companies from Australia in the U.S., in D.C., in the middle of September, and they were talking to senior Trump administration officials who had been saying, look, we're looking for warrants in companies, we're looking for offtake agreements, and when you can, bringing your processing or production here to the United States. And one of the things that we noted when we had that scoop was this is a very serious indication that the administration is looking at foreign companies. And the scoop that we have out now with tungsten says that Howard Lutnick himself has been facilitating talks with the U.S. private company and the Sovereign Wealth Fund of Kazakhstan. Again, so that's another non-U.S. based deposit. And it's showing that maybe the Trump administration, when it comes to these critical minerals, supply chain, permanent magnets, everything else, are saying, you know what, nearshoring might be an important aspect of this whole thing. We can't just do it all here.
We've been seeing a pretty interesting turn in some of the companies that Tyler mentioned, whether it's MP or some of the others that have been on an absolute tear most recently. In fact, MP Materials was up over 400% year to date. Shares of other rare earth companies, USA Rare Earth, Ramaco, are these the new meme stocks, Joe?
That's a concern. That's a real concern. There was a note this week from, I believe it was one of the big banks saying, you know, there is a concern that some of this becomes a bit of a meme stock situation. You have the quote unquote good companies, right? The ones with with substantial balance sheets that have serious operations or deposits that are more than deposits, right? Like actual mining activity. And then you've got a lot of others who are exploration companies and junior miners. I mean, that's a space that I covered for 10 years at Bloomberg. And typically if you're exploration or junior miner, that's not like you were sitting down writing a big story about them, right? It was these guys would go to conferences and show you something called core samples, which were just long cylindrical things sitting on a table of literal earth that they had shot down into the ground, grabbed up and showed, hey, look at all the veins that are in here. I mean, these are the kind of companies that we could be talking about, and that is a concern in all of this, despite the fact that we need these minerals, and despite the fact that the administration is putting effort into bringing onshore supply chain of it, you do have to wonder which of these will actually materialize.
All right, and Joe, I'm going to pull one line from your reporting. The Trump administration is not currently seeking an equity stake in this venture, according to U.S. officials. Joe Doe, Bloomberg News' economic statecraft reporter, thank you so much. And quite the incredible scoop, Joe, especially on this news that we are gearing up for this big high-stakes meeting between President Trump and Chinese President Xi Jinping.
That's right. Tungsten, letter W.
I've learned that you love
Learned a lot today about
chemistry,
this.
apparently.
Yeah, well, I'm learning as I go here. Many thanks to Joe, and meet us back for the late edition of Balance of Power. We'll have a lot more to talk about starting at 5 p.m. Eastern. Alongside Tyler Kendall, I'm Joe Matthew. This is Bloomberg.
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. Yes, indeed, this is Bloomberg Business Week Daily. Carol Master along with Tim Stanovic live here at Bloomberg headquarters. We do have stocks bouncing around a little bit, but Tim, they have been hovering near a record again amid mostly positive earnings and an expected hope for an inflation print on Friday. Yes, even though the government is shut down.
Also, gold and silver posting their steepest drop in years. We're going to have more on the trade in just a minute. And a reminder, Carol, we got some big earnings, too, after the bell.
Yeah, let's just bring up some boards real quickly because gold, we definitely have seen some big moves in today's session. I think we see gold, as you can see, down about 5.6%. Same thing, we've seen silver pulling back. We know that this has been a rather dramatic trade for some time. So we're going to dig into all of these market factors throughout the next 60 minutes. We're also going to get into the U.S. assist for Argentina. Why? Why now? What might it really be all about? We've got a great voice on that. Our own Eric Schatzker settling in here in our studio.
Plus, as I mentioned, lots of earnings happening after the close. Netflix is the big one, reporting results amid a changing media landscape that includes Warner Brothers Discovery shopping itself around. Bloomberg's Lucas Shaw is going to be joining us fresh off that conversation just a couple of weeks ago with Netflix co-CEO Greg Peters. And yeah, they talked about the potential for making a deal.
All right. And then we're also going to get into working towards financial security to create an inclusive economy. All of that coming your way over the next hour of Bloomberg Business Week Daily. Let's kick it off with a check on the trade. Here is Alexis Christoforous.
Busy day, guys. Thanks very much. Yeah, all the major averages hovering near their record highs, but the Dow Jones Industrial Average really adding to yesterday's big bounce, up now about 300 points. The broader market, S&P 500, it's up about 10. The NASDAQ Composite has been bouncing in and out of the green, now down about 9 points. We've been mentioning it all day, but gold is getting knocked down after going on that spectacular record run. It is down now about 5.5%, biggest one-day drop in about 12 years. We've got the stronger dollar making gold and other precious metals more expensive for buyers. Coca-Cola's earnings beat the street, shares bubbling up now about 4%. It's helping to lead the Dow higher as well. Coke reporting strong demand for its zero sugar drink. It's also set to launch its cane sugar trademark soda here in the U.S. this fall, and it's going to start offering mini 7.5-ounce single-serve cans priced at less than $2 to target lower-income consumers. We've got shares of 3M hitting a 4-year high today as the parent of Post-it notes and Scotch tape posts better than expected quarterly sales and profits. It also increased its full-year outlook. Shares of 3M up 6%. And Netflix near the flat line here ahead of its earnings report due out after the closing bell. Results expected to get a boost from advertising revenue. And the K-pop animated movie K-pop Demon Hunters. Oh, by the way, Netflix is reportedly among the companies interested in buying some or all of Warner Brothers Studios. Told you it was a busy day. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Send it back over to Carol and Tim.
All right, Alexis in for Charlie Pellet. Yep. Alexis is right. It's a busy day. I kind of don't know where to start. Oh, actually, we did know where to start. We wanted to talk about what is going on between the U.S. and Argentina. We did mention that Argentina's peso weakened to a fresh record, and bonds gave back most of their gains as U.S. Treasury Secretary Scott Bessent's latest boost to the nation proved short-lived. The U.S. Treasury signed an economic stabilization agreement with the Central Bank of Argentina, again coming from the Treasury Secretary Scott Bessent. He put that post out on X, Tim.
The secretary characterized the Treasury's $20 billion swap line with the crisis-prone nation's central bank as a, quote, economic stabilization deal. He said the agreement is, quote, a bridge to a better economic future for Argentina, not a bailout. We have a lot of questions, Carol, and there's one voice who we wanted to get on the program today.
He has no idea, but we were like, no, we're going to talk to Eric. We need to talk to Eric. Eric Schatzker is who we are talking about. He's Bloomberg New Economy editorial director. He has covered numerous global financial and market cycles and crises. He's interviewed various Latin American leaders, including Venezuelan President Maduro, former Argentinian President Mauricio Macri. Hopefully I'm saying it correctly. I probably am not. He also had the September cover story on Secretary Bessent for Bloomberg Business Week. You are the voice we wanted to talk to. Thank you.
You flatter me.
No, I speak the truth. We speak the truth. Why is this happening now? And why Argentina? Why does the U.S. want to do this?
Well, so I think we can unpack this in 3 ways. One is, why is the U.S. doing this? The second is, what exactly have we got here? And the third would be, how might it all end, perhaps in tears? I'll take on the why, and this actually goes back to that story you mentioned that I did about Scott Bessent, the Treasury Secretary, for Bloomberg Businessweek in September, I spoke to the Treasury Secretary back in late July. And at the time, he told me that one of his overarching goals in office as the Secretary of the Treasury was to, quote unquote, lock in dollar supremacy. And I asked him, well, how do you do that? And he said, and I didn't appreciate the significance of it at the time, was by facilitating swaps through the Treasury Department, as opposed to the way that swaps have traditionally been facilitated, which is by the Fed, from central bank to central bank. Now, there is precedent for this. The Treasury Department did that from Mexico back in the mid-90s during the peso crisis, and it helped. And maybe it'll help Argentina. But it appears that under the Trump administration, the government's focus is on, again, cuts to the why. It's not just about locking in dollar supremacy. It's using the dollar as an economic tool to support countries with which the United States feel it has some kind of ideological kinship or some kind of trading relationship. It's not like Argentina has been one of America's major trading partners. It has not. The amount of bilateral trade that goes on between those two countries is a fraction of what it is with the United States and Mexico, or the United States and Canada, or even the United States and Europe. So in that respect, it's unusual. I think if you think about it, though, in terms of locking in dollar supremacy and using the dollar as an economic tool, and a tool of geostrategy, if you will, it begins to make a little more sense.
You said that there are three different elements that we could talk about with this. One is how. Another one is how this could end. And
Sure. Well, let's talk about what is it that we're actually talking about. You mentioned that the Treasury Secretary today talked about it as a bridge to a better economic future, and
not a bailout.
And not a bailout. But the operative word there is bridge, because bridge means something from here to there. In other words, what's the there? This is a bridge until when, right? Yeah. Is it a bridge until after Argentina's midterm elections on the 26th of this month, Sunday? Is it, and Trump seemed to suggest as much the other day when he said, well, you know, if Milei doesn't win, we'll get rid of the swap line. So that's one possibility. Is it a bridge until Argentina decides to abandon the peso peg, which Sturzenegger, the Minister for Deregulation and State Transformation, said was in the cards just last week when I interviewed him here in New York. Is it a bridge until the $20 billion runs out, which might happen because Argentina was burning through $1.5 billion worth of foreign currency reserves a week, $1.5 billion a week before the swap line was put in place? Is it until Argentina's economy can eventually support an exchange rate at this level? It certainly can't right now. Or maybe is it a bridge until, I don't know, President Trump just loses patience or President Milei does something to annoy him? It could be any of those.
It's a lot of questions. It's a lot of possible scenarios. You know, Bloomberg reported out yesterday that Jamie Dimon is visiting Argentina this week, kind of an unprecedented show of support for the government. At the same time, we've had, I think it's the Wall Street Journal reporting that banks are having a hard time kind of getting around this without some kind of guarantees.
Nobody knows what Argentina is pledging as collateral. In fact, nobody has seen the agreement to our knowledge. Right. The banks themselves, which are playing intermediary roles here, don't know what Argentina has agreed to pledge, you know, so that the United States isn't just on the unlimited losing end of a bad trade. That is possible here, right? The big difference between what's going on here and the comparison that everybody wants to make with the trade that broke the Bank of England, that the Treasury Secretary was involved in when he worked for George Soros and Stan Druckenmiller back in the early 1990s. The big difference here is that then the UK had nobody backstopping them. Now Argentina has the United States backstopping it. But as I say, nobody knows until when. Nobody knows if there are any mechanisms that have been put in place to make the U.S. taxpayer, if you will, whole, should the Treasury Department sustain losses on this trade. I've heard that Argentina's uranium reserves may be involved, that some kind of preferential access to Argentine markets might be involved. Who knows? It's like a ready, aim, fire, you know, or a fire, you know, ready, aim, in the sense that the swap line was put in place, and then it appears, since no document has surfaced yet, that all of the mechanics behind it are being taken care of after the fact? I don't know, but my point is that if anybody knows, he or she hasn't put up his hand to say, hey, I know.
Yeah.
The Treasury Secretary, as you mentioned, described this as a bridge to a better economic future for Argentina, not a bailout. Is the not a bailout part a fair way to describe it in your view? Is this not a bailout?
I think a bailout is in the eye of the beholder. In some respects, it's unquestionably a gift to President Milei ahead of these midterm elections. It isn't working for the time being, right? The peso fresh weakened today to a fresh low, and Argentine bonds, which had gained earlier on the formal announcement of this agreement, have since given up those gains and I think are posting losses. So it would appear to be a gift in the sense that the peso exchange rate or the peg to the dollar is unsustainable. Milei doesn't want to allow the peso to float freely. He wants to maintain this peg so that Argentine inflation is under control, a critical economic consideration going into the midterms. So even if Argentina, there's no question, if the peso peg were to be abandoned today, it's not like inflation would show up immediately, but it wouldn't show up in official statistics, for some time to come. But Argentines are so conditioned to this,
right?
They know what would happen.
Again, I want to go back to, and I know we've got a couple more minutes here, but Eric, the U.S. involvement, and again, it may be a relationship President Trump wants to have with the president of Argentina, but I mean, Bloomberg editors wrote an opinion piece, why isn't the IMF coming in here? And the other question we as a group have been trying to figure out, is it also to kind of keep China at bay? Is there that aspect as well?
Argentina also has an existing $18 billion currency swap with China that goes back well before Sturzenegger was the central bank governor. I think it may go back to 2015 and perhaps even before that. There has been some talk that one of the conditions behind, or at least one of the underlying conditions to this swap with the Treasury would be that Argentina somehow winds up that previous swap agreement with the Chinese. Who knows? As far as why the IMF isn't involved, I think the easy answer to that question is, how many months would it take the IMF to get its act together? This was a perceived need on the part of the Argentine government, the Milei government, heading into these critical midterm elections that, I'll repeat, are just 5 days away.
I know, Sunday, right?
Right?
Yeah.
There's no conceivable way that the IMF, in my mind, given everything that we've observed in our careers and everything we know that precedes that, there's no way that it could possibly acted with that much haste.
So before we let you go, how could this end? What could it mean for the U.S. if it's a bad trade?
Well, if it's a bad trade, it could. I find it hard to believe that the United States would put itself in a position to ultimately lose money. But it may lose money on paper and have to recover that money, just like somebody who has been left holding the bag on a bad debt by liquidating some kind of Argentine assets or somehow, turning preferential access into Argentine assets or Argentine markets into value over time. That wouldn't look good. And again, it all depends on how long this bridge is. We have seen in the credit markets that you can paper things over for an awfully long time before either things reflate and you're able to cash out at par, or you have to ultimately take some losses. So it's not like that's necessarily going to happen next week. It's not like it's necessarily going to happen next month, next quarter, even next year. But if Milei doesn't succeed, and if the Argentine economy doesn't continue to revive and inflation doesn't remain under control, it's hard to see how the speculative pressure against the peso won't continue. And we may even see, I don't know, we can only speculate here, that $20 billion may not end up being enough.
All right, we just got schooled by Eric Schatzker in a good way, Thank you so much, Eric.
A pleasure.
So appreciate it. It's what we needed to know. Bloomberg New Economy Editorial Director Eric Schatzker. Hey, quick headline crossing the Bloomberg. Walmart shares just down about 0.4%. This as the giant retailer pausing job offers to candidates requiring H-1B visas. So we're going to follow this and monitor it. You can read more about it. It's on the Bloomberg.
Hey, let's shift gears a little bit and talk about geopolitics, about U.S. earnings, also about what's happening here with the U.S. economy, AI spend, the movement to resolve geopolitical conflicts, gold and silver dropping, perhaps movement in Europe and Ukraine toward a 12-point plan to end Russia's war, and more. Here with the risk factors coming at financial markets right now is Ben Inker, co-head of asset allocation and portfolio manager of the GMO Dynamic Allocation ETF, GMO, along with us from Boston, with all of us coming at it, what matters. What is top of mind for you, Ben? We're just off of that conversation with Eric Schatzker about Argentina. There's a lot coming at investors right now.
Been pretty volatile. They have been jumpy, even though we are near records. And there's a lot of uncertainty about what's going on in the world. What we are trying to focus on when we're talking to our clients is there still are a bunch of interestingly cheap assets out there, which are not priced for, perfect outcomes. So even though there's a lot to be worried about, there's a lot of stuff we find really interesting and are talking to our clients about getting invested in.
All right, not so fast. I'm not going to go to the good stuff yet because we just came off, an important conversation about Argentina. Does that matter to you guys? Are you talking about it? Are you concerned about that? Let's just go there. I kind of want to go through a laundry list. Matter, not so important?
Argentina matters a lot to Argentina. Unfortunately, it doesn't matter that much to the rest of the world, right? Argentina has, staggered from crisis to crisis for most of the last century. They're in another one. It's a difficult situation. I'm somewhat sympathetic to what Milei has been trying to do, but the mechanism by which he's trying to do it, which is fixing his currency at an overvalued level, that it's really hard for that to end well. No matter who you've got on your side, it's really hard for that to end well. I don't think the world will fall to pieces if Argentina finds itself in another debt crisis because, my God, they have spent more time in debt crises than they have outside of them.
All right, speaking of debt crisis, there are some worried about the U.S. debt fiscal position. We've got a government shutdown. Jamie Dimon saying, hey, it's never good when a government is shut down. Government shutdown a problem, in your view?
It's certainly not great. And the longer it goes on, the more problems it creates. There are, if this goes on further and people, more and more people are not getting checks, whether those are direct government employees or people depending on some of the payments that are going to get stopped soon, that is a problem for the economy. There are things that need the government's participation to happen, kind of IPOs and M&A and stuff like that. So you don't want it to go on for longer than it absolutely has to. I would say the concern is it's not clear how this one ends. It's not clear that either side has shown any interest in budging. So fingers crossed that we can end this relatively soon. But it isn't a problem the first day the government shuts down. But as it goes longer, it creates more problems.
For those keeping track, it is day 21 of the government shutdown right now. Ben, I told you we had a long list that investors are dealing with right now. We have a long list for you. We think about the AI spend quite a bit. We saw shares of Alphabet fall today just on news that OpenAI is teasing a new browser that is AI-enabled. We expect to get some details on that a little later today. The AI bubble, or what some say is an AI bubble. I know you think it's an AI bubble. Why should we be concerned?
Well, there's a couple of reasons to be concerned. One is the AI companies have gotten to be a very big piece of the U.S. stock market, and if they fall, that's a lot of wealth lost. I would say kind of the bigger concern for the economy is the aggregate AI spend in the data centers and the energy behind them and all of that is getting to be meaningful across the economy. And there's sort of two levels of concern. One is this a misallocation of capital? Are there going to be significant losses because, we are building data centers that are not going to get used? Or what happens if this does stop? The nice thing when data centers are being built by the likes of Alphabet and Amazon and Microsoft is they're not really doing it out of debt. They're doing it out of cash flow. So they're not in danger themselves from the misallocation of capital. But the economy has a lot riding on this continuing. And we do think it's gotten somewhat overheated, and some of the deals that one hears about are kind of weirdly and disturbingly circular, and suggest that maybe not even all the demand that appears to be there is real.
Yeah, certainly something we've been talking about a lot. I want to switch gears to what we see in gold and silver today, seeing their steepest sell-off in years, investors locking in profits, concerns that the recent historic rally in the precious metals left them overvalued. That's our right through on the Bloomberg terminal. When you look at gold and silver, when you look at some of the different moves in asset classes, I don't know, what is it telling you? Are all of these moves making sense to you based on the fundamental backdrops?
Well, I certainly think that gold and silver kind of had every right to fall sharply after how sharply they rose. I mean, gold in particular is a very speculative asset, right? It's very hard to come up with this fair value for gold. It doesn't have cash flows associated with it. People buy it in the hopes it will go up, or they buy it in the fear that other things will go down. And it has, in recent months, gone up in an unsustainably fast way. Maybe there's some short squeeze aspects of it. And I don't know whether, Diwali has caused some demand to fall off at a time where there is some selling pressure. But when you have a market that becomes as manic as the precious metals market has been, it's going to be volatile, and there's going to be two-way volatility. And the thing about an asset that doesn't have a definable fair value is, man, it can fall a lot if it wants to. The assumption that gold is a long-term store of value, maybe that's true over 100 years. But if you are hoping your gold will be worth the same next year as it was this year, it's a much more volatile asset than anything you'd really want to put those kinds of short-term hopes on.
So Ben, given everything that we've spoken to you about and more, the question of asset allocation comes up and how investors should be positioning themselves in this environment. You're co-head of asset allocation at GMO. And look, asset allocation is obviously personal and depends on where people are in life, but big picture, given that you think we're in some sort of bubble with AI, you're not necessarily buying the gold story. How should people be positioning themselves right now?
Well, look, if there is an AI bubble going on, one nice thing is that is largely a U.S. phenomenon, and Europe and Japan and most of the rest of the world, they just don't have the AI plays. That's hurt them in relative performance the last few years. But it does mean that if the AI bubble bursts, you don't have a lot to lose. We see a lot of good value in Europe. We see good value in Japan. And the other thing going on in Japan that is really spectacular is a revolution in the market for corporate control. There have been more deals in the first 9 months in Japan, private equity type deals, merger deals, than we have kind of ever seen in a similar period. And that has the potential to unlock huge amounts of value for shareholders. So we really are fascinated by and excited about the prospects in both the public and private markets for Japan. And there's a lot of really cheap stocks still in Europe. And we think the European economy has less at stake in the AI game. So I am sure everybody listening to this has the money in the AI stocks as it is. But diversifying some into some of the cheaper stocks in Europe and some of the really interesting things in Japan, particularly Japanese small cap, there's really good potential for returns in both places.
All right, got to run. Covered a lot. Ben, thank you. Ben Inker, co-head of asset allocation, portfolio manager of the GMO Dynamic Allocation ETF over at GMO.
Hey, some headlines crossing the Bloomberg. Some headlines crossing the Bloomberg terminal. Apple's effort to reinvent the iPad by adding a giant foldable screen has hit development hurdles, potentially delaying the planned launch. This according to a report by Mark Gurman. The stock briefly did take a little bit of a dip. It's recovered. Apple shares up right now by about 0.5 percentage point.
All right, back to the markets we go. We do have stocks across the board higher on this Tuesday, but let's get a breakdown of what exactly is going on. For that, we toss things back over to Alexis Christophers in for Charlie Pellet. Hey, Alexis.
Thanks, Carol. 224 on Wall Street, and stocks are mostly higher amid this flood of earnings reports. The Dow Jones Industrial Average adding to yesterday's big rally, gaining 313 points. The S&P 500 is up 10, but the NASDAQ Composite slipping 14. Yields are lower. The 10-year yield below 4% now at 3.95%. The 2-year yield down to 3.45%. And gold has been a big topic today, down about 5.5%. Biggest drop in about 12 years as investors start to lock in some profits after that record run-up. Walmart has paused offers to candidates requiring H-1B visas. That's according to people familiar with the matter. It's the latest example of how the Trump administration's $100,000 visa fees are disrupting the workforce. General Motors having a great day. Stock is up better than 15%, helping to lead the Dow higher after third quarter earnings and revenue topped estimates. The automaker also raised its guidance and reduced its expected impact from tariffs this year. And what a week for Beyond Meat. After soaring 127% yesterday, it's up another 87% today. That's after Roundhill Investments added Beyond Meat to its Roundhill Meme Stock ETF. Beyond Meat also announcing a deal today with Walmart to expand distribution to more stores across the U.S. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's the Bloomberg Business Flash. Back to Carol and Tim.
All right, Alexis, thanks so much. Well, Bloomberg's Lucas Shaw and team have been on the Warner Brothers Discovery story for a while now. The latest reporting has Warner Brothers shares soaring as we speak. That stock, what is it, up about 10%, Tim?
Yeah, it's up 9.6% as we speak.
All right, so a big kick to the upside. Here's what's going on. This is after the company came out and said it's considering a possible sale after receiving unsolicited interest from multiple parties. Netflix and Comcast are among those weighing bids for parts of the media and entertainment company, according to people with knowledge of the matter. So it made us say, wait a minute, because did you forget? Netflix co-CEO Greg Peters caught up with Bloomberg's own Lucas Shaw at Bloomberg Screen Time just earlier this month. Check it out.
There's been some reports around you guys being interested in Warner Brothers Discovery. Is there any truth to that?
I would say this, we come from a deep heritage of being builders rather than buyers. I also think that it's, one should have a reasonable amount of skepticism around big media mergers. They don't have an amazing track record over, the history of time. So, I would say it's our responsibility to evaluate all our options.
There's Netflix co-CEO Greg Peters with Bloomberg's Lucas Shaw at Bloomberg Screen Time. That was back on October 8th, less than 2 weeks ago. Let's go to Bloomberg News Bureau in LA right now and to Bloomberg News managing editor for media and entertainment, Lucas Shaw. He's the force behind Bloomberg Screen Time and writer of the Screen Time newsletter. Lucas, I don't know, I was listening to that conversation live when you were doing it with Greg Peters, and it sounded like the builders, not buyers part really stuck out to me, and talking about the history of mergers that have gone sour in the industry. But it sounds like, at least according to your reporting along with Kelsey, that they could be in the game for it.
Well, I think the build, not buy is still the Netflix mantra. It's a company that has avoided doing major M&A throughout its entire history. Some of that informed by co-founder Reed Hastings' experience at his prior company, a software company, where that kind of grew through a lot of mergers and it didn't end very well for him or for the company. But they do take a look at everything. They study it, they run the data. And I think Greg Peters' colleague, co-CEO Ted Sarandos, has always been kind of enamored of studios and lots. And if they could get their hands on Warner Brothers, the studio, and perhaps more importantly, the characters and IP that Warner Brothers owns and that HBO owns, that's something that Netflix would be very interested in. They have no interest in the cable networks like TNT, TBS, CNN. I don't even think they have very much interest in the HBO streaming service because they can just feed the content into Netflix. So if there's a way to do a deal that gets them what they want without the stuff they don't want, they're open to it. But my read on the situation, even though we have reported that Netflix and Comcast are interested, which is true, is that you've got one very clear interested party in Paramount, and you have a Warner Brothers Discovery wanting to either get a better offer from them or find someone else or have more leverage in these conversations. And so they're basically saying, that's it, we're for sale, come and make an offer, and they want to get as many people in the tent as possible so they have as much leverage as possible.
All right, so Lucas, Warner Brothers, as you said, rebuffed Paramount, Skydance's initial takeover around $20 a share for being too low, according to those familiar. So is this still a live deal? Are we expecting Paramount Skydance to come back?
Yeah, definitely. It is still a live deal. There are still conversations happening. I think there have been reports that Paramount has made several offers. They're clearly exploring how best to proceed. Do they need partners? Do they need to be hostile and go public with it? You know, what is the number at which the Warner Brothers Discovery board has to say yes, even if management doesn't want to do the Paramount deal, because it would likely lead to their dismissal. But I would not expect Paramount Skydance to walk away just because they're in kind of soliciting other bids.
Is it plausible for us to think that Warner Brothers Discovery could remain an independent company when the dust settles, that no deal could be done?
That's looking increasingly unlikely. I think it is possible that they go through with the split and do a deal after that, or come up with some arrangement in which there is still a split, but one piece goes to one of these buyers. But it's not feeling, because they're already going to split the company. So I think, you know, a year from now, 18 months from now, the odds of Warner Brothers Discovery being a whole and independent company are incredibly unlikely. But what exact shape it takes, we don't know yet.
So let's play out the Netflix part of this a little more, Lucas, because I'm intrigued with the idea of Netflix actually getting the studio, but not being interested necessarily in the legacy TV networks that are part of Warner Brothers Discovery. What would happen to that legacy side of the business if the studio were to get sold to Netflix or another buyer?
Well, it's hard to know because I don't think they're progressed enough in those talks for me to have the answer. But look, Warner Brothers Discovery was already going to spin off its TV networks. It can continue to do that, right? It can say, okay, that studio and streaming business that was going to be one part of kind of one entity going forward, that can go to Netflix, and it's up to Netflix, or they can negotiate how the HBO network fits into that, or the HBO streaming service fits into that, or they can find another buyer for that, right? If they've come to an if they feel like Netflix has made a great offer for just the studio and the lot and maybe some of the HBO programming, maybe they can take the rest of that and package it up, and where Comcast, which is spinning out Versant, which is its cable networks, is interested, maybe those two can come together. Now, once you're dealing with these spin-cos, it gets very complicated for tax reasons about what you can and can't do, because one of the reasons they choose to spin is to save money on taxes. But there's a lot of, I think they are trying to project optionality here.
Well, for Warner Brothers Discovery, I'm assuming they want to get as much as they can for all of their assets. Can they do that by breaking it apart? Is that really the smartest route, but maybe more complicated, versus just getting rid of the company in one full shot?
Well, they clearly think that there's more value in the parts than they're getting valued at in the whole right now. That's one of the reasons they're doing the split spin, however you want to talk about it, because they think the parts are worth more than the whole is currently being valued at. So yes, I think they feel like they could sell the studios and streaming for almost as much as the whole company is trading at right now. The real question would be, if you do that, is there actual value in the cable networks that are left over? Which, you know, I guess we'll find out. There's certainly not going to be as frothy a market for those as there would be for studio and streaming.
People who work there certainly hope there's value. Just real quickly, is there a clock ticking on this, or could this drag on for a little bit longer?
It could drag on. I spoke to an investor earlier today who said they'd be surprised if they saw this resolved this year. I don't know if that's the case, but they have opened up a process. You think back about how long the Paramount Skydance process ended up taking. It was, you know, a year before there was a deal, and then another year for it to actually go through. So I would imagine, you know, we've got at a minimum a few months left.
Okay, Netflix happening after the bell. We'll hear about their latest quarter and the upcoming current quarter that we're in right now. K-pop Demon Hunter is certainly going to be a star of the call. What else do we need to understand about today's report?
I mean, Netflix earnings, especially now that they don't report subscriber numbers, are a little less interesting than they used to be. It's a company that has been very steady. Investors tend to want fireworks. They want huge beats, and Netflix sometimes delivers that, but most often especially recently, I feel like they've delivered sort of modest beats. You know, most people expect them to post pretty good results. They had the movie this summer. They've had a steady stream of new programming, and Netflix has told us all along that their programming in the back half of the year is much better than in the first half. The question with earnings is always expectations, right? The street expectations for the company are already really high, so even if the numbers are pretty solid, they might not live up to what investors want or expect.
20 seconds. Lucas, does anybody really care now that there's like the Warner Brothers stuff? Is that what
They
the
definitely care because,
Okay.
you know, look, Netflix is a $500 billion company, so
Fair.
its results matter.
All right. So appreciate it. Lucas Shaw, thank you so much. Bloomberg News Managing Editor of Media and Entertainment, also the force, as we said earlier, behind Bloomberg Screen Time. Do want to mention some headlines crossing the Bloomberg terminal. This coming from Senate Majority Leader Thune, speaking to reporters at the White House just moments ago. He said he's hopeful this will be the week the shutdown, the U.S. government shutdown, ends. He says they are planning another vote on the stopgap bill tomorrow. So that, of course, goes on. We are getting ready to enter, what, our fourth week?
Yeah, this is day 21 of the shutdown. Meantime, markets mixed right now. The S&P 500 up close to 0.2%. The NASDAQ composite down just shy of 0.1%. The Dow up to the upside of 300 points. It's 0.7% higher.
When we come back, we're going to get into what and who is an economy for. That one, Bloomberg Business Week Daily, continues on this Tuesday.
It's 2:40 on Wall Street. I'm Alexis Christoforous, and the Dow Jones Industrial Average hitting an intraday record on the back of strong earnings from Coca-Cola and 3M. We've got the Dow up now 284 points. It briefly crossed 47,000 just a short time ago. The broader market is mixed, with the S&P 500 up nearly 8. NASDAQ Composite, though, is down 17. And gold and silver seeing their steepest sell-off in years as investors lock in profits over concerns that recent historic rally in the precious metals left them overvalued. Spot gold now down more than 5% right now. We have got gold still up 60%, though, so far this year. The Trump administration plans to buy 1 million barrels for the U.S. Strategic Petroleum Reserve, taking advantage of low oil prices to begin filling the depleted stockpile. WTI crude now at $57.82 the barrel. And shares of General Electric are higher after the company raised its full-year outlook for a second consecutive quarter as the jet engine maker cashes in on strong air travel demand and high demand for maintenance and new engines. We've got shares of GE up now 0.7%. And Warner Brothers Discovery appears to be the belle of the ball. The Hollywood studio and media giant reportedly receiving buyout interest from multiple parties, including Netflix and Comcast. Warner Brothers announced earlier this year that it would split into 2 separate companies. It's now rethinking those plans. Shares of Warner Brothers up about 10%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Let's send it back to Carol and Tim.
All right, we will take it. Thank you so much, Alexis. Well, what and who is an economy for? It's a great question, considering that, as we have often talked about, Tim, not all individuals, as we know, benefit equally at any given time from an economy or economic environment, right? We talk a lot about the K-shaped recovery.
Yeah, coined by William and Mary's Peter Atwater. He did that years ago, and it seems like it's, I don't know, it's more prominent now than it was even just a few years ago.
Yeah, it definitely has been very sticky when we talk about our economic environment. So in this week's Women, Money, and Power, we are exploring how shifts in economic wealth, we continue to do this, increasingly those shifts toward women is creating huge implications on how vast sums are invested, philanthropy is done, and the way that wealth is passed on to the next generation. So with more, we welcome Ida Rademacher. She is Vice President and Co-Executive Director of the Aspen Financial Security Program at the Aspen Institute. She, on this Tuesday, is joining us from the New Jersey Performing Arts Center in Newark, New Jersey, where the first ever Aspen Ideas Economy Conference is underway, and it is all about entrepreneurship and shared economic growth. We should point out Bloomberg Philanthropies is a sponsor of the event. Of course, Michael R. Bloomberg is the founder of Bloomberg LP and Bloomberg Philanthropies. Ida, nice to have you here on Bloomberg. Tell us a bit more about why you guys wanted to create a separate event that was more focused on economic impact.
Yeah, thanks. Great to talk to you, Carol and Tim. This is indeed the inaugural and latest extension of the Aspen Ideas Festival, which is in many ways Aspen's front door, if you will, to all the different kinds of things we do. It's our 75th anniversary at the Institute. And when you think about when we were founded, we've been hearing about it lately as post-World War II, the big bang of institutions, the General Agreement on Tariff and Trade, the first time that the whole world went on the global currency of the US dollar as a reserve currency. It was a time when there was a real conversation in the world between communism, socialism, and capitalism about what was the right way to organize an economy in service of society. And when you fast forward 75 years and we look at international supply chains and a pandemic and all the different ways that we're experiencing seismic shifts in technology and politics, everything seems to be changing at once. And it felt like a really important time to go back to our roots and say, what's a first principles conversation about the role of an economy in society? Let's not ignore the actual reality of what's happening out here, but how do we ground a critical conversation about the global forces of change in an economy back in real places and real people? And that's why we're here in Newark to launch Aspen Ideas Economy.
Well, a lot has changed in those 75 years, including what's going on today and the demographic shifts that we've seen underway. The idea of immigration and booming in the U.S. and then coming to a pretty drastic halt this year. The idea of Americans living longer. That was certainly the focus of a discussion that you had earlier this week called Wealth Ownership and Lifelong Prosperity. Declining relative wages, frequent career transitions, concentrated wealth, slowing growth, eroding trust in institutions, straining social ties. Tell us a little bit about that discussion and what you took away from it.
Yeah, there's been a layering of conversations over the last day and a half already on exactly these themes. We are, in many ways, we had a big conversation this morning, both the governor and Reinhard Salan, the president of the Manhattan Institute, talking about immigration and H-1B visas and what has been the role of immigration in both re-energizing culture, but also the economy over time, but also how that had this interesting blend of opportunity when the native-born population in the U.S. was also growing. And now that you have a place where places, not just in the U.S., but when you look at Europe, what is the population decline looking like? What are the implications of that for the economy and for how that permeates through society? When it comes to workforce and the kind of this K-economy, the K-shaped economy you talked about, it's not just a K-shaped economy in terms of the income distributions that are happening. It's also a K-shaped economy in terms of productivity, in which sectors are experiencing that and driving an average number that actually masks the really interesting conversation that's happening about the world of the essential economy and the world of the digital economy and where is productivity driving for. We're having a big conversation about AI and what we call the IP of AI. What is going to change people's ability to make a living from their own creative endeavors in this space. So, it's an Aspen Ideas Festival. It's meant to be modeled on the Jazz Festival. There's too much happening. There's so many ways to take things in. And if we do this right, people are walking away with some new, sticky ideas in their head that are going to help them approach their day jobs or the way they see the world with some fresh takes and some new eyes. Certainly this interesting conversation. Right. And Kevin Hassett said it last night about capital income and labor income. That's another big conversation.
Hey, one thing I want to jump in on, because it really made us perk up when you mentioned the H-1B visas, because we just had a story cross the Bloomberg about how Walmart has paused offers to candidates requiring H-1B visas, according to people familiar with the matter. And kind of just this being the latest example of how the Trump administration's $100,000 visa fees are disrupting workforces. You mentioned it, and I don't want to get political, but I do think about the economy is so tied to an administration. Is there a theme, a narrative that is coming out in regard to policies from the White House or from the administration, and whether it's good or bad for the U.S. economy now and going forward?
Yeah, well, it's a good question, and we've all been grappling with how this is and isn't political. The great thing about the conversations so far are with the set of economists that have been here. Part of this is just about what do we know from the past that helps us understand what is actually happening right now. The good news is that there's actually been much more lifting up of some areas of bipartisan opportunity. And some of that has been, last night, some of that was really around some of the work on employee ownership. This is a very driven by both sides. Even the issues of capital accounts from birth has real bipartisan support. A lot of the work on housing supply, lots of things. Whether or not it is a political issue, the economics of it are that supply and demand drive prices. And when we lower the demand, when we lower the supply of talent for jobs, what does that do not only to the, in the short term, right? In the long run, for whatever reasons people have an economic rationale of what it's going to achieve in terms of their goals. In the short run, there's a lot of disruption, a lot of instability. That's never good for markets and good for the ability to continue to keep a flywheel of economic growth going.
Well, great to check in with you. Good luck